And Caterpillar getting some upside, along with the banking space as well, and the asset managers, the likes of KKR, the likes of Blue Owl, the likes of Blackstone, actually putting in strong performances despite the continued focus on what's happening around private credit. So there was some divergence in terms of what happened and some rotation under the hood when it comes to the stock story. Today there's a focus on what's happening in Asia, certainly the sell-off there in the Kospi. Broadcom, of course, putting pressure on the Nasdaq 100 yesterday, and there's a Broadcom story that seems to be filtering over in terms of the caution over in Asia today. European futures, though, maybe this is a little bit of a haven. Maybe there's a little bit more resilience in European stocks if we have this angst around AI, maybe AI running too fast and too far. Up 0.1%, called higher by 0.1%. FTSE 100 futures looking to add 41 points. DAX futures, though, pointing lower by around 0.2%. What are you looking at, Lizzie?
Well, of course, we'll watch what tech there is here in Europe, Tom, but in terms of specific stocks we're watching, UK stocks in focus now that Andy Burnham said publicly he wants Keir Starmer's job. We'll look at the banks and retail in particular. Then, speaking of retail, Inditex, the Zara owner, of course, upgraded by Morgan Stanley, so we'll watch them closely. And European sportswear stocks as well. Lululemon cutting its sales goal. These could be active. Net revenue guidance at Lululemon for the full year cut. So they're what I'm watching, Tom, as we inch towards the open.
Yes, a big macro event, of course, later today will be non-farm payrolls, 1:30 p.m. UK time, and of course we're across that for you with the markets. Find it balanced in terms of whether or not the Fed goes with a hike this year. FTSE 100 then, putting in the first couple of points so far on this Friday session, just marginally higher as we get the pricing coming through. We've got to think about the sector breakdown as well. It was healthcare that actually outperformed yesterday. Some real strength in the healthcare sector in the European space. Across the benchmark then, Stock 600, modestly in positive territory. And again, maybe this is a bit of sentiment around wanting to see what the next catalyst will be. There is still the standoff that happens around the Strait of Hormuz. No real clarity on that front. FTSE 100 now up 0.1%. The CAC 40 over in France putting in gains of 0.2%. The IBEX is also performing relatively well so far in the opening first few seconds, up 0.4%. We wait for the pricing on the DAX, which had been called low. The FTSE 100 is now flat. Lizzie, what are you seeing across the sectors so far?
We've got about 3/4 of sectors in positive territory so far this morning, Tom. So utilities at the top of the basket, leading the gains, up nearly 1%. Retail not far behind, consumer products and services and construction as well. But bottom of the basket, as we have seen around the world, is tech, down 1.1%. It's the story that you flagged on the Kospi. We've seen it indicated for the Nasdaq, lower there as well. But of course, we have limited exposure here in Europe to tech, so hence the broader, less negative picture, shall we say, for European stocks this morning. The Stock 600, as you say, only flat to the downside. In terms of some of the individual stocks that I had flagged before the open, Inditex shares, as expected, higher 0.8% after that upgrade from Morgan Stanley. And we had been looking at European sportswear stocks after Lululemon cut its sales goal. Actually, Puma shares up 0.6%, so perhaps a little schadenfreude there.
Okay, should we get to our next guest and get some analysis across these markets then? Standing by for us is Christian Muller-Glisman, Head of Asset Allocation Research at Goldman Sachs. Christian, good morning. Should we start the here and now then? Pressure over in Asia, a little bit of selling pressure coming through on the Kospi in the context, of course, of gains year to date of around 100%. Is this a healthy consolidation that we're seeing when we look at the Nasdaq 100, when we look at the Kospi, or does it point to a more kind of foundational and structural shift in sentiment?
I mean, it's been a remarkable rally. It's been pushing these momentum stocks up a lot. There's a lot of speculative positioning that has built up, leveraged ETFs, all kinds of options positioning. So I think you could say it is healthy that you get a bit of a step back. I think the rally was very much driven by earnings, which was unusual. You remember, like, you have like 320% earnings growth on the Kospi this year. So it was already fundamentally more healthy than a lot of these momentum rallies that we've known before. Less valuations, more earnings. But I would say, considering what we see on some of the positioning data, it's probably not a bad idea to see a bit of a consolidation, to kind of see if there is some leverage buildups that get flushed out. And I think fundamentally, obviously, we had the Broadcom results, which made people kind of rethink in general kind of how you want to extrapolate those earnings, because it's a very cyclical industry. Like tech hardware and semiconductors, 320% earnings growth for Kospi. You need to be very careful what you extrapolate from that. So it's quite healthy to rethink.
You're very clear that semiconductors remain cyclical.
I think, listen, it's a good question, because you have a multi-year trend here in AI CapEx, and you could say, look at NVIDIA, how it started and how it's still going. So like you could say that's also a cyclical company, theoretically linked to tech hardware, but it's been doing really well for multiple years now. So if you think the AI CapEx boom is a structural thing that lasts for multiple years, maybe it's a bit less cyclical in the near term, but it's still a very high operational leverage kind of cyclical industry normally.
What if the Iran war ends? Does that knock AI leadership and the S&P and then bring investors back to EM and Europe as well?
I think so. I think there's definitely a divergence currently between growth optimism, especially in the US, which is boosted by AI CapEx, which is boosted by a reasonably resilient US manufacturing sector. You saw the ISM manufacturing, so it does feel like the growth optimism has been very strong, but rates relief has not been happening. So if you get now the reopening, you probably get rates relief, which can drive a bit of a broadening out. I mean, think about the divergence between momentum stocks and low volatility as a style, which are these bond proxies, low volatility stocks. They have literally done the worst you've seen in a long time. So they're obviously linked to rates, and they're not exposed to tech. So they're in the worst spot. They had kind of the upward pressure from rates, and they had no tech. So if you get a bit of broadening out, a bit of rates relief, you could get a bit of a snapback there. So I would say the reopening of this trade could definitely help create a bit more broadening, a bit more kind of healthy kind of rally.
And if we get a strong payrolls today, another one report, is that good for equities, bad for rates, basically?
Well, this is a really good question. To some extent, I mentioned earlier that the US has been strong on the data. It's looked a bit reflationary, you could say. Good nominal growth, kind of a lot of lead indicators ticking up. Earnings growth is strong. A bit more inflation as well, but actually core inflation has remained reasonably anchored. So it looks kind of like a friendly reflation. So if you now have a payroll sprint that's strong, like it really creates a difficult spot for the Fed to keep talking about symmetric kind of monetary policy, because there's a good chance that they need to start talking down the cuts, starting to talk more about hikes. And that could actually mean that you get rates pressure, which kind of feeds back into equities. So I feel like not too hot, not too cold is the best. We are slightly below consensus, so we are slightly more on the dovish side. But I would still argue that there's a real risk that the market will completely give up on any Fed cuts if it's too strong.
Friendly reflation. I like that framing of what we're seeing in the US. You mentioned the rates pressure, potential rates pressure on the stock story. What kind of levels becomes a problem in terms of price down, yields up?
Yeah. So we usually look at three things: level, speed, and source of bond yield increases. So levels we found historically are difficult for equities to digest is around 5%. It's a bit rough, but we found historically this is when equities struggle. Why is that the case? Like the real trend growth of the US economy is probably around 2.5, plus 2.5 inflation in the long run. You had 5. So if you're above that, you might get worried that rates are too restrictive in the back end. And I think then it's about the speed. What we found is if over a 3-month horizon, the speed is more than 2 standard deviations up, you get into trouble. This was the case. You had 1.9 on May 19th when equities had a bit of indigestion. You're currently at 1.1, 1.2. So like you're still, the speed is not a problem currently. And then it comes down to source. If it's because of inflation, usually the market doesn't like it. So it's not just the level, but I think if you do actually get it because of inflation, it's problematic. If it's because of a stronger labor market, it's not so bad, because we actually still have a lot of investors that are worried about the consumer in the US. So if you do get continued signs that the labor market is strong, it could actually be okay for equities, but it will create upward pressure on of course, the bond market.
Do you think that is the most likely factor at this point? Is less likely to be inflation? You were talking about the fact that core inflation is relatively stable, and yet the strength seems to be coming through for the labour market, and the broader macroeconomic picture is looking resilient in the US. So is that what gets us to higher yield? Do we and is that where you're leaning at this point? And does that take us to 5% by the end of the year on the 10-year?
We're not at 5% in our target. I think if you get into a reflation in the US where manufacturing continues to be strong, the labor market strengthens, AI capex continues to be resilient, boosting the S&P, which in turn is easing financial conditions, so the whole system on itself actually continues to do really well, I think the upward pressure on longer dated yields will continue. There's an unfriendly narrative that could also create upward pressure, which is linked to core inflation actually picking up. Because we know when the Strait of Hormuz doesn't reopen by the summer, it starts to feed into fertilizer prices, which is kind of impacting the kind of farmers planting in October. Then you know that food inflation might actually be higher next year. Then you know actually that usually feeds into wage inflation with a strong labor market. So before you know it, you get to a less friendly inflation narrative if the Strait doesn't reopen.
We're getting close to that point, it seems.
Yeah. I mean, big picture, Christian, what's the bigger risk to equities? Is it earnings disappointing or a bond sell-off?
It's a good question. I think I would say it's more earnings disappointing. I mean, you always got to ask yourself what drove the market really higher. And it's been earnings revisions, earnings momentum. You've seen like earnings in Asia being upgraded 50, 60%. You've seen earnings in the S&P being upgraded 20%. Even in Europe, earnings got upgraded 10%, helped by energy. So I think my thinking is that you had an earnings-driven rally up, so the biggest threat is the market doubting those earnings. And I think you have to consider that some of these drivers of earnings, as I said earlier, they're a bit cyclical, so you're shifting above trend. So you always need to worry eventually for those earnings to normalize. To your earlier question, is semiconductors a cyclical industry? Yes, I would say so, maybe less with that AI capex spend, but that doesn't mean that there can be more competition between them. That can be another, you might have a strong demand environment, but suddenly you get competition weighing on pricing power, which obviously has boosted earnings. So there are multiple ways that the kind of tech hardware names could actually start to disappoint a bit more.
How clear is your conviction around European stocks if we get a reopening of the Strait?
Listen, it's fantastic because Europe has been the biggest, to some extent, loser from the Middle East war. So I would assume that you get a decent amount of relief. I think the rates relief will be the most important because the ECB is one of the few central banks where you're very clearly going towards hikes. And if you take those off the table and/or open the door for cuts, because the market has not only priced hikes for the ECB, they've been very reluctant to price the cuts. Normally, when the ECB hikes, 9 months later, they tend to start cutting. Whereas now, if you look at the ECB rates curve, it essentially prices those hikes. Then, it takes a long time until you get the cuts. Even next year. So if you get more clarity on the reopening and some of those pressures on energy and pricing come down, I think it would really help the market fade those ECB hikes.
Yeah. You just wonder if even if the war ended over the weekend, the ECB would be able to stop that hike in June. Now it's so expected.
Next week, isn't it, the ECB? Yeah. There we go. Christian, thank you very much indeed. Fantastic to get your views. Wrapping up the week for us, Christian Müller-Glissman, Head of Asset Allocation, of course, Research at Goldman Sachs. Let's check in on the Core 6 right now as we factor in some of these issues. Schneider Electric, of course, has benefited from its exposure to the data center story, is down 1.5%. ASML is taking a big hit, down 3%. That's a pretty sizable move for that company, of course, with its exposure to some of the chip story with the lithography machines going in, of course, into those foundries. Nestle is currently up 0.3%, and you're seeing some very decent upside for Novo Nordisk in the healthcare space. And again, healthcare was the sector that outperformed yesterday across the European space. LVMH and luxury up 0.6%. Let's check in on some of the other individual stocks on the move. Chloe Melly standing by. Chloe.
Good morning, Tom. We've got the gambling firm Evoke, which is, as expected, reacting very positively to agreeing to a takeover by Bally's Intralot, which values it at £243 million. This is quite a struggling firm that had been really burdened by heavy debt since its William Hill acquisition, and also has been facing those higher gambling taxes here in the UK. And so it had been exploring a sell for some time now, started the process late last year. Now it is finally happening for Evoke, and we are seeing the shares react very strongly to that, and we're up about 12.5% for Evoke this morning. Moving on to the tech stocks, and yesterday we already had some weakness on the back of this Broadcom outlook, and today we are seeing this weakness continue, and we're seeing the likes of ASML, BE Semi down this morning, all in the red, as this enthusiasm for the AI trade continues to wane. Moving on to CMC, which is an online trading platform here in the UK, and it has been upgraded to a buy rating at Jefferies, with analysts saying that it's a company that will have a very good 2027, and so we're up almost 8% on the back of that. Staying in the UK, and we've got Raspberry Pi, which makes computers, and it also up this morning very strongly, about 11%, after saying that it sees earnings way ahead, significantly ahead of expectations. And finally, let's end over in the chemical sector, because Wacker Chemi has been downgraded, cut to a sell rating at Citi, with analysts saying that the momentum for that company is weakening, especially in the upstream chemicals sector, and that they prefer other names in that sector like Novonesis, for example. And so we are down about 3.8% for that company this morning.
Chloe, thank you very much indeed. Chloe Millet with some of the stocks on the move this Friday. Coming up, South Korea's Kospi, the world's best performing gauge this year, and a bellwether for AI investments, stumbles. We have more next. This is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
welcome back to the opening trade. We are 17 minutes into the Friday session. European stocks are actually down 0.2%. Futures had been pointing to a little bit more resilience, but tech is a big drag. The biggest loser across your sectors now. Tech is down a full 2% across European stocks. So that feed across from what we've seen in Asia and the selling pressure there, and the Nasdaq 100, of course, as well. US futures also still in negative territory. So that is across the benchmark here in Europe. The DAX over in Germany down 0.4%. The CAC current is currently flat. That is the story in Korea then. The Kospi taking a sizable hit today, stumbling then. Foreigners pulling more than $10 billion from the market this week. The recent strain then has some traders wondering if this might be a sign of stalling momentum in the global AI tech. There is some evidence that it is stalling momentum. The question is whether it will be sustained or not. Bloomberg Markets reporter Anthony Stevens has been looking at the details of this. Anthony, explain to us what is driving this sell-off, and whether or not you think this is going to be sustained, or if the dip buyers come back in.
You know, your previous guest touched on a lot of the dynamics towards the back end of his talk with you guys. The market is broadening out, and that isn't great for tech. So as the economic gains and the inflation narrative kind of pick up, you're seeing gains in banks and pharmaceuticals, and you're seeing that in your session today. That's at the expense of tech. Now, in the US and Europe, that net flattens out a little bit. But the guidance from Broadcom was like the first warning that the most exuberant expectations from tech are unlikely to be met. Now, if you watch back the Broadcom CEO's comments on the Bloomberg Tech Forum, he doesn't sound bearish at all. He's talking about insatiable demand and other things like that. But he's also cognizant there is a capacity constraint to how much money people can make before they need to build out new plants and new facilities. And that's caught the market a little bit in a kind of a retracement of some of the craziness. And people are really repricing how much money can actually be made in the next couple of years versus these estimates. Now, your guest touched on the fact that, you know, it's an earnings bubble as well. How repeatable are the earnings in tech is now being called into question over the last couple of days. To touch on Korea, Korea doesn't have a financial sector of the size of the US or Europe to cushion some of this outflow. So it's being felt in the tech sector specifically.
And what are the wider impacts on other markets, Anthony, that you are seeing right now as a result of this?
Right, so Asia in particular is getting jolted by this, right? At the beginning of our session, you know, it was a little bit more balanced. You know, tech was really down and financials were doing fine. As the day went on, though, the fact that Asian retail is so long tech became our Achilles heel. You know, China's tech is down around 3%, Korea tech is down 8 to 9%, Taiwan followed, and Japan is weak as well. So Asian retail is very, very long tech, and now also faces the prospect of a strong non-farm payrolls number tonight, hurting FX in Asia. So Asian investors are under a lot of pressure. As we go to the rest of the world, I think for Europe, you know, people are very long the two big stocks in Europe, but Europe is much, much more diversified than Asia and should be able to navigate this little bout of risk aversion. The US will be a very closely watched session. You know, the Nasdaq futures are quite low on the session today. What is very interesting about the Nasdaq and S&P is this debate around the IPOs that are coming and how much liquidity needs to leave the hotly rallying stocks of the moment to buy these IPOs down the line.
And Anthony, of course, Korea was hotly anticipating Jensen Huang's arrival in Seoul. I just want to take a listen to what you had to say to reporters about demand for memory chips.
We are going to use a lot of high-speed memory. And, of course, memory is constrained, and so we have to be smart about using it in all of our systems. And so we'll continue to work with our partners here to make sure that we support as much supply as possible, but use the supply as smartly as possible.
Anything else that he said, Anthony, going to be exciting for markets this morning?
Well, notable lack of a leather jacket, that's one thing. The second thing is, though, the memory comments are really well flagged, right? You've had Hynix and Samsung go up so much that a lot of the foreign selling in Korea is actually people bringing down their allocation of Samsung and Hynix to more manageable levels. So that story, and Micron is up, you know, triple digits on the year as well. So the memory side of things are really well understood. He is also meeting other Korean corporate leaders in the physical AI space, the robotics space, and the software space. So he's meeting Hyundai, he's meeting SK, he's meeting LG, and he's meeting Naver. Now, those conversations and the kind of bullish commentary that he put up in Computex in Taiwan, that is what people are going to be watching in the coming weeks. But for today, that hasn't been good enough. His comments came out in the back end of the Korean session, and the Kospi still closed on the lows. So it looks like Korean retail really needs to see more to reload at these levels.
Yeah, no juice from Jensen at this point. Maybe the lack of the leather jacket is something of a tell as well. Anthony, fantastic. Thank you very much indeed. Anthony Stevens walking through some of the market moves and implications for us this morning. Sticking with AI, Bloomberg held its annual tech summit in San Francisco this week. What a fantastic lineup out of SF. Meta's chief AI officer, Alexander Wang, spoke with Bloomberg's Kurt Wagner at the event. He discussed the progress the lab has made since he started in the role and where he sees the tech firm's models going from here.
The AI industry has gotten very hot and competitive, obviously, in the past year as well, and we take that very seriously, but we're really excited.
Yeah, obviously the goal, you're spending in the same way that an OpenAI, Anthropic, others are spending. Do you feel like you guys are in that same tier? Is Meta, is it OpenAI, Anthropic, Meta at this point, or do you feel like there's still a bit of a gap? Because I'd say certainly a year ago that was the perception.
Yeah, the Muse Spark model that we released is not at the tier of the leading frontier models, but we believe it's a very exciting data point on the trajectory, and we expect the upcoming models we release to be quite competitive with the leading models in the world.
Yeah, you called Muse Spark an appetizer model. To build that metaphor out, when does the entree model get here? Will it be at that tier that you guys ultimately want to be at?
Yeah, we are in process of cooking the.
The whole conversation is just going to be this back and forth.
Yeah, no. I mean, we're cooking it. We're excited to show it to the world once it's ready. We're seeing very exciting and promising results in the process of training it right now. So we're quite excited about it, and I think there's overall we built the entire research effort around predictable scaling. So the entire belief of our overall research effort was, in many ways, the central belief behind the current modern AI boom is that as you scale these models, you will see get incredible results and get predictable levels of increased capability. And so, Muse Spark, it was an early data point on that scaling ladder for us. The next models we release will be an even greater point on the scaling curves, and we are really excited to show the world what we'll be able to produce.
And obviously you went from basically rebuilding the team, rebuilding the lab to this Muse Spark model in a very short amount of time. What is the biggest barrier from getting to that, the appetizer, to the next level? Is it, I assume it's not resources. You guys are spending a ton of money on this effort. Is it just simply time? Is it talent? Like, what's going to bring your models to that frontier?
Yeah, it's, we've talked about some of this in some of our public blog posts and whatnot, but it's about continuing to scale the data, the compute going into the models, as well as continue to scale with research. So continue to drive advances in, underlying research breakthroughs to continue driving forward the progress of the models, and building infrastructure to support all of this. This is in many ways a year where all of the labs are dramatically scaling up their models, and we are on, we think, a much faster trajectory to do so, because obviously we've been doing all this work over the course of the past year. But yeah, we need to build the infrastructure, we need to scale the data, scale the compute, train these large models, and show them to the world.
Meta's Chief AI Officer Alexander Wang speaking there at the Bloomberg Tech Summit. I've just been reading about Alexander Wang, Tom, a pretty impressive guy. I didn't know he was roommates with Sam Altman during the pandemic, and founded Scale AI as well.
Which, of course, then Meta subsumed, took over, essentially. It was essentially a takeover of Scale AI. And, of course, Alexander got very well compensated for that. A lot of the team moved over, and they made these massive investments. Meta was behind. Meta remains behind the likes of OpenAI, the likes of Anthropic, and the likes of Google in terms of the most cutting-edge frontier models. But Alexander has restructured the team and is trying to play that catch-up. But he's admitting they're still behind, and they've got a lot more work to do.
Impressive guy. Right, coming up on the programme, trouble brewing in private credit. We'll get the latest with the Andromeda Capital Management CIO and co-founder Alberto Gallo. This is Bloomberg.
Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
This is the opening trade. We're 30 minutes into today's session, and that AI angst that we've been seeing going around the world has now infected Europe. At the bottom of the sectoral basket is now tech, as it was at the start of the session, but we've also turned red across the benchmark European index. The Stock 600 now down 0.2%. Losses in Frankfurt, losses in London as well. Only the CAC 40 is managing to stay flat this morning, but we're following the losses we saw on the Kospi, down about 5.5% at the moment, and as we're expected to see in the US session later. US futures down about 1.25% as things stand. Tom, what are you seeing under the hood?
Yeah, and as you look at volumes, there is a suggestion down, 30%, 40% right now, volumes, versus that 20-day average, that maybe some investors are sitting this out until they get more clarity, not just on AI and geopolitics, but of course on the macro event of the day, which is non-farm payrolls and jobs out of the US. In terms of the breakdown across the benchmark Stock 600, you're seeing 328 stocks in positive territory, the rest feeling that downside pressure. On the upside then, Raspberry Pi coming through with some earnings that have revived the spirits of investors in that company. So rallying really strongly on the back of that story. Of course, these handheld computers listed here in the UK, hand size computers up 17.5%. So Raspberry Pi getting a big lift. Evoke is currently also gaining around 5 points, up 14%. This is the online casino, and so that is rallying as well. AbbVie and Abivax, this had been beaten up a bit at the beginning of the week. It gained yesterday and it's gaining again today. Maybe the sell-off at the front end of the week was a little bit too much for some investors, and they're moving back into Abivax, and that is gaining up around 7%. On the downside, let's flip the board and have a look. There's some deal-making news, or at least announcements that deals will not be happening. Apollo is not going to be pursuing a takeover of Bodycote, and so that company, in terms of the industrial heat story here in the UK, down 9% on the back of that. Air France cut at Barclays, so under pressure, the airline by 1.5%. And ASML, this is part of the broader sell-off that we're seeing in terms of the tech space that Lizzie was mentioning, and ASML is a victim of that today, down 2.5%. A year to date, of course, that stock has rallied pretty strongly, but down 36 points in the session today. today. Lizzie.
Here's what else you need to know this morning. Brent crude edging higher as we see no signs of progress, in fact, in US-Iran talks after the worst burst of violence in weeks. The Tehran-backed Hezbollah militia has rejected the US-brokered truce in Lebanon. Meantime, Reuters is reporting that Oman's Mina al-Fahal terminal has suspended oil loading following an explosion near one of its mooring berths. Elsewhere, India's central bank has announced a raft of measures to support the currency after it plunged to a record low, while keeping its benchmark interest rate unchanged to support the economy. Separately, the government announced a reduction in capital gains taxes on bond investments by foreign institutional investors. And the European Union's trade envoy, Maroš Šefčovič, has told his Chinese counterpart to address the, quote, unsustainable trade imbalance between the two countries. This as the European Union reassesses its trade defence tools and discusses new instruments to cope with China's export of good and state subsidies. China has pledged to retaliate if the EU proceeds with new restrictive trade measures. Tom.
OK, let's turn to what's happening in private credit. Some really fascinating moves in terms of the redemption stories, the requests for withdrawals, but also the rally that we saw in some of these names in the session yesterday. Blackstone, this is the detail, limiting redemptions then from its flagship credit fund, as we discussed yesterday, for the first time after investors sought to pull 10% of the shares. This is the latest firm, of course, to cap withdrawals amid a continued investor exodus across the space. Leaders in the space spoke about jitters in private credit at the Bloomberg Global Credit Forum, which took place in New York this week.
Institutional investors continue to make up 80% of our clients. Individual investors make up about 20% of our client base. And indeed, it's that individual investor segment where you see most of this redemption pressure coming from.
The private credit market sits at about a 40% loan to value, meaning it's underpinned by a significant amount of private equity. And so if you want to talk about stress in private credit, you have to talk about stress in private equity.
Credit is still languished, and we expect that to continue. Now, that's not to say that it can't have a better second half, but I do think there's some pockets of opportunity. But this is historically a tough time to be in credit.
Historically, a tough time to be in credit. Bloomberg credit reporter, meanwhile, Silas Brown, has been following all the twists and turns of this story. Silas, where do things stand right now? It was interesting that actually some of these names rallied pretty hard yesterday in the session, but the redemption story is still there.
Yeah, I mean, I think at the moment private credit is a bit like a Rorschach test. I mean, you make of it what you see, and I think that's why in the credit forum you see such a vast.
Is that the rabbit or the duck test?
Well, it can be both, yeah. So I mean, and I think you can see positive and negative signals signals quite clearly. What I would say about the redemptions, look, Blackstone capped at 5%. Cliffwater did. They're the first two to report. I think the strong expectation is that they all will start following suit. That's not that surprising, given the redemptions normally come in twos or threes. I mean, the first round of redemptions sparks the next round of redemptions. I think I'm very interested in the next quarter. If there's elevated redemptions next quarter, I think that sort of demonstrates that this is a sustained thing rather than an angst thing.
So it's too early to say that the golden era of private credit is well and truly over?
Oh, or too late. I don't know. I mean, one or the other. Yeah. I mean, look. Private credit is somewhat the elasticity of the term private credit is such that I think golden age. Look, I mean, they're trying to fund AI. They're trying to look into data centers. I mean, that period perhaps is a golden age. I think the period of leverage lending, which was prompted perhaps by elevated rates in 2021, 2022. Yeah, I think that's probably done a death.
Silas, thank you. That's Bloomberg's Silas Brown. Let's get more, though, on this topic. We can speak to Alberto Gallo, Chief Investment Officer over Andromeda Capital Management, also, of course, the co-founder. Really good to have you with us.
Morning.
Alberto, I wonder if you think that there are going to be more of these reputational issues spiralling again. We had a quiet period between March and June, but as Silas says, it's been ramping up again. Are we going to have more redemption requests keeping climbing?
I think at the core of the private credit equation is a broken promise. The idea that you would generate double-digit returns with very low risk for investors and give these safe yields. In reality, the returns have been in the mid to low single digits in the good times. So this is over the past 5 years, where defaults were low, there was plenty of liquidity, and everyone could refinance. And if you look at the last few quarters, the annualized returns of some funds are in the low single digits. So this is, again, in a good credit environment. We still have no hikes from the Fed. We'll see later in June and then in the next few months. But inflation is rising. So this extended credit cycle that we're living through at some point will come to an end. And right now, before the end, we already have 10% of companies in private credit funds that are paying in kind. So they don't have enough cash flows to pay coupons. And 40% of companies are negative free cash flows. So in other words, you are betting on a giant lever that has been pushing up the CapEx effort for AI. But all you are gaining is a few basis points. You're not getting the upside.
But is it kind of healthy to clear out some of the retail investors, that they're cautious now, and then you're left with the institutional investors who know what they're dealing with?
Maybe, maybe not. I think retail investors should not have been there in the first place, ever. Because there is lack of disclosure on the underlyings. And I think that there's been some appetite from institutional investors due to the fact that these funds don't have mark-to-market. So what AQR is called volatility laundering. But what we have seen mapping the universe is that, of course, there will be good and bad managers, but you have many ways to delay losses, to reduce transparency, given the freedom that you have as a manager to not mark-to-market this loan, and different loans have different prices with different managers, or to delay losses, etc. So at some point, though, the bill comes, and it comes when inflation is high, when the Fed needs to hike, and we're getting there.
I want to get your take on that, but when the bill comes, are you suggesting that there is potentially a systemic risk from what we're seeing in private credit, or is it just a broader picture in terms of cost of capital going up in a higher rates environment?
That is a great question. So regulators so far conclude that it's not systemic yet. The ECB did a chapter in the last financial stability review earlier in May on private credit. The IMF has done some work on it. But the ramifications are there, and they are actually in a different, they go a different way from the 2008 crisis. So here the risk is really through the insurance sector, not to the banks. And remember, life insurers, which are controlled by the same firms, by the private equity firms, are $1 trillion in balance sheet. Private credit is around $2.5 trillion. So we're talking about, order of magnitude size, which is similar to what subprime was in 2008.
You're concerned, higher inflation, higher rates. How do you position for that? Does it derail more sustainably, more substantially, the AI rally?
So look, right now, credit is priced for perfection. We have the lowest spreads in 30 years. We had a lot of inflows. Some of them went into private, some of them went into public. So you want to be nimble. If you're looking at credit, the values in dispersion, the values in the volatility of credit, there are some pockets of opportunity for sure. But what you don't want to do is to be long or turbo long, for a number of years. So you want to be nimble. There's two things that happen right now. If the economy is too hot, so you have inflation above 3, the Fed hikes, then you're losing because interest rates will rise and the cost of refinancing will rise. If the economy is too cold, AI, for example, is very successful and you have losses in the job market, then also some firms will go out of business. So you're essentially selling this put option, but you're also selling a call option by being long credit at 7-8% yield. If things are going really well, you're going to have higher rates. If things go a bit less well, you're going to have higher spreads. It's not a great thing to be locked into this sort of investment right now.
Yeah, so what's the bigger risk then? The inflation story or the debt that's tied to AI?
We think right now, the bigger risk right now is that the economy is getting a little bit hotter in the U.S. So there's a lot of capex, there's a lot of investment. Deregulation is going to add $2 trillion of bank balance sheet size to the U.S. bank. So right now, there's a lot of institutional attempts to prolong the cycle, to expand credit supply. Even though the Fed might reduce their balance sheet a little bit over time, the hikes or the balance sheet reduction are not enough compared to bank deregulation. So we're still overheating the cycle. But after elections, things might change, and we might have less fiscal spending.
And so when we do finally get this sustained default credit, cycling credit, is it that we're underestimating how bad it's actually going to be?
It's going to be bad, but it's going to be bad in private, because in the last 10 years, most of the growth in credit happened through private markets. The public credit market only grew by 5%. So what happened is that all the firms that couldn't fund in public markets, the firms that were a little bit more opaque, a little bit more levered, that we didn't want to lend to, they went to private funds. And private fund notional size went up 3.5x. So from a few hundred of billions to 2.5 trillion. So that's a lot of adverse selection, and 40% of that in the US is tech, 40% of that is negative free cash flow. So we will see defaults and restructurings both in public and private markets. But I think that the worst of the concentration of risk is in the private market.
What are the implications for Europe?
Well, there are cross-asset implications. So obviously, Europe is more hit by the current situation, by high energy prices. But Europe has less software loans, has less of that, capex going on. So
does that make Europe a bit of a haven?
So surprisingly, Europe is now at the largest short positioning. So if you look at data from the DTCC, which looks at all the data on credit default swaps, the investors have been as short in Europe as they have ever been in the last 15 years. And that's because of geopolitics. So in Europe, spreads are tight everywhere, but in Europe, there's a lot of unloved assets. There's unloved assets in European high yield. There's unloved assets in Ukraine, for example. So investors have gone very long Trump and MAGA and all the assets that are linked to that policy. Europe has been a little bit left behind, which gives you a little bit of cushion. And in fact, you can see that on down days, European credit is pretty stable. So we're not saying that it's an amazing opportunity, but there's some interesting pockets in Europe that I think are very crowded in the US. It's harder to find.
Interesting. Maybe the baby thrown out of the bathwater in Europe. Maybe some opportunities then in the credit space. Alberto Gallo, thank you very much indeed. Chief Investment Officer, CIO, and co-founder of Andromeda Capital Management. Coming up, talking of Ukraine, Ukraine's president has proposed peace talks in a letter to Russia's Vladimir Putin. We're going to bring you the latest on that open letter. That is next. This is Bloomberg.
cidade estava sitiada.
Nisso eu começo, eu não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to the opening trade. 47 minutes into today's session, and you can see the Stock 600 has been pulled ever so slightly to the downside. The AI angst going around the world. We saw it in the US yesterday. We saw it in Korea this morning. And indeed, tech is performing negatively. Of what tech there is here in Europe today. The DAX in Frankfurt down 0.1%, and the FTSE flat to the downside as well. Gains, though, out of Paris.
OK, let's get back to a geopolitical story that has not been front and centre for us because of the focus on Iran. But today it is, because Ukrainian President Volodymyr Zelensky has proposed peace talks with Russia's Vladimir Putin in an open letter, saying Ukraine is ready for a full ceasefire during negotiations. President Trump welcoming Zelensky's initiative.
I'm glad that they're maybe talking about meeting. I think we had a lot to do with it. I know exactly what you're doing. But I think it would be great if they met. They should get it done.
OK, so Trump taking some credit for that. For more, let's bring in Tony Halpin, Bloomberg's team leader for Russian government. Tony, you followed the twists and turns of all of this from day one. What do you make of this offer from Zelensky? What does it tell us about Ukraine's position? What does it tell us about the likelihood of any meeting between the two leaders?
Morning, Tom. Yes, it's very interesting. I think President Zelensky with this letter is really trying to kickstart the process of talks again. As you've noticed, they haven't really gone anywhere since the Middle East crisis erupted, and that's distracted the attention of the Trump administration. And Zelensky feels he's probably come a long way since that famous meeting with Trump last year in the Oval Office where he was told he didn't have any cards. I think he thinks at this point that Ukraine does have some rather strong cards, and he wants to play them to try and lure Putin into a meeting and to sit down and negotiate a peace deal. And he's very clear he wants the US involved, but he also wants the Europeans at the table too. And there are European leaders who would like very much to be at that table.
And Tony, let's talk about what happened in Washington. The Democrats winning this vote in the House, support from 18 Republicans to back aid to Ukraine and sanctions against Russia. How important is that vote?
Yeah, I think it's a further signal. There are plenty of Democrats, and now it seems a few Republicans who are pretty hostile to Trump's approach to this war, that the administration basically tried to act as a mediator, viewing them more or less the same. Democrats were pretty clear that Ukraine was the victim in this war and Russia and Putin were the aggressor. And they're signaling now that, look, we want to see support for Ukraine and we want to see tighter sanctions on Russia. It's still not clear whether Putin will take up Zelensky's offer. In the past, he's refused to meet Zelensky unless there's a deal on the table. And he has also rejected the idea of any ceasefire while talks go on. He's simply said, look, that's just an opportunity for Ukraine to rearm, and it's clear in Washington that there's quite some support for continuing to bolster Ukraine.
Okay. We'll see if that support solidifies, won't we? Tony Halpin, thank you very much indeed with that update. Let's look ahead at what else we are watching throughout the day then. The EU and Western Balkans Leaders Summit is taking place. EU Commission President Ursula von der Leyen will be speaking. No doubt Ukraine will be part of that conversation. At 9:30 a.m. UK time, meanwhile, we're going to get the BOE's Decision Maker Panel survey. So some colour there and some detail in terms of thinking at the Bank of England, and key jobs data, of course, out of the US. This is the big macro event with non-farm payrolls and unemployment data at 1:30 p.m. UK time, and our US team will give you all the analysis and live coverage of that. And at 4 p.m. UK time, UBS CEO Sergio Motti will be speaking at the Swiss Economic Forum. And at 7 p.m, back to central bank governors. 7 p.m. UK time, Bank of England Governor Andrew Bailey pulling a light one on a Friday evening and speaking in Scotland, Lizzie.
So that's what's ahead today. I want to talk about last night, though. I want to bring in our Markets Live executive editor, Mark Cudmore, because you both were at the M Live event here at the Bloomberg European headquarters last night. I wasn't in the room, but I did watch it on the terminal. What was the mood, though, in the room, Mark? Was it bullish, bearish?
I was struck by the fact that
people are still majority bullish the AI bubble. Like, everyone acknowledged the risks, but for example, we did a kind of poll about when do you think the AI bubble will kind of blow up, and most people went for next year, first of all, being when it ends. And, you know, it was only about half that think it ends badly. So half basically were like, you know, but if you add up the people who thought no bubble at all, or it kind of ends, you know, pauses or deflates moderately, that was about half the room. And I find that interesting. And then, so not only are people not as concerned as I thought about AI, but you certainly noticed it as the panelists, apart from probably myself, who was probably the most bearish or worried, people were like, while acknowledging the risks and that we're kind of loath to sound too bearish because, you know, this is the big moment to buy AI, it's the big boom time. I have to say I came away feeling more worried. I'm like, oh, I was the most bearish. Maybe I'm not bearish enough.
You're like Michael Murray.
You were clearly the most bearish, I think, at least in terms of those who vocalised their views, because you made it clear you think the bubble bursts this year.
Yeah, I do.
So in terms of this year and the timing, as we think about those OPIs, do we have to digest the IPOs first? Is the IPOs something of a catalyst for that potentially? So, I mean, how does the IPO story play into your view about the AI bubble bursting, or does it not?
The idea I was kind of talking about last night was this, that, you know, that I think that we might see some last stage of insanity around the SpaceX IPO because only 5% float out and 30% going to retail. All the passive index have to chase it. You're going to see the stock just multiply in price. It's already IPOing as one of the largest companies in the world. It could go a bit crazy and strange. Now, I've heard, actually, I should have validated before this came on the show, didn't know I was going to get this question, but I thought I saw a story last night that maybe the S&P is not going to fast-track SpaceX in. And I don't know if that's a definite decision now or not. But
that is a decision they made.
That's a definite decision. So it's not in all the indexes. So maybe that's less extreme in the passive index flows, but they still, going into the NASDAQ, you've still got some passive index flowing, which is quite interesting.
So when you see days like this where the Kospi is down 5.5% now, 7% earlier on, do you just think that that's a step on the way to what you're seeing, and it's kind of healthy maybe, or that it's healthy that people are taking profit?
It's definitely not healthy. You know, like, this was my point last night, is that I don't know the exact timing, but I said, you know, and I feel we're in this broken market's endgame. Now, how long does that endgame last? I don't know, but like in 2008, it was clear the market was broken all year. But I was an EM trader at the time. Most emerging markets made fresh record highs in July 2008. Oil was trading up at $150 a barrel because, you know, we're still rising. With the ECB hiking rates, right? So the market was clearly broken. I know the stock market peaked in October 2007, but yet most assets were trading as if, you know, it's okay, it's very isolated. I feel that's like we're in that end game now. And how long does that end game last? You know, it could last another 18 months. I just don't believe it. To me, I think we're close enough to the end game that if you tell me 6 months, fine, I'll give you 6 months. But really, I think it's much sooner. I think it's the next... I think it's, you know, we're talking weeks to a couple of months, or maybe this is it. Like, I don't know. I really think we're towards the end game where people are starting to realize this is all frankly ridiculous. Like, it's gonna be like one of the stories in that. What's that book? Who's written the guy? You know, Popular Delusions and Madness of Crowds. I can't remember the guy who wrote it. You know, and he wrote it about 100 years ago. But it's brilliant about tulip mania and stuff like this. This will be one of those incidents. The South Sea bubble, the tulip mania. This is going to be in there.
Despite making me sweat and the pessimism and the bearish take from Mark, it has been a pleasure having you this week. What are you doing this weekend, Mark? I mean, you've been...
Of course, Friday afternoon, it's Borough Market drinks. It's, you know, it's always great to then fly back to Singapore.
OK, well, it's been fantastic to have you here, Mark Ardmore. Thank you very much indeed with that bearish prediction around the AI bubble bursting.
Well, let's take a look at what's actually on the diary for the weekend. We've got the NBA Finals Game 2, Tony Awards as well, the F1 Monaco Grand Prix, Primavera Sound in Barcelona, and also a bit of tennis, Roland Garros in the finals.
What's top of mind for you then? That's a good rundown for the weekend, isn't it? Take your pick.
I'm
sport, music.
Take the temperature of the UK housing market, Tom.
Oh, are you?
Yeah,
you're in the market.
Yeah, well,
it's a challenge time, isn't it?
It is, exactly. On the ground reporting.
OK, we'll get your feedback then on Monday. We all hope you have a fantastic weekend, of course, after another wild week for these markets. We'll be back with you, of course, on Monday. Do not miss the debut of Bloomberg Money Today, by the way, at 5 p.m. London time. Join Scarlett Fu and Tom Keane for spending and investment strategies to help make smarter decisions with your money. The Pulse is next. This is Bloomberg.
morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Cooling off, enthusiasm for the AI trade fades, at least for now, after driving markets to record highs this year. Elon Musk woos investors ahead of the SpaceX IPO, but the S&P rejects plans to speed up index inclusion for mega-cap firms. Plus, Ukraine's president proposes peace talks to Vladimir Putin in an open letter as the Russian leader rejects European efforts to kickstart negotiations. So, first of all, we've made it to Friday. Happy Friday, everyone. It's been a little bit of a roller coaster in terms of geopolitics, but also a lot of the AI news that we talk about day in, day out. The S&P's 500 weekly run seems to be at risk as the moment because some of the tech stocks have been sliding, and that slide is deepening. I'm looking at S&P futures down some 0.6%. Again, stocks broadly are pulling back from some of these record highs as Broadcom's outlook for AI chips sales fell short of elevated expectations. I'm looking at the U.S. 10-year yield, 4.4631, euro dollar 116.34, and Brent crude at 95. This is the picture for European markets. I guess it's going to track what we saw in Asia as well. Euphoria around the power of the AI trade to pull global indices higher took a little bit of a further knock, and that's also playing out in Europe with the DAX and the FTSE down 0.2%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, SpaceX will not be getting a fast track into the S&P 500. S&P Dow Jones indices have rejected proposals that would have accelerated entry for mega-cap companies into its flagship benchmark, keeping existing eligibility requirements in place. Well, Matt Bloxham from Bloomberg Intelligence joins us now. Matt, this is a huge deal. I mean, not as as big as the actual capitalization of what these companies are worth, but why has the S&P decided not to allow some of the rivals, not to follow what the rivals want to do?
Yeah, I mean, I think this is
about kind of protecting the kind of the sense of what they're trying to do with these indices, which is to provide a kind of more smooth and low volatility reflection of what's really going on in the kind of public markets. And obviously kind of one of the risks of kind of adding early entries, you kind of add these kind of volatility spikes into it. You kind of create unnecessary trading volumes, that passive funds have to kind of adapt to. I mean, on a daily basis, we see shares going up, down 20-30% on the back of kind of relatively small earnings updates, and I think that kind of would suddenly create a huge amount of upheaval in how passive indexes are kind of tracking the market. So I think they're trying to say that there are big changes going on, but we need to kind of keep some kind of normality about what we do as a business.
So Matt, what does it actually mean for SpaceX? So rivals to the S&P have decided to do it.
Yeah. So, I mean, obviously, that early inclusion potentially creates a kind of a wave of technical demand for SpaceX shares following the listing. It's interesting talking to some colleagues yesterday that there's a sense that perhaps there's another wave that comes when actually some of the lockups appear. So perhaps in the near term, the demand isn't really that big, but as these lockups expire, you get more. And so that may well actually then end up kind of blurring into this kind of 12-month delay that the kind of S&P index inclusion includes. So I think there probably is, for some period of time, going to be quite a big block of technical demand for SpaceX shares from the wider index tracking market.
Matt, at the same time, we know that Elon Musk basically took his roadshow. He's pitching SpaceX to investors at JP Morgan, with JP Morgan clients. What are people saying? Does he have it?
Well, I guess the interesting stuff we've been hearing is, where the brokers are on the revenue projections to kind of justify this kind of $1.8 trillion valuation, and that the growth rates we're looking at are quite staggering. Goldman's and Evercore talking about this company getting to $350 to $400 billion of revenue within the next 4 to 5 years. Now, if you look at the top 20 global companies by revenue, and actually I used AskBee, our AI assistant, to do this for me earlier to shortcut the time it took. There's only a couple of companies that have got north of $500 billion of annual sales, and that's kind of Walmart and Amazon. Apple only has $400 billion or so of revenue only, and Google's kind of in the $350 billion. So the getting to that scale of revenue in 4 to 5 years would be absolutely unprecedented. So I think there's going to be a lot of scrutiny of those numbers and whether they can actually build out the infrastructure quick enough to kind of create the engine of that revenue generation.
Okay, Matt, elsewhere in tech, NVIDIA has confirmed that all 3 major memory chip makers, so Samsung, SK Hynix, and Micron, are certified to supply HBM4 for NVIDIA's next-generation AI accelerator platform. So first, let's take a listen to what the Chief Executive, Jensen Huang, had to say.
We are going to use a lot of high-speed memory. And, of course, memory is constrained, and so we have to be smart about using it in all of our systems. And so we're continuing to work with our partners here to make sure that we support as much supply as possible, but use the supply as smartly as possible.
So what do we know about the deal, Matt?
Yeah, I mean, obviously, this is to kind of really support the Vera Rubin platform, which is the next generation of the kind of chip technology to support the agentic AI workflows, which is kind of a different kind of compute compared to the NVIDIA GPUs we've seen in the past. And as Jensen said, they're hugely memory intensive. And given we have these constraints around memory supply, it makes complete sense that they would be looking to kind of diversify their supply options as much as possible. It also creates supply or competitive tension between those suppliers so they continue to get the good pricing. So, yeah, I think the critical that they kind of have these deals in place. I think it's encouraging for them that they feel that all 3 of them actually have got technology that's going to match what they need for the Vera Rubin platform. So I think it's a positive signal for both NVIDIA and for all 3 of those memory makers.
Matt, thank you so much. Matt Bloxham there, as ever, from Bloomberg Intelligence. Now, the S&P 500 is set to break a historic weekly run of gains as the AI trade takes a leg lower. Well, investors are also expecting U.S. payrolls data to hint that interest rates will stay higher for longer. We're now joined from Zurich by Nanette Heschler-Feiderb, Lombard Odier's EMEA Chief Investment Officer. Nanette, thank you, as always, for being with us. What's your take on the AI trade in general? I mean, this has really been supporting and nourishing all sides of the economy, especially in the U.S. What happens now?
Yeah, I think it's been really timely, given all the other sources of uncertainty, to have such a strong driver that is really has boosted earnings of the tech sector and has helped to great performances. What next? I'm sure that geopolitics, and then in particular the impact on inflation expectations and interest rates, is going to come next. Potentially, if there is a resolution, it could be another positive. So for now, things are still rolling on markets.
Nanette, what will actually be the impetus then for the next couple of months? And I don't know whether inflation gets canceled out actually by some of the AI investment technology, or whether AI contributes to higher inflation in the short term.
Well, certainly in the short term, we have seen how the mechanics of inflation are running, and if you like, the lack of supply or insufficient supply is feeding through. So we have, for example, nudged up inflation expectation for 2026 in the U.S. all the way from 2.45% before the Middle Eastern crisis to now 3.5% altogether. So short term, certainly contributing to inflation. But then I do think that we will see over time the impacts via the labor market then really move inflation further. So for now, what long-term inflation expectations are telling us is that the bump in inflation is transitory, and that we are likely to see a normalization of inflation. Take 10-year break-even inflation rates, they're still stuck at 2.3%.
Nanette, what does it mean for what you're expecting the Fed to do? And we're starting to see, I guess, market divergence. I know a lot of people are expecting a hike, but what if they didn't hike this year and then went straight to a hike into early next year?
I think that certainly it has erased any hopes for an interest rate cut that still existed prior to the whole situation in the Middle East, and then how it impacted oil prices. Whether this is going to lead straight into a rate hike, this is, in our view, unlikely. We're expecting unchanged interest rates, Fed fund rates for 2026 and for next year, assuming there is a resolution and oil prices are headed back to 75, we see still chances that there might be rate cuts.
What does that, when you look at some of the indices, and I love your notes, as always, on some of the market optimism, I know you look, for example, at Swiss stocks, you look at healthcare that have barely been up year to date. But does that mean that these could see actually a potential catch-up, which means it's a good time to get into them?
Yes, I do think that the rally, and this has not been only in 2026, actually already since 2024, the rally is really much more concentrated than at any period before. And what it tells us is that the index has really been taken up by only a few stocks, only a few sectors, and there are still some great opportunities around. I mean, you mentioned Swiss stocks, but also European stocks are barely up since the beginning of the year. And should there be a resolution in the Middle East that influences positively oil prices, these are markets that can catch up. Healthcare sector, a similar story. It's been underperforming so far, but we see a lot of great value in there. So I do think that there are many sectors that actually offer value where the timing is the right one, and which could then take the lead for the next stage on equity markets.
And Nanette, I mean, when you look at earnings, frankly, they were much better than expected in almost all sectors. Is this based on fundamentals, or is it because they're inflated, almost artificially inflated because of all of this CapEx spending in AI?
I think we have been surprised by the strength and how broad actually the positive surprises have been. Certainly the resilience of these two large economies, the US and also China, have in some sense explained as well this broad positive surprise. Going forward, I think it's still going to be important that earnings are up to the expectations, because right now we are still having a lot of good news ahead of us if we look at guidance of companies. And so it's important that there is no disappointment going ahead.
Nanette, I know we talk about geopolitics every day, and every day just seems trickier to find an effective resolution for the Strait of Hormuz. Now, the market, to me, seems like it's largely ignoring that. In a couple of months, do we start really to worry about, and will that filter through European earnings?
I think the market has, in some sense, been able to afford ignoring it, because the reserves that are being let into the market in order to compensate for what is blocked in the Strait of Hormuz has worked well. But this has a time tag, if you like, and at one point it will not be avoidable to have flows of oil resume again through the strait. So if this doesn't happen, then there might be a reckoning of markets. So far, we think that we are headed towards a resolution. It is certainly a complicated negotiation, but the interests of all parties is very clear towards a resolution. So I think that altogether we continue to have a good support for an optimistic reading of 2026 as an equity year.
Nanette, what's the most interesting place that you want to be in the market right now?
Well, we have been happy with some of the, if you like, contrarian views that we have, sectors like the pharmaceuticals and healthcare in particular. In technology, which has been one of our favorite sectors, and we've been very happy with the past performance, there may be some a bit of volatility short term here, a bit of profit taking, and within the sector, we would still look for disfavored sectors like software. And then in terms of regions, our absolute favorite continues to be emerging market equities, from their valuations and from the strength of the earnings that they are bringing finally to the table. It seems as if they have been the beneficiary of this multipolar world, and we continue to see great potential in there.
Nanette, as always, thank you so much for joining us. Nanette Heschler, Feiderb Lombardo-Diaz, EMEA Chief Investment Officer. Now, recent calm in the private credit market has turned into a wave of withdrawals. Blackstone says it's limiting redemption from BCRED, the biggest private credit fund of its kind. Now, the Swiss firm Partners Group has also capped withdrawals at one fund and is ready to gate others. Let's talk to Silas Brown, our senior private credit reporter. Silas, thank you for joining us. I mean, how would you describe the mood right now? It feels tricky, and it's unclear whether it turns ugly or settles again.
Yeah, I mean, if you, I'm sure you remember the kind of level of hysteria that was taking place about 2 or 3 months ago, and then there was this period of kind of serenity because there was no reporting, and now that reporting has come back. The next round of redemptions is occurring. They are larger than the ones before. That's kind of explicable given the fact that the people were asking for their money out just at the height of the headlines that were coming through. But yeah, I mean, like, look, Cliffwater, then Blackstone, there's a number of other ones that are coming. My assumption is they'll be quite similar.
Okay, Silas and his team have great reporting, so we'll get Silas back on as soon as something happens, and then I urge everyone also to go on the terminal and look out for his work. Silas, thank you, Silas Brown. Now, coming up, how the Egyptian economy is coping with the Iran war fallout. Mohammed Farid, Egypt's investment and foreign trade minister, joins us next, and this is Bloomberg.
up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
So Egypt has been dealing with the spillover effects like many countries of the Iran war. Billions of dollars of foreign portfolio investment have exited, and the Egyptian pound has been slumping. Now, the government also faces higher energy bills due to the effective closure of the Strait of Hormuz. Now, Mohammed Farid, Egypt's investment and foreign minister, joins me now for an exclusive conversation. Minister, thank you so much. It's always such a pleasure, actually, to hear about your country, but also some of the foreign direct investments that, look, I imagine has been hard because of what's happening in the region. I know you've been focusing on sectors like telecoms, airport management, and financial services to attract money to the country. How's that going?
Thank you very much, first of all, for having me on the show. And yes, definitely, what is happening in the region had its toll, but it is the response that we have done as the government, at the government level, between ensuring that we don't have imbalances re-emerging on the fiscal space, having a proper response on the monetary front. And then when it comes to the investment policy, we made sure at the cabinet level and at the government level is the continuity of operations of companies. That was the crucial point. Companies can be dealing with volatility, can be dealing with the differences and volatility in FX, but they cannot be dealing with operations disruptions. So this was the crucial point that we insisted upon. And then we are continuing our plan. So the response, first of all, was quite good and was quite, how can I say, applauded by as well development institutions and other institutions in our response to the crisis. And then we came to the point of investment promotion, investment reforms that we are undertaking, business readiness and business reforms that we are embarking on in the Egyptian economy that should be facilitating doing business significantly in the Egyptian economy.
So, and I have a lot of questions on that, but there's also, I know that there's, IPOs coming, actually, of state assets, and the viewers want to know what's coming up next. I mean, I know book runners were recently named for Life. Is that what's on the block next?
This is exactly part of the business reform environment or the business environment reforms that we're doing, because going for the public markets and IPOs is not only about availing the product in the market, but it's about governance of those companies. So Life Insurance, which is basically the largest life insurer company in the market in Egypt. So having it to be IPO'd in the market, being this only second insurance company, while we're having something like 18 banks that are being listed, but we don't have any presence or representation of insurance. So this is definitely in the pipeline, and we already appointed investment banks. We already the company took the relevant, I would say, board of directors approvals, the General Assembly approvals. So it's a matter of, marketing and investment banking activities for this company.
And after that, we also understand that there could be some kind of share sale or offer of a stake in Banque du Caire.
In Banque du Caire, that would be...
So that's the timeline.
Exactly, that's the timeline. And adding to that, we will be having, it doesn't have to be an IPO, but we have strategic sales of some companies operating in the renewable energy and some other companies operating in the oil and gas field, in the downstream services of oil and gas and petroleum services in that regard. So we are tinkering with some of the state-owned assets and how we expand the participation of the private sector. This is the ultimate target. We have seen private sector investments growing from 42% of total investments to around 57% during the last quarter. And this is an indication that the market sentiment is understanding the economic reforms and the business reforms that we're doing.
Minister, I mean, the government is also in talks with the likes of Saudi Arabia and Kuwait on some debt investment swap deals, which in the past, were secured, for example, with Qatar and the UAE. How will, the Strait of Hormuz and the war with Iran actually impact some of these investment plans in Egypt?
Actually, I believe it's not impacting that much because those talks were in the pipeline for some time. So it is about finding the right investment opportunity for the relevant, I would say, investor and country in that regard. And the moment we get to agree on which asset that they are interested in, the process, because it differs. Some, I would say, countries would prefer to take something that is greenfield and start it over. Some other countries would like to take things that are already operating, so it's brownfield and already operating companies. So it is in the process of finalizing and providing them with a pipeline of potential investments that can be debt swapped with the debt that they are providing to Egypt.
I mean, you're doing a lot, and actually there's a lot on offer for investors that want to come in. I know one of the other things is, for example, tendering for companies to manage, the airport of Hurghada. This is a major Red Sea tourism spot. Where are you on that?
It is important, and what we're hoping for is to see a quantum leap, because always, as anyone would work in government, you need to prove that the policy actually resulted in good results. So we're hoping with this, I would say, change in management that was going to be happening, we get to see an improvement in the number of tourists that are coming into Hurghada and so on and so forth. Yeah.
And again, there's, the government has said that you will temporarily list 10 state-affiliated companies on the local stock exchange.
Yes.
What does that look like? So in terms of timeline, but also can you give us names or sectors?
The names actually are already published, and it is on the exchange. And the ultimate target here, when you do temporary listing on the exchanges, you are forcing companies to start availing their financials to investors and so on and so forth. So it is all about availing information to investors, more disclosures and transparency. And we're expecting more than Mr. Life and Bank Ducaire at the point of time, but maybe another 2 companies that can be IPO'd during the second half of this year. And as I mentioned, we have those other strategic sales that can be happening.
And the size of the stakes, you have already an idea of what will be on offer and actually investor appetite?
For the first 2, yes, Mr. Life and Bank Ducaire. Mr. Life, we're talking about 20% of the company to be IPO'd. For Bank Ducaire, it's a bit larger. It's around 40% to 49% of the bank to be offered. And that would be a mixture between private placement, whereby you can be having some strategic investors or significant holders of stakes on those companies, and as well a retail-based IPO, whereby to see some retail investments in those companies.
How much investor appetite are you expecting? So you're here in London also. I imagine you spoke to investors. Are you getting a good feeling? There's a lot of money out there.
It's a non-deal roadshow, let's put it that way. So basically, we are pitching the reforms that we are doing on the several fronts between the fiscal, monetary, investment reforms, and as well we are providing investors with the clarity of what we are planning to do when it comes to the IPO plans, the divestiture plans, and how they can manage themselves in Egypt.
Is it tricky, or do you? I mean, there's just a lot going on because of mega IPOs, because of what's happening in Iran. How do you feel investor appetite is there? Are they listening?
Okay.
Are they curious?
To be honest, our response to the crisis and what happened in the Strait of Hormuz and the likes was quite stellar, and it is because of our response and the consistency of policies that they are actually listening now and believing the story that we really want to increase private sector participation in the economy, and part of this plan is divestitures and IPOs. And to be honest, not only that, the performance of the Egyptian capital market during the last 3 years was quite phenomenal. So for them, whomever who had invested initially in the market actually made a lot of money. So they're hoping to make a lot of money in the coming period again.
Minister, thank you so much. I know you'll be back on set with me. This is...
are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francie Lacqua here in London, and these are your top stories. Cooling off enthusiasm for the AI trade fades, at least for now, after driving markets to record highs this year. Elon Musk woos investors ahead of the SpaceX IPO, but the S&P rejects plans to speed up index inclusion for mega-cap firms. Plus, Ukraine's president proposes peace talks to Vladimir Putin in an open letter as the Russian leader rejects European efforts to kickstart negotiations. Now, let's get more on that story, and President Trump has welcomed President Zelensky's initiatives for talks.
I'm glad that they're maybe talking about meeting. I think we had a lot to do with it. I know exactly what you're doing. But I think it would be great if they met. They should get it done.
Let's get the latest on this from Bloomberg's team leader for Russian government, Anthony Halpin. Anthony, thank you so much for joining us again today. The Russian, Ukrainian, and U.S. leaders have all been talking about talks. But what do you make of this offer from President Zelensky?
Yes, good morning. I think he's trying to really kickstart the process of reviving talks. As you've noted, U.S.-led talks have really gone nowhere in the last few months because the Trump administration has been focused on the war in Iran. Zelensky's making clear he wants to talk. He's willing to meet Putin. He's inviting him to sit down and reach a deal. And he wants the Europeans involved as well as the US. But it's not clear that Putin will accept this offer, really. He's always said, for example, that he won't agree to a ceasefire until there's a deal that has been signed. And he's always said also that he won't meet with Zelensky until there is a deal on the table. He's not willing to sit down and negotiate that deal face-to-face in advance. So he's speaking today, later on in St. Petersburg, and we'll be interested to see what his response might be.
In Washington, meanwhile, Tony, the Democrats won a vote in the House with support from 18 Republicans backing aid to Ukraine and sanctions against Russia. How important is that vote?
Yes, it's quite a significant moment, I think. Democrats in particular, but now it seems some Republicans are unhappy with the approach of the Trump administration to this war. They've tried to present themselves as mediators between the two warring sides. And this vote basically signals that, look, there's one victim in this war, it's Ukraine. We ought to be doing more to support Ukraine. And there's one aggressor, which is Russia, and we ought to be doing more to penalize Russia and tightening sanctions. So it's a signal, really, of discontent. We'll see whether it goes any further through Congress and it ends up on President Trump's desk.
Tony, thank you so much. Tony Halpin there with the very latest. Now, there's been no sign of progress in ceasefire talks between the U.S. and Iran after the worst burst of violence in weeks, and as Hezbollah rejected a U.S. brokered truce in Lebanon. While President Trump says the ceasefire talks are in the final stages, Iran's Foreign Minister Abbas Araghchi says no tangible progress has been achieved. Well, Roxanne Farmayan, lecturer at the University of Cambridge, joins us now. Thank you, Professor, for joining us. Look, it seems that there's been a lot of talk, but very little progress, and there's been a week of clashes. There's also been, muddled thinking about what a ceasefire means, if it's just less fighting, from the U.S. side. Like, where are we exactly? Are we making progress?
Well, and indeed, President Trump today redefined the terms of a ceasefire by saying that it is a more moderate exchange of fire rather than a total shutdown. So I think we're seeing definitions shift as the process goes forward. But in many cases, I would say that the entire negotiating process has made the situation murkier rather than actually moving towards any kind of resolution.
So what do you think that, the next step is? We know that Iran has insisted that a ceasefire in Lebanon is the one thing they need before even thinking about accepting a deal.
Well, indeed. And to that point, President Trump has said he's spoken with Hezbollah, that they called, and that he has now a relationship with them. But they are making it very clear that, A, they have no intention to see the negotiations with Lebanon and between Lebanon and Israel as affecting them, and second of all, that a full end of the occupation and exchange of fire in South Lebanon is what they require, and since that is what is also required by Iran to take the next steps forward, this is becoming extremely tricky. It's becoming a networked situation, and clearly Iran is waiting for the United States to say to Israel, you must stop, and that is not happening.
So who has the biggest pain threshold right now? Is it Iran because, it's unclear how weak or how strong the regime is? Or is it really the U.S. because with every month it gets closer to, the midterms, and the price of oil is going to be very tricky for President Trump?
Price of oil is definitely going to be tricky, although we're seeing that the release of reserves and certainly the AI element within the stock market is playing to his advantage, because we're just not seeing the rise of the oil price the way one might have imagined, although we keep thinking that there's going to be a break coming up in the next couple of weeks. I think that to answer your question, I think the resilience is clearly on Iran's part. They have been a resilient economy and a resilient government through many years of sanctions, and it is not they who started this war, the kinetic part in any event, and so they're very much oriented to taking the pain and being able to, the regime certainly, to impose on its people that we need to hold tight here until this is over. The U.S. is very much less clear, and at a certain point one does feel as though the embargo is going to have to come to an end, and the U.S. is going to have to pull back. But to be honest, although many people see this coming to an end by June or by the midterms, I'm not totally convinced that that's going to happen. I think this, too, could drag on for many more months and possibly years.
Because what of the nuclear, again, last time, the nuclear negotiations took years. I think they took 18 months.
Yes.
Will this be even harder?
This is not only harder, but of course there's a whole new card now in Iran's deck, which is the Strait of Hormuz, which has now become absolutely imperative to Trump to clear up. So that's almost the first on the list of things that need to be resolved. And second of all, it was, after all, Trump that said that the nuclear material had been destroyed and obliterated. So Iran is trying to put that now into a lower part of the points to be negotiated, and sanctions and other elements have risen to the top. And I just do not see any parity in the two sets of demands from the two countries. And Iran has said, Foreign Minister Araghchi has said that what they are demanding, Trump completely redefines every time that he speaks about it. So the trust has become worse over this period rather than building.
Every day I ask about China, and I don't know whether there's a read across about what China wants to do, but also the fact that, Russia and Ukraine possibly moving must have an impact on China's thinking for the Strait of Hormuz and Iran.
Well, certainly China, which has played a very tight game over this last 98 days, we're about to 100 days of war, had quite a few reserves. It started moving after the June war. It has stockpiled, but that will eventually come to an end. So that will affect the price of oil, and its interest in getting the Strait open certainly plays into that. On the other hand, we're seeing a tighter linkage between the economies of China, Russia, and Iran as a result of the closure of the Strait and their relationship. There was just a new set of deals signed and plans made for this trans-rail network with Russia going into China yesterday. And so I think that they're looking for alternatives to tighten that and possibly move away from the United States entirely. So I don't see the China yet actually become a player in this negotiation.
Professor, I mean, there's one thing which, again, is very unclear, and it seems to change week by week, is the relationship between, Prime Minister Netanyahu and President Trump. Mm-hmm. Are they still close? Does the Prime Minister of Israel actually listen to the President if he asks for something? Or is it a very difficult relationship to manage?
Well, I would say we're in a rocky moment in any case. And I think there's the issue of Netanyahu's election that's coming up, which he would benefit from having Trump's support on. On the other hand, we are seeing that he's very much got different goals than President Trump does. The U.S. end game on this one is a win for Trump, and the Israeli end game on this is a constant chaos, I think, particularly just stabilization in Iran. And it's not suffering the direct impact of the Iran war, such as, for example, the Gulf is. So I think they've got different drivers, and I think it really depends on whether they can maintain this friendship. Neither of them are thought of, I think, as highly adaptable to others' agendas. So this could be the beginning of a breakdown, and I know that recent polls in the United States are showing a real drop in an interest in supporting Israel militarily. And should that come forward, that will be a game changer.
Thank you so much for joining us. That was, of course, Roxanne Farman, lecturer at the University of Cambridge. Thank you. Now to today's Big Take, which focuses on the Ebola outbreak across Congo and Uganda. More than 470 suspected or confirmed cases have been reported. Now, the epidemic is spiraling out of control, made worse by a mistrust of authorities and severe foreign aid cuts, plunging the international system built to contain outbreaks into crisis. Well, Jennifer Zabazaja, our chief Africa correspondent, joins us now for more on today's Big Take. Jen, thank you for being here with us. So what's been the impact, first of all, of the defunding?
Well, it's been quite a significant impact, Fran, especially if you take a look at what we have seen over the past few years in terms of support since the last Ebola outbreak back in 2014 to 2016. Now, over the past year or so, not just USAID, which of course contributed to significant pressure on health systems across Africa and really in the developing market, but also a number of G7 countries scaled back on their foreign aid assistance. That has concerned and really weakened the systems and the outbreak preparedness, response capacity, what health workers are able to do in terms of monitoring and testing ahead of outbreaks like this. We actually reported on some OECD figures that said just U.S. Funding cuts alone, annual development aid assistance dropped by just about 57%. So you can only imagine how that is already complicating the situation for health officials, but then also international health agencies that are trying to work to contain outbreaks such as this one.
Yeah, and again, I guess the problem is that we don't have the surveillance, so there could be a lot of unreported cases.
Yeah, and that's really the major concern, especially because this strain in particular, the Bundibugyo strain, there are no antibody treatments at this point in time. There is no vaccine, and so what some workers and experts have said is that they feel like they're playing catch up because there is just a bit of there's unclear details about just how far reaching long this current transmission is. Complicating this even further, Fran, is just the fact that there's quite a bit of mistrust in a number of these communities with this particular Ebola strain. That is making it difficult for health authorities to actually contain what they think are some cases, but then also manage risk events like burials, which tend to be quite a big risk event for spread. And so a lot of the funding that was going towards things like surveillance, monitoring, testing have really complicated the situation for health workers in what I should mention is a very difficult terrain as it stands.
Jennifer, thank you so much, as ever, for joining us. Jennifer Zabazaja, our Chief Africa Correspondent. It's a great read on today's big take. Of course, it's a sad read, but I urge everyone to just get smarter on this topic. You can find it on Bloomberg Terminal. We're also on our website. Coming up, we'll get key jobs data out of the U.S. today. We'll bring you, of course, a preview that's coming up shortly, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm election.
Hear it first on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative. Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Welcome back, everyone. Now, warnings about the risk to jobs from AI, of course, are getting louder. Now, Bloomberg Economics estimates that 120 million jobs across 31 countries could be meaningfully affected. Now, last month, Pope Leo outlined his thoughts on the global impact of AI. He talked of the need to, quote, disarm AI, as he called on world leaders to step up regulation of the rapidly evolving technology. Well, Flavia Krause-Jackson, who oversees Bloomberg's coverage of economics and politics for Europe, the Middle East, Africa, and Latin America, set herself the challenge, and this is a challenge, of reading all 42,000 words of the Pope's letter. She's now written a deeply personal opinion piece about how his stance on AI has impacted her. Well, Flavia joins us now. Flavia, first of all, it's a beautiful piece. It's a very personal piece. And I know we all think about AI, but actually you put into words also some of the things that we should worry about, which are disarming. Why did you decide to write this piece?
Well, I've covered the popes for many, many years, and you know, as I wrote in the piece, I'm something of a lapsed Catholic, and you know, being a Catholic, I think, is a little bit like Hotel California. Even when you check out, you really can't ever check out. And you know, I sort of kept thinking, why does this date really stay with me? And a lot has been written about the significance of how the Pope himself has been thinking about it. It's almost like a Donnie Darko-like wormhole connecting the former Leo to this Leo through 135 years. And I was like, well, there's a small wormhole here between my own life from when I, on the May 25th, took my first communion, and between when I got married. And, you know, between those years, a lot happened. And there was a lot, I think, that the church did that lost a lot of Catholics, a lot of Christians. The pedophile scandals obviously stand out, but also on things like social issues. And I just thought it was very interesting that in these really uncertain times, when we're all sort of wondering what AI does to us and we kind of don't know who to listen to, is it going to be the end of days? Is it going to be this, will it save mankind? Here comes this sort of unexpected voice, you know, from the Midwest, soft-spoken, American, and just sort of puts out something that, yes, there were a few headlines, there was sort of some covert criticism of Donald Trump, and there was a call to disarm, but actually sort of taking the time to read it. Now, I'm not sure I'm going to be reading it in Latin, but I presume there's going to be a translation of that.
That'll be a challenge for 2027.
I'll assign that to my children. But it was just sort of finding hidden treasures in there. And I think ultimately what he's telling us is, you know, I'm not going to tell you not to use technology, but I'm going to try and tell you to remind yourself what it means to be human. And I think that is the core of his message.
Which really comes out in your piece, because it's, you know, we talk about job displacement, we talk about this advent of technology and what it means to, you know, our work and everyone else's, our children's work, but actually you take it from almost a morally spiritual guidance.
Yeah, and I think ultimately what was interesting to me, having read it and allowing it just to sit with me, was like, okay, let's just see what AI has to tell me about this. And it was reassuring that actually they couldn't replace my feelings about it. They did sort of target a few bits which were important. And ultimately, I think what he's inviting us to do is, by all means, use technology, but use it thoughtfully. It's never going to replace your ability to think for yourself.
So it's basically, I mean, he talks really about ethics, and I was surprised also to hear, I mean, the Vatican has spent quite a lot of time thinking about AI and ethics, and again, what it means to be human.
Yeah, and I mean, I think one interesting thing about what he did is that he cited a few things like, this was a little bit of shade that he cast to some of the tech bros, the likes of Peter Thiel, where he said, okay, Lord of the Rings, you know, you'll love it so much, but remember this particular bit of what Gandalf tells you, which is a reminder really not to be hubristic. You cannot be the masters of the universe. So I thought that was a nice touch, also because it wasn't so heavy-handed. You had to kind of really read it all.
And how does that match up? I mean, we also have, you know, estimates of 300,000 job loss. I mean, there's all this kind of like really hard economics looking at AI, which you look at every day. So how do you match the two?
I mean, honestly, I don't know. I think, again, I go back to the personal. As a parent, I remember my own father wanting me to study actuarial science. Well, according to this report, that is exactly what you shouldn't be doing. But it tells you that that jobs like carpentry will be saved. Jesus, of course, was a rather famous carpenter himself.
Flavia, thank you so much. It's a really great piece. I think deeply personal, and I thought it was deeply touching. You can find that piece on the Bloomberg Terminal, but also on the website of Flavia Krause-Jackson. And subscribe. It's out for every weekend reader. It's a great new product that we've had out for about 8 months. And there's a beautiful newsletter where you can read Flavia's essay and much more on Bloomberg Weekend. Now, Anthropic's co-founder and president says the high cost of developing artificial intelligence models is driving firms to look to the public market for capital. Daniela Amodei spoke to us exclusively at the Bloomberg Tech Conference in San Francisco, days after the Claude maker filed confidentially for its highly anticipated IPO.
Yes, you're correct. We confidentially, filed our S1, and that gives us the option, to potentially go public after the SEC review. Unfortunately, that's all I can say about anything IPO related. I'm sure you understand.
I mean, if we can just maybe level up a little, what is the calculus for a kind of an AI company generally to go public or not in this moment? What are some of the pros and cons here? Because on the one hand, yes, you can access more capital if you're not a startup, but on the other, then you're beholden to quarterly results, shareholder calls, et cetera. So what are some of the pros and cons just generally for an AI startup, do you think, to go public in this moment?
So I think, at least speaking for, ourselves, and I think ideally, probably really for the AI industry more broadly, it's a very capital-intensive business to train AI models. I think that's something we've been, very open about from day one. I don't think that's, a surprise in the industry. And I think this kind of concept of like, how do you access the level of capital that you need to train these models, right? It's a really big kind of upfront cost to train the models and to serve inference on them. And I think that is, my guess is that, over time, the sort of core set of companies that are working to advance the frontier are just going to need access to capital, and I think the public market is very well suited to that. So there's obviously, of course, trade-offs, but my sense is there's just a fundamental structure of how training and kind of serving these models for customers works, that it will require that level of access.
Well, Anthropic co-founder and president Danielle Amodei speaking to our own Shirin Ghaffari in San Francisco. Now, today we'll also get key jobs data out of the U.S., including non-farm payrolls and unemployment data. Well, Bloomberg Economics expects the May payrolls to show a solid increase, with services hiring driving the gain, whereas federal payrolls will likely remain a drag. Well, Ven Ram, our MLive cross-asset strategist, joins us now. Ven, happy Jobs Day. I mean, we used to greet ourselves on Friday, saying like that. How are markets likely to react to the jobs data?
I think the market reaction is going to be underwhelming unless we get a shockingly low number, which I don't expect, which no one expects. I think that for the Fed, it shows a sense of sufficiency of proof that, look, the economy is growing on track. It's on track to grow above trend this year. And that is the risk that the markets, I think, are underpricing, is that, the Fed could turn hawkish at the turn of events, because you've got an economy that is growing well above trend, and you've got core PCE running well above 3%. The Fed thought that it was going to be 2.7% this year, but we know now that that's unlikely.
Yeah.
So then the markets are thinking Kevin Walsh, because of his previous pronouncements, is going to turn dovish. But I don't think that he may immediately turn dovish, even if he wanted to, because the numbers simply don't allow him to. So I think that there is a risk that he could turn hawkish. So I think that yields are going to go higher from here, not lower from here.
We also had, this BOE survey, which I always find interesting. We love talking about the BOE together, but this is also, we had a good set of earnings, and this BOE survey now shows that UK firms are expecting to raise prices in the coming year to basically protect margins. I mean, this is another, inflationary input that the Bank of England doesn't really need.
Absolutely. I think that, this is the second round effect that everyone has been fearing. And I think that, Governor Andrew Bailey himself said that last week that we can't wait for the second round effects to filter through before we take some action. And I think this survey kind of shows that, there is that second round exertion in the economy. And I think that, Megan Green, we've already heard her say that they should raise rates sooner rather than later. And I think if they go sooner, I think the quantum of tightening that they may have to do later in the cycle will be reduced. So I think that it's one more proof, it's one more evidence, building evidence that the Bank of England needs to act sooner rather than later.
Now, talk to me in general about, this AI trade, which I haven't really quite figured out, because I understand there's a lot of CapEx. I understand this is filtering through everything, propping up the economy. I mean, at some point, we're seeing it's a bit of a correction, but it's tiny bit. It's just a little bit of air actually getting put out in a pocket. Like, how do you see this evolving for equity markets?
I think we are beginning to see pockets of dislocation, pockets of discomfort in the market. We had that with the Broadcom earnings disappointment, and that's filtered through, and it's been reverberating through the markets for the past couple of days. And look, we've got half of the NASDAQ 100 constituents trading at a PE of more than 30 times. That is not sustainable in the long run. And I think that the markets are well aware that we're building towards a bubble. But I think that we've got 2-3 more big AI IPOs coming, SpaceX, Anthropic, and OpenAI. And I think that the markets will kind of hold resilient through those IPOs. But what happens after that is the big question. And I think that the cracks are beginning to show. And I think that this might get too ripe to be sustainable.
Ven, thanks so much, as always, for all of your thoughts. Ven Ram there, our MLive cross-asset strategist. Up next, it's Bloomberg Brief, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up
I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Good morning. It's 5 a.m. in New York City, 10 a.m. in London. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the trading day. Jobs report on deck as the AI trade loses steam and stocks head for their first weekly loss since March. NVIDIA greenlights 3 of the world's biggest chip makers to supply high-bandwidth memory to its AI accelerators, and Elon Musk captivates investors at a JP Morgan SpaceX event ahead of the largest IPO in history, set to start trading next week. Let's get a check on markets around the world. We start off in Asia with Winnie Su in Singapore. Winnie, what have you got?
Good morning, Matt. We are seeing further weakness in Asian stocks today as the AI rally takes a breather and also as investors rotate away from technology shares. And you're looking at the MSCI Asia here down 1.7%, headed for its first weekly decline after 2 weeks of gains. And also leading losses today, we have South Korea's Kospi Index closed down 5.5% with the won also weakening for a 5th session. Now, it really is that foreign selling of South Korean stocks now taking up to as much as $10 billion in just 1 week, weighing on the currency. Now, flip the board and take a look at where that money is going into, away from technology shares, but going into the likes of Japanese banks, which are rising on the back of the further bets of the Bank of Japan to raise rates later this month, and also some of these Chinese consumer names gaining more attraction now that the stocks are also rotating away from technology shares.
All right, Winnie, thanks very much for that. Let's get a look now at what's going on in Europe. For that, we go to London and Justina Lee. Justina?
Good morning, Matt. Now, I always say European stocks are all about oil, but today is actually also reflecting a bit of that weakness in the AI trade. Now, we had the stocks Europe 600 kind of trading a bit flat because it's really being dragged down by kind of the worst performing sector of all. Of course, that is tech, kind of down like almost 2% here in Europe today. And now when it comes to oil, that is slipping a little bit today, and that's being reflected in some of those short end bond yields kind of coming down. Now, of course, when it comes to fixed income and currency, all eyes will be on the ECB next week. Now, Bloomberg just released their survey of the economists today, and what we're seeing here is everyone's pretty sure we're going to get a rate hike coming up. But what about the rest of the year? Now, if we flip the board here and we look at what money markets are pricing in terms of where the rate will be by year end, and we can see it's kind of around 60 basis points higher, showing that markets are expecting another rate hike coming up this year, possibly around September, according to the survey today. But kind of we'll have to see what ECB officials are going to say next week.
All right, Justina, thanks very much for that. Take a look at what's going on in U.S. markets. We see futures that are down across the board. S&P futures off 0.5%. And as I said, we could see the first weekly loss in 10. We closed the week out in the cash trade last week at 75.84. So if we close below that, it'll break our winning streak. NASDAQ futures off more than 1%. We did see a rotation out of tech stocks here yesterday as well into the Dow Jones Industrial Average, which added almost 1,000 points. We'll be watching that old index closely today, and small caps are off 0.6%. For some of the stocks that we're watching, the individual stories, let's go out to London again for Chloe Melee. Chloe?
Good morning, Matt. We are seeing those AI-related stocks continue on their downward trajectory. Of course, we had that weakness yesterday on the back of this disappointing outlook from Broadcom. And today we are continuing to see this enthusiasm around the AI trade waning a bit and those expectations getting reset. And so we are seeing those three here on the board, but in particular, Micron down about 3.5% this morning. Moving on to the retail space, and we've got Lululemon shares sinking this morning after cutting its revenue guidance, and in particular, flagging a poor performance in North America. It has been dealing with much higher competition from new entrants, and also, of course, this weaker consumer spending that we have been talking about for retailers. And so now there's really piles pressure onto the incoming CEO that is going to have to really try and revitalize this struggling company. And so we're down about 12% this morning. And finally, we are also in the red for DocuSign after the company issued an outlook that was seen as a bit disappointing. A lot of analysts are saying this is very much a wait-and-see story with that company, especially when it comes to its new AI-powered platform. And so we are seeing a bit of weakness there in those shares, down about 5% for DocuSign this morning.
All right, Chloe, thanks very much for that. Chloe Melee with a look at your single stock stories. Coming up in this hour, we're going to count down to the payrolls report with Veronica Clark of Citi. Very much looking forward to that. Let's get a preview of those jobs numbers. For that, we go to Ven Ram in London. So, Ven, what are we expecting today, and what are the whisper numbers?
Morning, Matt. I think that the markets are expecting about 85K, give or take. But I think that for the Fed, I think that this is proof of sufficiency that the economy is resilient. And I think that, the markets are kind of underpricing the risk that the Fed could turn hawkish in the short term. In March, you will remember, Matt, that they forecast core PCE of 2.7% for this year, and they projected growth real GDP growth of 2.4%. Now, given the resilience in the economy, I think that, we could get an upward revision next week to 2.5% in real GDP, and we could also get an upwardly revised number for the core PCE, because 2.7% looks rather outdated in the scheme of things, given the global energy shock. So I think that, the two-year Treasury yields are bobbing around 4.05, but I think that the risks are higher for yields, because I think that the Fed can't hold the rate at the current level. Even if they're going to be patient for a bit, I think eventually they will have to raise rates.
I'm looking, by the way, on the Bloomberg terminal, you type WHIS GO, and you can put in your guess, participate with your colleagues on Wall Street. The survey number is considerably lower than the whisper number, which is now 100,000 and climbing. So we'll be watching that closely, Ven. I wonder, what is the bearish argument against this AI mania in markets that have pushed us to record high after record high? Because valuations don't seem terribly high on a forward PE basis. Is it more of a CapEx issue?
Well, it is, part of it is the CapEx issue, right, Matt? But I think there is also the valuation. So overall, the market may not look, market valuations, aggregate market valuations may not look demanding. But if you look at the NASDAQ 100 components, for instance, fully half of the 100 basket is trading at a PE of 30 times over. So I don't think that's a sustainable valuation. I don't think anybody will say those are reasonable valuations. These are levels at which Warren Buffett would be selling, not buying. And for investors who are buying, they need to be absolutely sure that the earnings growth that they're invoicing are going to materialize at some point. So the markets are kind of getting riper and riper with each passing day. We had Broadcom disappoint earlier this week, and you saw the reverberation showing through in Asia and in Europe as well. So the markets are beginning to feel that, look, you know what, this is looking a bit long in the tooth at the moment. So I think that this countenance can continue until we've got these big IPOs, SpaceX and Anthropic and what have you. But I think that after that, it will be a litmus test for the markets. And if someone comes out revising their capex lower, I think then you will have a turning point in the markets.
All right, Ben, thanks so much for joining us. Ben Rahm there from the MLive team. You can get his work and the work of his colleagues by typing MLIV Go on your Bloomberg terminal. Let's turn now, back to tech. NVIDIA confirms Samsung, SK Hynix, and Micron will be cleared to help supply its AI accelerators as the CEO of NVIDIA touches down in Seoul.
All three vendors have been qualified. All three vendors are in production, and they're all racing. They're racing all to support Vera Rubin.
Joining us now is Matt Bloxham of Bloomberg Intelligence. So, is this really still the biggest bottleneck, the high bandwidth memory, even more difficult than power?
I think it's certainly a critical issue, and so for context, this bandwidth, high bandwidth memory is required for the next generation of NVIDIA product, which is the Vera Rubin, which is designed to kind of support agentic AI workloads, which in addition to the GPU workload that we've come to know and love with NVIDIA, also requires huge amounts of CPU processing power too, which is the Vera part of the offering. And memory is in short supply, and it's critical that NVIDIA has enough supply to take that product forward. And so the fact that they've kind of lined up all three suppliers is an encouraging sign for the business as a whole. And clearly, all three of those will inevitably be prioritizing sales to NVIDIA over pretty much everybody else. So it's maybe going to have knock-on effects to supply for other parts of the value chain.
Matt, are some Chinese firms like Alibaba, are they going to be able to get hold of these Vera Rubin accelerators, or have they been able to get hold of Blackwell accelerator kits for parts of their business that operate outside of China? For example, if they have servers in Singapore, can they get access to chipsets that are banned for sale in China?
Yeah, I mean, I think the official answer to that would be no, but as you know, we've kind of heard that the US has been looking at whether its Trump-era controls over this high-tech sales of things like NVIDIA chips has really been that effective, and certainly some question marks about whether there's some loopholes in that system. I think clearly the likes of NVIDIA kind of play the game and operate as if there aren't loopholes, but I think inevitably there's going to be some leakage of this technology back to kind of Chinese companies, whether that's in China or overseas. We've heard examples of that over the last several months. So I think most of the big firms are acting responsibly, but it's incredibly hard in this kind of global economy with so many different parts of the value chain to have kind of a watertight system. So I would think that inevitably there's a bit of leakage here and there.
All right, Matt, thanks so much for joining us this morning. Matt Bloxham covers tech for us on the Bloomberg Intelligence side out of London. Now let's get to the other top stories trending on the terminal this morning. Banks are curbing staff travel to China as regulators there intensify scrutiny of cross-border investment flows. UBS postponed its mid-year wealth outlook event. HSBC is discouraging non-essential travel to a China-based event. Banks are reassessing their approach on the mainland after Beijing launched its most aggressive campaign yet against unauthorized cross-border trading to stem capital flight. Ukrainian President Volodymyr Zelensky proposes peace talks to Vladimir Putin. In a rare open letter, Zelensky wrote, "We in Ukraine do not want a permanent war. We know very well that life without war is infinitely better." The appeal comes as European officials discuss the possibility of holding talks between Russia and Ukraine. U.S.-led peace talks have stalled. Bitcoin's sell-off is putting fresh pressure on digital asset treasury companies. Shares of dozens of firms are extending losses, sometimes exceeding those of the cryptocurrencies they were built to own. Roughly $62 billion in market value has been wiped out since its the October peak of Bitcoin. Coming up, the S&P Dow Jones Indices denies fast entry of mega IPOs, including SpaceX. More on that move next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is Bloomberg Brief. I'm Matt Miller in New York. The S&P Dow Jones sticking to its eligibility requirements for benchmark indexes like the S&P 500 to fast-track mega-cap IPOs, leaving companies like SpaceX to wait 12 months before they are eligible. Joining us now is Bloomberg's Benedict Campbell. And Benny, I wonder if this, which is really an interesting move, is because S&P doesn't necessarily have to attract these companies for listing.
Well, eventually they do want them, but they're obviously cautious here that they don't want to insert too much volatility into the index. And this is what you get when you get these early entrants. You know, you're not quite sure where they are going to go in terms of their profitability, in terms of sort of the stableness of the business. And if we look at the SpaceX numbers, you know, there are a lot of question marks in terms of the growth trajectory, in terms of the stable delivery of their operations and so on. So what we're hearing now, or what S&P is suggesting, is, you know, we need to sort of preserve some state of normalcy here, you know, in an IPO process that has been everything but normal, from the listing to the price and so on. So this is obviously not great for some of the sort of passive funds that track the IPO, because they track the index. So that means that they will be excluded here. So that's not great. But this is sort of them trying to find a balance, S&P that is, between stability and sort of going after the hype, as it were.
So, I mean, my point is, though, that unlike the NASDAQ or the New York Stock Exchange, they don't operate a business where they make money by attracting the listing, right? They'll want it in their index eventually, but they want it to be seasoned first. Because if you look at a history of giant IPOs, the average drawdown from peak to trough is 55%. So passive investors could easily get burned if a giant stock like this is included so soon after its listing.
And that's exactly right. So that's what they are trying to avoid. They are trying to avoid this level of volatility, the burn that might happen to these passive investors. And they're saying, let's give it a year. Let's sort of not throw some of our requirements to the wind. And that's why they've added sort of, or why they've kept to their principles and say, let's add it a year later, see how it settles, and then let's do it.
In terms of the profitability requirement, is that something that they're also keeping, because SpaceX isn't expected to make money until at least the next decade?
Well, yeah. I mean, if you look at the SpaceX outlook, it is it's not particularly stable in terms of what they will bring in. They have a huge addressable market for sure, 28 trillion. But then the profitability, as you say, is lacking behind that. So this is a business that is not profitable. They had billions in losses. The revenue is broadly in line with the losses. So again, this is something that they will take a close look at and see how this develops. You know, if you look at the prospectus, and if you look at what's being marketed, huge growth prospects here for the revenue side, for instance. This is a business that the bankers say can grow in the next couple of years to 500 billion in revenue. Now, if you look around, there aren't many companies out there that have that kind of revenue. The likes of Amazon, of Walmart, maybe. Even Apple is quite a bit below that. So there's obviously a huge delta between where SpaceX is now and where they want to be in a couple of years. And that is sort of the volatility that we're talking about. Can they actually achieve that? How will they do so? This is somewhat a conglomerate business. We have the space business, the launcher business, the satellite business, and then sort of superimposed onto that, we have the massive AI business where, you know, all bets are off how profitable that might be. For now, it's consuming huge amounts of cash. So that is really sort of the delta here and sort of the unsure part, and that's why I think there is that volatility.
All right, Benny, thanks very much. Benedict Campbell joining us out of London. This is Bloomberg.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
When Rodrigo Paz was elected president of Bolivia, it marked a major shift following 2 decades of socialist rule. Wall Street Week traveled to the country to see firsthand his mandate of economic reform, including tapping into the country's vast lithium resources.
The Salar de Uyuni in Bolivia is the country's crown jewel. It's a sprawling salt flat on the Andean Altiplano. So large, it's visible from space.
We are at 3,650 meters above sea level, my friend.
Very high.
Very high. So the lithium mining just down on the south. Okay.
We're standing on top of one of the largest lithium resources in the world.
La pregunta es, ¿por qué queremos ser pobres?
After he was elected last October, President Paz signaled Bolivia is open for business. But as we discovered, there is a disconnect between his rhetoric and the realities on the ground. We arrived in La Paz to sit down with the president as violent protests erupted across the country, shut down parts of the city.
Everybody knows the Bolivia story. It's an incredibly, commodity-wise, it's kind of hard not to see it as a really easy place to make money. It's just the ethnic tensions there that have always existed. And the fact that they have a tradition of going out in the streets, there's been a lot of turnover of governments. And as we're seeing now, it's pretty easy to sort of choke the economy.
Bloomberg's Simon Hampton joins us now at the desk. So, Simon, Bolivia has been talking about its lithium potential for decades, as David says. What makes it different this time?
Well, I think Paz is really trying to engage in U.S. investors this time, and he's forged close relationships with the Trump administration. We saw just yesterday even support from Marco Rubio, the Secretary of State, and Pete Hegseth, the Defense Secretary, throwing their support behind the administration in the face of some of the protests that we've seen down there. But I think he's trying to engage in U.S. investors. He's trying to change the investment structure in Bolivia as well, and make it more attractive for foreign investment. I think some of the challenges that foreign companies faced going into Bolivia was that the state wanted a big cut of whatever extraction happened down there, and it didn't really make it a particularly attractive investment for foreign companies. You couple that with the fact that Bolivia is a very remote place. Most of La Paz, the capital, is at altitude around 14,000 feet. The Salar de Uyuni, which you saw in that clip, is also at a similar altitude. It's quite hard to get the resources out of Bolivia as well. So there's it's very capital intensive, and then the sort of investment climate there has also been pretty challenging for investors.
All right, well, we look forward to seeing this episode of Wall Street Week. Simon Hampton produced that for us, and you can watch Wall Street Week every Friday at 6 p.m. Eastern. Definitely an episode you want to tune into tonight. Coming up, we're going to push ahead to the payrolls report with Veronica Clark of Citi next. Will this drive interest rate increases? This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
It is 5:30 in New York City, 10:30 a.m. in London. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The jobs report is on deck as the AI trade loses steam and stocks head for their first weekly loss since March. NVIDIA greenlights 3 of the world's biggest chip makers to supply high-bandwidth memory to its AI accelerators, and Elon Musk captivates investors at a J.P. Morgan SpaceX event ahead of the largest IPO in history, set to start trading next week. Let's get a look at what's going on in stocks. S&P futures are down, and we see NASDAQ futures off more than 1% now. We could break our weekly winning streak. A weekly loss is possible for the first time since March. Take a look at what's going on in treasuries as we have seen yields coming down. They continue to fall. The U.S. 2-year yield at 4.03, the 10-year at 4.46, 4.47, and the long bond trading at 4.97.15. For some of the stocks that we're watching for you, let's get over to Chloe Melee in London. Chloe?
Good morning, Matt. We're seeing those AI-related stocks extending losses in pre-market trading this morning. We, of course, had a lot of weakness yesterday on the back of Broadcom's disappointing outlook, and we're seeing this enthusiasm around the AI story, around the AI trade, weakening a little bit, and some of those expectations getting reset. And so we're seeing NVIDIA, Micron, and Broadcom all down this morning, and Micron in particular in the red. Moving on to another company that's in the red, and that is Lululemon, which has cut its revenue guidance, and that is really leading the shares down. This is a company that's dealing with a lot of different challenges. There's, of course, the weaker consumer spending that we've been talking about, higher competition, but also some recent product blunders like the see-through leggings that we remember from a few months ago. And so now this really is piling pressure on the incoming CEO to revive demand for that company. And finally, DocuSign is also in the red this morning, seeing a bit of weakness after guidance underwhelmed investors. And analysts are saying that now the company has to prove that this AI-powered platform that it has developed can really accelerate that demand and that growth going forward. But in the meantime, there's a bit of weakness there, and we're down about 3.4% in pre-market trading for DocuSign.
All right, Chloe, thanks very much for that. Chloe Melee with a look at some of the individual stocks we're following for you today. Now, less than 3 hours until the payrolls report is released. The whisper number currently at 100,000 jobs added in the month of May. This will be the last print ahead of Fed Chair Kevin Warsh's first rate decision at the Post. Joining us on the desk is Veronica Clark, U.S. economist for Citi. So, Veronica, looks pretty good, this labor market. I mean, I think a lot of people had expected AI to wipe out jobs, and we really haven't seen that yet.
No, we haven't. There has been some increase in the layoff rate in the information sector. That's some of those tech companies. But yeah, as a whole, the labor market the last couple of months looks pretty stable. I think we'll see that again this morning. We're looking for 60,000 jobs. That's still very healthy, a stable unemployment rate. But I would say the stability looks pretty fragile. This is still this very low hiring, low firing environment. And what we have seen the last couple of years is that it does look stable until you maybe get to the summer and you get students looking for work, new graduates, things like that. And this low hiring rate does tend to push the unemployment rate higher in the summer.
So do you expect the jobs picture to get much weaker this summer?
Yeah, I do think we will see that. So yeah, we have this stability right now, but some of the forward-looking indicators don't look particularly encouraging. Yesterday, we got the NFIB small business hiring plans. We'll get the full data for that survey next week. But those hiring plans broke through the lows of the last couple years. They do tend to lead payrolls by a couple months. They're not quite at pandemic lows, of course, but trending in the wrong direction.
Pandemic lows should be the outlier.
Yeah,
right?
but a lot of data honestly look like pandemic lows, the hiring rate and things like that. So yeah, it doesn't really feel like a very comfortable labor market still.
So, but it's not going to be an environment in which Kevin Warsh finds it easy to cut rates. And we imagine, I guess we assume that that's his mandate, although he says President Trump has not asked him to do that. This administration is really pushing for lower rates. Will they get it?
Yeah, not right away, of course. Yeah, it's going to come in a couple weeks, and it's going to be really hard to be too dovish, especially because the market might perceive you're not taking the inflation risk seriously. And we will get inflation data next week. I think core PCE in May, when we add up all the details, will still be pretty uncomfortably strong. So yeah, he won't be able to sound too dovish next week. But I think later in the year, yeah, if we see the weakness in the labor market reemerge, the underlying drivers of inflation that the Fed would care about most, things like the labor market being too tight and home prices rising too strong, that's really not a driver of inflation right now. So they might be able to kind of massage what inflation they look at for an underlying trend.
How seriously does this Fed take inflation pressures? Because we're still looking at PCE that's almost twice their stated target. And remember that they want to average 2%, not just touch it.
Yeah, we've kind of given up on that averaging. I think we've been well over 2%.
Have they given up on it?
I think a bit. We've been well over 2% for a while now, of course, but we were undershooting 2% pre-pandemic. Yeah, there will be a debate, I think, on, we're already starting to hear this from Fed officials. Obviously, some are more hawkish than others, but what type of inflation measure do you look at? We're hearing more about these trimmed mean kind of inflation measures. That was came up in Warsh's testimony in the Senate a month or so ago. What's the right way to look at the underlying trend? Because there are different data that are telling us different things right now. Core CPI is much softer than core PC, which is somewhat abnormal. So what's the right way to look at inflation?
What does the consumer look like? I mean, we hear so much about the K-shaped economy, but they keep spending.
They do, yeah. Consumer sentiment always comes out every month, at recent lows, new lows, but people do seem to keep spending. I mean, that's been part of the story recently. Yeah, spending data does still look strong. You do have the issue now, though, with the rise in gas prices and some slowing in income growth, that real income is negative on an annual basis. There's maybe some subsidy kind of dropping out of that data, but it does seem like there's reasons to think consumption would be slowing.
I guess the big picture question is, how does AI affect not only productivity, but hiring, right? The question is, does it erase like back office jobs, or like Reid Hoffman's famous radiologist example, does it create even more jobs than we may have expected?
Yeah, both could be true. What we see in the data right now, it's kind of hard to pick any single narrative. We got the Challenger job cut announcements yesterday. They're not concerningly high or anything, but AI is cited.
Almost 100,000, right?
Yeah. Relative to the history, though, that's somewhat normal, recent history at least. But companies do cite AI increasingly as a reason why they're doing those layoffs. But it's really hard to know, is that because you're getting more productivity from AI, or is it because you've invested so much in AI, you need to cut costs elsewhere? Maybe it's a shareholder-friendly reason to say that you're having layoffs, you're increasing productivity.
What do you think, though, Veronica, like 10 years out, or 20 years out, what does this do to the U.S. labor market? Is it the technology that finally kills all jobs, or does it, like every other technology in the past, end up building new jobs that we never even thought of?
I think I'm more in the latter camp. So I'm not so concerned about these mass layoffs. You know, if there were to be a sudden surge of layoffs because of AI, I imagine we might get some regulation around it. But yeah, usually over time, new technology does create new jobs. The issues with AI I'm more worried about are any kind of sentiment correction, equity correction, maybe like what we're experiencing this week, because so much of even GDP growth is AI-related investment. It's a big driver of growth right now.
All right, Veronica, great having you here. Thank you so much for joining us. Veronica Clark there from Citi. Let's get to some of the other top stories trending on the terminal this morning. Banks are curbing staff travel to China as regulators intensify scrutiny of cross-border investment flows. UBS postponed its mid-year wealth outlook event. HSBC is discouraging non-essential travel to a China-based event. Banks generally are reassessing their approach on the mainland after Beijing launched its most aggressive campaign yet against unauthorized cross-border trading to stem capital flight. Sell Indonesia sweeps global trading desks. The nation's stocks have tumbled at their fastest pace, and the rupiah has sunk to all-time lows. It's a dramatic turn for commodities-rich Indonesia, which has been a staple allocation in many emerging market portfolios. The stock market there is down 38% from its peak. And Democrat Xavier Becerra is projected to advance in California's governor race. The next question is who will face him in the midterms? Republican Steve Hilton or Democrat Tom Steyer? The race to replace Gavin Newsom has become the most expensive gubernatorial contest in U.S. history. Coming up, debating the U.S.-China tech policy, the Trump administration worries NVIDIA's Blackwell chips were sold to China through potential loopholes. More on that next. This is Bloomberg.
Welcome to the world of decentralized finance. Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
This is Bloomberg Brief. I'm Matt Miller in New York. Republican opposition to President Trump's foreign policy growing, the House voting to advance Ukraine aid and Russian sanctions with 18 GOP signatures. That's after the chamber voted to halt the U.S. war with Iran earlier this week. Jonathan Tamari of Bloomberg Government joins us from Washington. So, Jonathan, it did look like Republican opposition was growing, but I was watching the Votorama yesterday, and they were unable to pass an amendment that would sort of erase, I guess, his weaponization fund.
Yeah, there were competing arguments there over which approach would work between the Democrats and the Republicans. They did get a majority for a Republican. I'm sorry, now, let me back up. They were very close to a majority, but the Republican bill required 60 votes to end that weaponization fund. You ended up basically having Democrats and Republicans disputing how to end it, and they weren't able to reach a deal there. So there's still a lot of opposition, but not enough to put it into law.
I thought it would stop the passage of funding for ICE and CBP. That's what it looked like. But they actually passed a $70 billion bill to fund those agencies after months of debate.
Yeah, and that was the issue, is that the Democratic version of this would have basically sent the bill back a few steps and prevented them from passing that $70 billion this week, which Republicans have been eager to do for many weeks now. I mean, this is a topic that unites the Republican Party. It's one of the rare topics that fully unites the party, tougher border enforcement. And they've been trying to get it done. They kept running into roadblocks. The Senate finally got it done. The House is hoping to do it likely next week. And then they're hoping they can move on with the rest of their legislative agenda, because this has jammed them up and eaten up a lot of time for some time now.
I guess there's not going to be funding for a ballroom. Taxpayers won't be footing the bill for that right now?
That is not in this bill. No, that was removed as part of the way for Republicans to kind of keep their party unified, to narrow the focus and keep it just on immigration enforcement.
All right, Jonathan, great having you on the program. Thanks so much for joining us. Jonathan Tamari there from Bloomberg Government, senior Washington reporter from Bloomberg Government. Really appreciate your time. Let's talk here about NVIDIA. The CEO, Jensen Huang, confirms that the memory sector's big three, Samsung, SK Hynix, and Micron, have been certified to help supply its AI accelerators.
All three vendors have been qualified. All three vendors are in production. And they're all racing. They're racing all to support Vera Rubin.
Joining us now is Matt Bloxham of Bloomberg Intelligence. So, I guess this is a critical a component. Obviously, it's been a bottleneck as well in terms of supply constraints. How does it look going forward, Matt, in terms of getting enough high bandwidth memory to do what NVIDIA needs to do?
Yeah, that's right. So the context of this is the Vera Rubin platform, which is their next generation AI platform to support agentic workloads where you need a huge amount of both GPU and CPU processing and a huge amount of high bandwidth memory to support that. And that's where these big three come in. And the big question, as you said, is whether there's enough supply. I think the fact that NVIDIA has authorized all three of them to supply is going to, I think, reassure investors that NVIDIA is doing everything it can to get as much of this technology as it can, and that may well have negative knock-on effects to other players outside of the NVIDIA ecosystem who will also be trying to compete for the supply of those chips, because I'm sure all these players are going to be making sure they can supply as much as NVIDIA wants, because it's such a big customer.
Matt, how expensive is it for us to be using AI? How much do you know, the hyperscalers subsidize the tokens that are necessary? Because it strikes me that not everyone is really getting a proper return on their investment yet.
Yeah, I mean, my sense is that the pricing that the big hyperscalers offer to both consumers and enterprises, it includes a profit margin, but obviously balanced against that, they're making huge investments in additional infrastructure to scale. So you've kind of got that blurring of effects. I think if there's a subsidization coming anywhere at the moment, it's from enterprises who are deploying this stuff because they're still in pilot phases. I think most companies are at a point where they're spending more on AI compute than the productivity gains that they're getting. And that's a really critical dynamic that needs to shift over the next, say, 12 to 24 months to unlock the next wave of enterprise scale AI investment, because clearly companies aren't going to be just investing in this and taking on more costs without seeing some kind of economic benefit off the back of it. And we haven't really seen that yet. And I think that's the real sticking point.
I feel like I got to use more than $20 worth of tokens every month I must use ChatGPT for hours every day. Anthropic, by the way, calling for an AI sort of arms race pause to let humans take stock of this technology before it develops itself. We had a great interview with Daniela Amodi yesterday.
Yeah, I mean, this kind of flags a really important point for society as a whole, that this technology does have risks of being able to kind of develop itself and create all sorts of unintended consequences. So I think what Anthropic is proposing, in spirit at least, is a great idea. I think in practice that would be almost impossible to implement, but it is a massive policy challenge, and I think it's going to need a lot of the smartest brains on the planet to figure out some guardrails that might actually have some chance of success to allow humans to continue to control the pace and nature of AI development over the next few years.
Matt, great talking with you as usual. Matthew Bloxham covers the technology picture for us out of Bloomberg Intelligence in London. Let's turn now to SpaceX. Elon Musk's business charm on display, reportedly leaving investors starstruck at an event hosted by JP Morgan's Jamie Dimon. Questions about the highly anticipated IPO brushed aside as many investors chose to focus on the bigger picture. Joining us to talk more about it is Benny Camel, and we're getting headlines across, Benny, that some investors won't be able to participate. Chinese and Hong Kong investors are going to be banned from the SpaceX IPO on security concerns. What do we know?
Yeah, so this is hot off the press just now, as you said, a headline crossing there. So some investors won't be able to participate, and this has to do with sort of national security concerns. And it's somewhat in contrast to what we saw over the last decade, where Chinese money was a welcome inflow into a lot of U.S. investments. And obviously now, with tensions between the U.S. and China sort of still high, there is some concern that you don't want too much involvement or scrutiny from the Chinese side. Also, should we say, control via inflows of funds. So a fairly robust response there. And so this is as the banks are marketing the IPO. It's going on right now. We will get the actual listing next week. And as you said, the mood is positively giddy right now. Everybody's trying to get a piece of this pie. Elon Musk has sort of taken a take it or leave it type approach with his one price fits all. Normally there's a range, but he's sort of rewriting the rules and saying 135, that's the price you're going to get. But everybody's marketing this. We have the lead banks in this, Goldman Sachs, Morgan Stanley, but also Jamie Dimon, sort of the elder statesman of the US banking industry, is also playing a direct role in this. Sort of putting his face onto the marketing efforts from JP Morgan. So everybody, as I said, trying to get a piece of this pie, but it just seems that the Chinese and Hong Kong investors will be left out.
In an IPO in which everything stands out as shocking, I mean, a $28 trillion total addressable market, for example, in Goldman's initial documents, I'm still blown away by some of these numbers. Evercore ISI says that SpaceX's AI division, which had $3.2 billion in revenue last year, will have $755 billion of revenue in 5 years. That's seems insane, right? I mean...
Yes.
Yeah, but they're not alone.
No, it really does.
Yeah, Goldman Sachs says in 4 years, it'll be $474 billion worth of revenue. So that's still 100 times more than we're looking at now. How are these analysts coming to these numbers?
Well, it's all about the projection and the opportunity, but you're right. I mean, a lot of these numbers that we have seen are, to use your term, insane. And, 500 billion or north of 500 billion, there are very, very few companies out there that have that kind of revenue, and certainly companies that go from very little. I mean, a quarterly revenue for SpaceX right now is just north of 5 billion. If you leverage that to the annual number, you're talking about 20 billion. 20 billion to 500 and plus, that is a huge leap, even in 4 or 5 years. Right now, I think companies like Walmart, companies like Amazon manage that kind of revenue, but these are long-established, very mature companies. SpaceX is, they obviously have functioning businesses, but there's a huge question mark over their AI efforts. Where is that going? The competitive field is really hard. You've got Anthropic, you have OpenAI, so where will they fit into this, and can they make these numbers? A lot of questions about that.
All right, Benny, thanks very much. Bloomberg managing editor for space and aviation, Benedict Campbell, obviously in Berlin, sitting at a desk that I used to occupy myself. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
Let's take a look at what's ahead today. The main event is the May jobs report out at 8:30 a.m. New York time. Then Bank of England Governor Andrew Bailey speaks at 2 p.m. Eastern. And looking ahead to the weekend, OPEC ministers gather on Sunday for their first policy meeting since the UAE left the alliance. Plus, check out Bloomberg Money with Tom Keene and Scarlet Food. That premieres today at 12 p.m. noon in New York, 5 p.m. in London.
people have written that your bank, Revolut, is worth $75 billion. Have you ever thought of taking your organization public?
Well, the way I think about it, we kind of will be ready probably in 2 years' time. But then again, depends on how good the market is.
Since you don't have an IPO, how do people who work for you make some money? Do you make a market for people to sell their shares internally?
Yeah, so we do secondaries every 1 or 2 years when people can sell a certain portion of their stocks to external investors.
So you've done secondary sales for your employees, so employees can then get some liquidity. Do you expect before you go public you'll do any more of those, or are you just going to wait till you go public before you liquefy any more stock?
Yeah, I think so. We might do secondaries as well before we do IPO, because we do it every 1 or 2 years, so we might do secondary as well.
All right, well, if anybody wants to sell their shares to me, let me know. And have any investment bankers told you why they're the best to do the IPO for you?
Yeah, obviously every single one is the best.
Everyone is the best. You're not in a rush to do it. You don't need the money.
So we're a bank, and then for the bank it's super important to have trust, and then public companies are trusted more compared to private companies. So that's the reason.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
Actually one of the healthiest labor markets I've seen in decades.
The overall trend is in the right direction.
I have a lot of optimism that we're going to have a lot of ongoing demand for human workers.
There isn't a lot of heat in the labor market.
We think the labor market will remain choppy.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Friday, it's Payrolls Friday. Economists are looking for a strong number despite increasing AI concerns. As Dario Amode's Anthropic is calling for an industry-wide pause button, Sam Altman's OpenAI is reportedly considering giving up some equity to the U.S. government.
And this is coming from President Trump wanting more equity in some of the big tech companies as increasing political concern rises about what this is going to do to the labor market. Interestingly, President Trump and Senator Bernie Sanders on the same page. Senator Sanders also talking about how there should be some sort of public fund in these companies. There is a lot of concern about why the labor market is not keeping pace with what we're seeing right now in the AI space.
This used to sound like a pitch for an IPO. Our technology is so dangerous, so fast, so risky, buy our stock. And now it feels like our technology is so dangerous, so fast, so risky, regulators take us over. They've crossed the line, I think. They've got to find the balance between the right message and the wrong message going into this IPO.
And is Dario Amodei really hitting that when he says, please slow down. Everybody, just take a breath. Do we really need to have a self-correcting mechanism for AI where suddenly it can do everything by itself and strip out the human? We heard from his sister about the need for some sort of involvement of humans in artificial intelligence. The regulatory overhang is definitely going to be interesting. The bigger question, especially on Labor Market Friday, is whether we see the economy catch up to where AI is, or potentially AI catch down to where the economy is in terms of job creation that we are or aren't seeing.
Let's get to the guesses for Payrolls Friday. The jobs number later this morning at 8:30 Eastern Time. The estimate in our survey, 88K, looking for unemployment to come in at 4.3%, in line with the previous number from a month or so ago. The big number we're looking for, 125 over a SocGen. Some punchy numbers out there. We'll get into them a little bit later. So they're the jobs guesses. Let's talk about some of the headwinds for the SpaceX IPO. So JP Morgan's Jamie Dimon pitching this thing to ultra high worth clients. At the same time, we're getting some pushback from S&P about fast-tracking some of these mega IPOs, and headline crossed on the Bloomberg just moments ago that Hong Kong and China-based investors will be frozen out of this process.
There is concern about what it means to be potentially responsible. I think these are two different issues with respect to China and Hong Kong. That might have more to do with sort of the isolation of U.S. and Chinese tech. When it comes to the S&P, this is notable because it's really distinguishing itself from the NASDAQ that's saying not only are we going to fast track you into the index, SpaceX, but we're going to increase the potential weighting of your shares in the index. You also see this from the Russell 2000. The S&P coming out, Standard & Poor's saying, you know what? We're going to stick with our rules. We have the rules for a reason. You're going to have to wait 12 months, and the weighting is going to have a cap of about 10% of total investment. And at this point, people are saying, is this good? Is this bad? Does this indicate that they're going to be the smart ones? And at what point is passive management turning into something active?
Don't hate it, kind of like it.
Totally.
Gold standard for the industry. And let's see the differences that might open up between the NASDAQ and the S&P 500 in the next 12 months.
It kind of is akin to what we see with the NASDAQ versus the S&P or the NASDAQ and the equal weight. There are questions about what exactly you're getting exposure to. You raise a question with China and Hong Kong. Who will be the ultimate buyers? And what's fascinating to me about SpaceX is how much is catering to retail investors. It's not about the indexes. It's about the fans of Elon Musk, the fanatical kind of Reddit crew that are going to be coming in with about 30% of the shares, I believe, potentially sold to these retail investors. So they're moving beyond the typical constructs of Wall Street.
Retail in these names might be stronger hands than institutional, for what it's worth. They're much more committed to the likes of Tesla and Elon Musk than maybe the institutional investors have been.
Scott Rubner of Citadel Securities said retail traders are the new price setters in this market. At a certain point, how much is this Elon Musk saying, great, you love me, you believe my story, you can set my price?
Futures this morning pulling back by just 0.4%. Coming up this hour, we'll catch up with Jonathan Golub of Seaport as Wall Street calls on the AI trade. Pierre Ferragut of New Street Research as S&P refuses to fast-track mega IPOs, and Priya Misra of JP Morgan on the latest jobs report. We begin this hour with stocks struggling to extend a record-breaking 9-week winning stretch. Jonathan Golub of Seaport Research Partners still bullish, raising his 26 S&P target to 8,200, writing S&P 500 revenue grew 11.5% in the first quarter, while technology drove much of this upside. 7 out of 11 sectors delivered double-digit growth. Jonathan joins us for more. Jonathan, good morning.
Good morning.
Good to see you. Some cracks in the tech trade. Anything more than that?
This is not what the crack.
The pullback in Broadcom, the chips under pressure.
I mean, this is a company that's growing at an incredible rate, and they met earnings expectations, and the market was looking for even more. The semiconductor.
Don't you take some signal from that?
No, the semiconductors broadly grew 108% this quarter versus the quarter before. I mean, there might be things to be worried about, but a crack in tech right now is not one.
Tell us all something to be worried about, John, with stocks close to all-time highs.
Well, I mean, there's some of the spending is the cash flows on the hyperscalers have become more problematic. So if you take a look, the semiconductors are selling their chips, and the companies buying them, so they're taking the profit, and the hyperscalers that are buying them, they don't take the expense against them because they depreciate them over a period of time, and only when their CapEx projects are complete. So there's potentially some of these hyperscalers are facing more of an earnings issue, but even in that, it's not a broad-based issue. You're talking about half dozen stellar companies with great general business models that perhaps this is not going to play out as well for them.
We're talking about this delta, though, between what we're seeing in the valuations of some of these names and these companies that are coming to market, IPOing to become the fifth largest company in the world. And you start to wonder, can you see that kind of growth without participation in a broader sense from the other companies? I know that they're delivering good earnings, but it's a pretty spotty group in terms of how they're delivering earnings. And you're not seeing the underlying economy pick up in the way that you would expect. Do you need to see some sort of closing of that gap?
Well, so first, let's put valuations in perspective. The market is trading at a stock multiple of around 21, which is not overly elevated. I mean, it's high, but it's not insanely high. And people assume that if the market's going up, stocks must be getting more expensive. But if the market's going up because the earnings are going up faster than the price, then you don't have a problem. And in tech in general, these stocks over the last, let's say year to date, have gotten cheaper as they're soaring because the earnings are so good. Now, we'll see what happens with, people are talking about SpaceX as an example and who's going to own it. If you take, if you take a look at some of these companies that are held in retail hands, like that you were saying, some of those companies trade at really high multiples, but those aren't the companies that are driving the market. And even Tesla, it's not a company with a ton of earnings. It's a company with a lot of market cap.
I guess another way of framing this is you can justify a lot of the moves and you can see the revenues in a lot of the big tech companies so far. You take a look at SpaceX and some of the projections. They're going to be getting revenues from Mars. They're going to be getting revenue. A lot of the revenue is going to come from some of the data centers that are in space. They're going to be creating a whole new reality that people are getting very excited about. And Elon Musk is a wonderful dreamer and visionary in many, many ways. But does that introduce a new risk when you start to value some of these things at 100 times over the next couple of years when you aren't necessarily seeing the revenues now at all?
No, I mean they're going to be part of this ecosystem. I mean, right now it's the hot headline, but if you look at where what their earnings are in the stack of companies in the S&P 500, they're not going to move the dynamic. The market is strong because the economy is strong overall. Like Jonathan was saying before. Every sector in the S&P is growing earnings. 7 or 8 out of the 10 of them are growing them double digits, and semiconductors are growing their earnings at 50%. And so any name coming into the market, I think, is going to have a hard time upsetting that story.
I know what you're getting at. I totally know what you're getting at. Some of the projections for the total addressable market here are like sky high. And I'll say this up front, the failure to imagine. If this was the 1990s, I've said this before about Amazon, I'd be sitting here asking the same question. Why would a bookseller be worth so much money? I wouldn't have had the imagination to think about what Amazon could have been. At the same time, in this moment, it just feels like that certain institutions are very incentivized at the moment to make sure these IPOs get away in the next 12 months.
The addressable market, the idea that artificial intelligence is a $27 trillion addressable market, some of these market shares are pretty massive. And to your point about who is representing some of the investor comment was, we're concerned, but we see that there's some really respected investors out there who believe in this. So that's actually supporting our belief in this. I understand what Jonathan's saying, that, one name isn't going to change the difference. But you just wonder, either the addressable market is not that, and this is a fiction, or the rest of the market is not changing its pricing and changing its expectation for growth quickly enough.
Something we focused on this week is constraints, whether we'd hit energy constraints, whether companies would hit budget constraints and they'd have to cut back on spending on this thing, whether the market would start to push back and we'd meet capital constraints. What kind of constraints are you and the team thinking about that are potentially on the horizon?
So, companies are raising debt to do a lot of, and I'm not talking about SpaceX, but this infrastructure, the build out, the CapEx, and there's this general belief that the AI build out is not economically sensitive. And as long as the economy is fine, whether it's a little stronger or weaker, it's not going to make any difference. Companies are going to be committed. But if we hit a real economic slow patch, if we hit a recession, and right now the odds of a recession, if you look at your Bloomberg terminal, are falling. So it's not a big risk, but companies would, if they have a choice between ultimately holding on to staff or cutting CapEx, I will tell you, they're going to hold on to staff and they're going to pull back on CapEx. I'm not saying that we're anywhere near that, but we do live in a world where economics matter, and there are enormous CapEx investments on these
That,
things.
of course, depends on the ROI of the CapEx. Because if it's the other way around, you could see something much more dramatic where they carry on investing in CapEx and they start cutting operational expenses elsewhere.
Yeah, I don't think it's that way. I mean, ultimately, if you're financing data centers with borrowed money, and some of this is, if the cost of capital goes up, if credit spreads widen, because there's a concern that I'm making a 10 or 15-year investment that I may not get paid back on. If there's concerns on that, or if the credit markets dry up, this will prove to be more cyclical than it feels right now. Listen, and you know me for a long time. I'm really bullish on this.
I know.
And Lisa and I were talking before about how we change our daily workflows to take advantage of these so we can all do our jobs better. I am not seeing companies firing workers as it relates. As much as I'm seeing people saying is, right now we need to invest in this to figure out how we're going to do things we couldn't even have imagined before. And so maybe there'll be cutbacks later on, but right now, this is a big build out.
Jonathan, it's good to see you. It always is. Thank you, buddy. Jonathan Golub there of Seaport Research Partners. Not seeing it in the data right now. We're looking for a jobs number of 80 to 90K at 8:30 Eastern Time.
You've very rarely seen the unemployment rate fall below the rate of inflation. This was a point that Michael Hartnett with Bank of America was making. There have been a couple of inflection points. They all portend some sort of financial reckoning, because it ultimately indicates that either inflation is going to be hotter or that the central bank is getting behind. And that, I think, is the logical sort of progression of where that conversation is going to go.
Unemployment close to 4, inflation close to 4. This Fed nowhere near to hiking interest rates just yet. Equity futures right now in the S&P pulling back just a touch. Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. The U.S. and Iran are showing little signs of progress in ceasefire talks. President Trump says negotiators are in the final stages, but Iran's foreign minister says there's been no tangible progress. The president says time is on his side. Meanwhile, SpaceX will not be joining the S&P 500 anytime soon. S&P Dow Jones indices saying it's not planning to shorten the 12-month waiting period for newly public companies. It also says it won't waive its existing requirements for profitability and public float, even for large companies like SpaceX. And Anthropic is urging AI labs to consider slowing development. The company is warning that systems are advancing so quickly they may soon be able to improve themselves without human oversight, confirming our biggest fears. That's your Bloomberg Brief, John.
Yahara, thank you. Good luck getting everyone to sign up to that. We'll discuss that a little bit later this hour. Up next on the program, eyeing a stake in AI.
I invest my heart in it and my soul because I want the country to be strong. And yeah, there will be other cases. If I have that opportunity again, I would do that. And then, you know, you do have stupid people say, oh, that's a shame. It's not a shame. It's called business.
We'll talk about the next business move with Bloomberg's Mike Shepard down in Washington, D.C., live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Jobs number just around the corner later on this morning. The estimate we're looking at in our survey here at Bloomberg, 88K. The previous number, 115. Some pretty big projections out there on Wall Street. SocGen at 125, HSBC at 110, Bank of America around 95K. Citi sticking with their rate cut call for later this year. Citi looking for 60,000.
They're not alone. Actually, if you take a look at surveys of economists across Wall Street, they see a greater likelihood that the unemployment rate is going to go to 4.4% by the end of the year than 4.2%. I can't even believe the numbers that we're talking about and the sort of differentials. I mean, these are all fairly low unemployment rates, especially given everything else that we're seeing. Nonetheless, I actually don't know how to interpret the headline numbers. Like, I don't know what those numbers mean.
Sure.
Because I don't know what the break-even rate actually is, and I don't know how much it's going to get revised. That's why I'm watching wages. That's why I'm watching the unemployment rate.
Break even closer to 0 than maybe 100.
Yeah.
A number like that is pretty decent, but I'm right there with you. If you want to measure slack, how tight is the labour market? How loose is the labour market? Unemployment, wages. Unit labour costs yesterday, this week, a big data point. I know for the first quarter and somewhat backward looking, but that might ease the nerves of the committee on the Federal Reserve in the next couple of weeks.
Yeah, the problem is that the data's been all over the place, right? You haven't gotten a clean rate at all. Yesterday, we got the NFIB survey showing that U.S. small businesses aren't hiring and aren't planning to hire, that actually that fell to a 6-year low in terms of their plans to hire or trying to fill a job, versus the JOLTS number that showed that job openings were booming. Try to square that circle. I was having trouble with it. So you look at any of the data points, even the ISM services, you look at the headline number, oh, wow, we're doing great. You look at the employment number, wait a second, hold on. Same with manufacturing. So again, very confusing to really understand what's going on here.
Stocks are close to record highs. Alphabet just upsized its equity capital raise to $85 billion. We're going to see 3 of the biggest IPOs we've ever seen, ever. We've priced $1 trillion of IG debt in this country in near record time, and the Fed has an easing bias, with inflation close to 4 and unemployment close to 4. That's what they confront at that next meeting. Futures this morning, positive or rather negative by 0.4% on the S&P. We're down by 0.9 on the Nasdaq. Used to saying positive. We've had a 9-week winning run on the S&P 500. As things stand coming into this morning, as of the close yesterday, still positive on the week, just including this, we pull back. But you make it week 10 and you're going back to the 1980s for a weekly streak that long. Under surveillance this morning, eyeing a stake in AI.
I invest my heart in it and my soul because I want the country to be strong. I just made $10 billion or $11 billion for the United States of America. And yeah, there will be other cases. If I have that opportunity again, I would do that. And then, you do have stupid people say, oh, that's a shame. It's not a shame. It's called business.
So here's the latest this morning. Senior U.S. officials reportedly talking with major AI companies about acquiring shares. According to reports, the OpenAI CEO, Sam Altman, spoke about the idea with members of the Trump administration. Bloomberg's Mike Shepard joins us now for more. Shep, welcome to the program, sir. I believe this report came from Notice. Can you walk us through the content of that report, whether those conversations are active and ongoing?
Yeah, I think you hit on the really key question there, is how recent these conversations are, and then how active they are and how advanced they are. And it's unclear that they have actually reached that stage of any kind of seriousness yet. But as we've heard the president say over the past year, he really does have an interest in having that kind of government hand and role in certain industries that are critical to the U.S. And there's none at the moment more essential than artificial intelligence. It's really reaching across the economy, and it's putting strains in different sectors, including energy, too. So having the government take stakes in AI companies, from his standpoint, certainly would make sense. But it is also an idea that has been pushed and embraced by Sam Altman himself. His vision, though, may be a little bit different than what the president and his advisors have in mind in terms of taking those stakes. Sam Altman has proposed in the past, and did so in a blog post in April, this idea of a public wealth fund. And that would be where companies put some of their stock into what would be essentially a sovereign wealth fund that would then, in turn, return some of the gains from AI to the public in some fashion, perhaps through direct distributed payments. But John, this also comes with some risks. We've seen AI drive this historic stock rally we've been talking about, the nearly 10-week streak that you just mentioned. But it also does carry some risks. If the boom does fizzle out, does the government get left holding the bag? And of course, the government would face this conflicted position, John, of having to regulate an industry that it actually owns a physical stake.
But Mike, we should be careful with language here. This is not about buying stakes. It's about taking stakes, and it's about OpenAI giving up equity. And last time I checked, that company's not a charity anymore, Shep. So if they're thinking about ceding equity to the US government, do they see the writing on the wall? Do they have visibility of what will happen if they don't do this?
I don't think that they are sensing any sort of pressure necessarily from the administration to do so, that there could be some consequence if they don't. In a way, Sam Altman does approach this from this longstanding public benefit view. He is very much into the idea of this public-private collaboration, especially when it comes to artificial intelligence. And interestingly, earlier this week, not only did he meet with officials at the White House, nobody really senior like Trump or Susie Wiles is our understanding, but he also did meet with Senator Bernie Sanders, who has a proposal very much like this. He unveiled it in a New York Times op-ed at the beginning of the week. His vision is to not only take 50% stakes in these big AI companies, but also to impose a one-time tax on their stock. Take all that money, take all those proceeds from the tax and put it into a sovereign wealth fund, again, to redistribute the benefits to the public. Now, the catch is that this proposal from Sanders is unlikely to go anywhere, but it nonetheless is a talking point, and it indicates that there is some energy and interest around this idea.
It's the starting gun for a bigger conversation, that's for sure. Mike, thank you, sir. Shep, down in Washington, D.C. Jonathan Golub of Seaport Research Partners, still with us. John, I'm sure you've given this thought. The regulatory and tax risk that might be on the horizon for these companies.
Well, first of all, the taxpayer benefits from this in that when people have capital gains, there's taxes that are levied, and it benefits society. If people are employed in these things, it benefits society. If we're more efficient in running the U.S. economy, we're more competitive versus the rest of the world, it benefits the economy. The government taking direct stakes in companies is just a bad idea. And I think the point that was made before about the government being the regulator and at the same time being an owner, they, by going and taking stake in one company versus another, they're choosing a winner. They're making an endorsement. What Sam Altman is saying is, just the language that was on the screen, because I haven't analyzed it, is choose me. How does the government then, if the market goes against the government's investment, do they then go and act differently because of that? Is that how we innovate? Is that what American capitalism looks like? And I think the answer should be no.
Well, yeah, just in that same vein, how did you interpret what we heard from Anthropic's Amadei overnight, saying that he thinks everyone should just press pause, really slow down, because things are getting a little scary? Is it him actually seeing things as scary, or him trying to say, can you please make our moat a little bit bigger so we can retain this gain for a much longer period of time?
Well, there's going to be pressure to regulate these activities, and there's going to be involvement. So I think to assume that this is going to remain entirely unregulated with no oversight from anyone is unrealistic. What I've seen in what industries do is they hopefully they self-regulate. There's an American Medical Association. There's a CFA Society. Part of what they do is say, we will oversee some of what's going on in our world, and we will make Washington and others more comfortable that there are standards. And so I don't know whether, I'm seeing a skeptical look on your face, but here's the thing. One way or another, there's going to be involvement on this, and what you don't want to do is kill what's really something which is unbelievable innovation, which can really benefit all of us.
John, it's good to see you. It always is. Don't kill the patient. Jonathan Golub there of Seaport Research Partners. That's what would regulate some companies, right? But these companies, they're talking about taking over white-collar jobs. In fact, they've been emphatic with some of those statements, particularly over at Anthropic. They're almost begging to be regulated and taken over by the government. I think it's interesting he said a button, not a pause, but a pause button. So we're not there yet, but we might be.
Yeah.
And that's the risk.
Well, we haven't gotten to the point where actually some of this stuff is full sci-fi. We haven't gone full sci-fi, full R2-D2, but we're getting there, and they want to keep it in a box. How do you do that, though, with competition around the globe? How do you do that with disparate types of players? And that, I think, is a real challenge in this time around.
How'd you get China to sign up?
Exactly.
Good luck. Coming up on the program, Pierre Ferragut of New Street Research, as the S&P says it won't fast-track IPOs.
phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, you know, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, you know, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, you know, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, you know, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Futures negative here on the S&P 500, negative by 0.4% on the S&P. We're down across the board. We're down by 0.8 on the NASDAQ. As of the close yesterday, still advancing on the week just by about 0.1%, heading towards a 10-week winning streak. Based on the price action this morning, we could snap the 9-week winning run we're on so far on the NASDAQ, down by 0.8. In the bond market, Treasuries getting interesting. The data has been decent through the week. 2s are still around 4%. 10's around 450. To Lisa's point a little bit earlier this morning, got this strange dynamic at the moment where unemployment is close to 4, inflation is close to 4, and the Fed meets in about 2 weeks' time and they've still retained an easing bias. Now, most people assume that easing bias will go away, and then it's up to Kevin Walsh to communicate what he wants to communicate in the news conference.
At the same time, most people on Wall Street still think the next move is going to be a cut, not a hike, even though you do see hiking expectations baked into the Fed funds futures. When you talk to individuals, my anecdotal experience has been most of them still think that there's going to be some sort of rate cut in the not-so-distant future. The interesting conversation is this central bank actually restrictive? Because right now, everything about capital markets is screaming something to the contrary.
Based on what we've seen in capital markets, based on the money being raised by the richest companies on the planet, it's difficult to say that monetary policy is restrictive at the moment. As we count you down to the up and about, 3 hours away, let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. We start with a massive mover to the downside, and that is Lululemon, falling 12.5% in the pre-market after it cut its full-year outlook, pointing to worsening trends across North America. And management is saying that over the past few weeks, it's seen fewer customers coming into stores, all tied to that controversy around see-through leggings. So that's not helping as it faces growing competition from the likes of Viore and Alo, just underscoring the challenges that Holly O'Neill faces when she takes the helm in September. Meanwhile, the AI chip trade is faltering again this morning, still feeling the effects after Broadcom disappointed. So you're seeing names like NVIDIA, Intel, and Micron all falling in the pre-market. And the move in Micron is notable since it just scored a major win. NVIDIA CEO Jensen Huang saying that it was one of the companies approved to supply the advanced memory chips for its Rubin AI system, and yet shares are down 2.5%. And we end on Quantum. This is a quantum computing stock that just went public yesterday on the NASDAQ. Shares initially rose some 13% when it began trading, lost nearly all those gains into the close. Now it's weaker again, down 3.4%, just speaking to the sour mood we're seeing around tech this morning.
Yahara, thank you. Thank you for the update. Lulu in the wrong top 10 for 2026, one of the biggest losing stocks of the year so far, down 40% coming into this morning and getting hammered once again.
Downgrading their expectation for the full look ahead, talking about how the outperformance is coming from China of all places in terms of their sales, and talking about having to mark down some of their current inventory to clear it out to make way for the future.
Feels like a kitchen sink from that company this morning, that's for sure. On our radar this morning, ceasefire talks between the US and Iran grinding to a halt. The president saying discussions are in the final stages, while Tehran maintains that negotiations have stalled following the worst violence in weeks. Elsewhere, NVIDIA tapping the world's 3 biggest memory chip makers to supply products for its AI accelerators. The company certifying Samsung, Micron, and SK Hynix for its next generation of GPUs.
All 3 vendors have been qualified. All 3 vendors are in production, and they're all racing. They're racing all to support Vera Rubin.
Deliveries for the Vera Rubin platform on track to begin in the 3rd quarter. And finally, Anthropic calling for an industry-wide pause button for AI development. The company warning it could begin to improve itself and build its own successors, and that a pause would ensure certain labs don't secretly keep working to advance the technology.
The fear here is that potentially our artificial intelligence, large language models could become self-correcting and self-generating. So you kind of take the human out and they improve upon themselves, and this is where you get to true sci-fi that I grew up on and then got me very anxious-ridden, which is the reason why potentially they're warning it. If you're skeptical, you could say they're trying to create a moat around what they're doing and potentially slow some of their competitors. Problem is, you're not going to really slow places like China, where it's all guns a-blazing. Let's go. Let's see how far we can push this thing. But it highlights how we don't know the future. We don't know the iterations of what this is going to get to. And it highlights the concern among regulators as well as in the founders of some of these companies, because they aren't sure what that backlash is going to look like.
This is the approach from Anthropic. They talk about big things like cutting white-collar work in half in the next several years, or whatever the latest forecast is. The risks are real. I sort of appreciate that. You do too. Most people do as well. I've always felt that this was like bidding up the stock, going into the IPO roadshow, bidding up the valuation of the company. You're talking about building a moat around the company to secure its leadership position at the moment. The risk that they run is that they're regulated in the way they do not want to be regulated. Washington, D.C. moves in very blunt ways. They're not going to come up with a regulation in the way these guys want it to be. Will it be corporate taxes? They're just going to ramp that up. The Bernie Sanders position feels very extreme this morning. Might not in 12 months, might not in 24 months. Let's see how these elections go and how this is discussed in the elections, not just in the midterms, but the general on the horizon.
It's increasingly a political talking point, that is for sure. And we can't know exactly how the conversation will evolve. What's notable is when you talk to investors about this possibility, how do you prepare for regulatory pushback? Does that make you concerned? Does that reduce your valuations? You know what they say? That increases our valuations of these companies, because what it means is the winners of the past will be the winners of the future, because it will slow down innovation and potential competition. So to the degree that people look at this as a negative for these shares, yes, they might have to pay bigger taxes. They also might be the only game in town, or one of the biggest and best in town, just because it prevents innovation in other ways. So the market implication is kind of counterintuitive potentially.
And corporate taxes just keep going up. Capital gains just keep going up.
You're in a place this morning. I can tell where you're going with this.
Society's not going to sit this out and let this rip. That's the point I'm making. And I would suggest that you look at the ports, not just in the United States, but look at the ports in Europe. Look at the control that unions have over these places. Look at the lack of technological development that we've seen, that we've had for decades. Look at the trains. The trains could be driven on their own, yet we're still paying people $100,000, $200,000 to drive these things. Why? Because we're focused on employment, and the unions have a hold over Washington, D.C. I struggle to believe that they're just going to let this technology rip in the way that some of these guys are talking about.
And should they? I mean, ultimately, or should there be some sort of offset akin to what a lot of people said was the problem when there was globalization that left an entire blue-collar generation behind without jobs and without purpose? You know, should there be a real rethink of this? The difficulty is we don't understand what the ultimate goal is. And I keep going back to Pete Shear's point with the buggy whip, right? The idea that with the horse and buggy, when it came out, does it do what automobiles did to the human, or what automobiles did to the horse, which was rendered irrelevant, and the population has dropped quite a bit, although they're treated very well? Are we going to be the treated very well horses, or are we going to be the human that's being facilitated by the car? We just don't know.
Horses don't get to vote. People do. And it's the political swing that you might see off the back of this that I think is the one to watch.
This is like full Animal Farm this morning.
Sure,
Welcome.
I know. Let's talk about SpaceX. A setback potentially as Elon Musk begins the company's roadshow. S&P Global keeping its eligibility requirements for joining the index, denying SpaceX and other mega IPOs from a fast track. Bloomberg's Mandeep Singh joins us now for more. Mandeep, welcome to the program. This is a different approach than we saw from, say, NASDAQ. How much of a setback is this for that stock?
I mean, look, they have a very thin float. So from that perspective, there will probably be more demand than the supply of the stock, but they're looking to raise $75 billion, and that's a big amount. And contingent on that $75 billion is that Cursor acquisition that they have to close in the first 30 days post-IPO. And if that doesn't happen, suddenly it may not look very attractive from an investment perspective. So that Cursor acquisition is very important for SpaceX, and that index piece was key for ETFs to, include SpaceX in all of their holdings. And I would say there's definitely a setback here, but it'll be interesting to see how that 10 float weighs in when it comes to the demand for the stock.
Mandeep, given the size of the float relative to the size of the potential market cap and the potential to go into an index quickly and have all that passive money forced into it, how noisy could the first few days have been if S&P had thought about fast-tracking this IPO?
I mean, they can't afford, any let-ups here because of that Cursor deal, and they may have to end up paying a termination fee of $10 billion. So from that perspective, the capital raise, the liquidity event, is to facilitate that Cursor deal. And yes, there's that CapEx aspect around, building more compute. But to me, the Cursor deal is very paramount when it comes to the future prospects of SpaceX and meeting those growth expectations that investors have.
Mandeep, it's always great to catch up. Thank you, sir. Mandeep Singh there of Bloomberg, breaking this one down. Lisa was talking about it a little bit earlier, just how much of a setback this might be. I'm going to be really intrigued to see the performance of the NASDAQ versus the S&P. Because obviously we've seen outperformance on the NASDAQ because tech is absolutely ripped, and we've got this bigger weighting on the NASDAQ 100. But how that looks like with SpaceX inclusion in one and SpaceX inclusion in the other, at least for the first 12 months, could be interesting.
Concentration has been a feature, not a bug on the way up. Does it become a bug, not a feature on the way down, potentially, especially if you have some of the more speculative IPOs? And I'm not saying it's speculative, but typically an IPO this big hasn't performed as well. People point to Meta back when it IPO'd. The years after that did not exactly, it was cast a fantastic light on it. So does this end up being a liability, or does this end up being a boom?
Let's talk about Elon Musk. Looking to justify SpaceX's $1.8 trillion targeted valuation to potential investors, discussing the V3 satellite program and the company's plans for space-based data centers.
It's really just solar power plus radiator, some basic equipment for operating the satellite, and then the laser links, which would connect to the Starlink communications constellation, and then to the ground. And the connection would happen no matter what the weather is.
Pierre Ferragu of New Street Research writing the forecast the consortium is discussing with investors is very aggressive, but would largely justify the IPO price. Pierre joins us now for more. Pierre, welcome to the program. How big is the total addressable market, and how on earth do you really push back against someone else's imagination?
It's a good question. I like to think about space as being an addressable market on the growth of the global economy. And in a world in which the economy is $100 trillion, that's $200 trillion of revenues for global enterprises. If they grow, single digits every year, you actually compound the trillions very rapidly. The addressable market we see in 2045, so 15 years from now, is actually $16 trillion and dominated by telecom, data centers, and of course defense. That is going to be very large in space. And to that, of course, you need to add the opportunity for SpaceX of becoming like a significant player in AI, in generative AI with XAI.
Pierre, do you see any signs that they're actually gaining inroads on the AI side of the world, given the fact that so far that is a de minimis portion of the overall revenues coming from the pool behind SpaceX?
Yeah, it's a very good question. XAI is very clearly a challenger in like the frontier AI league, but they are part of their league. They have one of the best models, not the best, definitely not yet, but they have one of the best models. And they are the best at deploying very rapidly, very large-scale data centers. They have the largest coherent cluster in the world today, so they can train like the best possible models. And then if you think about like usage adoption, I think the key here is actually the acquisition of Cursor. Cursor is doing an incredible job building up like recurring revenues. They're adding in excess of $1 billion of revenues every 3 months. So they're taking like a fair share, we estimate like 15 to 20% of the coding opportunity for AI. So that's the opportunity for X to become also significant in terms of capturing the revenue opportunity in the next 30 days, because this acquisition is supposed to close 30 days after the IPO.
Pierre, a lot of people have talked about the promise of Elon Musk. We heard from Dan Ives, you're essentially buying into, you're buying a piece of Elon Musk. On the other hand, you haven't seen Elon Musk capable of holding on to some of the AI-related talent in particular. There is this war for talent. You have seen a number of pretty high-profile departures. How big of a concern is that for you?
Yeah, it's always difficult to see key talents like the top 10 founders of XAI have left the company. Now, remember, Lisa, like over the last 10 years, this is the way Musk operates. At Tesla as well, you've had like an incredibly fast churn of top talents. And that's the way he has been operating for years. So on one hand, in absolute terms, always never a good thing to see a talent leaving a company. On the other side, the track record actually of Elon Musk on running extremely successful organizations with that very high level of churn is reassuring.
Pierre, is your BS radar up this morning when you hear these proclamations coming from the likes of Anthropic? When you see stuff like OpenAI ceding equity control, or at least ceding some equity to the government, having conversations about it, according to one report. I've got no idea how much weight to put on that report. But Pierre, I just wonder, what are these companies up to ahead of these major IPOs over the next few months?
Yeah, it's like, I like the idea of the BS indicator. I would say two things. On one hand, I think there is a topic, AI that gets self-improving is potentially the AI that gets out of control. Now, let's face it, the claim that we could, stop developments or take a pause or whatever at a global level is completely impossible to implement. What authority could do that? And I think more important than worrying about self-improving models, one of the competitors is raising $75 billion in the market today, and that competitor is SpaceX. And owning data centers is going to be critical. So the other two players, Anthropic and OpenAI, are very, very keen to raise similar amount of money. And as they are larger today, they need to raise even more money in order to be able to continue to spend on compute. And I guess these calls help, create the buzz for their IPOs. Of course, there is an element of that. There is probably like a genuine concern there, even if it's not. It's difficult to see how they could handle it. And then last but not least, it's maybe a way to just like signal and try to slow down the pace to give it more time to continue to strengthen their balance sheet and raise more money.
Yeah, it's good to see you. Pierre Ferragu of New Street Research. Bramo's point entirely at the end there.
At this point, you got to think, how much is this them trying to create a moat around themselves when they see some of their competitors gaining clout very quickly and raising huge sums of money to really plow into their market share a bit?
Ed Ludlow said it earlier this week, the race for capital certainly feels that way at the moment. Let's give you an update on stories worldwide with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. Ukrainian President Volodymyr Zelensky proposing peace talks with Russian President leader Vladimir Putin. In an open letter, Zelensky saying Ukraine is ready for a full ceasefire during negotiations. President Trump welcoming the initiative. Meanwhile, the Trump administration is exploring whether the government should take ownership stakes in leading AI companies like OpenAI. Senior U.S. officials reportedly held talks with major AI companies about potentially transferring shares to the government voluntarily. And President Donald Trump will be the first sitting U.S. president to attend an NBA Finals game. Trump confirmed yesterday that he'll head to Madison Square Garden Monday night to watch the Knicks play Game 3 against the Spurs.
I've been a Knicks fan for a long time, and I'm also a Jim Dolan fan. He's a nice guy. He's a competitive guy, and he's got a team that's amazing. The answer is yes, he's invited me. I'm going.
Which game have you decided, sir?
Say it?
Game 3, Game 4. Are you excited?
It could be Monday.
New York City Mayor Zohran Mamdani is also planning to be at the game. That's your Bloomberg Brief. John?
Get a feeling they'll be in different seats, different tiers.
Yeah, I imagine that Zohran Mamdani will be in the nosebleed and Donald Trump will be on the court side.
Although in New York, the nosebleeds are still expensive.
You know, all I can say is
$5,000, $6,000 get in.
if you were worried about security and the shutdown of the city, well, this is going to be one exciting time for traffic.
The wealth in this city is just ridiculous. Yahara, thank you. Up next on the program, employment holding steady.
The economy is very strong. Job growth is strong. Except for April, we have seen real wage growth every month since President Trump took office.
Up next, we'll catch up with Priya Misra of JP Morgan.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Live from New York City, welcome to the program. Under surveillance this morning, employment holding steady.
The economy is very strong. Job growth is strong. Except for April, we have seen real wage growth every month since President Trump took office. We are creating jobs, and importantly, Congressman, these are jobs for Americans.
So here's the latest this morning. The May payrolls report due out in just under 2 hours' time. Bloomberg economists expecting solid growth and the unemployment rate to hold steady. Priya Misra of JP Morgan writing the job market has stabilized, but it's not a source of inflationary pressures. Priya joins us now for more. Priya, good morning.
Morning.
How relevant is this jobs report this morning to this market?
Oh, it's extremely relevant because here's what's happened. I think in the last few months, we've had data that suggests that the weakness in the job market late last year, I think we can sort of look through that. You know, the market stabilized. Are we at the point where we may be, accelerating? Now, I think that headline number is very hard to read because we really don't know what break-even is. We're dealing with an oil supply shock, we're dealing with an immigration supply shock, but let's look at wages. Let's look at, under the hood. Is this broadening out? Is the job market broadening out? So far, I would argue that it's all very much healthcare and education. We're all getting older, some getting older at a faster rate, I would argue, like me. But I think, if it is a secular, an increase in employment, then that doesn't suggest to me that is a source of inflationary pressure. If it's broadening out, if it is services, if it's manufacturing, if wages start to pick up, then that will tell me that maybe monetary policy is actually accommodative or at neutral. I think this is why the market now, the rates market, which has all been oil-driven, I think the rates market sort of sniffing out, is monetary policy actually accommodative? And if it is, then the Fed has to hike, and they don't just hike once, they hike a
Doesn't the market say it is accommodative?
I think, well, it depends on what market you look at. If you're
financial markets.
So, fair, but is it financial market driven by AI? I mean, is AI interest sensitive? I would argue AI is not really interest sensitive. It's this transformational technological rise in productivity, which would the Fed hiking a few times actually change that? So it's not clear. I look at interest sensitive sectors, I look at housing, I look at consumer durables. I don't see the heat there. So which is why I think the Fed is likely to stay on hold. I don't want to think that the Fed's about to start hiking, but we're going to be looking for any signs that GDP, consumer spending, is that broadening out beyond just AI and the upper part of the K. And I think the jobs market is the best high-frequency measure of that.
Michael Hartnett of Bank of America, I keep thinking about the note. He had a couple of really interesting points about the correlation between the unemployment rate and CPI and how we're entering an unusual correlation. But he also said we're seeing a wealth boom effect, not necessarily a wage price spiral, but a wealth price spiral, where you're seeing everyone's stocks go up and up and up and up, and then the wealthiest part of the K can keep spending and spending and spending and increasing the prices that they spend for things because they feel very wealthy. Is that a transmission mechanism of inflation that you have to take into consideration?
So I think if the cyclical components of CPI start to rise, if wages start to rise, then I think you have to take that into account. And this is why the Fed is sounding, look at all the Fed speak, in that, whether it's a dove or a hawk, they're all saying, well, inflation's above our target. We want to be extremely mindful of inflation expectations, wages. I hear the wealth effect argument, but, does that result in inflation trickle-down effect? Do you see rents picking up? We're not seeing that. Do you see other services picking up? This is very different from 2022, where you actually did see that trickle down. But I would argue in 2022, or 21, we had a supply shock with COVID, but you also had a demand shock. There was all that revenge travel. There was the fact that the savings rate was much higher. Consumers had that buffer of savings. Look at the savings rate. It's continuing to decline.
On the margins, are you more concerned about a reacceleration or a slowdown?
I'm more worried about a slowdown. And here's why. I mean, not slowdown into recession, but if the Strait of Hormuz doesn't open, we really need that to open. We need oil prices to come down. There's a real income shock that the lower part of the K is dealing with. And if we don't see job gains, broaden out, then I would be worried that at what point does that middle part of the K, I mean, we talk about the upper and the bottom, there's that middle, do you see them facing stress and cutting back on consumption? And so I'm concerned, and I'm not sure cutting rates actually does anything. It takes a while, and you'll need a bunch of rate cuts, and the Fed is going to be looking at the wealth effect. So I struggle a little bit more with that slowdown scenario, given how everything is so well priced for sort of perfection.
Spoken like a true bond investor. Priya Misra there of JP Morgan. Good to see you as always. Coming up on the programme, we'll catch up with Lisa Shannon of Morgan Stanley, Stephen Kirk of the Council on Foreign Relations, Gil Luria of D.A. Davidson, Mike Collins of PGIM. The second hour of Bloomberg Surveillance just around the corner.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver. Reduce the opportunities. It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view. As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
There is no doubt that there is health and breadth in the market.
Underneath, there's quite a healthy market.
Money doesn't want to leave the asset class of equities.
When we look ahead, there are still red flags to consider here.
There is still some room for disappointment.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores, the price action looks like this. Equity futures pulling back. The tech trade under just a little bit of pressure. Not too much, but a little bit. We're down by 0.4 on the S&P. We're down by 0.9 on the NASDAQ 100. In the bond market, set up like this going into payrolls on 2s, 10s, and 30s. 2s still around 4%. 10s still around 450. Heading into this, the jobs number later on this morning, the guess is shaping up as follows over on Wall Street. The median in our survey, 88K. The previous number, 115.
Yeah, the difficulty with the headline number is we don't really know what the break-even rate is. The U.S. Pool of workers has been static or potentially even shrinking around the margins as a result. Some people saying that even a 0 number could be pretty normal, the break-even rate. So a 10 to 20,000 number would be good. 120,000 is amazing. We really have to look at the components underneath. We have to look at the unemployment rate. We have to look at the wage growth to get a sense of just how much heat there is in this employment market.
We can play wait and see with the jobs market. You're not seeing aggressive tightening of the labour market that's leading to really hot wages at the moment. The Federal Reserve might be comfortable with that. But if you look at this market is just unbelievable. We keep going through the numbers. The fact that Alphabet can come out and upsize an equity capital raise to $85 billion and the stock really doesn't move relative to the rally we've seen over the last 12 months. The fact that we're going to see 3 of the biggest IPOs we have ever seen, and the debt market showing no pushback whatsoever, really, to these major issuers so far this year. This market's been wide open for these big players.
If you look at monetary policy through the lens of the economy, it is pretty much in line or neutral. It seems fair. If you look at monetary policy poised against capital markets, it looks incredibly easy. It looks like it is not even close to being restrictive based on the gangbusters activity that we see. It's coming not from economic robustness necessarily, but from what people are expecting from artificial intelligence and an existential race to get capital ahead of what a lot of people think will be a completely transformative technology. So how do you understand valuations in that sphere? How do you understand exactly what the economy will do with this overlay of technology? How do you understand some of the numbers coming out of the projections of trillions and trillions of dollars of addressable market and revenues that haven't come to fruition? You know, a lot of people are saying just close your eyes and buy.
Jim Zauter, Apollo, great conversation yesterday on this program. We talked about the potential for crowding out. There's a lot of money being thrown at this. We've been worried about the deficit for a long, long time. No real consequences to any of it, because you weren't seeing major issuance like we have done so far, either on the equity side or on the debt side. And now it's not just Treasury. I think the number to really think about here is you look at the issuance coming from the hyperscalers, and if you look at the CapEx this year, it's the equivalent to the defense budget in the US government. I think we've kind of lost track of these numbers here. And I know they're so large, so you struggle to internalize them. But the amount of debt, the amount of paper that's being issued at the moment, there is a crowding out effect you need to consider. And Jim's point was, and I thought this was interesting, that it might be more of a problem for the sovereign than it is the corporate. And that's something to track in the year ahead.
TD Securities put out a report this morning talking about the flows into bond market funds over the past week. And what you see is corporate debt funds attracting the bulk in the United States, attracting the bulk of the assets. You know who isn't? The U.S. government funds. And in general, government debt actually not seeing at all any commensurate inflows. People aren't as interested in that. And guess what? Some people are coming out and saying, is the U.S. government as creditworthy as NVIDIA? Do I think that they actually can pay me back? Or do I think Jensen Huang, with his leather jackets and promise of all this growth, has a better credit profile? And ultimately, increasingly, people are saying, we're willing to pick up pennies above that government rate because we think that guy is more creditworthy.
Can I use my hands?
Please.
I use my hands. Okay. So you've got credit spreads are like this, super skinny. And then they'll say to you, but I like the all-in yield. So the all-in yield looks like that. And I'll say, well, this is the risk-free. Why don't you like that? Why are you sort of interested in this? Just go to that. It's risk-free. And then you really start to get into this concept. Language is important. Just how risk-free is the risk-free? Why are they more interested in picking up that than just taking that?
And this gets to the conversation that we had initially about the U.S. economy and whether this monetary policy is easy or restrictive. Because ultimately, yes, this has to do with deficit. Yes, this has to do with growth. But if this is an easy monetary policy, then you can expect the long end of the yield curve, that risk-free rate, to go up quite considerably because people are going to have to reset their expectations for inflation.
It's got gloomy quickly, didn't it? Forgive us. We're down 0.4% on the S&P. We're still close to all-time highs. Coming up this hour, we'll catch up with Lisa Shallard of Morgan Stanley with tech driving stocks lower. Gil Luria of D.A. Davidson as cracks open up in the chip trade. And Michael Collins of PGIM previewing today's payrolls report. We begin this hour with stocks struggling to extend a 9-week winning streak. Lisa Shallard of Morgan Stanley writing, now is the time to evaluate where true secular growth may be on relative sale. Continue to reduce overbought semiconductors, favoring AI build-out diffusion over the most scarcity-priced epicenters. Lisa joins us now for more. Lisa, good morning.
Good morning.
That first line is really interesting. True secular growth.
Yep.
Just how cyclical do you think parts of this market actually are?
I think that the entire market is one trade, and I think right now we're in the boom part of the trade, which means the entire thing is cyclical. I would go further than that, that one of the things we're pointing out to folks is, particularly in the semiconductor trade, what portion of it is price. So not only do you have to think about what are normalized earnings here, what is the fundamental underlying secular growth rate here, so how much volume goes away and how much pricing power goes away, because there's a lot of pricing power that folks are mistaking for productivity, you know, because pricing right now for the semis are flowing right to the bottom line. And folks are looking at those margins and saying, oh my God, you know, increase the long run forecasts. And our view is so much of this is not sustainable.
Do you think Broadcom then was just a crack or a red flag?
Probably a red flag. It's just a reminder that these businesses are really, really hard. They're capital intensive, and you know you may be able to see your order book, but you know we're seeing all kinds of pressure on the inputs, right? Commodity inputs. We're seeing global commodity inflation. So I think it's a warning flag.
I love this idea that pricing power people are mistaking for productivity gains.
Yes.
How much are we seeing that with stock prices as well, in the sense that there has been a scarcity of paper for so long that there was a power of equity valuations that's getting now diluted to some degree by some of the massive IPOs that are coming to market?
Yeah, so, I mean, this is one of the things we've been talking about for a long time, and this is where we talk about PE valuations, right? And we've said to folks, look, multiples have peaked, and you're probably going to get compression. So that's why earnings power is so important. You're not going to get scarcity premium, right? And in addition, you guys talked at the top of this hour about the movement of capital. We're seeing share repurchase, which used to be a huge source of demand in this market, and it was coming from the hyperscalers, begin to go away. So all of these things, kind of put together are saying, we are now seeing an erosion of the scarcity premium. We're seeing capital that is, much more ample. It is not precious.
There is an issue right now that we keep asking people about how much they're selling to try to buy into some of these IPOs. Like, what are they selling? Is it Bitcoin? Is it some of the non-tech related names? What do you see?
Yeah, so it's so interesting, that you brought up the crypto trade. One of the hypotheses we've had for a really long time, and we've tried to illustrate this analytically, is the extent to which Bitcoin has been a liquidity-oriented asset. Meaning when liquidity and financial conditions are ample, it rallies, and when financial conditions are beginning to tighten, it pulls back. And I think that what you're seeing is all the folks who were in crypto simply for the speculative price appreciation are coming out, and they're chasing other things in the equity market, in semis, in potentially accessing new deals.
You think it might be a sign of capital constraints emerging, that we're seeing that move in crypto?
Yes, potentially. I think, and to your point, I think we're over the next 12 to 18 months, I think as everyone is issuing debt, as everyone is issuing stock, we're going to start to tighten up here. I also think, this idea, that you raised, Jonathan, about, is it the risk-free rate versus, the credit premium? I'm not so sure here that the overall scarcity of capital here doesn't cause that risk-free rate to go up, right? And folks need to kind of care about that, because they could say, hey, I don't care, I'm just playing for the corporate. But hey, at the end of the day, everyone's cost of capital is based off of that rate. So,
So you've got to build on that, because you seem worried about the equity piece and on the sovereign piece as well.
Yes.
That's a difficult moment to be in.
It is unbelievably difficult. So another theme that we're talking about with clients is not only, to have more realistic forward expectations about both stocks and bonds vis-a-vis history, but the need, because both of those asset classes are now tied to these same exact themes, and they are very positively correlated, that you need other things in your portfolio to be diversifiers. So it's why we've been so avid about adding real estate, about adding other real assets like commodities, energy infrastructure. It's why we've, had some appetite for alternatives. Not all alternatives, but we've had an appetite for alts, because you need that ballast in your portfolio, because stocks and bonds now are being, driven so much by the same exact trade.
We've been talking a lot about financial market dynamics. When does the real economy matter? I mean, how much do you actually even look at the jobless numbers that the jobs numbers that come out in about an hour and 20 minutes?
So look, I think the real economy has absolutely mattered, right? We are in this unbelievably interesting moment where this technology revolution is different than the prior two. We are transforming the infrastructure, and we're transforming manufacturing. Data centers are the manufacturing factories of our future. That's a great thing in terms of overall economic productivity, but it is a cautionary thing, because manufacturing and infrastructure are cyclical businesses. And this brings us back to my very first point about look for true secular growth. a lot of what we're seeing in the market is not sustainable secular growth. Things that are growing 15 and 20% are not sustainable in a world where global GDP is growing 5 and maybe 7 nominal. It's just not, right? It's just not.
Lisa, a lot to think about. We appreciate it. You have a great weekend. Lisa
Absolutely.
Shallett there of Morgan Stanley. Lisa, thank you. Equity futures here pulling back just 0.4% on the S&P with an update on stories worldwide with your Bloomberg brief. Yahira has more. Hey, Yahira.
Hi, John. Senator Elizabeth Warren inviting CEO Jensen Huang to testify on Capitol Hill next Thursday. Warren reportedly asking Jensen to address the chipmaker's China business and U.S. export controls. We are seeing Lululemon's shares plunging 13.3% in the pre-market. The athleisure company cutting its annual forecast due to worsening performance in North America. It's facing increasing competition from the likes of Alo and Biore, while also working to recover from product missteps like its see-through leggings. And Airbnb CEO Brian Chesky is starting an AI lab. Sources telling us here at Bloomberg it's in the early stages of funding the new venture. Unlike its rivals, Airbnb has not partnered with OpenAI to create a plugin, and Chesky has said ChatGPT's tools are not robust enough. Burn. That's your Bloomberg brief, John.
Hey, Yahira, thank you. Appreciate it. More from Yahira later this hour. Up next on the program, winning one way or the other.
I think Hezbollah, I will tell you, they called us and they said, how about stopping? And I think you're going to see things happen over there. We're going to win one way or the other. It's going to be militarily or on paper.
Up next, we'll catch up with Stephen Kirk of the Council on Foreign Relations, live from New York City this morning. Good morning.
Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Equity futures look like this. We're pulling back by 0.4% on the S&P 500, on the NASDAQ 100, negative by 1 full percentage point. A bit of weakness out there. Some tech-related weakness going into payrolls later this morning. Your bond market looks like this. 2s, 10s, 30s. 2 shaping up as follows, 4.04%, just about unchanged. And for crude, this is really the first time we've talked about oil all morning so far. Crude's doing nothing. Brent's at 95, WTI's at 93, We were promised on April 17th the Strait would reopen. It did not. And here we are with the 90s with no deal in sight going into the weekend.
Yeah, the reason why we haven't mentioned it is because a lot of people in markets have tried to ignore it, partly because you just can't get their handle around exactly what's going on, whether things are improving or not. That isn't to say it's not important. And actually, increasingly, people say in the next few weeks, this will be one of the most important stories if the Strait does not reopen, because we are reaching tank bottoms when it comes to some of the inventories.
Getting closer and closer. How close? We still don't know. Under surveillance this morning, winning one way or the other.
I think Hezbollah, I will tell you, they called us and they said, how about stopping? And I think you're going to see things happen over there. It would be really nice if Lebanon could have some peace. I spoke to Bibi Netanyahu about that. We're going to win one way or the other. It's going to be militarily or on paper.
So here's the latest this morning. Fighting between Israel and Hezbollah, hindering US-Iran peace talks, with Iran insisting on a ceasefire in Lebanon before accepting a deal. Joining us now, Abir Abu Omar from Dubai. Abir, welcome to the program. Can you frame for us just what has happened in the region over the last week? Because we were looking at pictures coming from the Kuwait airport, and they looked absolutely shocking. When we're told there's a ceasefire, that's what we're told here in the United States. What do you see across the Gulf?
I mean, you guys just said it, right? We just don't know yet. And this is pretty much the same picture we're seeing out of the Gulf. But look, there are three sides to this story. There is the Iran story, the Lebanon story, and what we're hearing from President Trump. And when it comes to Lebanon, Lebanon's Hezbollah, that is the militia that is backed by Iran in the southern part of the country, came out and said that they refused the deal that was reached between Lebanese officials and Israeli counterparts in Washington. Naim Qassem, the head of that group, actually said that the deal was absurd and that he refuses to accept it, and he refuses to accept not attacking Israel as long as Israel is attacking the southern part of Lebanon. And these attacks are not just happening in the Gulf, right? They're happening between Hezbollah and Israel. Hezbollah attacking the northern part of Israel, Israel on its own remit attacking the southern part of Lebanon and its villages. It is currently having its deepest incursion in 25 years. We spoke about that on your show before. That still continues. Those hostilities still continue. You mentioned Kuwait as well. Now, Kuwait has mentioned that Kuwait's defense ministry said that one person was killed, several others have been injured in those Iranian attacks against its main airport. They also suspended flights from the main airport into the region and pretty much the wider world. Those have not opened yet. So we still wait and see, and oil prices not doing much as investors really try to understand what is happening and if a deal is in fact imminent.
It's incredible how calm the market actually is. Abir, appreciate your coverage and looking forward to your work over the next week or so with no deal in sight right now. Just to see those pictures of a drone going into the airport, into Kuwait, and you've all seen the pictures of the damage done as well. We were playing the video there just moments ago. It's kind of incredible that we're still at this stage where we're talking about a ceasefire and these things are happening.
Yeah, Kuwait is a country that is an ally of the United States, houses troops of the United States. Where is the red line? We have heard from the president the red line would be an injured, seriously injured or killed U.S. service member. Again, though, this is really the key question. What if we cross the line to not a ceasefire?
Stephen Cook of the Council on Foreign Relations writing the following: the president is looking for a way out. He seems to have lost interest. The Iranians are also paying for time while watching the U.S. political clock. Stephen joins us now for more. Stephen, welcome to the program. Peace through strength. It's a lesson, something that the Biden administration didn't seem to understand, and they were criticized for it repeatedly by this administration too. Stephen, do you think the president and this administration has forgotten that lesson?
Well, it certainly seems clear that the president is not interested in escalation. He has threatened the Iranians any number of times only to back down. And he has informed aides that he has no intention to restart active combat against the Iranians unless an American soldier is killed. That's not a good negotiating position. That does, by taking the gun off the table, the Iranians know they can do things like hit the Kuwait airport. They know that they can demand a full Israeli withdrawal from Lebanon, which is essentially stalling for time because they know the Israelis are not going to withdraw from Lebanon until Hezbollah is disarmed. So I think the president in some way has lost his interest in this. He, in fact, called negotiations with the Iranians boring and is done. and so therefore the Iranians are given a permission structure to do the kinds of things that they're doing.
Stephen, is it that simple, or is there some other constraint around perhaps escalating this conflict, whether it's allies in the region that are saying, please don't create another regional all-out war? Is it some of the pushback from his own political party, or is it the idea that ammunition supplies are limited in the United States and there is an effort to rebuild?
I think those are all good points. In particular, the allies in the region, some of them in particular, are quite concerned about their energy infrastructure, and we are starting to run low on inventories, which will cause more pain for the American people. At the same time, the president cannot talk about winning the conflict. The president cannot talk about all of the damage he has done to Iran when we're looking at a situation in which the Iranians continue to enrich uranium, where the Iranians have some control over the Strait of Hormuz, and the Iranians can threaten their neighbors like Kuwait at will.
There's a huge political issue coming up as we get to driving season and as we do approach tank bottoms, as we've heard from people, including Michael Wirth of Chevron. At what point do you expect the Congress and the White House to potentially restrict sales of U.S. oil and gas to places like Europe to try to keep down the prices here in the United States?
Well, we've already heard some calls to that effect, that the oil and gas should not be exported to Europe. Of course, that then creates very significant problems for the Europeans, which will also be a problem for the U.S. economy. So this is this kind of situation in which every day we're getting closer to an agreement, when we're in fact not getting closer to agreement. And kicking the can down the road is in fact making things worse. And so the economic situation will grow worse and worse as time goes on, with the president unwilling to make any kind of decisive decision. Either he finds the political will to accept the fact that he will sign an agreement that empowers the Iranians and somehow tries to spin it, or he'll have to escalate in order to open the Strait of Hormuz.
The phrase we often hear as well, Stephen, from the administration is Operation Economic Fury, that the squeeze we're putting on the Iranians will force them to make concessions. What's your view on that? Because we've had the squeeze on the Iranians from an economic angle for quite a while.
Yeah, there is one interpretation of what the president is doing, which is that he is hanging tough, and he believes that the blockade will eventually collapse the Iranian economy, and that will lead ultimately to the collapse of the Iranian regime. I think what's missing from that analysis is the willingness of the Iranian regime to inflict pain on the Iranian population, and that they believe that they can outlast the president, who is looking at a political clock here in the United States, where the midterm elections are coming up, and we're getting towards that part of the political season where it really matters what's happening in the economy.
Steve, it's good to see you. As always, Stephen Cook there at the Council on Foreign Relations. Midterm still feels like a long time away, and I understand why some people have started to ignore this, because the market has as well. The market's parked this. The market's parked this because there is a belief that the president doesn't want to re-engage in hostilities. But the Iranians are also aware of that commitment to not re-engaging in hostilities. And to Stephen Cook's point, he alluded to it, that's emerging as a bit of a weak point in negotiations.
That's sort of why you're seeing some of these missiles fly into places like the Kuwaiti airport, because they can, and they can continue to attack and have missiles fly without violation of the ceasefire. The point there that he was making, though, at the end, in response to your question, a really important one, the idea that the Iranian leadership is willing to inflict a lot more pain, especially if they know that the pain is going to get a lot more seriously, potentially problematic for this president politically.
They don't have the midterms coming up, let's put it that way. Coming up on the programme, Gil Laureate of D.A. Davidson on the cracks opening up in the chips trade. From New York City, you're watching Bloomberg TV.
money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
The jobs number is 60 minutes away. The estimate in our survey, 88K. The previous number, 115. 3-month moving average coming into this, around 120. So things have started to pick up in this economy based on the jobs number so far. How tight is the labour market? To Lisa's point, you've got to look at unemployment. You've got to look at wages, and we'll do just that in about 60 minutes' time. Equity futures on the S&P pulling back. The tech trade just giving up a little bit. We're down by 1 full percentage point on the Nasdaq 100. Not just Broadcom, but maybe some other red flags starting to appear in this market.
Yeah, people are getting a little bit nervous about the supply coming to market, given that a lot of it is starting to feel like it's crowding out potentially other trades. How much are people selling certain things to try to get in on the SpaceX IPO that's coming, and then the OpenAI and Anthropic following that? Ultimately, this is going to be a key question, and I think Lisa Shallett nailed it. At what point are these all cyclical trades? And if you get them kind of experiencing some weakness, if you don't get an economy that really moves in tandem with its strength?
It just feels like one big trade, to Lisa Shallett's point a little bit earlier. In the bond market, 2s, 10s, 30s, going into that jobs print, yields this morning, unchanged around 4% on 2s, around 4.50 on 10s. This will set the tone for the one part of the dual mandate over the Federal Reserve. The other report, which is on Wednesday, the CPI report, will set the tone for the other part of the dual mandate heading into the Fed's meeting in just under 2 weeks' time.
So the expectation for today is the unemployment rate stays at 4.3%. If it moves down to 4.2%, it would be in tandem with the expected CPI rate that we would get next Wednesday of 4.2%. Just to give you a sense of where we are, it is very rare to see the unemployment rate and the inflation rate come in at the same, or the unemployment rate being below. Raising questions again, is this Fed really restrictive or potentially accommodative?
As we count you down to that jobs report, and CPI next week, of course, let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. We are seeing Lululemon shares absolutely plunging this morning, down 11% in the pre-market after it cut its full-year outlook, pointing to worsening trends across North America, and management saying that over the past few weeks, it's seeing fewer customers coming into stores. That's due to controversy around some of its see-through leggings, and that's not helping at a time when it's facing growing competition from the likes of Alo, Viore, Rhone, and name just a list of others coming after Lululemon. Meanwhile, as you said, we are seeing the chip trade falter again this morning, still feeling the effects after Broadcom disappointed, or as Lisa said, maybe taking some chips off the table as we get ready for the SpaceX and all those other IPOs. But meanwhile, we are seeing Micron, Intel, and Broadcom all falling in the pre-market, and the move in Micron is notable since it scored a major win. NVIDIA CEO Jensen Huang saying that that's one of the companies that's been approved to supply the advanced memory chips needed for its Rubin system. And in a down market, sour on tech, I did manage to find some positivity, and it is in no other than the space sector. In anticipation of that SpaceX IPO, these stocks have seen an incredible run-up. Rocket Lab up some 50% over the past month. AST Space Mobile up over 60% in that time. John?
Yahara, thank you. Thank you for the update. On our radar this morning, the payrolls report due out in just about an hour. The median estimate in our survey calling for 88,000 jobs added and the unemployment rate to remain unchanged. A slowdown could hammer bond traders betting on Fed rate hikes in the next 12 months. Elsewhere, Trump officials clashing over potential loopholes in China tech restrictions. A potential shift in policy may have legally allowed firms like Alibaba to buy NVIDIA chips overseas. The Commerce Department insisting global bans remain in effect. And Elon Musk Joining the JP Morgan boss, Jamie Dimon, pitching the historic SpaceX IPO, Musk laying out plans for deploying data centers into Earth's orbit.
We don't think this is a particularly difficult thing to do. In fact, we think it's easier than our communication satellites. The Starlink V3 communication satellite is an incredibly complex machine. The AI data center would be much simpler by comparison.
SpaceX pricing a share sale at $135 per share, raising roughly $75 billion. Quite a scene in the last 24 hours at the new JP Morgan headquarters over on Park Avenue to see Jamie Dimon, the most well-known man in finance, pitching the biggest IPO we've ever seen with the richest man on the planet to send rockets into orbit and space centers as well. Just pretty remarkable pictures for this market, for this economy.
This is incredibly rare. We just have to put that out there for the top banker, arguably in the world, or certainly in the United States, to come out and stand alongside Elon Musk and say, this is a good investment, this is a great investment, this is the future. And what it's doing is it's increasing enthusiasm among retail investors, wealthy individuals, and beyond, that you have some of the biggest personalities in finance supporting this. I was looking at some of the commentary coming from family offices. One, he's very prescient and a futurist, talking about Elon Musk. I'm a believer in what he does. She also said that the event shored up confidence because it, quote, showed a lot of very serious people backing his venture. This is unusual to see people really putting this forward, and there's an incentive to do so because ultimately they've got a lot of money at stake and they need to sell a lot of paper coming into a market at pretty high valuations.
And if this IPO goes well, sets up the next IPO, the IPO after that, could set the stage for a lot to happen in the next 12 months.
There is no incentive for bankers on Wall Street right now to talk this down.
None at all.
Unless they don't have a piece of it, and then you've got Jeffries looking to take the other side of it. But, you know, right now there is an incentive to get this out and to celebrate this. And it might end up being a real positive in terms of what these companies promise. There is a risk that this is one big cyclical trade, to the Lisa Shallett point, that you can't see growth rates at this pace, especially if you don't see the rest of the economy gaining steam, and that you might see some faltering performance as you typically do after big IPOs in the initial years.
There are many incentives to keep this rally going, that's for sure. This rally coming undone, just a touch. The massive run for semis taking a bit of a breather as potential cracks emerge. Broadcom leading the retreat, adding to losses after raising over $280 billion in market value. Gil Luria of D.A. Davidson remaining neutral on the stock while raising his price target. He writes the following: we found out how on edge investors are about technology. If the beat isn't big enough, the consequences were severe. Value is shifting quickly as the bottlenecks emerge. Gil joins us now for more. Gil, welcome. Lisa Shallett called it a bit of a red flag for the semis trade. Do you consider it a red flag or just a small crack?
A small crack. Let's not forget, Broadcom just grew revenue 50%. It grew its AI revenue 143%. So it's a very good result. But investors had now been trained to expect a lot more than that because some of the upside results from companies like Intel, AMD, and Dell were so spectacular that investors just raised their expectations too much. You're talking about a cycle, and the semis are always a cycle. This is not any different. None of us know how long the cycle is going to last. We all speculate and estimate, but it could last through next year and it could last through 2030, and those are very different outcomes. What we do know is that different stocks are trading differently on that cycle. I would argue that companies like Intel or even AMD and many of the optical stocks and the nuclear stocks are trading as if the peak of the cycle isn't until 2030, where stocks like NVIDIA and Micron are trading like the peak of the cycle is next year. So that's where we see the opportunity in betting on the ones that not a lot embedded in the valuation. NVIDIA at 22 times, Micron at 10 times, look a lot safer than Broadcom at 35, AMD at 40, Intel at 100 times. And that's where we see the opportunities because there is going to be a cycle. We just don't know how long it's going to last because the developments in AI are so rapid that it's very hard to predict when we get to peak functionality, when we get to quicker adoption. So we have to play the cycle carefully by going to the less demanding valuations.
There's also a degree of uncertainty, Gil, about the addressable market, and that clearly was put on display with SpaceX and some of their projections, and maybe is what's at stake with NVIDIA as well. I mean, is this an issue of people saying that the peak might be next year, or is it people saying that the run rate just cannot continue at the pace that it has?
Yeah, two sides of the same coin. We look at the hyperscalers. They're spending most of their operating cash flow. Google just went out and raised $80 billion of capital. By the way, think of that as coming on top of the capital demand from SpaceX, Anthropic, and then OpenAI. You also have Google going out for that much. Next, you'll have Amazon, Microsoft, and Meta going for more capital. So the capital demands on the market are impacting the stocks already. And if the hyperscalers raise that much money, they can continue to raise their CapEx rates. They do see this as a good return on investment. I know that's a controversy. It's not for them. They are growing revenue at an accelerating rate at the same margins. That indicates a good return. To the economy, you can see the return from the run rate of OpenAI, Anthropic, and Google's products. Those are products that are being bought by consumers and businesses. That's real economic value. And right now we're at more of $100 billion run rate. So there is return. We do expect these hyperscalers to continue to spend. But again, part of that's going to come with more capital demand, which is going to have even more of an impact on stocks as they soak up the demand, combined with those IPOs doing the same thing. So that's a lot of volatility ahead from all these directions.
At what point do the semiconductors lose pricing power? At what point do you have some of these companies, and frankly, their creditors pushing back and saying, I'm going to lend you $10, and then they're going to charge you $20, and then you're going to ask for $10 more, and then you're going to ask for $30, and then it's going to keep going up. I mean, this is what it feels like, an auction house. At what point do a lot of the hyperscalers say, enough? Stop it already with the price increases. At what point does that leave them potentially with some capped margins?
The hyperscalers don't have that many options. They are still, by and large, relying on NVIDIA chips, almost entirely. That makes NVIDIA's gross margins around mid-70s relatively safe. Now, they're going for alternatives. They're trying to make their own chips with Broadcom, and they're trying to ramp up production at AMD. But those are still at very early stages, and those are coming in the mid-70s. So right now, those are the only options. So the hyperscalers are not necessarily in a great negotiating position in that regard. So that makes those semi margins relatively stable. Even in memory, the supply is just not there. So those companies can be in the high 70s even. How long that lasts, again, is a matter of how long the cycle lasts. But right now, it looks like it could last through 28, 29, 2030, which for most of our investors is their investment time horizon, and they can be comfortable with that. But again, that's only if AI continues to progress. If diffusion of AI happens into companies that generate productivity from that, if consumers are willing to subscribe or are willing to accept ads in their chat, only if those things persist will the hyperscalers continue to invest and keep the margins high at those semi companies.
Hey, Gil, it's good to see you. Appreciate your time as always. Gil Luria there of D.A. Davidson. In the meantime, it's quite a wealth transfer, a major historic wealth transfer from hyperscalers to chips at the moment.
This feels like a kid playing their grandparents against each other to raise more money, and then somebody on the other side who's selling the games that they want just keeps jacking up the prices because they know that they're playing the grandparents about who's going to love me more. I mean, at a certain point, you just wonder when people are going to say, am I going to really keep you giving me more money in order for you to give more money to the semiconductors? I don't know.
It's quite a scene, isn't it? We're down 1% on the NASDAQ this morning. Let's get you an update on stories elsewhere this morning. With your Bloomberg Brief, Yahara has more. Hey, Yahara.
Hi, John. Jane Street is planning to build and finance its own data center to keep up with growing demand for compute power. Sources telling us here at Bloomberg, the market-making firm is talking to companies in the technology, crypto, and finance industries about building a facility. President Donald Trump saying that recently named Director of National Intelligence will only serve in the role temporarily. Trump's appointment of Bill Pulte for the role earlier this week drew bipartisan backlash. Pulte is also remaining in his current role as Director of the Federal Housing Finance Agency. And President Trump saying he will headline a rally in Washington on June 24th to mark the 250th anniversary of the U.S. At least 5 of the 9 announced performers dropped out of the event, saying it was way more political than they were led to believe. In a post, the president writing, "We don't want singers with no talent. We've told them all to stay home. That's your Bloomberg Brief. John?
I like how the 250th anniversary has turned into a rally for the president.
Well,
he's not even hiding it anymore.
No, it's just,
right?
It is what it is. I mean, I don't know what to say about this one.
Yahira, thank you. Appreciate it. Up next on the program, stabilizing the labor market.
The economy is very strong. Job growth is strong. Except for April, we have seen real wage growth every month since President Trump took office.
Up next, we'll catch up with Michael Collins of PGIM, live from New York City. You're watching Bloomberg TV.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
The jobs number in the next hour, the estimate in our survey, 88,000. That drops at 8:30 Eastern Time. Your equity market into that, negative by 0.4. As things stand at the close yesterday, still just about on course for a 10th consecutive week of gains. If we hold on to these numbers this morning, though, we'll undo that 9-week winning streak. On the NASDAQ 100 this morning, down by 1 full percentage point. In the bond market, shaping up as follows: 2s, 10s, 30s. Yields look like this, just about unchanged at 4% on 2s. Under surveillance this morning, stabilizing the labor market.
The economy is very strong. Job growth is strong. Except for April, we have seen real wage growth every month since President Trump took office. We are creating jobs, and importantly, Congressman, these are jobs for Americans.
So here's the latest this morning. Payrolls dropping in less than 1 hour. Our survey calling for an increase of 88,000 jobs in May. Michael Collins of PGIM writing, the labour market remains on relatively stable footing. Other data suggests an ongoing low churn environment. Mike joins us now for more. Mike, welcome to the programme, buddy. It's good to see you. Let's talk about this jobs market. How hot are things right now? Looking at this market, it looks red hot. When you look at the economy, do you see something different?
Yeah, the job market, I wouldn't call it red hot, Jonathan. The job market has stabilized, right? The last couple of quarters, we've been talking about kind of a slowly deteriorating or moderating job market, but I think you can kind of throw that narrative out for now. It seems like things have certainly stabilized, even breadth, as we look at, job gains across different sectors, seems to have improved a little bit. Manufacturing sectors in general are actually doing fairly well. A lot of that is just riding the back of the big AI CapEx boom, as you discussed earlier in your show. It seems like one big trade, right? And then that's one thing that really does bother me. We saw this during the housing bubble in 05 and 6 and 7, where the whole economy kind of rides on one big sector. When you have so much CapEx going into one area, you tend to have so many companies kind of channeling their business toward that. And then the wealth effect, of course, is also part of that same big trade.
Mike, do you think that the Fed has the luxury of waiting to see how this plays out? Does the new leadership have the luxury of time?
Yeah, I mean, I think they're just on hold indefinitely right now, Jonathan. I think the hurdle to hike is a lot higher. I know more and more FOMC speakers are talking about maybe considering a hike as the next move, but I think the hurdle for that is very high. I think ultimately the next move will be a cut or two. It may not be for a year though, right? So I think we're kind of stuck in this interest rate. You look at rates right now, as you mentioned, they're totally unchanged today, which is really kind of unusual. Interest rate volatility has come down. We've really been stuck right now in a very tight range across the entire yield curve. And that's not a bad environment for, the economy, because the economy seems to be running pretty well with rates at these levels. It's not a bad environment for fixed income investors, my clients, because they're earning these what I consider to still be really high yields, really attractive all-in yields for longer.
Is there any sign right now to you, at least in capital markets, that monetary policy is restrictive?
Yeah, I mean, so the problem with monetary policy, Lisa, right? It's not restrictive for the big companies that are borrowing money like crazy. It's not restrictive for wealthier people who benefit from receiving the interest from these high rates. But man, it is restrictive for a huge growing percentage of the population who are really struggling with high interest rates, whether it's on trying to get a mortgage or on car loans or financing big ticket purchases. My analysts are telling me every day that they're seeing kind of cracks really starting to form and spread out through big ticket items. Think of, RVs and things like that. And you talked about Lululemon earlier. Maybe that's just an affordability issue, but it is happening, right? So when you think about the Fed, like, what is their real goal? Is it to manage the economy on average, or is it to support, the 80% of people who are struggling with high interest rates, right? And that's really the challenge that they have, and why it's a very difficult position for them to be in.
Would you change your view if you did see the unemployment rate fall to 4.2% today? I know it's not a base case of many people. The expectation is 4.3%, but if it were to be 4.2%, that would be in line with the expected CPI print next Wednesday. And it is very unusual to see these two things come in tandem. Would that be concerning to you?
You mean in terms of the Fed considering to hike rates and
needing
the labor market overheating and inflation going too high? I don't know. I mean, I think, again, the problem with the Fed, right? They have a very blunt instrument, right? The monetary policy tool, and it really controls the demand side, obviously much better than the supply side. But all the inflation we're really seeing is supply driven, right? It's not, other than the AI CapEx thing, which is driving prices higher on a lot of specific goods. But it's really a supply problem we have in the economy, and I think that's going to get worse. So by hiking rates, the Fed actually reduces the supply, right? Because it makes the financing of new equipment and new manufacturing more expensive, right? So they're kind of in a quandary here. And we're not seeing I'm looking at the wage growth, right? More than the unemployment rate, Lisa. If you, obviously, as we discussed last month, if you look at the hours worked times the wage increases, they seem to be kind of moderating a little bit. Like, we're in a disinflationary wage growth environment right now. We've gone from wages growing, 5-6% a year to about 3.5% now, and that number has continued to come down. So that's a really important number to watch this morning.
If your argument's going to move on 10 basis points, you don't have much of an argument to begin with, Bramo.
Okay, fair point.
10% down, 10 basis point downside surprise and unemployment.
It's not that it's not that. That's sort of a historic metric. That said, the pace of the decline and the strength that you're seeing in certain metrics of the employment market in tandem with where CPI is at is getting some people nervous. I'm not saying it's definitely going to happen. I'm not saying that it's going to change the needle. I just think it's an interesting metric to look at.
One final question for Mike Collins. Mike, I want to give you a shout out. This is your last appearance on Bloomberg Surveillance. I know you're retiring. And I wanted to say thank you to you, sir, because when I moved here more than 10 years ago, you were so kind to me. And I've learned so much from you and the team. And I consider the work that you did with Robert Tipp and Greg Peters over the last decade in fixed income just to be absolutely phenomenal. I have one further ask of you. Mike, can you just share some wisdom with us? Career lessons, the number one career lesson in this fixed income market going into a massive technological revolution and all the change we're seeing taking place.
Yeah, I mean, this is a really interesting period to be living through, right? Even as my career is coming to an end, it's something that I will certainly be involved in for decades in terms of participating in this AI revolution, right? And AI is a great tool for everybody, right? There were stories on Bloomberg this morning about, people getting $60,000 a year, of income, even though they're not working, right? I mean, so productivity is a miracle. It's like the holy grail for economists, right? And it seems like we are seeing and going to see some productivity improvement. But we've seen this before. I've seen this so many times over my 40 years, Jonathan. When you have this much investment, excessive investment, I would call it, in one area, it becomes such a huge part of the economy, and it drags a lot of companies and a lot of businesses into that same big trade, and it doesn't end well, right? So I'm very cautious and concerned about the actual return on investment of all of this giant CapEx. And again, we've seen it so many times, and it doesn't work out well, right? So,
Mike, I'm not cautious and concerned about your retirement, though, sir. Not in any way, shape, or form. Mike, appreciate your time. Thank you for everything you've done, for being a friend of this program.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Sorry. Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It's actually one of the healthiest labor markets I've seen in decades.
The overall trend is in the right direction.
I have a lot of optimism that we're going to have a lot of ongoing demand for human workers.
There isn't a lot of heat in the labor market.
We think the labor market will remain choppy.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your price action scores look like this. Negative 0.5% on the S&P, pulling back just a touch. On the NASDAQ, a little bit more. We're down by 1 full percentage point as some cracks begin to emerge in the tech trade. We'll get to that in just a moment. In the bond market, 2s, 10s, 30s. Yields shaping up as follows going into payrolls. 10s around 4.50, 2s around 4%. The guesses this morning, the jobs guesses are pretty elevated. We're looking for a number close to 90,000. On jobs, SocGen a punchy 125. Some momentum starting to build in this labor market. Does it continue with this report?
This is a confusing labor market, and so you'll get a lot of people who are going to be looking at the details of this. We've talked about wage growth. That's going to be key. We're talking about the potential unemployment rate. That also a potential gauge of strength or slack. A real question also going forward of the composition of those jobs. Are they coming from education? Are they coming from healthcare? As Priya said, we're all getting older, some of us getting older faster than others, and that we need to be taken care of. And at a certain point, is that the right kind of job growth that you want to be seeing?
Looking ahead to that payrolls report at 8:30 Eastern time, and looking ahead to this as well. A major IPO set to take place in the next several months. SpaceX coming to market. Jamie Dimon of JP Morgan pitching this to investors, and we're starting to see some headwinds building. Just a couple, not too many, but the fact that S&P is sticking with the seasoning period, not fast-tracking these mega IPOs, 1. And 2, the headline that dropped earlier on this morning, that Chinese-based investors, Hong Kong-based investors won't be able to invest in some of this. Just on the margin, something to pay attention to.
Yeah, the ongoing bifurcation between the U.S. and China when it comes to their tech stacks, and how much there are going to be barriers between the two, and a question about how much Chinese companies can buy some of the U.S. chips. We've seen that with NVIDIA as well as U.S. tech products. Look, there is a bigger question here. Who is going to finance this mass capital raise? Right now with SpaceX, you see every banker lining up to try to pitch it to their clients, an increasing proportion of retail clients that possibly are the price setters of the future, as Scott Rubner of Citadel was saying. And you see a question of what do you sell to get into this? Do you sell Bitcoin? Do you sell other tech names, or do you sell the rank and file of the economy that are not hinged to this massive cyclical bet? There is a clear anxiety there, and that is evidenced by how much of a sales pitch is being made across Wall Street.
Mike Collins, some word of wisdom, from PGIM, retiring. What did he say? One big trade, and these things never usually end well. Something to think about.
At the same time, and pretty much everybody says this, right? It will end, but it might not end for a while. So if it's not going to end for a while, you are going to get penalized for missing out on it. And this is the conundrum for a lot of investors.
Coming up this hour, we'll catch up with Nadia Lovell of UBS. With a 9-week winning streak under pressure, Becky Frankowitz of Manpower Group expecting a slower pace of job growth, and Jeff Rosenberg of BlackRock reacting to the payroll sprint. We begin this hour as investors pull back from the tech trade heading into the latest jobs report. Nadia Lovell of UBS writing, stay positive but diversified. We will like the AI value chain, but we think leadership broadens from a narrow set of mega caps. Nadia joins us for more. Nadia, good morning.
Good morning.
What drives the improvement in breadth?
I think you continue to see, as you've been talking about the AI trade, I wouldn't say that it's broken or any sort of cracks. It's more of a scratch, right? Particularly given what's happened this week. But in terms of how we're thinking about it, we continue to think that diversification across the AI value chain is quite important. We've been squarely focused on where the bottlenecks are and invested in those areas. So think about memory, think about compute, think about networking, think about software platform. And so despite the fact that you're seeing some weakness today, we do think that ultimately what's going to drive this market higher is going to continue to be the AI trade.
The AI trade and the earnings that it's created. We mentioned it a bit earlier, a bit of snark, but I'd love your reaction to it. Whether we're just seeing a massive wealth transfer from hyperscalers to the chip players, and that's all the earnings story has been so far. Is it more than that?
It is more than that, right? Because the demand is there. That's also driving the pickup in the hyperscaler spending. I mean, we know that this year that the 4 largest hyperscalers have already earmarked over $700 billion in CapEx. We think that global AI CapEx is going to be over $800 billion. And then we think that that gets to close to $1 trillion. And even those estimates might prove to be conservative, just given the capital raises that we're seeing this week and the announcements around Alphabet and so forth. And so we could potentially see even more of those kind of announcement coming from the rest of the hyperscalers, and that's going to push up the CapEx numbers even more. Again, there's increase in demand from the enterprise. You're seeing AI move from sort of an experimental phase and more to deployment. You're seeing more broad-based, wide enterprise phase deployment across the adoptions. Adoptions are going up, depending on the numbers that you look at. You could see, already 60% adoption rates. Some numbers even put it close to 80% adoption rate. So the fact is that the monetization cycle has started. We're still early in the phase of it. So it's not just what transfer, one CapEx is another person's revenue. Eventually, there is monetization that's already underway.
Yeah, what's paying for it right now? Is it the labor market?
I would say, it's a combination, right? A little bit on the margin in terms of we're seeing already pull back in terms of hiring and headcount reduction at tech. It hasn't hit the broad-based economy yet. And so I think what's paying for it right now, of course, a lot of this is being financed from operations, from cash flows from operations. There's also now capital markets are quite open. The constraint is not capital, right? We're seeing that. We're seeing that even in the debt raise this year by the hyperscale, oversubscribed, 10 times oversubscribed. The constraint continues to be these bottlenecks that I talked about earlier.
Is the excess and the ample liquidity for some of these tech companies the potential constraint for other companies not related to this trend? In other words, do you see clients and are you recommending to them to sell other assets, other loans, other debt instruments, other stocks of companies not participating in this to finance the purchases and investments in the SpaceXs and Anthropics and OpenAIs of the world?
What we have been really focused is really in advising our clients to manage concentration risk. So where they have, yes, over the last several years, we've seen like the Max 7 has driven a good portion in the appreciation in the stock market. And now you're seeing a diversification, again, as I talked about earlier, across the AI value chain. So what we've been advising clients is to do, making sure that they have exposure, diversified exposure to these transformation and innovation opportunities, and that includes AI. That also includes the electrification. It also includes the longevity that you talked about earlier. So it's not limited. So my point is, it's like the AI trade has and is and continues to broaden out. I think that's an important message, that it's just not one or two stocks anymore. I mean, look at the strong performance this year. It's not the Mag 7. It's the memory stocks. It's the packaging stocks. It's the networking stocks, and so forth. And so that's our key message to clients: diversification, but exposure to these secular growth trends are important. They cannot be missed out. These are not cyclical bursts, right? The spending that's happening is not cyclical, it's really structural, and it's an infrastructure story that clients must have exposure to.
Job Fridays have changed so much, haven't they? They really have. We just don't talk about jobs on Payrolls Fridays. You join us every Payrolls Friday, and the conversation has shifted so much. We spend so much more time talking about tech and AI.
We will start to talk about jobs when
and
it
hardly
starts.
mention payrolls.
Yeah. When it starts impacting the labor market in a more meaningful way, I'm sure that will be the topic of conversation.
In the meantime, how relevant is the number to this market and your call?
Look, in terms of course, the outlook of the Fed, it is important to us. The number, we're watching the unemployment rate. It seems to be stabilizing around 4.3%. We're also watching wage growth, just given the implications for inflation. I mean, right now we know that the market is pricing in hikes from the Fed. We still think that there's a possibility for a cut this year, but of course, inflation is proven to be more sticky. The labor market is important to the Fed call. If we see any weakness in the labor market, then that could cause the Fed to move later this year. But we think that, even though December is sort of our official call for the next cut, that could get pushed out into 2027.
I'm actually fascinated for this labor market report. I'm excited to look at the details, and the details have been really interesting. I'm not just talking about wage growth, I'm not just talking about the unemployment rate, but if you take a look at where the gains and losses have come from, the tech sector said last month it planned to eliminate 38,000 positions. That was the greatest going back 2 years to August 2024. You're seeing them say it's because of artificial intelligence. Do you expect this to be a leading indicator of what we can look for in other sectors, particularly the white-collar areas that have been seeing some job reductions on the margin as a whole?
Maybe not at the magnitude that you're seeing it in tech, but historically that has been the case. That's where, technology gets adopted first, right? But you could argue, post-pandemic, some of these tech headcounts got bloated, right? So I don't think it's all AI related. Some of it is just normalization and right-sizing business. Yes, AI is impacting tech. But if you look at the data so far, you're not seeing any sort of wide-based impact to the labor market. Is that the future to come? On the margin, yes. I do think that to some extent you will start to see an impact in the labor markets in the years to come, but it's more gradual. It's not going to be, because at the end of the day, we are still a consumer-driven economy. Someone has to pay for spending, and that's the consumer. So it's a balancing act for these companies as well, of how much do you reduce headcount and what impact does that have of overall consumer spending, which ultimately drives the economy.
Apparently the person doing the spending right now is people's parents. Do you see the stat yesterday? It's amazing. Almost half of Americans rely on their parents for financial support, including 33% of Gen X. 33% of Gen X. This came from Northwestern Mutual. 42% of all Americans say they're financially dependent on their parents. 20% of Americans believe they will never be independent.
Wow, the whole wealth transfer. That is shocking. And sort of the retirement accounts that are going to their children. You lived in Soho. You should have experienced this firsthand.
I did live in Soho, and you know my experience of living in Soho. And it actually speaks to a lot of things happening right now.
Well, I mean, there is the sense.
I'll share a story.
Okay, please, carry on.
So when I used to take a day off, I used to walk around Soho, and I used to see all these people that didn't look like they had jobs. And I was like, what do all these people do? How do they afford to live here? This is absolutely ridiculous. And then I thought about it. If you had massive pools of capital, if you were really wealthy and you were supported by very, very wealthy parents, there's probably 3 or 4 places on the planet, if you were choosing a city, where you would choose to live. Which is why we have this massive concentration of wealth in these cities, and within those cities, an even bigger concentrated wealth in certain parts. And then within those cities, when you have certain sporting events, that's why tickets are absolutely sky high, and it's $6,000 to get in just to watch some basketball next week.
I love getting a view into your morning walks and just sort of to get a sense of your psychology during it. To be fair, though, and not just the hyper wealthy, the progeny of hyper wealthy families, but in general, the younger generations don't have access to some of the basics that older generations had, like home ownership, unless they have parents participating. So this has become built into the structure of a lot of families, and with life planning, as she kindly said, longevity, Nadia, rather than just getting old. You think about these things.
Nadia's good to see you, as always. Thank you, Nadia Lovell there of UBS. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. White House officials are clashing over potential loopholes in China chip restrictions. Sources telling us here at Bloomberg, officials are looking into whether Chinese firms took advantage of unclear policies to legally buy servers outfitted with NVIDIA's advanced chips. Anthropic is urging AI labs to consider slowing development. The company is warning that systems are advancing so quickly they may soon be able to improve themselves without human oversight. And Elon Musk joined JP Morgan CEO Jamie Dimon pitching the historic SpaceX IPO.
Why SpaceX public now? Because you had choices, you didn't have to. Why now?
We're embarking on a massive new growth phase, and we need capital for that.
Okay, number two.
Another thing is the revenue. Like, I also feel pretty good about like the revenue projections. Like before, like revenue was a little unstable.
SpaceX pricing its share sale at $135 per share to raise roughly $75 billion. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for the update. Up next, we'll get you some morning calls, plus Becky Frankowitz of Manpower Group with payrolls just around the corner. Live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg 10.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend. This is Bloomberg Television. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
The last few months, we've had data that suggests that the weakness in the job market late last year, I think we can sort of look through that. But we're going to be looking for any signs that GDP, consumer spending, is that broadening out beyond just AI and the upper part of the K? And I think the jobs market is the best high-frequency measure of that.
Preet Misra of JP Morgan looking for another read on the labour market 15 minutes away. Your scores into that look like this. We're down by 0.5% on the S&P, on the Nasdaq down by 1.2. The loss is building in tech heading into the weekend. Look out for that. In the bond market, look out for this. Yields still elevated. 2 still around 4. 10 still around 450. Heading into a Fed meeting with a 2-year rate trending above the policy rate at the Federal Reserve. And some people saying that this Fed, quite simply, is too easy. And they're pointing to financial markets, not the broader economy.
You know what's funny? We see this in the market, but almost every bond strategist we talk to says they expect rates to go lower next and that the Fed's bar to hike rates is so high they're just never going to get there. So again, a little bit of a contradiction there in terms of market activity and some of what we're hearing in terms of strategy.
They believe it's a communication exercise. I believe that at the moment it is a communication exercise to anchor inflation expectations that started with Chairman Powell a few meetings ago. The longer this goes on, though, it becomes more than that. The first thing you do is get rid of the easing bias, you slip into neutral. and you look at the data, you get through summer, and if this carries on, this momentum, and to your point, you end up with a situation, let's say we get to the fall. We're in the fall, and you've got unemployment at 4, and you've got inflation at 4. Then you've got a real conversation to have.
Yeah, the tenths of the percentage point matter at a certain point. If you start having that type of correlation, that is what you see before hiking cycles that usually don't end well. Will the Fed be caught so offsides that they have to hike rates quickly and really create much more of an economic issue?
It's the numbers, but the persistence of it. That's what's going to get them more and more nervous as the months go by.
Rather than one blip and some sort of just
yeah,
blare.
Look, if you end up at 4.2 this morning and everyone changes their call, get a grip. Like, you didn't have an argument to start with if your argument changes on a 10 basis point move on the unemployment rate.
To be fair, given the fact that my mind changes every single day, I think that the data has been really confusing. So people have been flipping around because it's been really inconclusive. Just a fair argument for, if you change your call, it's okay. Come on, talk to us about it.
Oh, no, of course. Come on down. We'll be very kind. Everything's okay. 450 on 10s. Let's get you some morning calls. First up, BTIG downgrading Lulu to neutral, seeing potential for trends to deteriorate further. Elsewhere, JP Morgan putting Qualcomm on its positive catalyst watch, citing positive expectations for its data center revenue. And your third and final call from the team at Berenberg, downgrading CrowdStrike to hold, citing limited potential for upside. One of the blips we've seen in tech earlier this week, not just Broadcom, but that name too.
Yeah, coming out below expectations. And a lot of it, they actually did beat. It's just that people had incredibly raised their expectations after the Mythos moment, hoping that CrowdStrike could benefit, in exponential ways, and there are constraints, and that's what we saw.
It was a rare bright spot within software stocks that had recovered somewhat in the last month or so. Let's talk about this jobs report. It's just around the corner. Becky Frankowitz of Manpower Group writing the following: we expect continued job growth, but at a slower pace than earlier in the year. The key signal for payrolls is whether hiring broadens or stays concentrated in a narrow set of roles. One of my favorite guests to talk about the labor market. Becky joins us now for more. Becky, welcome to the program. Let's talk about the broadening out. Are we seeing some momentum? Have you got some good news for us?
Yeah, so first I'd say we have a labor market that looks stable, but feels tighter. And why is that? Job postings are up, John. They're up 11% quarter over quarter, but the time to hire is very, very slow as employers are taking their time to make sure they choose the right talent. One data point for you, last year, it took about 45 days from posting to fill a job. This year, year to date, it's 65 days. So employers are posting jobs, but taking their time on hiring. And in terms of composition, we're actually seeing a change in the underlying composition of the labor market. I heard Lisa mention healthcare earlier. Healthcare has traditionally carried the labor market. It is still the #1 job in demand, registered nurses. It is down 50% year to date, even though it's #1. And we're seeing a broadening underneath that, particularly with retail as we go into the summer months.
Becky, what does that mean to you in terms of the broadening? Is that an optimistic sign, or does that indicate just that there are areas that need to at least just stay even based on attrition?
Yeah, I would say, I don't know if I'd go as far as optimistic, Lisa. I would say it's a stabilization sign. You don't want to see one sector, whether it's tech or healthcare, carrying the job market. You want to see that quite balanced. And we've seen healthcare disproportionately post-pandemic carry the labor market. And so I'm encouraged to see retail salespeople, retail supervisors, and software developers, although declining, are still in #4 position in our country today. And we're seeing AI, the new thing, and I heard your former guest talk about AI. AI now makes up 3% of the job demand in our country. And you might say 3% is quite small. That's almost 200,000 jobs, about equal, ironically, to the number of registered nurses jobs that are open in our country.
We'll get into that in just a minute. I am curious, though, about something that Neela Richardson was talking to us about earlier this week, about how there's an increasing number of part-time jobs. There also are an increasing number of jobs, like you mentioned, in the retail sector, in the manufacturing sector, that are good jobs, but that are lower paying than jobs that are not being created in other sectors. Is that something that you're seeing as well?
Yes, I think on both sides. So first you talked about part-time. In part, that's being driven by the way that humans want to work, particularly this younger generation that is curating their jobs. And so 68% of Gen Z has a side hustle. And so they have a regular job and then they have a part-time job on the side. In some cases, they may live in Soho like John. In other cases, it's because they have interests that are outside of their core job. So we are seeing this increase in, I'd say, flexibility in people designing their jobs. And yes, I mean, we are seeing a growth in some manufacturing jobs, some retail jobs. But I would say job growth in what fuels our economy is always a good thing.
Becky, let's talk about the future and the way you see things shaping up. You're on the pulse of the jobs market right now, but you've also got experience inside corporate America when you worked at Pepsi too. How do you think this is going to turn out? You're looking at the technology and how it's progressed. You know what the incentives are for multinationals, big institutions. Do you think we do go to this terrible place where white-collar layoffs really start to accelerate, or do you see a different path?
Yeah, so I think we're going to see, as we have historically, I think we're going to see introduction of new jobs. I happened to be in Napa a few weeks ago, and forward design engineers were all the talk. What in the world is a forward design engineer? A brand new job that we didn't hear about 6 weeks ago. They're the people who translate between the business and what the business needs from tech and the actual build of the tech. And so I think we will see this transition in roles, like what happens to software developers. Database architects are growing. So we'll see a transition. The real question, John, is the timing. Will it be a seamless transition, or will there be a gap that then creates job growth in the future? That I don't know yet, but I would anticipate that the labor market will normalize, but we will see a change in the underlying composition. And I think we're starting to see that already with some of the growth in data center jobs.
So let's circle back to the point that you made about the 3% growth in artificial intelligence-related jobs. Are those jobs just directly taken from other tech sectors, right? Or are these jobs that you're seeing come at the expense of, or do you see people transferring into these areas from, say, business services or other areas?
Yeah, so first, it's 3% of the overall job openings are AI related, and that's up about 800% year over year. It's a really big increase for 3%. Yes, and we are seeing these be adjacent to programmers. So we're seeing a lot of programmers shift themselves into data architects, computer network specialists. Okay, why are we seeing that exponential growth? Because they're working in data centers. And by the way, construction managers are also up with the growth of data centers. And so data centers are quite interesting for a microcosm of what we might see to come of infrastructure build, physical operations, and then AI partnering. In terms of people shifting in, again, I'd say it's adjacent, Lisa, but the tech companies would tell you we don't have enough people with AI-related skills.
Becky, appreciate the time. As always, it's good to see you. Becky Frankowitz there of Manpower Group. I think that's the ray of light, I think, the hope for the younger generation. You could see this reverse training. I've heard about this, that certain banks now are taking more of an interest in the graduate class because they are much more on top of this technology of the people than the people, some of the people at least, working inside the institution.
You want the AI natives. You want them to come in and help you create agents so that I can get my new role as a news neural net. That's what I think.
What is that?
It's a neural net for news. That's what I think I should rebrand as.
Okay.
And I think that
could you briefly describe what that might look like in the future?
Yeah, it'll just be essentially a map of all of these different connections, these different ideas.
Okay.
And it can just sort of blip around, and you can sort of input yours, and then it'll come together, and there'll be my face, the simulation.
And then you'll
speak.
This
is important. This is important.
Okay. That's the future. Thanks, Bramo.
Anytime.
It's hope for us all. Up next, the Jobs Report. Stephanie Roth of Wolf Research, Jeff Rosenberg of BlackRock.
world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
Bloomberg subscriber, does the software upgrade to Bramo 2.0 make her less bearish? If you are going to do that neural net thing you were talking about.
I don't know. It depends on what the inputs are. And frankly, it depends on my feedback loop. If you're bearish, then should I be bearish? If you're OpenAI, if you're bearish, I'm bearish. If you're, Claude, maybe not.
Should you be bearish? Payrolls, just seconds away. Futures pulling back by 0.5% on the S&P. We're down by 1.2 on the Nasdaq 100. With your jobs report, here's Mike McKee. Good morning, Mike.
Good morning, John. Well, it is a bullish day, to say the least. 172,000 jobs were created in the month of May. That is significantly higher than last month's number, although actually we're revised down a little bit, 179. The 115 from last month revised up to 179. Two-month payroll net revision, 93,000 in total. The unemployment rate is at 4.3%. There is no change there. Change in private payrolls, 120,000. Last month revised up to 177 from 123. And average hourly earnings up 0.3 during the month, 3.4% for the year as a whole for the last 12 months, and weekly hours at 34.3, unchanged from before, from the month before. 61.8 for the labor force participation rate, same as before. So a lot more job creation than we anticipated. No change in unemployment. We'll take a look at some of the categories that gained and lost in just a moment.
Mike McKee, I'm not sure I should do the market check. You can guess where everything is off the back of that. Massive upside surprise on payrolls, 172, the estimate 88. Really, really nice two-month payroll revision as well. We're looking at 93,000. Push that through this bond market, bring up the Treasury board, 2s, 10s and 30s, yields up across the curve, 2s up by 5 basis points, approaching 4.1%, breaking back through 450 on 10s, up by 4 basis points this morning, call it 5. Push that into this, the equity market. Futures shaping up as follows, already pulling back. We're down by 0.6 now on the S&P, negative by 1.3 on the Nasdaq 100. There's a couple of different ways of looking at this if you're the Federal Reserve. That momentum, maybe, just on the margin, getting you to start to think more about a tighter labor market. But then you look to the other data points, unemployment and wages. Nothing too scary for this Federal Reserve based on that alone.
No, based on that alone, this is exactly in line. It's not that big of a surprise. However, if you don't think that 1 month of data really matters all that much, take a look at the 3-month average change. And what you see here is that it's the biggest at 188,000 going back to March of 2024. So the rolling average is increasing and would suggest a rejuvenation in the labor market that could potentially give them pause. If they are worried about a weakening labor market, well, maybe they shouldn't be, because nothing in the data seems to suggest that.
Mike, you've got a second look at things. What do you see?
Well, we saw strength in the services sectors that we have been seeing. The same number that comes up every time we see the number of people who are doing the health and social services jobs rise significantly. They were up by 35,000 during the month, in line with the average gain of about 38,000 that we have seen. Healthcare services, ambulatory healthcare services, the helping out of the elderly, up 26,000, while social assistance was up 12,000. Financial activities, the big loser, down 22,000 during the month and is down by 107,000 since the peak in May of 2025. So a job you want to avoid there. Employment in transportation and warehousing essentially unchanged. It's up by about 1,000, although down by 92,000 since the peak in February of 2025. Air transportation, of course, caught up in the war, etc., lost 9,000 jobs, and that is basically because Spirit Airlines went out of business. Little change over the month in other industries, including construction, manufacturing, wholesale trade. The number of manufacturing payroll rose by 7,000 compared to flat the month before. So not much change on the goods producing side, but services pulling everything up. I know that I was talking with Stephanie just before we went on, and she was worried that she was going to be too high. I don't think she has to worry about that now.
We'll get to her in just a second. Michael, thank you. Michael McKee breaking down a pretty fantastic jobs report, the headline level. If you're just tuning in, welcome to the program. 172. The payrolls number this morning, the estimate 88,000. That's above everything we've been talking about throughout this morning. The 2-month payroll revision, absolutely fantastic. The 3-month average, which is what Bramo was talking about, 188 is sky high too. So for the Federal Reserve, think about what they've been doing. We've had these so-called insurance cuts. We had 75 basis points of them just last year. And in the statement they put out, there was this so-called easing bias. And what that was really about was to signal to this market that we're having a pause in the easing cycle, not necessarily the end of the cutting cycle. And what the Federal Reserve is shifting to now, and Fed officials have really got on board with this, is they want to articulate a more balanced reaction function, that the possibility for a rate hike is equal to the potential for a rate cut. And based on these numbers, and based on the CPI report that everybody is anticipating next week, you'd be very, very surprised if that easing bias was still in there in 2 weeks' time.
Yeah, it's almost written out already by the markets. Matt Lazzetti over at Deutsche Bank thought of this in a really interesting way. He put out a note a couple of weeks ago saying those insurance cuts, maybe they took out too much insurance, and maybe they need to give back some of that insurance in the form of maybe 1 or 2 more rate hikes. And that might be where they ultimately migrate to in their communication.
Stephanie Roth of Wolf Research joins us now for more. Stephanie, good morning.
Good morning.
Don't seem to have a labour market problem. Is there an inflation problem they need to respond to?
I don't think they necessarily need to respond in a big way. I think, of course, we have to be watching it. But it doesn't seem like inflation is accelerating in a material way. Now, we have to, of course, keep an eye out on, does this labor market create inflationary pressures? And perhaps that is, the very early start of it. But before that becomes abundantly clear, inflation will probably likely start to cool a little bit. So it will probably all work out from a timing perspective such that the Fed can do nothing. We'll see a labor market that's quite strong, and they can kind of wait it out for a period of time. But of course, the data show that the labor market is continuing to hum along quite well, even though AI is still impacting some of those industries.
Well, let's stay on the potential price pressure coming from the labor market just for a moment. Lisa went straight to the 3-month average, which is pretty punchy at 188, particularly when people are telling us that the break-even rate is closer to 0. So my question would be, just looking at that, how are we able to push through that kind of job growth without generating the wage growth alongside it, given that people are telling us the break-even rate is closer to 0?
Well, so I actually don't think the break-even rate is closer to 0. Our estimate suggests it's closer to 65,000. You saw labor force growth, and this report was in the 80s. So it's possible that labor force growth is a bit stronger than people think in terms of what the steady state can actually be, which then allows payrolls to run higher than that. Now, of course, it's run even beyond that. Perhaps payrolls are overstating to some extent. Household surveys have been a little bit softer in recent months. So that's one reason why the unemployment rate has kind of been steady. I think the message from the labor market is your steady state break-even pace, so the pace that you can go without really generating inflation in a big way, is probably in the 70-ish thousand range, which is likely where the trend in payrolls is actually settling.
That makes sense and explains why we are seeing a 4.3% unemployment rate, why it's steady. It didn't go down, which some people would wonder just looking at these headline numbers. Are you seeing specific areas that do seem to be impacted by AI? And I'm looking at financial services in particular. Again, 22,000 job decline in the financial services industry, and you've seen it really decline in terms of the total headcount there over the past couple of months. Are there other areas that you're seeing as particularly notable for job losses within this?
So you're certainly seeing it in finance, you're seeing it in information, although there was 2,000 decline this month. It wasn't particularly strong or particularly large. One interesting dynamic that has changed in the past couple of months is that professional and business services has stopped shedding jobs. That was a big trend in much of last year and into early this year, but that seems to be sort of moving in other direction. So it seems that perhaps they've done the job shedding for now in that industry, and maybe that's going to be a little bit more steady. What we're likely to see is rolling periods of disruption in various industries from AI. So tech and finance have certainly felt the brunt of it. But the positive AI story would be by the time the next industries are starting to actually see disruption, those industries are already done with that. And you end up with a period of time where the disruption isn't all happening at once, in which case the labor market can continue sort of moving along.
And it's moving along this morning, 172,000 against an estimate of 88K, some really positive revisions and a very positive 3-month moving average. Mike McKee is back with us. Mike, you've got another look at this one. What do you see?
Well, there's something interesting here. John, you were just talking about what the level of unemployment and employment should be given the fact that the labor force is going down. Labor force did rise a little bit, rose by 83,000 in the month of May. That's after a negative 92,000 and negative 396,000 in the prior months. But basically, we're seeing very few people enter the labor force, so you don't need as many people getting jobs. And we see that in the breakdown of where the unemployment rate came in. Employment went up by 149,000 and unemployment went down by 66,000. Neither of those is huge numbers, although the employment numbers reverse a string of drops. And so the unemployment rate falls basically, or stays the same basically because there wasn't much movement on the household side. And the one last point that I'd make here is if you look at the goods side of the report, in almost every category, you see some declines in non-durable goods, in durable goods except for construction. You're seeing people lose jobs, and so it is really sort of a shift from where we had been before, and we're seeing the services side come up now.
Mike, thank you, buddy. Increase it. Appreciate it, as always. The 2-year at the moment up by 7 basis points this morning, the 2-year at about 4.12. I want to bring in Jeff Rosenberg of BlackRock into the conversation as well. Jeff, you look at these numbers and the numbers we're anticipating next week as well, Jeff. Are we set for a hawkish turn from this Federal Reserve?
Well, we are, and we have been for some time as the data has accelerated. You know, first we had the acceleration on the inflation side, and really more than the acceleration, it was just the lack of the deceleration on the inflation story. You know, this morning, and I think you guys have honed in on the key number, the 3-month average printing at 188, the combination of today's upside surprise plus the revisions, you're changing the narrative on the labor side. So the combination, the old story was a weaker labor market, an expectation of falling inflation, and we need these insurance cuts. And as you were highlighting Matt Lazzetti's point, you know, maybe they took out too much insurance. Well, that's kind of after the fact because the facts have changed. So the facts that are changing here is a stronger labor market, a fourth supply-side shock in the form of the war and its impact on oil inflation. And absolutely, we've changed the narrative that's already been in the price. It's going to continue, as you're seeing in the markets here today. And that hawkish turn, as you highlighted, you know, we're going to validate that, you know, with the change in the language in the June FOMC.
Jeff, forgive me, but shifting to neutral doesn't really feel hawkish. Moving to hike and then hike again feels hawkish. Are we going to get that kind of action from this Fed, and how high is the bar for that?
Well, the bar for June is high in that this Fed, wants to move slowly, typically tends to move slowly. And the issue that we're going to have from the Fed perspective is managing the dispersion within the committee. So you're not going to get that clear signal, but the direction of travel is clearly there. The question is, will the Fed get out ahead of where markets are pricing, or are markets going to try to push the Fed? So far, it's the latter. The markets are out ahead of the Fed. And really what we're seeing here, likely to see here, I should say, in the June FOMC is the Fed playing catch up.
Well, and Jeff, this is the key point that a lot of people are making, is that the Fed's behind and the market's kind of leading the charge, and they're looking at the data and they're saying that there is enough labor market tightness to foster inflation going forward, in addition to supply shocks and this existential spend on AI. Would you bet with the market, or would you bet that the Fed has too high of a bar to actually hike rates based on what the composition of the Fed is, and frankly, what the drivers of inflation really are?
Yeah, we're right on the precipice of pricing in a full hike for this year. So that probably feels about right, given where the data is relative to how lagged the Fed is, and not wanting to be in a hurry for many reasons to move towards a hike. And if they can just hang on to the inflation data, not aggressively reaccelerating upwards, and they're going to need a little bit of help there, and they're getting it from the oil price situation. I don't think they're going to be in a hurry to raise rates, and so pricing in more than that, unlikely. The other point here, and Jonathan usually say, the first reaction is not the last reaction. There are some kind of one-offs in this labor report that is probably overstating that headline. The market's going to react to the headline, but give it some time to look through. You got a government number in there that looks pretty outsized. You got a leisure and hospitality number that looks a little outsized. No doubt this is a strong report, but when the dust settles, it's really going to be about the gradual strengthening in the labor market, and can you see this kind of stabilization in inflation that keeps the Fed from having to move towards a more aggressive tightening phase? I think that's where we'll get to, but again, it depends on, particularly that path of inflation.
Hey, Jeff, appreciate it. As always, Jeff Rosenberg there of BlackRock. The first move is not always the right move. It's what we often say. This is the first move. Yields are up across the curve, particularly the front end. We're up by 8 basis points on twos, 412. See that move in fixed income, you expect the following move in equities, just a pullback on the S&P, on the NASDAQ, and the Russell this morning. And that's what you see off the back of a really punchy payrolls report.
To Jeff's point, though, when you take a look at some of the details, government jobs increased at the fastest pace going back to 2024 at 52,000. I guess that Elon Musk is distracted, so Doge is getting reversed. A real question here about the sustainability of that. Also, when you talk about leisure and hospitality, 70,000 jobs added. Yes, it is heading into the travel season, and I guess the wealth effect is in strong force because everyone is going to hotels and flying on planes and needs to get beefed out from that perspective. But again, are these sustainable numbers, or are they potentially padding things out a bit?
Final word, Stephanie. At least it's not healthcare anymore. Not just healthcare.
Yeah, at least it's more of the cyclical sector. And that's what we were expecting to see this year. Is the cyclical sectors were really held back last year by tariff-related uncertainty. Travel, ironically, was one of the big sectors because there's just so much economic uncertainty out there. That seems to be reversing. To Jeff's point, the data are probably stronger than the actual trend pace. There's seasonals that tend to happen this time of year. You tend to see that in leisure and hospitality. You tend to see that in local government. And these are the areas where you saw some of the biggest gains. So I wouldn't take this number at face value and extrapolate that into the future and how far that's going to bring down the unemployment rate. But I think the message here is that the labor market is holding up fairly well. The AI story is probably not one that's going to be an issue for a lot longer than people had anticipated. And at this point, the labor market's not generating inflation. So far, the Fed can just wait it out and see kind of the path of the data in future months. The inflation data is not, on their side, but for now, the Fed can certainly be in wait-and-see mode.
Stephanie, thank you. Stephanie Roth there of Wolfe Research. Big headline just crossed on a Bloomberg terminal. Now fully pricing a quarter-point hike by year-end.
Yeah, markets are looking at this and they're running away with it. The leisure and hospitality issue, I just want to point out, this is one of the reasons why it's important to listen to some of the airline CEOs that have been saying that demand is just sky high and they're continuing to see it and people absorbing price increases much more than they had expected. You're seeing that in the hiring rates too, because if bookings are increasing, well, they got to beef up their staff to meet it. gives you a sense of what's building in this economy.
Was that analysis or a promo for this weekend?
It was a promo for this weekend.
Do you want to do the promo for this weekend?
I'm going to Brazil to talk with airline
Sounds
executives.
awful. Sounds awful. Goes to Rio to talk about airlines.
Well, hold on a second. Okay. I'm going for a couple days over the weekend to talk to the airline CEOs. The reason why I find them interesting, though, is because they're the best real-time economists of what travelers are doing. I think that's really interesting.
Is this what you told management when you pitched this trip to Rio?
You think I'm just going to be on the beach?
Who are you speaking to this weekend?
I'm speaking with the Delta president. I'm speaking with the CEO of United, Scott Kirby. I'm speaking to the COO of Southwest on surveillance on Monday. Don't miss that.
Okay.
As well as JetBlue's Joanna Garrity. So it'll be interesting to hear about the different tiers of airlines. I think that that's enough.
I'm pleased they've justified your trip. Bravo,
you
off
think
to
this
Brazil.
is a junket? I actually think
feels on the margin.
Really
does it feel like a junket?
It does not feel like a junket.
Sounds like a junket.
No judgment here.
Looks like a junket.
You think so? Over my weekend.
Might be a junket.
All right, really.
Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. Just to recap the jobs report, non-farm payrolls blew past expectations for May. 172,000 jobs added versus estimates of 88,000. This marks the third consecutive month of gains, with the unemployment rate holding steady at 4.3%. The Trump administration is exploring whether the government should take ownership stakes in leading AI companies like OpenAI. Senior U.S. officials reportedly held talks with the major companies about potentially transferring shares to the government voluntarily. And President Trump will be the first sitting U.S. president to attend an NBA Finals game. Trump confirming yesterday he'll attend Game 3 of the Knicks-Spurs series at Madison Square Garden Monday night. New York City Mayor Zohran Mamdani is also planning to attend. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate the update. Up next on the program, we'll set you up for the day and the week ahead. Plus, Yahara's going to come back and break down some morning movers from New York City. You're watching Bloomberg TV.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So its developedness gives you both that upside and the downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Stronger than expected. 172,000 on payrolls. The estimate was 88. Yields up at the front end of the curve, bringing equities down just a bit. S&P 500 futures negative by 0.2%. 1.6%. Let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. We are seeing the chip trade falter this morning, still feeling the effects after Broadcom disappointed. So you're seeing names like NVIDIA, Intel, and Micron all lower. And Micron is notable since it just scored a major win after NVIDIA CEO Jensen Huang said it was one of the companies approved to supply its advanced memory chips for the new Rubin AI system, and yet losses are mounting on that name, now down 4.5% in the pre-market. Also in the red is Lululemon. Shares are plunging 12.25% in the pre-market after the athletic wear maker cut its full-year outlook, pointing to worsening trends in North America, and management saying that over the past few weeks, it's seen traffic slow, and that's due to controversy around some of its leggings being see-through. And we end on DocuSign. Those shares are also in the red, down nearly 5% in the pre-market. It gave an outlook that was largely in line with expectations, but not enough as these software stocks try to stage a comeback after their AI-fueled sell-off. John?
Yahara, thank you. Thank you for this morning. Appreciate it. Have a nice weekend. Promo time, a new addition to the lineup here at Bloomberg TV. Looking forward to this later this afternoon. Bloomberg Money kicking off this afternoon with Scarlett Fu and TK, two at the very best here at Bloomberg. Scarlett, good morning. It's good to see you.
Good morning. Nice to see you guys.
What's coming up later this afternoon?
So we're going to talk with Lizanne Saunders of Charles Schwab and Gabriela Santos of JP Morgan Asset Management. And basically what we're doing is taking the daily news flow and folding it into the larger trends and exploring what it means for your personal savings and your retirement. And in the case of today's jobs report, great, people have jobs, or we're growing jobs, but wages are not keeping pace with inflation. And we're going to see that with the CPI report next week. So the challenge is around building your portfolio and building out your retirement around that. In addition, we're going to talk about SpaceX, because a lot of employees will come into a lot of wealth very, very quickly. Will they use AI bots to manage their wealth, or will they band together and demand lower fees from human advisors? That's what we're seeing already.
Yeah, that's going to be something fascinating, this idea of, are we all just going to go to bots? I mean, is that something that you keep hearing about, the way that AI is transforming asset management?
It is, and certainly it's democratizing wealth management as an industry to make it more accessible to everyone. But at the high end, people are always going to want that high-touch experience and that high-touch service. People want to talk to people, and wealth advisors in many ways are kind of like therapists.
That's true. They are.
They need
hand-holding, stay invested.
Yeah, exactly. Walk you through, it's okay, don't worry, you don't need to panic.
Bedtime stories to help you sleep well at night. I know.
All I'm thinking is people like to talk to people. It depends which people. It depends who you're talking about. I'm just thinking that
if you're doing your job well, then your clients want to talk to you. How about that?
Some surveillance advice. Hide the tank later on this afternoon. Just hide the tank.
Hide the tank.
Hide the tank.
Okay. Yeah.
The tank.
You'll figure it out pretty quick.
Whoa, okay. This is very inside baseball, but I appreciate this.
Hide the tank. Scarlett Fu, thank you. Appreciate it. Bloomberg Money coming up a little bit later, 12 p.m. Eastern Time, alongside TK. Do not miss that on Bloomberg TV. Coming up on Monday, Cameron Dawson of New Edge Wealth, Chris Harvey of CIBC, the former U.S. Defense Secretary Mark Esper, Abby Yoder of JP Morgan, following a punchy payrolls report here stateside from New York City this morning. Good morning. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it. Wow. Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
All right, it's Jobs Day. 30 minutes till the start of trading after a blowout number. I'm Matt Miller. Danny Berger is off today. Bloomberg Open Interest starts right now. Coming up, the U.S. added 172,000 jobs in May, crushing estimates and boosting Fed hike bets. Bond yields surge while stocks fall as investors pull back from the AI trade. And SpaceX mania is building, even after a setback to its S&P 500 ambitions. The stocks that we're watching this morning, well, these big, heavy tech companies are falling. NVIDIA down almost 2%. Micron down 5%. SanDisk down 3% in the pre-market. They've had a pretty good run, to be fair, but this threatens the 10th straight week of gains for the S&P 500. We could break the streak today. Investors are selling as traders gear up for the biggest IPO in history next week. Maybe they need to free up some cash for that. Back to our top story, though. The U.S. added 172,000 jobs in May, double the expectations. Let's get details from Bloomberg's international economics and policy correspondent Michael McKee. He's at the desk over here. So, Mike, blowout number. Where did the additions come from?
Blowout number for the month of May, but also a blowout number for April, revised up significantly to 179,000. So over the last 3 months, the moving average is 188,000. That is strong by any measure, especially at a time when people think the break-even rate is about 50,000. We also saw the unemployment rate tick down a little bit, not enough to round down to 4.2%, but it is a little bit lower as we saw a little more hiring than we saw in terms of unemployment. The labor force, though, after several months of being down, contracting with the president's plan to get rid of a lot of immigration, did rise, but only by 83,000. Now, here's an interesting number. Average hourly earnings up 3.4%. That's down from 3.6% the month before. The Fed has been talking about how average hourly earnings and basically people's take-home pay is not inflationary, and this would help stand that up. But you have to figure that this is going to be something the Fed is concerned about, this level of job creation. Biggest changes were in accommodations and food services, 58,000, and local government, 55,000, healthcare and social assistance, 47,000. That's the category that usually rises. Retail down by a little over 1,000, and that may be an indication that consumers are slowing down. But where you didn't want to work, finance, down 22,000 jobs. So let's take a look at the overall reaction that matters to everybody on Wall Street, and that's our WIRP function. Traders have now priced in, by the end of this year, one full rate hike. A month or two ago, I would have been saying a rate cut, and now we're looking at rate hikes. So good luck, Chairman Warsh. You know how to get a hold of me if you have something you want to say about this.
So, all right, Neil Dutta just published a note. Back to boomflation is the subject header. What does this mean? You say there's no wage price spiral to worry about, but what does it mean for the economy? That number, I note, is not keeping up with the PCE, right? 3.4% is the wage increase, but PCE was 3.8.
Yeah, it's not keeping up with CPI either, which we get next week, and that'll get a lot of attention in terms of whether or not people think we're going to have a rate hike and when it will be. Basically, what we're seeing is that the war and tariffs are pushing up costs, and that's really feeding into inflation. But it's not labor at this point. If people have to keep paying the gas prices that they're paying now, they may start asking for raises, and then that's something that the Fed would get even more concerned about. But it is going to be interesting to see because, of course, the guidance last time, and that led to those dissents, was that we still might be cutting rates, and that obviously has gone out the window this morning.
Oh, I have a follow-on curveball here. Just got a note from a trader to watch the yen, which is smart, right? We're back above 160, and there was a story in the Bloomberg yesterday about how much intervention has cost the BOJ and that they need to sell treasuries in order to fund that. That can't be good for rates either.
Well, that's probably not going to be good for rates. I think it's going to be a minor contributor for the time being. The Japanese can only do so much, and they know that. They tend to do a cycle of interventions and then back off. And at this point, given the fact that the U.S. is now going to be priced into raising rates, you're going to see the dollar get stronger. And it just as a conundrum for the rest of the world right now, what do you do? We'll have to see how the Japanese figure that out.
Yeah, I'm looking at the dollar strength here and DXY, and of course, Bloomberg DXY is a better index to track for that. BBDXY up 0.1%. Mike, thanks so much for joining us. Bloomberg's international economics and policy correspondent Michael McKee. You're going to be seeing a lot more of him on a day like this. Let's talk stocks, though. S&P Dow Jones says it will keep its existing rules for index inclusion, denying SpaceX and other mega IPOs a fast track into the S&P 500, the world's most important, I think it's fair to say, index. Bloomberg's Bailey Lipschultz covers IPOs for us and joins us. Bailey, this after, of course, you saw the NASDAQ change its rules, no more seasoning necessary, or, and they never really had any profit rules, but you've seen other rule changes at FTSE Russell, at the NYSE 100. Is the S&P able to push back because they're not looking to attract any business?
I think that's part of it. To your point, NASDAQ operates an exchange. If your option is to have Elon Musk list SpaceX on your exchange or your rival, you probably want to do anything you can in your power to make sure that he chooses for your exchange. The other thing I think is we saw this and talked about it ad nauseum back when MicroStrategy was able to be added to the NASDAQ 100. Would the S&P 500 review its rules? The thing that stands out to me is not just the 6-month seasoning period, Matt. The biggest piece of this update is strictly the fact that you need to be GAAP net income positive for a year before you can be added. That adds a bit of a curveball, not just for SpaceX, but I want to talk about Anthropic and OpenAI. Those are two companies that people don't expect to generate net income positivity for quite some time.
Are these IPOs, and by the way, I guess you could look back and see what happened during Saudi Aramco or during Facebook. Do they cause fund managers to sell industry-adjacent holdings in order to free up cash to use for a SpaceX, for an Anthropic, for an OpenAI?
It depends how you manage your book. If you're a tech investor, yes. If you are benchmarked to, say, SpaceX gets added to the GICS component and is now a communications company, well, that impacts Charter. If it's added to defense, that impacts L3 Harris. I think the big thing is, again, where is the money coming from? It depends who you are and what kind of money you manage. If you are strictly a generalist and you're able to use SpaceX similar to what you did with Tesla a few years ago as a way to generate alpha to outperform the S&P 500, you can really be taking that from cash on the sidelines, or you could, to your point, be selling down Mag 7. We have been seeing a lot of weakness in Bitcoin. That's something that people have been pointing to as well.
By the way, my producer, Will Shaker, pointed out I don't know if it was Morgan Stanley, Will, $1 trillion revenue forecast for SpaceX in 2040. I saw the story that we had. Evercore ISI expects something like $755 billion in revenue in 5 years from the AI component alone.
And Matt, my favorite part of the story that we broke last night that no one cared about apparently on Evercore is not just the fact that they're penciling in $1 trillion in revenue in 2031. They are penciling alongside Goldman Sachs CapEx $360 billion in 2030. Evercore ISI analysts over on their research team see $732 billion in CapEx in 2031. That is the GDP, greater than the GDP of Israel. In 1 year, you are potentially going to be spending $732 billion. Where does that come from?
Yeah, I mean, we just showed, by the way, I think the Morgan Stanley forecast is actually for $3.4 trillion by
2040
of revenue in 2040, which is like not that far off. No. My daughter will be 16 in 2040. Bloomberg's Bailey Lipschultz covers IPOs for us, so you're going to see a lot of him over the next week as well. Remember, just one more week until this stock starts to trade. Turning to retail, though, Lululemon shares are sinking after the company cut its outlook due to deteriorating performance in North America. Here to break down the results is Bloomberg Intelligence senior retail analyst Poonam Goyal. And Poonam, this company just can't get a break. What's the problem? Is it the see-through tights?
It is everything in North America. It's really product. Product is their bigger problem. They don't have the innovation. They don't have the speed that they need to get product to customer. And that's really what's been hurting them. The problem is that things aren't getting better. They're only getting worse. Even though sales had increased 4% overall in the quarter, North America, specifically US, was down 4%. And they revised the full year guide to be now flat to down. And that's just, it was unexpected. It was up before. And I think the issue is that they just don't have the expertise to bring in the product right now. And as we await for Heidi to come in September, that's still a long way. And by the time she puts in her efforts, we're looking at 2027, 2028. So things could get worse from here.
They've just recently decided to bring Chip Wilson back, or at least to collaborate with him in some ways. He was, to be fair, the visionary that made this business what it is. Can he change things?
I think he could have his input. Remember, the biggest problem here isn't that customers don't love Lululemon. It isn't that the brand equity is gone. It is that the product lineup is not what it should be, especially on the women's side. So I think his contribution could help, but it takes time to evolve product. It doesn't happen overnight. So we're still looking, even when he starts to add his input and when Heidi comes in, it's still a year away at the minimum.
All right, Poonam, great to get your take. We'll be watching your research on BI. Poonam Goyal, Bloomberg Intelligence, covers the retailers for us. Check on what's going on in markets today, because we are seeing a sell-off, and it's particularly pointed in tech. S&P futures down 0.7% after 2 consecutive days of losses. We see NASDAQ futures down as well, 1.4%. Actually, let me amend that. Yesterday, we were down at this time, but by the time Romaine and Katie got on air, we were up. So the S&P 500 closed up 0.4% at 7584, but is down today in the futures. The futures on the NASDAQ down 1.4%. You see Treasury yields rising here, 6 basis points to 453.43, and you can see Brent crude holding it around $94 a barrel. Let's get a look at some of the single stock stories that we're following for you this hour. Shares of Oklo, the nuclear company, rising after the U.S. said a small nuclear reactor made by Antares achieved criticality, which means a chain reaction became self-sustaining enough to produce a steady release of energy. That's good news for these small reactor makers. DocuSign earnings beat estimates, but the revenue beat was smaller than its typical results. That stock down 5% in the pre-market, and Chipotle rising after JP Morgan upgraded it to an overweight, citing a rare valuation opportunity for the burrito maker. You can see Chipotle stocks up 2% in the pre-market, and it's a down market. Coming up, BlackRock's Rick Reeder joins me to talk the markets and the economy. And later this hour, we're going to hear from White House Economic Director Kevin Hassett after this blowout jobs number. This is Bloomberg Open Interest.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
All right, let's take a look at what's going on in the markets ahead of the opening bell. You can see these big red arrows, and we could be in store for the first down week in 10. We had 9 consecutive weeks of gains on stocks, so it's not that bad, right, if we go lower. And part of the reason could be that we're selling off certain stocks to make room for massive IPOs coming our way. You can see NASDAQ futures down more than S&P futures by about double, so 1.4%. We see yields creeping higher, and Brent right now holding at $94.22. After a blowout jobs number, let's bring in BlackRock Chief Investment Officer of Global Fixed Income, Rick Reeder. Rick, great to have you on Friday Jobs Day, and especially on one with such good news for the labor market and for the U.S. economy. What do you make of the non-farm payrolls?
So, Matt, I mean, it's a solid number, and I think one thing I always find it interesting when you get the top line, but then it's like markets, like all the money is when you get underneath the surface. It's a fascinating report in a couple of different regards. When you actually look at it, so, we know healthcare, we talked on the show all the time. Healthcare good again, check. Local government was a big number this month, so it was about, 50,000 jobs, local government. So what do you do with that? Interesting, that tends to move around, obviously. But then when you get underneath the surface, I find it fascinating, a couple of things. Construction was strong. Why is that? And you dig into construction and you look at it, non-residential construction is strong, meaning AI, build out, which we know is coming, which we know is happening, and will continue to come. And then you look at underneath, and you look at real estate softer, and then you look at residential softer. And then a thing I also thought was fascinating, I think you mentioned the finance jobs softer. Then you dig into finance, what's happening? Insurance was pretty soft, which is a trend you've been seeing. Why is that? It's AI sensitive. These are the areas and services where you're going to start to see the softness. You're going to start to see AI start to press on the areas where you can create some real efficiencies, real productivity. So net solid number. Things like food and drinking, I don't know what was happening that created that sort of hiring. That was solid. You got to factor that in your equation. So anyway, point being, I think you got to factor, you got an economy that's doing quite well. You've got an AI, you've got a big cylinder of AI that you see show up in construction, and you see that what companies are doing that are starting to implement. And I think you got to think about the Fed's reaction function. The data so far is solid, and you got to build that into your positioning.
I mean, I don't know about what people were doing with food and drink. I guess it's some celebration with indexes at all-time highs. I'm always tracking G-Body 911s. Even the 997s are at prices that I just can't believe. There's a lot of cash out there, Rick. I look at credit, right? The ag at 30-year tights right now. Where is all this cash coming from?
Matt, you brought up, there are a couple of very relevant statistics today. I mean, the money market fund number is extremely high. And by the way, I stare at it. It's one of the numbers I stare at every week. And the inflows in the money market funds just keeps coming. By the way, you got a strong economy that is supporting that. So you got money market inflows Bank deposits, very solid. The other thing that you see that happens, we track in the market, why is all the supply well subscribed in fixed income? You see the pension demand, the life insurance demand, you're at yields. If you're matching a liability, you've got yields that are pretty attractive, even though spreads aren't that interesting. So you've got two big pockets of demand, particularly for fixed income. And then for equities, I've said it before, even though you're getting an IPO calendar, so a little bit of digestion, you have so much in the way of buyback that the net supply of equities is just not that large. So, not to say you can't pull back on numbers like this or war-related issues, but the technicals underlying the equity market are pretty solid as well.
When you come on, Rick, my IB just lights up. Viewers writing in with about 1,000 questions here, so get ready. What's your view on all the investment-grade data center issuance? Is it overweight because that's the future, right? Because that's the dream and it's going to come true, or you be more cautious because you see so many more deals?
It's a great question. So, one, I think you got to build that into your duration, your interest rate exposure that you take into portfolios today. Meaning, you got to supply. We talk about there's a lot of Treasury supply that comes. There's a lot of financing that's coming to support this data center bill that just showed up in the employment report today. So I think you got to think about how much interest rate exposure I have today when you're pushing a lot of supply in the market. Maybe I run a little bit less rate exposure, which I think makes a ton of sense. And then, listen, I think it's mixed. I mean, some of the, quite frankly, some of the supply in investment grade is okay. There's, because people don't have a lot, you get some demand for that. But, some of the, some that comes in convert form, very interesting if you get equity upside alongside of it and a coupon. That I think is super interesting. And then, quite frankly, some of the quasi-private, some of the more off-the-run data center finance, that I find more interesting than just the regular way auctioned investment-grade debt.
Let me also ask about, I had a trader write in, Anthony Santos Stefano, about the Japanese yen when we got this jobs number across, because it gives strength, right, to the dollar. That makes the yen weaker. Right now we're at 160.07, and they've already blown through like $75 billion in foreign exchange reserves. If they go in to defend this here, they're going to have to sell more treasuries, right? What does that do to yields?
So, I would say a couple of things to that end. When we look at U.S. rates, I think the thing you got to respect today, you got the Bank of Japan that's raising rates, the ECB, the RBA, the Bank of Canada. So you're in a cycle today, and you've got a fiscal dynamic that I think you have to respect if you're the U.S. rates market. So that's one part of it. Listen, the yen, we spent a bunch of time looking at it, and, how much risk do you take in JGBs, and how do you hedge it? Listen, I think one of the things, we need, Bank of Japan's been a bit deliberate on moving rate like they need to in terms of getting that rate up. And so obviously the derivative impact, you see that play out in the currency. So listen, we follow it obviously closely with positions in it, and we look, we watch it pretty carefully. And I think, listen, there's one thing that is beneficial, and one of the ways I think Japan is very interesting is on the equity side. Like, I think, you see that sort of price action in yen, and you think about the beneficiary thereof. Listen, I like Japanese equities. Rates particularly front-end rates is a pretty tough trade.
What are you doing in BINC right now, Rick? You've been outperforming the market in your ETF. Yeah. What moves are you making that you can share with maybe your competitors who are watching?
Thanks for that. I'd say a couple things. Listen, I think, we've moved our interest rate exposure sympathetic to get a strong economy. We reduced a decent amount of interest rate exposure. Some of the negatively convex, the rates, agency mortgages, which, is a good asset class. We like it. Today, maybe we want to be, and, we have been a bit more cautious about that space. I like Europe in a relative basis. Europe's already priced in the hikes. We get debate, do they have a lot more to do? I think European fixed income is quite interesting because you've already priced in the hikes. And so that, we like that quite a bit. And then EM, obviously you got to manage the currency and think through it. But actually, I would say we've been pretty neutral on EM, but, we have, higher exposure in EM than we've had historically, albeit that's not a huge position for us. But big moves, watch your negative convexity and interest rates. Europe's got it more priced in than the U.S., and that's we think the ballast and the carry that comes from Europe fits a portfolio nicely.
Does the war make any difference to your investment strategy? I mean, if we just sit in a ceasefire where we shoot at each other for, months and oil holds around 100, does that matter?
Yeah, I mean, what really matters for the markets today, is obviously what the forwards are going to be in oil. So you think about what are your inflation break-evens and how do you, so, we watch the forwards pretty carefully in terms of where that goes. So, yes, that's important. If you stay in a range, markets, to your point that you made earlier, there's so much cash in the market. As long as you believe that it's in this stasis, even if it is, similar to the Ukrainian situation, then markets generally okay. It's the shocked that it's going to move one way or another in a significant fashion that obviously you've got to be sympathetic to on portfolio. I will say we've built a lot of, what's happened recently is volatility's come down in the equity market pretty markedly, not so much single name, but in index. And so now you can start to use volatility to protect your left tail, to protect the downside in the equity market. So, we've done some of that, particularly when you have, the news around it is we're not really going anywhere.
I'm looking at the forward curve on Brent. Anyone can do this on the Bloomberg terminal, by the way. Just type CT for the contract table on a commodity, and I see we don't get below 80 until 27. What about SpaceX? What about, an IPO that sucks that much liquidity out of the market, especially if you have 3 of them in a row? Does it matter to fixed income?
It definitely matters to equities. I was thinking our equity portfolio, whenever you're, we think about, a name like this and it's a name we've been involved with and others are involved with. And so, you got to think about it within the portfolio and think about, how much, what else do you own and how do you manage that? Or when you think about new issue that comes like this. So it obviously matters to supply and demand in the equity market. In the rates market, the fixed income market, I think there's one thing that does matter. Equities have taken you to such an elevated position if you're a pension, a foundation, endowment, and then now you get to a place where you're fully funded in some places. And when rates back up, your real rates, now we're at levels that are pretty darn attractive if you're defeasing a long-dated liability stream. So, I think what a lot of people are thinking about, like, boy, this has been a pretty positive, pretty powerful period for equities, including some names within the portfolio, or names that are doing well. Fixed income, when you keep elevating these rates and you think about your real rate and gosh, with even if inflation's running a bit elevated, if you can build portfolios, some of what we do in bank, if you can create 6.5, 6.75 yield, boy, it's pretty attractive.
It is, and that's why people buy it. Rick Reeder, you're going to stick with us through the opening bell. Check on markets as we head there. We're looking at futures that are selling off to the tune of 0.7% on S&P futures, down 1.5% on the NASDAQ. After Rick, we're going to talk with Kevin Hassett. Stay with us for that.
cidade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
All right, we are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. It is an exciting day. I'm positively pumped, not because of the futures picture. We are down, and we could end this week in the negative, which would break our streak of consecutive wins, the first down week in 10 for equities. But I'm pumped because the jobs number was so strong. It came in double what we were anticipating. 172,000 jobs added in this economy, and last month's figure was revised up. We're going to talk more with Rick Reeder about that from BlackRock in just a second. We're going to talk with Kevin Hassett from the White House after that. So keep your questions coming. I'll throw them at these guys. Let's take a look at the AstraZeneca ringing the opening bell at the New York Stock Exchange. They're up 78% over the last 5 years. They're in a good mood. Lynn Martin right up there with them, as usual, which is such a cool thing that you get if you go down to the NYSE. Liftoff Mobile ringing the opening bell at the NASDAQ to celebrate their IPO. We talked to the CEO yesterday, and they basically monetize your apps, is what he said. So kind of marketing on social media. Take a look at the reasons that we're down. The big, heavy tech stocks that have gained so much, so fast lately. For example, Micron over the last 12 months is up 1,000%, are selling off today. Micron and SanDisk to the tune of 5%. NVIDIA, a $5 trillion company, off 2.5%. So that's obviously going to drag down the index, especially the ones that they're weighted heavily on, the S&P and the NASDAQ. So that threatens the 10th straight week of gains for the S&P 500. But investors look like they're selling to gear up for the biggest IPO in history next week. SpaceX is going to raise $75 billion at a $1.8 trillion valuation. Then you've got OpenAI. Then you've got Anthropic. And if you look at the projections for a company like SpaceX, they say a total addressable market of $28 trillion because of AI. They say, well, Evercore ISI says $800 billion in AI sales in 2030. Morgan Stanley says $3.4 trillion in total revenue in 2040. These are massive, mind-bending numbers. Let's bring back in BlackRock Chief Investment Officer of Global Fixed Income, Rick Reeder. Rick, what do you think about these projections? I mean, it seems like AI isn't just bullish the economy, but changes the trajectory at which we operate, if they're true.
I mean, listen. I mean, I went through the data and I talked about a presentation I gave where I looked at, if you take AI related the last 3 years, it's just about 28% of the growth of an economy that's a well over $30 trillion economy. You think about how big that. I mean, how can that be? And by the way, about 70% of the return of the S&P. And then you think about every part of the economic ecosystem today. You think about how AI, the spend and the CapEx. And then, per the number today, you look at the companies that are starting to adopt it and how it impacts everything. And we talked about insurance. We talked about the impact that's having on some of these services, software, et cetera. Boy, it's become, the thing I would suggest, though, you have an economy that's operating on that cylinder, and the rest of the economy is just okay. I always talk about small business, not great. Young people, lower income, not great. But boy, that part of the ecosystem is humming. The numbers are mind-blowing. I mean, every day, including weekends, we get calls on financing that's got to come to the market. It has become pretty impressive.
Well, and we see, I mean, you were talking about construction jobs, Rick. It doesn't seem as concentrated as the naysayers are worried about. Like, we look at companies that do HVAC, that make boilers, and they're rallying hard. You know, Ford Motor Company has become an AI play because it makes big batteries that data centers can use. Caterpillar, Deere, all of these old economy. I mean, yesterday we saw the Dow up, the Dow Jones Industrial Average up 900 points. What do you think of this rotation?
So I think there's a lot that makes sense in what you said. So you think about, there was the first level, you think about semis, you think about the direct beneficiaries, and then you look at things like electrical equipment, you mentioned cooling, like the infrastructure build. Like, I think the thing that makes sense was people are starting to count, and you're seeing the numbers of these companies that are reporting, the companies that are tangential to AI, or maybe not anymore, maybe their business actually, and some of them, has become directly top-line revenue related to AI. Like, that's where, quite frankly, the multiples are not as egregious today, and obviously power, and that there is the demand function for those products. And by the way, related to space, you look at the components there as well. Like, those companies become pretty interesting today as people start to think about, okay, I need to diversify a little bit. I've got concentrated risk in some of the parts of my equity portfolio. Yeah, I think it's real. But again, it gets to the point of, like, you got one big cylinder that's driving so much of the economy today.
It is driving so much, though, and I think that's the point. I mean, are there areas that AI is going to miss, Rick? Are there industries that you're worried are left behind? Do you worry about AI eating jobs in some places?
Matt, you know, I think, people talk about the K-shaped economy, and I actually think that visual is not that great because it suggests that the lines are equivalent on both sides. I actually think that the economy today is more like a 3-month-old birthday cake. The icing's great, but then you look underneath, which is the bulk of it, and it's actually not doing so well. I mean, the thing that is tricky today is I think you're going to displace a lot of workers. And I think, part of what the Fed's job and otherwise is be a bit anticipatory of where we're going and how it affects the broad population at large. And I think, obviously we and every company uses AI aggressively. And you think about, including this morning, I was going through with a member of the team, gosh, I could do this now, I could do that now, I don't need to go to, it is going to change the ecosystem. And you're seeing productivity that's heretofore kicked in. By the way, robotics, automation, all powered by that same ecosystem that, listen, I think where we're going, and by the way, when you think about the economy today, you've also got a big fiscal tailwind. When you think about where we're going the next few months, I think you'll have somewhat different disposition around that. So anyway, point I would make, if you're the Fed, I think you got to pull back. Maybe you're on hold. Like you say, I position for what could be a Fed that's more hawkish. But gosh, I think you got to think about where are we today, what's being impacted in the economy, the people in the economy, and then and give it a bit of time to evaluate the condition.
But are you saying? I mean, it looks like we're adding so many jobs, and inflation is still way too high. You don't want to be cutting, right? You kind of, if anything, you have to raise into this, don't you?
So my personal view is when you look at the broad construct and you look at what the interest rate tool really impacts, is it affecting the AI spend? Is it affecting the infrastructure? Is it really influencing? Does you move the discount rate? Does it really influence the hyperscaler demand? Really not. It influences housing, where you're seeing that. It influences, obviously, small business, where you're seeing it. You look at credit card charge-offs. Anyway, so what do you do with that? I think you got to take the whole equation and say, my personal view is, well, obviously, inflation is above target. Obviously, growth, fiscal tailwind is solid. I think you just got to give it a little bit of time. No, you wouldn't cut, obviously, into this. Do you need to hike into it? And by the way, you look at Europe. Europe's going to hike into a supply shock. You look at the data in Europe around consumer confidence, ZEW, like you're seeing a tangible slowdown. I just think if you're a central bank, you got to be a bit anticipatory of, I heard somebody say the other day, what happens with commodities, price adjusts commodities and demand adjusts in terms of what happens. And I think you just got to be a bit thoughtful and look at the whole picture when you make that decision. And, quite frankly, I think going forward, I think Chair Warsh, be very thoughtful about, do you have to keep moving the funds rate around to tweak small moves, particularly when it's supply shock driven? My perception would be, my perspective would be, look at the whole construct. You don't have to constantly adjust, and be thoughtful about where the puck is going.
Hey, we've been talking a lot on this program over the last week, Rick, and over the last several months about pulling money out of private credit, and now it seems to have spread to private equity, and then redemption gates coming down. We talked about Cliffwater, right, 17% withdrawal requests. You had Partners Group seeing that creep over into private equity. Yesterday you had Blackstone talking about redemptions and gates as well. It seems to be the only crack here that I see in financial markets. Is that a concern?
No, not. I mean, not. So, is it a concern idiosyncratically? Yes, in some parts. We've talked a lot about software, et cetera. Is it a systemic shock? No. I mean, I've gone through, where you have. First of all, it's term financed, versus you go back to the financial crisis that was largely overnight funded. So no, it's not. It's not systemic, and the sheer size of it is not that large. What, quite frankly, it has done for portfolios and how we think about investing, the needle has moved around opportunities. If you go back the last 2 years, there was so much money floating around that privates were trading at very rich levels in credit. And now the opportunity set is much more robust. I mean, now you've created normalcy, which I think is awesome. Like now, all of a sudden, you have, the dynamic of if you've got an illiquid asset, you should get compensated for that. And now you're starting to see that into the equation. So no, I'm not worried about the systemic at all. In some names where you have debt that needs to be rolled, you got to be, obviously, you got to watch it, but definitely not from a systemic crack in the system. I'm not worried about it.
So I'm going to talk to Kevin Hassett on the other side of this break, Rick. What would you ask him right now? I mean, you mentioned the cake-shaped economy. What questions do you put to Kevin?
Yeah, I mean, I think he's been very thoughtful. I just saw a headline about, listen, I think you have to, think about the broad picture and give the system some time and think about what the interest rate tool does versus liquidity versus balance sheet. Listen, I think that's really important, is think about, how do you think about, there's a lot of treasury issuance that's got to come to the market. You got to make sure that the back end of the yield curve is contained. How would you think about that? How would the Fed think about that? To me, I mean, financial velocity today, it's not really created by the overnight funds rate. It's out the yield curve. It's where we finance commercial real estate, residential, corporate. Like, that's a really big deal. And, hearing, how does the administration think about it? How will the Fed think about that? He's very thoughtful on these things.
The new chair, Kevin Warsh, in 2024 said, central bankers around the world seem to be more comfortable with inflation closer to 3% than I wish were the case. That's very dangerous stuff. We can have an economic boom in that scenario, but there will be a high price to pay. Do you think this central bank is comfortable with inflation where it is?
And so I think there's something that's important, the momentum of inflation and what is driving it. So if you look at the rate-sensitive parts of the economy today, and we break down inflation, you say, what's rate-sensitive? Obviously, shelter is rate-sensitive. We need to build more houses in this country. Obviously, you take things like used cars. What's interest rate insensitive? Things like healthcare, education, insurance. Those are sticky high. But the interest rate tool doesn't really do a lot with it. It gets to this point about the headline versus what actually is happening. And I think you just got to factor in, if you're a central bank, if you have a supply shock where that should abate over time, and if your tool isn't really effective for some of it, then I just think you have to think about what is your tool doing, and maybe the monetary base should be adjusted, maybe the balance sheet. But I think you have to have a broader discussion around it. Listen, today I think the central bank's inflation is above target. You got to wait. Maybe the ECB hikes a bit. But I just think the simplistic top line answer for these, which are complex subjects, I think is a bit superficial at times.
Rick, great having you on. Really appreciate it. BlackRock Chief Investment Officer for Global Fixed Income. And I am looking at things like used cars. If you have a 997.1 slick top with 3 pedals, please reach out. Coming up, White House Economic Director Kevin Hassett joins the show following the blowout jobs print. This is Bloomberg Open Interest.
my old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Welcome to our global TV and radio audiences. I'm Matt Miller. In May, the U.S. economy added 172,000 jobs, far exceeding all estimates. Let's bring in White House National Economic Council Director Kevin Hassett. And, I mean, frankly, congratulations are in order. Kevin, this is an unambiguously good jobs number, an upward revision in the last month. Does it foreshadow the risk of broadening inflation?
No, absolutely not. And in fact, it's something it's a great question, Matt. The bottom line is that what's going on is because the president has recruited from companies around the world $18 trillion of new investment. And we're seeing, if you looked at the advanced durables numbers, equipment investment through the roof, up 3%, in March, one of the biggest months we've ever seen, that people are building factories, creating jobs, creating the golden age, the boom that is a logical supply side response to the big beautiful bill, the no tax on tips, the no tax on overtime, and the rest. And so we're seeing the benefit of that. And you might recall that when we were talking about this a year ago, there were a lot of naysayers who said, well, we can't possibly even have positive jobs numbers because of our immigration policy. But the fact is that we're getting positive jobs numbers because we've got high wage growth, and native-born Americans are rushing into the labor market in droves. And so that negative story is gone. And finally, I got to say, we really love going through the Bloomberg data, and we have this thing that I like to look at, which is the probability distribution of all the forecasts for the jobs number before it comes out. And when I looked at it after I got these numbers, I saw that the very, very top person was low by about 40,000 jobs, which shows that the Trump economy is surprising Wall Street analysts over and over again, and they need to maybe think about getting the supply side of their model fixed.
It does surprise people to the upside for sure. I have heard since it passed a lot of positivity about the big, beautiful bill and the economic growth that it would create. We see 172,000 jobs. We see unemployment at 4.3%. But we see inflation at 3.8% on the PCE. So it looks kind of like too late Powell was right on time. And now the market is pricing in a hike. Is that wrong?
Yeah, I think that's terribly wrong. The bottom line is that what you need to do is look at the impact of oil price shocks on core inflation. And the history of it is that they're temporary. They don't lead to lasting inflation, that people see through it and don't adjust upward their inflation expectations. And so my advice to the Fed, and I certainly respect their independence, and I'm really thrilled to have a talented person like Kevin Warsh there, is watch the numbers. Because what you're going to see is that with a big supply side boom, that you could have high growth without having runaway inflation. It's not a Phillips curve event at all. And the last time this happened was the 90s, when Alan Greenspan saw through that and gave us some of the best years we ever had. And I think that we have that opportunity right now if the Fed, pays close attention to the data and thinks about why it keeps surprising on the upside, them especially, and surprising on the downside on inflation. I mean, absent the Gulf issue, the inflation basically would be completely under control right now.
How soon do you expect that to be wrapped up? Because that's almost completely within our power, right? We went in there maybe at the behest of Israel, but it was our decision to do that.
Well, the president will make the call on that. I mean, negotiations are ongoing, and I'm not a forecaster for when it's all going to end. But the bottom line is that global markets should understand that risk premia are going to be much, much lower going forward once we successfully take away the option for Iran to build a nuclear weapon. And, if you look at the sort of crazy actions that they're taking in the Straits, even attacking Chinese boats, for goodness sakes, then you can see how terrible it would be for the world if they had ballistic missiles and nuclear weapons. And President Trump thinks that's unacceptable. And, of course, there's a short-term disruption in oil prices, but we expect it to be over soon.
Let's get back to the jobs picture, because you mentioned the investment in equipment, which makes sense following on the legislation that you passed. Are we going to see manufacturing jobs come back to the U.S. economy? Because we don't really see job creation in the goods producing sector yet.
It's inching up, but what is going way up is construction. And remember, in the Big Beautiful Bill, that President Trump did something that was really quite clever, where he said for 4 years we're going to allow people to expense factories. And so what's happening right now is that people are racing to build the factories, and then once those buildings are up, then they'll put the machines in and create the jobs and so on. And so construction employment is way, way up. And we think that that's like the leading indicator for what's going to happen to manufacturing work over the next year or so.
We have seen an uptick in government jobs, which I thought was surprising. I figured we were going to go the other way, but we added 54,000 there, and an uptick in hiring in a lot of healthcare services, food and accommodations. Those are lower paid areas. Are you worried about the lower half of the K?
Well, what we're seeing is that wages across the board, real wages, are going up on average about $3,000 since President Trump took office. And so, right now, the jobs, the government jobs that you talked about, were really state and local jobs. And there tend to be kind of seasonal patterns in those things that aren't completely captured by seasonal adjustment. And so we have a lot of teachers that took off for the summer and maybe took a job at the boardwalk and so on. That kind of thing and then it gets offset in September, is probably what's going on, because it's all state and local. We, in the federal government, have cut federal government employment by more than 300,000 workers. And that's like tax savings that is going to accrue to the benefit of the American people for a long, long time.
We did, I was just looking at the wage growth, 3.4%, and PCE was 3.8%. So how do you factor higher real wages?
You're looking at the latest number, and I can send you an email, but we've aggregated it through since when Trump took office, and the number was 3,000 as of a speech that we wrote for him a day or two ago.
All right, well, that certainly is good news for the workers in this country. Kevin, great to get some time with you. Really appreciate you joining us. Kevin Hassett is the White House National Economic Council Director, talking to us on a day when the jobs numbers just came in far higher, as he pointed out, than the highest estimate. In fact, the estimate was 88,000. The whisper number was 100,000, and the number came in at 172. So, as I said before, unambiguously strong. No fast pass for SpaceX from Standard & Poor's. The S&P Dow Jones says it will keep its existing rules for index inclusion, denying SpaceX and other mega IPOs a fast track into the world's most important index, the S&P 500. Joining us now to talk about this is James Seyffert, ETF analyst for Bloomberg Intelligence. And James, I suppose on the one hand, this is kind of a surprise, right? If you've been listening to people at the NASDAQ, if you've been reading Matt Levine, you may have expected them to dump the seasoning rules and maybe even profitability requirements, but they don't run an exchange business and they don't need that kind of contract. Is that why they're able to do this?
I think that's part of it, right? NASDAQ was incentivized to do this because they wanted the listing of SpaceX. I'm not sure if SpaceX wouldn't have gone with them if NASDAQ wasn't doing this, but that's certainly part of it. The other part of it is even if S&P did follow NASDAQ and Russell in doing the fast ads, they were only going to move from a 12-month seasoning period to 6 months. It's not like they were going to move it to 30 days or something along those lines. They were going to keep it, relatively still long-lasting. So instead of 6 months, it's back to 12 months. I am mostly surprised. I kind of thought S&P was going to, go with Russell and NASDAQ, and a lot of other indices already have some sort of fast ad rules too. But they're the legacy, they're the leader in the space, and they decided they're going to keep things the way they are, and I think a lot of people are happy about it.
I just want to point out, James, that if you work here at Bloomberg, our style, our official rule is indexes. You have to say indexes and not indices. In terms of what happens to this stock, I was looking at a list of like the top 30 IPOs of all time, and although some of them performed well, most of them didn't a year later, and the max drawdown after a year was like 55% on average. None of them were light. Is this maybe a smart move from the S&P?
Well, who knows? Because again, they are likely. It's going to. Well, we don't know. It should be. It will be eligible for the S&P. You got to remember, the S&P is a committee. It's run by a group of people, and they make rather active decisions. So, in this case, the committee is not changing the rules so they can make even more active decisions, like add something 6 months before. But it's hard to know. Usually, if you can preempt by a few months what is going to go into the index, you can outperform. They tend to do well. And same thing if you can preempt before things get kicked out. But we've had people on Bloomberg TV that have done analysis on this. If you can look at the things that after they've been kicked out, they tend to actually outperform as well. It's just that the numbers you had on the screen there's $26 trillion tied to this index across passive funds, actively managed benchmarks, and derivatives. So it's a lot of money out there that can move things around, and it's just not natural buying or selling.
James, great to get some time with you. James Seyffert there of Bloomberg Intelligence, part of our ETF super group, along with Tony Serafagis and, of course, Eric Balchunas. Tune in to Eric's show, ETF IQ. That's every Monday at 12 p.m. New York time. He's joined by Katie Greifeld and Scarlett Fu. Coming up in the next hour, Marianne Bartels joins us on the recent tech sell-off and rotation. We'll talk to her about getting out of the NASDAQ and into the Dow Jones.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
ABC News. I'm Sherry Preston. Another resilient jobs report. The Labor Department says the U.S. economy added 172,000 jobs in the month of May, roughly double what forecasters had expected. Jobs were added in leisure, hospitality, and local government, as well as University of Michigan economics professor Justin Wolfers, who says the numbers are easing fears of a possible recession.
We had a pretty miserable 2025, but it looks like the middle or the early and middle parts of 2026 really suggest the labour market's moving along. And I think the thing this will really do is it's time to stop talking about the word recession. Recessions don't happen when the labour market's motoring along like this.
Americans are reluctant to leave their jobs and seek employment elsewhere. The report says the number of people who quit last month has dropped to its lowest level since August of 2020, when COVID was still running rampant. They stayed up debating all night long, with the Senate passing a big bill, says ABC's Rachel Scott.
This morning, the Senate narrowly voting to approve a $70 billion immigration enforcement package without any measure to block President Trump's $1.8 billion so-called anti-weaponization fund. Alaska Senator Lisa Murkowski, the lone Republican, voting against the bill, which now heads to the House for approval.
Against President Trump's wishes, the House has passed a bill giving Ukraine more money for the war, while Ukraine's leader reaches out to Russian leader Vladimir Putin, asking for further negotiations.
Now, Ukrainian President Zelensky has sent a letter to Putin, proposing they meet to discuss compromises to end the war, and warning Putin, if he doesn't help end the conflict, Putin will have to fight for his own existence.
ABC's Michelle Waugh. The Senate has blocked an extension of a key surveillance program used by intelligence agencies over concern with President Trump's choice of Bill Pulte to be the next national security advisor. Dow is down 187 points. You're listening to ABC News. Character actor James Handy stabbed to death on Wednesday in Hollywood. Police say his girlfriend's 44-year-old son did it.
Officers arrived at the Los Angeles area home to find Handy unconscious in the front yard with a stab wound to the chest, blood-stained cloth strewn on the sidewalk. Handy was later pronounced dead at the hospital. Surveillance video shows the suspect walking in the area, and according to an LAPD statement, after the stabbing, he flagged down responding officers, telling them he was the one they were looking for.
ABC's Trevor Alt in L.A. There's a potential new breakthrough that could detect lung cancers with a blood test even before they developed. It's brand new, but ABC chief medical correspondent Dr. Tara Narula says there's a lot of potential.
What if we could pick up on inflammation before a cancer ever develops? That's what researchers here wanted to look at. And so they essentially used a UK biobank of blood and machine learning, and they identified 14 proteins in the blood that they called a signal or signature that predicted those at risk of lung cancer over 5 years before development of the disease.
The 52-year-old Sherpa guide who went missing for days on Mount Everest is recovering, now receiving medical care. Dawa Sherpa was suddenly seen crawling back to base camp 6 days after he went missing. Says he slipped and fell into a crevice where he was stuck for days with nothing to eat but ice. He was finally able to crawl his way out. Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube. We're streaming live on Bloomberg.com as well. Scarlett Fu and Paul Sweeney, the Bloomberg Intelligence program for you here at Jobs Day. Really strong jobs report. We'll break that down going forward. We're going to check in with Michael McKee. He's our international economics and policy correspondent. He'll help us give us a sense of what the job market looks like here and maybe what the Fed will do. Also pretty cool today, Katie Greifeld, Bloomberg television anchor. She's going to speak with AstraZeneca's CFO, see what the company's up to these days and where they're going, what their focus is. So that's going to be in this half hour as well. Poonam Goyal, senior U.S. e-commerce and retail analyst, Bloomberg Intelligence. Lululemon, numbers struggling there a little bit here. The stock trading down pretty substantially. We'll break that down. Vanessa Perdomo Magaglione, sports business reporter and host of Bloomberg Business of Sports podcast on his top business stories here, talking about the World Cup coming, the Knicks Game 2 tonight.
Game 2 tonight, Game 3 on Monday, with
Right.
the president in town ready to attend.
That's right. And also the mayor, Mamdani, is planning on attending as well. So we're getting some
You
star
might get
power.
like a love fest there.
I don't know. So
What does this mean for my commute?
Yeah,
That's all
it's
I
going
got.
to
be horrible.
It's not good for your commute, John. I'm sorry. All right, so we got a lot coming up over the next couple of hours. We've got some red on the screen here, some sell-off, particularly in NASDAQ, down almost 2%. But let's go to John Tucker. We'll get a Bloomberg Business Flash, John.
All right, guys, this Bloomberg Business Flash brought to you by IBKR, Trade Election Climate and Economic Outcomes. With IBKR prediction markets, right alongside your stocks and options, earn interest in your position. Receive $1 per contract if you're right. Learn more at ibkr.com/predictions. Well, yeah, we had a record close for the Dow yesterday. Today, major averages lower to close out the week as technology shares doing the damage today. The Philadelphia Stock Exchange Semiconductor Index down again, 5.6% right now. Information technology, worst performing stock in the S&P 500. And yes, that is home to the semiconductor stocks. Worst performing stock in the S&P 500. You mentioned it, Paul, and Avalon's going to break it down in a few minutes. But Lululemon, after cutting their annual forecast, the shares down over 8%. Then you have DocuSign shares. They're falling after their forecast. Underwhelmed investors. That is down over 7%. And the big news this morning, job growth topping all forecasts. Non-farm payrolls for the month of May increasing 172,000. That's like almost double the expectations. Yields higher as traders increase bets of a Fed rate hike. The 2-year, which is more policy reactive, that is up close to 10 basis points, 4.14 right now. In the meantime, Claudia Sahm at New Century Advisors did react to the better-than-expected jobs report.
This looks like
solid report. Unemployment stays low. Like you said, underemployment ticks down a bit. And wage growth is still slowing. So, in terms of this, being some inflationary pressure, I just don't see it here.
S&P 500 down 79 points. The Dow right now down 120 points. And the NASDAQ Composite Index down 475 points. That is a decline of 1.8%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Happy Friday.
John, you were mentioning the NASDAQ down 475 points. This is where it's coming from. NVIDIA is contributing 91 points to that decline. Broadcom, 47 points. Micron Technology, 40 points. AMD, 30 points. So it's those tech stocks, the chip stocks that are bringing NASDAQ down.
The Philadelphia Semiconductor Index down 5% right now.
That explains it. There you go. John Tucker, thank you so much. Appreciate it. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Stocks trading off here today, as John was just mentioning. Let's take a look at some of the individual stocks on the move. We can do that with Avalon Purnell. Avalon, what are you looking at?
We have to start off with Lululemon. That's ticker Lulu, currently down about 8.3% to hit its lowest intraday level since 2018. And that's after the athleisure maker slashed its annual forecast amid weaker sales trends. And that print led several analysts across the street to downgrade and also cut their price targets on the company. BNP Paribas writing that Lululemon's product launches just aren't working and that the comparative sales remain negative, and that is why they are downgrading that stock. Worth noting, though, that Lulu is going to have a new CEO this September. So it's definitely a challenging setup that she's about to be walking into.
You know that I have the Amex Platinum card and I have a $75 credit at Lululemon every quarter. It gets hard trying to figure out how to spend it.
Really?
Yeah, you're not supposed to use it on gift cards. You're supposed to use it and buy something. And like each time I go in there, it's kind of hard to find something.
Here's the feedback I get from some of my co-hosts here over the years. Love Lululemon, but boy, it's expensive.
Yeah.
That's the call.
So the $75 is meant to defray some of that cost, but I don't want to spend another $50 on top of it.
Okay, all right. Yesterday I had lunch at Chipotle, had a great lunch. What do you got for me today?
Yes, that's ticker CMG. It's currently jumping about 6.8% most intraday since April. And that's after JP Morgan upgraded the stock to overweight from neutral, citing a rare valuation opportunity. Obviously, that'll be welcome news for the food chain, which has struggled to win back diners. I'm sure they're happy that you ate lunch there. And also complaints about those rising prices and smaller portion sizes. Also worth noting that the stock is still down nearly 20% this year.
Yeah, the only issue, they do a great job on my 3rd Avenue at 61st Street here in the city, is getting staff. Some days they're short on staff and then the lines get a little bit long.
Oh,
the food's excellent.
I thought robots were supposed to take care of that.
I don't know. There's no robots that I could see. But when the people are there, they're awesome. But sometimes they have some problems there staffing. How about Cooper?
Yes, that's ticker COO, currently up about 7% most intraday since December. And that's after the contact lens maker reported a second quarter sales and profit beat. It also gave updates on its strategic review that analysts found very encouraging. KeyBank writing that this update is likely to overshadow Cooper's reduction to their full year guidance. And worth noting that the news is powering Cooper to be the top performer on the S&P 500 this morning.
All right.
Good. Yeah, good stuff.
Thank you so much, Avalon Purnell, for that. She's our equities reporter here at Bloomberg. And for more conversations like this, subscribe to our Stock Movers Reports, 5-minute audio reports on the biggest winners and losers in the stock market, available on Apple Podcasts, Spotify, or anywhere you listen. Today is the first Friday of June, which means it's Jobs Day. Everyone in this building knows that.
Yes.
I mean, the makeup room knows this. Everyone knows this. And we got a huge jobs report today. 172,000 jobs added, topping all analyst estimates. It was actually more than double the consensus estimate as well. And on top of that, the previous 2 months were revised higher as well. So you have the strongest 3-month stretch in more than 2 years. Michael McKee is our international economics and policy correspondent. Mike, in 2025, at the end of the day, we had almost zero job growth. What changed? Why is 2026 so different?
Well, I think basically it's a story of the administration. We had all the tariff announcements and all the chaos in the first months of the administration, and it kind of put companies on the back foot. They were waiting to see what was going to happen. And then we got more with the war, pushed out what's happening. But companies have to make some kinds of decisions along the way, and they seem to have decided that they're going to start hiring. But It is also true that most of the job gains came from areas that are low-paid workers, like the healthcare group that always adds a lot, and local government, which may be in part a seasonal adjustment situation because of the end of the school year. So it's not like we're seeing big gains in manufacturing jobs or in a lot of the, not construction, but a lot of the jobs that would be higher paid.
Yep. Average hourly earnings up 3.4%. I don't know, that seems okay, but then I look at the CPI that we're expecting for next week, that's 4.2%.
Yes.
So real wages under pressure.
Well, the administration, Kevin Hassett was on with us a short while ago, and he was basically taking a victory lap because it created a lot of jobs. But what's going to be a problem for the administration is if we continue to see the two lines for earnings and inflation go in opposite directions, Americans are not going to be happy. And this is it's good news for the Fed in the sense that it means that they don't have to raise rates because there is a wage price spiral, but it doesn't mean that Americans are going to feel better about their purchasing power as long as especially gasoline prices stay where they are.
Do we have any sense of what this level of job growth means for the months to come? I mean, can the U.S. economy continue to keep pace with this pace of continue to go on with this pace of job growth? I mean, we talked about the strongest 3-month stretch in more than 2 years. It feels like at some point that's got to peter out.
Well, it's an interesting question because we got a couple of different threads of things going on right now. One is AI, and you're seeing a lot of construction jobs right now for the AI data centers. But then when those data centers are built and the construction workers leave, we're going to have a lot fewer people employed inside the data centers. So there's a question of what happens then when that tips in a different direction. And then the other is that the labor force continues to shrink. It rose by 83,000 this past month. First time in about 4 or 5 months that the labor force rose because they've been because of the immigration crackdown. So can it continue? Well, you got to have enough workers, but then you also have to have enough jobs. And right now it may be very finely balanced, but the question of whether or not it can continue is definitely an open one.
That's kind of where I wanted to go with the no real immigration to speak of. Where are these workers coming from?
Well, we're probably seeing people starting to hire the college graduates who said that they couldn't find jobs, so maybe some of them are getting jobs. And
building data centers.
Yeah, building data centers. And there are a lot of people who are immigrants who are in the labor force who are not documented that we don't know about. And that always happens, so you get some job creation there. And then I think it's just some churn between people who have left one job for another or were let go. I mean, you didn't want to be in finance this last month. 22,000 jobs lost there. Tech lost, overall, information lost 1,000 jobs. But you would think, we'd be gaining more.
Yeah, especially with the headlines coming out of the likes of Meta, the forced retirements at Microsoft. They're definitely cutting their staffing overall. Mike, you'll be joining us at 12 p.m. Eastern Time on Bloomberg Money, the premiere of Bloomberg Money, which we're hosting, Tom Keene and I, at 12 p.m. Wall Street time. And we're going to talk about this and what it means for your personal wealth management, what it means for your retirement, what it means for all of that, and how you think about how you make and spend your money.
I'll be looking forward to that. I have no wealth, and I don't think I'll ever retire. But if you got some good ideas,
you and John Tucker.
See, John Tucker and I, I think we're all now on the same plan, which is we're just going to keep working.
Yeah, as long as they'll have us.
Well, this is the weekend at Bernie's studio here.
Right,
They're just going to prop us up.
Just keep
working. Scarlett, you're in charge of promising.
All right, I'm going to take us out. Thank you so much, Mike McKee. Look forward to seeing you in about an hour and a half's time. And of course, we're looking at a day in which you have a strong jobs report, Paul, but the stock market is declining. It didn't decline when, you had all the headlines out of Iran and the U.S. not being clear on whether there's any kind of peace agreement. But this idea that the Fed is going to raise rates probably by the end of this year is giving people an excuse to take some profit.
And particularly in the tech-heavy NASDAQ. So we've got the S&P down 0.9%. The Dow's down only 0.1%, but the NASDAQ down about 1.6%. So that tells you a little bit of concern out there in terms of higher interest rates. I mean, because oil's behaving. It's down about
It's down,
$1.80,
yeah.
$91. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major stock averages lower, and the tech-heavy NASDAQ registering the biggest declines right now. Semiconductor stocks, the big drag, the Philadelphia Semiconductor Index down right now 4%, 4.3%. So it's giving back some of the pairings, some of the earlier losses. You're seeing NVIDIA down 3%, Broadcom down 5%, Micron seeing a close to a 6% decline in the early going right now. Back to the big data point of the morning. The Wall Street's historic run ended after we got the jobs numbers today on the economic front that came out at 8:30 this morning, and the change in non-farm payrolls. Big eye-opening surprise there, up 172,000 for the month of May. That's almost double the expectations, and the previous month's numbers also revised upward. As a result of that, the more policy-reactive two-year yield up close to 11 basis points right now. 4.15, 10-year yield right now, up 7 basis points. That is at 4.54. We're also seeing oil decline. Brent, the active contract, down 1%, $94 a barrel. And also the deepening crypto rout, Bitcoin right now down close to 4.6%, 60,660. The combined market value of fully diluted Bitcoin treasury company stocks has fallen to about $72 billion from nearly $134 billion at its most recent peak. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. And there's a lot going on out there in the world. One of the areas that we love to follow, because there's so much activity there on the M&A front and on the new drug front, is big pharma. And today we've got a treat. Katie Greifeld from Bloomberg Television joins us live here in our Bloomberg Interactive Broker Studio. And you've got a fun conversation coming up.
Absolutely. I'm pleased to say that joining us now is the CFO of AstraZeneca. Her name is Aradhana Sarin. Aradhana, great to speak with you again. And you're at the New York Stock Exchange this morning to ring the bell. You listed your shares on the NYSE back in February. You also have announced plans to invest $50 billion in U.S. manufacturing by 2030. And your company's ambition overall is that half of your revenue by 2030 is hopefully going to come from the U.S. market. So you add it all together, clearly AstraZeneca is trying to deepen your U.S. presence as a Great Britain-based company. And I would love to talk about why. Before we get into your pipeline and all the exciting new areas that you're expanding into, why this long-standing effort here to make yourself more known to U.S. investors?
Yeah, so we have always been a very global company. I mean, last year we had about 42% of our revenues from the U.S. We have about 10-12% of our revenue in China, 23% from Europe, and then the remaining from the rest of the world. So of all the pharma companies, we're probably the most truly global organizations. And, the U.S. business is just growing, it's been growing double digits. So we just expect that business will continue to grow. Not that other parts of the business are shrinking, but it is just growing faster, as is actually the rest of what we call the emerging markets is also growing very fast. So both those things will contribute to, getting to almost half of our revenues from the U.S. In the next 5 years.
It's a fair point that growing in the U.S., it doesn't have to come at the expense of, your global presence in other markets. But let's just talk about the listing, because you've seen a lot of companies that are, based overseas, primarily listed overseas, switch their listing to U.S. markets or do something along those lines. And the reasons usually given are that, you think about the U.S. equity market, it's very deep, it's very liquid, and typically you can maybe command a higher multiple than you might receive overseas. And I would just love to hear your experience, having done sort of a similar maneuver yourself, what that has meant for AstraZeneca's share reception and where you think that your stock is still undervalued by the market at this point.
Yeah, so what we did actually, I would say, was quite different from some of the other companies. What they've done is many companies have actually re-domiciled to the U.S. altogether and then listed the stock. What we did was different. We always had a U.S. listing, but it was an ADR. And we basically changed that to ordinary shares. So now the shares that are traded in the New York Stock Exchange, in the London Exchange, and in the Sweden are all exactly the same stock. So there's no concept of ADRs. And it actually took a lot of work to figure out how to do this. So it was less about valuation. It was more about removing some of the friction that comes from, having ADRs. There are funds that can't hold ADRs, retail shareholders, et cetera. So it was more driven by the need to simplify that and have one single security that is traded across the exchanges. That being said, again, the U.S. is a very broad and deep market. Our shareholder base has increased. Today, about 45% of our shareholders are in the U.S. But again, we also have a very global shareholder base, so we expect that the demand will continue to grow as we grow as a company.
Well, let's talk about what those global shareholders are very focused on right now, and that, of course, is your upcoming GLP-1 pill. Of course, you're due to present data on that pill in the near future, and as you know, probably better than most, it's a very, very competitive landscape when it comes to the weight loss market. So, what are you hoping in terms of the readout? What does your drug need to do to sort of differentiate itself from the pack, which is very well established at this point?
Yeah, so actually data is coming out very soon. It will actually be this weekend because the ADA is happening this weekend, so you will all get to see the data soon. Remember that this is phase 2 data, so it's not a pivotal study. And in phase 2, what we wanted to see is that the drug is as effective as competitors and just as safe. Remember also that what is established in the market today is injectable GLP-1s. It's actually not orals. There's only one oral competitor that is sort of ahead of us, so we have the potential to be second to market if things go well. And then also where our strategy is really differentiated is the combinations. And we have not just a GLP-1, that's not our only product. We have a very broad portfolio of cardiovascular medicines. We actually just launched in the US market a product called Baxfendy. That's the brand name, is Baxdrostat. It is the single innovation that has happened in the hypertension space over the last 30 years. So where we can win is not just the single agent oral GLP-1, which obviously will need to show competitiveness, but also the ability to combine that with our PCSK9, with our hypertension drug, with Farxiga, SGLT2, et cetera. So we have sort of this broad portfolio strategy, not just a single agent strategy.
And let's also talk a little bit about, organic versus inorganic growth, especially when it comes to the weight loss portfolio, because you and I last spoke at the end of April, and it sounded like at the time that you were pretty satisfied with your portfolio when it comes to weight loss. Is that still the case, and are you looking at any M&A, whether it be in weight loss or other parts of the portfolio as well?
So we're always looking at M&A. Last year we actually did 37 BD transactions. And for us, it's not large M&A, but it's filling the gaps in our pipeline and also having a vision towards the future as to what are technologies that will really, be important in the future that we may want to get access to or we may want to accelerate. So many of these deals are fairly early stage, maybe early to mid stage. And also we look at, if we acquire something or license something, how do we add value to it? And the oral GLP-1 is a great example. We licensed this product from Echogene, but we really accelerated it. We have to sort out the manufacturing, making all these investments. So it's also a question how we can accelerate it after actually licensing it in.
And before we let you go, but to your point that, AstraZeneca, it's a very global company. Let's talk a little bit about Europe specifically, because there's a lot of concern in Europe right now that new medicines either won't launch there or perhaps will be delayed due to MFN pricing. So I'm wondering whether or not, in your view, there's going to be some drugs from AstraZeneca that you think won't be launched in Europe at all due to some of those factors.
Yeah, look, I think we're working very hard with governments across countries in Europe to figure out, how they can invest more in innovative medicines. They today invest a very small portion of their GDP. We're trying to, argue and make the case that not only is it about, getting the best medicine to patient, but also investments in their countries. Again, not just manufacturing, but clinical trials, researchers, university support, and all these other things that we do in the ecosystem. And we're trying to make the case that countries do need to invest more in innovative medicines to bring, the entire ecosystem to their countries. And that remains a work in progress, but we do hope to, again, bring our medicines to as many patients as possible across the globe.
Well, Aradhana, that's a good place to leave it. Great to spend some time with you. That is Aradhana Sarin. She is the CFO of AstraZeneca. AstraZeneca, of course, ringing the bell at the New York Stock Exchange today. And they're best known for oncology, but they're trying to break into the world of weight loss drugs as well.
Everyone is. It's you know, you got to be there or you get out.
Yeah, but it's tough. I mean, you think about Novo Nordisk, you think about Eli Lilly. It's really a duopoly at this point.
It is. And then we spoke to Sam Fazeli at Bloomberg Intelligence yesterday. He was talking about Eli Lilly making acquisitions to try to diversify away from some of their
But it's doing so from a
weight loss.
position of strength compared to some of the other companies that really need to do it to figure out their whole, streamline their patent schedule and also at the same time try to get into GLP-1.
Yeah, it's a great point. I mean, you think about Eli Lilly really pulling away from Novo when it comes to the U.S. market. It's, as you said, a position of strength. They have sort of the luxury of being able to go out and pursue all these different deals to try to, build out that pipeline a little bit more.
Which is so intriguing given that Novo Nordisk had first mover advantage.
I know, especially when it came to the pill as well. They got their pill out, I believe it was in January, so they had a couple months head start over Eli Lilly, which is great for them. But Eli Lilly, obviously a formidable competitor, and now they have their own pill as well. So it's tough. It is cutthroat, and there's a lot of expectation that there's going to be a little bit of a price war.
The next big thing, male pattern baldness. You get a pill that fixes
You crack that. That's a good point.
And that's coming, I'm telling you.
The Holy Grail.
That is the Holy Grail. Katie Greifeld, thank you so much for that fascinating discussion with the CFO of AstraZeneca there. Looking at the markets here, Scarlett, we've got a little bit of selling out there in the marketplace. It feels like the market's pricing in maybe a rate hike here on the backs of some economic news that we've received recently. Most recently, this jobs report, which is pretty darn strong. Oh, and at the same time, you have to deal with rising inflation.
Yes, we're going to get CPI next Tuesday, and right now the consensus is that consumer prices rose 4.2% in the month of May. So that's not great when you consider what wage increases look like for the month of May.
Yeah, you had wage increases of 3.4%, and if
so you're already behind.
Yes, you're already behind. People's and you're feeling it because where are you behind? At the gas pump, we do that every week. At the grocery store, we do that every week. At the restaurants and so on and so forth. So we'll have to keep an eye on that. S&P off 66 points. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Let's start here with this headline across the Bloomberg. Demand blasting off. That's not the headline. The headline is SpaceX. The IPO is said to draw more orders than shares available. Is anybody really surprised?
That's a lot of stock, dude. That's $75 billion worth of stock to sell.
And of course, the marketing campaign, the roadshow kicked off at the headquarters of J.P. Morgan Chase yesterday. The payroll blowout, adding to speculation, the Fed's next interest rate move is going to be a hike. We're seeing that in the more policy-reactive two-year yield, which is 11 basis points higher right now at 4.15. The swaps showing traders bracing for a quarter-point increase by the December meeting from the Federal Reserve. And the semiconductor stocks doing most of the damage today. Looking at the broad Philadelphia Stock Exchange Semiconductor Index down 4.5%. Sector Index down 4.5%. So you got stocks like Nvidia down 3%, Broadcom. Right now the S&P 500 72 points lower. The Dow down 94 points. And the Nasdaq Composite Index down 464 points. That's a 1.7% decline. Bitcoin continues its slide down 4%, just shy of 61,000. Digital assets continuing to sustain heavy losses. Been a pretty grueling week there. Shake Shack's latest headache, thieves.
What?
They
Thieves
made
for
off,
what?
They made off with a truckload of barbecue ribs. So the chain did launch the barbecue boneless rib sandwich, and it was selling like crazy. So the CEO, Rob Lynch, said the theft occurred in Mexico. It involved 3,000 cases of ribs. He was talking about an investor conference yesterday. Actually did have 3,000 cases of ribs. That's a lot.
And the price of beef today is just crazy. So, I mean, why not?
And everyone wants protein. I'm sure they could move that really quickly.
Yeah. All right.
Anyway, how do you fence ribs? But
Yeah.
I mean, that's the way my
I know
mind
a guy.
thinks. Yeah. We check the market in Jersey. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
All right, good stuff, JT. You mentioned Lululemon, and
I'm a big fan.
Are you?
Yes.
Have you? What have you bought from Lululemon?
No, it's not that I wear them. I appreciate them on other people.
Oh, I see.
Yes.
Okay, so you have been a buyer probably as gifts.
Yeah, but when I talk to buyers or prospective buyers like you or Lisa Mateo or Alexis Christophers, the theme is really good products, but boy, they're expensive.
Yeah, they were kind of the first mover on really good products, but then a lot of copycats came around, and guess what? They've all figured out how to do it pretty well, too, for a lower price. Poonam Goyal is our senior U.S. e-commerce and retail analyst here at Bloomberg Intelligence, and she joins us now with more on Lululemon. And this has been kind of the challenge for Lululemon for a while now. This is not a new problem, that there's so much competition out there, and that the quality that Lululemon is known for, you're now seeing it at other companies. What has been the response? Because I feel like they haven't figured that out yet.
No, they haven't. The problem continues to linger, but the problem is more than just competition. Competition is one thing. Lululemon's had competition for years. The issue is really the product at its core, and the product in North America, especially across the women's business, they don't have a good lineup of product. The product that they're introducing isn't fully resonating with shoppers. It's a hit or miss in most cases. The pipeline to bring new product to market is very long, and they need to shorten that. So this is more, in my eyes, a product execution miss than competition. Competition does play a part in it, but I think, not having the right product just adds more to the tension and the downside.
And Poonam, you've covered retail for years and years and years, and you've seen companies struggle with product and product innovation. How do you fix that kind of thing? Is it just hiring the right person, or is it changing your process? How do you do that?
Right. So I think there's two ways to think about it. When a company like Lululemon or even a Nike, they have such great brand equity and heat that they can use that to their advantage. What they need is a product-led person. They need innovation and product. So they need the execution on the product side. And once they have that, because they have the brand heat, because they have the brand loyalty, people do come back. So I don't think it's women are not wanting to shop Lululemon. They don't have what they want there. It's no longer providing it innovation fast enough, and others are coming into the picture. So I do think when Heidi comes on board in September, there's a lot of I guess there are a lot of people who are critical of her appointment, but I think the one thing that she does come with is a product-led background. And should she be able to improve just speed to market and the product lineup, I think that's a step forward for Lululemon. The rest of it is still uncertain, but I think that will give them a leg up. But I don't expect to see that until, mid 2027. She comes in September. And things are sliding as we speak into the year with sales expected to be down at the midpoint.
So it's going to take time. And you mentioned that the product selection is a challenge here in North America. But we've seen that Lululemon does fairly well overseas. Why is that? Is it because the competition just isn't there? There's still a freshness factor with the brand over there?
So the brand is much smaller internationally, right? So that makes a difference. Also, the competition, yes, you could argue that, when you're talking about the Aloes of the world and others, it's probably more competitive here than it is in China for them. But it really comes down to the base. Lululemon's biggest business is in North America. And while China is still up 30%, it's off a much smaller base.
What are they saying about China here? Because they're one of the companies that you cover or one of the many companies you cover that do have exposure there.
So Lululemon is actually doing better than the other athleisure competitors in China. However, in the quarter, there was a little hiccup given the negative backlash that they had in the news. China sales did trail a little in the quarter, but since have recovered. So we think China will be okay, but China is also sensitive to product quality news and other news that Lululemon has to face from consumers.
What about the role of Chip Wilson? He's the founder of Lululemon, and he's been agitating for changes. It feels like he's in conflict with the current management, and they're kind of trying to work with him because obviously he has hit upon some soft points for the company, and they recognize that his criticism is valid. Is there a path forward for them to work together?
It's already in place. The last announcement we heard from Chip Wilson was that some of the members he is appointing to the board are of his choice. So that should help tensions resolve between Lululemon and Chip Wilson. And he will have access to Heidi when she joins in September. So there will be dialogue in how to move Lululemon forward and really get it out of this dump that it's in. And hopefully, as they work together, he is the founder. He is a visionary behind Lululemon. So I do think he'll have a lot to add to the conversation. And as they take his input, bring their own input into place, they could start to lead a turnaround. But once again, it's all about the execution. And we won't know more until the end of this year, until we hear from Heidi, hear her plans, hear her vision. And then to execute that is another 6 to 12 months.
Yep, there you go. All right. It's tough. I think Poonam Goyal and retail analysts have some of the tough. Poonam will let Poonam go. Poonam Goyal, senior U.S. e-commerce and retail analyst for Bloomberg Intelligence. Not only do the retail analysts have, like Poonam, and have to be good on just the financial aspects of being a securities analyst, but you also have to have an eye for fashion. Like sometimes, if the fashion thing doesn't work, it ain't going to happen.
Right, so no matter how good the financials are, or no matter how solid your supply chain is.
So Poonam Goyal and retail analysts, for them, they walk around shopping malls, going into stores, looking at what's on the racks. Will it sell? Will it not sell?
It's the art and the science part of it, right?
That's why I always think it's almost like it's similar to being a biotech analyst. You have to be a financial analyst, but you also have to be like a PhD in chemistry to get a
You got to have a feel for it. And when I've gone to the Lululemon store, there are a lot of items there with like Lululemon branding right across the front of it. That feels a little, I don't know, desperate.
Okay, all right. So we'll play it out. I'm a big fan of Lululemon. We'll see if they can make a comeback here. S&P down 79 points. The NASDAQ down 500 points, 1.9%. Not good to be a chip stock today. This is Bloomberg.
is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so check it out. Man, a lot of stuff going on in the world of sports, and we cover the business of sports. Joining us here today is Vanessa Perdermo-Maglione, sports business reporter and host of Bloomberg Business of Sports podcast here, joining us here in our studio. Vanessa, let's start with the Knicks here. Back in the finals, game 2 tonight, and I mean, this is big business. I think if you're a TV network, you're really psyched because it's New York, Knicks, great. And then you got this Wembanyama kid from San Antonio who is, I've never seen anything like it. And I think a lot of basketball people in general, it's got to be great for the networks, great for just the game.
It's definitely great for the game. It's great for the networks. I mean, we're definitely going to see, I think, probably the most watched finals in a long time because of the Knicks, obviously. But like you said, Wemby winning his first finals at 22 would be a story in itself. The Knicks winning, I think this was probably the best finals they could have imagined, unless it was LeBron playing his last finals. Like, that's the only other thing that probably would have pushed it further for the league.
And speaking of LeBron, it feels very much like Wemby is going to take the mantle as, you know, the next phenom in the NBA. And because he's from France, he has fans all over continental Europe, and it feels like this is the moment for the NBA to really explode internationally. It's already huge internationally, but in a different way where the NBA could do a lot more with Europe.
Yeah, I mean, and NBA is already looking to expand a league in Europe. You know, they're trying to have something by 2027 that remains to be seen if they'll actually be able to do it. But that's exactly the reason, right? There's so many international stars in the NBA right now. It's just the right time. We see them in the top 10 of the draft every single year. Wembanyama also, I think he wants to take that place. He wants to be the face of the league. He takes it really seriously. He's not shy about saying he wants to win MVPs and he wants to win championships, which he says in a way that's not arrogant and just that he really is matter of fact, that he really likes to win.
But the Knicks here, I've been a Knicks fan my entire life. I was 9 years old when they won in '73. I remember it very well. This Knicks team is the best team I've seen play in a long, long time. Certainly the best Knicks team I've ever seen play. Taking over the city here, it seems great.
I think that one of the things about this Knicks team that really, they just embody the spirit of New York so well. You know, I think Jalen Brunson is the perfect face for this team because he's just so hardworking. This team, from what you see, they come from behind, and all of these come from behind victories. So they just show that the grit of New York, that they never want to stop, they'll never quit, and I think that's one of the reasons why a lot of people like this Knicks team. You know, you don't usually see people rooting for, you know, the New York teams outside of the New York market.
Everyone's jumping on the bandwagon. And speaking of Jalen Brunson, he's got like Knicks royalty lineage, right? Because his dad also played for the team as well.
Yeah, Jalen Brunson has that, exactly. He's been within the NBA since he was a little kid. He grew up, you know, watching his dad. And I think that's the other thing, too, that sometimes people don't love, you know, people whose parents played in the league and stuff like that, Nepo babies, as they would call them. But I think Jalen Brunson embodies it so well that he doesn't shy away from it, but he also is not like saying, I deserved this because of my dad.
He works for it.
Yes, absolutely.
He works for it in every game, and you see that. So I want to bring in the World Cup into this because John Tucker has been very distressed about the possibility of an NBA final game here in New York and the possibility of a World Cup game at MetLife. I mean,
because it's all about me.
It's all about getting John in and out of off the island of Manhattan.
It's going to be a tough day. It's going to be a tough day in Manhattan to get people in and out. I would say take the bus if you could.
And what day is this going to be,
Johnny,
by the
don't
way?
do the bus.
Yeah. It will be Tuesday, June 16th. Okay. We have the game. This is only if the finals go into Game 6. And, you know, you never know. We'll see Game 2 tonight, and the Knicks are obviously up by 1. But if the finals go into Game 6, then we're going to see that at the same time that France and Senegal are playing at MetLife Stadium.
France.
Interesting.
That's it, which is a hot ticket. France is one of the best teams.
Do we know why costs of tickets are so exorbitant? Why has that happened? Because it hasn't necessarily happened in the past, has it?
For the World Cup?
Yes, World Cup.
Yes, because FIFA came in and they just sort of adopted this U.S. model of ticket system, and which really, really bothered the rest of the world, and people didn't really understand. You have all of these fans in Europe who are very confused because they're capped everywhere else, but from people I've talked to in the situation, they say, listen, if we didn't do it, then it was going to be done to us on the resale market anyway. So they're just trying to get a little piece of the
It's
pie.
called dynamic pricing.
Yeah.
Something that Live Nation has been on
I
and
hate
off trying to
dynamic
do that
pricing. I hate it.
Yeah.
Well, again, as Vanessa was saying, it's where do you want that incremental ticket price to go above the face value to the secondary market value? Do you want it to go to the scalper, or do you want it to go to the host of the event who's putting on the content? That's the theory behind it, I guess.
Yeah, and I think the thing with FIFA is their whole idea is that their revenue goes back into soccer throughout the world. That's their job.
Yep.
So to get more money and more revenue, I guess that's what they're hoping for, but it's not the best optics in the world.
Before we let you go, are you attending any of these matches or games?
I will be attending some of the World Cup matches. Yes, I hope we have so many people across Bloomberg who are going to be attending. I think Randall Williams, our friend Randall will be going to the first game at MetLife. I'm going to be attending the first game in Philly. So we're going to see how these different cities really handle everything, because every city's handling it completely differently.
I mean, the thing, here's my simple take, which no one asked for. U.S. Soccer, whoever that entity is, ceded too much power to FIFA. It's our country, our venues. You want to host your tournament in our space, we'll tell you how it's going to work.
Yeah, that's not how FIFA operates.
That's not how FIFA operates. Sorry, Vanessa. Thank you so much. We appreciate it. Vanessa Perdomo Maglione. I'm just going
Congratulations to Vanessa as well.
So we got that there. I'm going with Maglione. All right. Thanks very much, Vanessa. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg's radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
All right, Scarlett Fu, she has left the studio. She's running over to the TV studio to get ready to launch her TV show at noon with Tom Keene. Not to worry, Christina Kino sits in for Scarlett Fu, so we're in good hands. I'm Paul Sweeney. This is the Bloomberg Intelligence Program. Coming up in this hour, we're going to talk to Yelena Shuliatieva, senior economist at the Conference Board, get her thoughts on those job numbers, stronger than expected. Jessica Nix, Bloomberg health reporter, on the big take story, talking about Ebola, exposes how aid cuts hollowed out global disease defenses. It's Friday, which means we talk municipal bonds. We'll do that with Nish Patel, SMA Fixed Income Portfolio Manager, Parametric. That's coming up. Matthew Blockson, Bloomberg Intelligence Senior Technology Analyst. We'll talk to him all about kind of what's happening in the world of tech. We've got the SpaceX deal in the market as we speak. So a lot going on over this next hour. Right now, let's kick it all off with John Tucker and the Bloomberg Business Flash.
All right, guys, let's start with the yields. The payrolls report this morning raising bets. The Fed's going to hike rates later this year. So the 2-year, which we always say is more policy reactive, that is up, well, close to 11 basis points right now at 415. Stock traders don't like the idea of higher rates, so the major industry groups, information technology, right now, that's the biggest drag home to the semiconductor stocks. NVIDIA, go right down the most active list. Those shares down 4%. Intel shares down over 6%. Micron Technologies down 5.6%. Overall, the S&P 500 right now, 76 points lower, down 1%, 7507 on the index. The Dow down 105 points. That's a decline of 0.2%. And the NASDAQ Composite Index, 520 points lower, down right now 1.9%. In the meantime, Keith Lerner at Truist Advisory Services was looking for a pullback in tech stocks.
The tech sector is about the most extended above its 200-day moving average since the October peak. Still bullish longer term. I just think we're due for at least some consolidation, maybe a little bit of a step back short term.
Shortly after starting to market this deal, SpaceX already receiving orders for more than the shares available in this record-breaking $75 billion initial public offering. So the deal is expected to price June 11th. You see this one? It's apparently a new trend. Couples who can afford it are starting to ask builders to design for 2 separate primary bedrooms in their homes. Not good. So apparently,
You want your own bedroom?
No.
yeah. Well, it's coming from snoring, different schedules, competing climate preferences, and those wearable trackers that generate data on how well we sleep. This is according to the Academy for Sleep Medicine. 31% of adults have opted for what they call sleep divorce, sleeping in different bedrooms. Ricky and Lucy in their bedroom, they had separate beds.
That's true, they did.
Yeah.
Really?
Maybe that's how they kept it together all those years.
Yes.
Oh, what a great show. Anyway, we checked the markets for you all day long. Half the audience didn't get that reference. Right here on Bloomberg Radio, I'm John Tucker, and that's your Bloomberg Business Flash. Hi, Christine.
Hello. Thank you for that tidbit.
We got Christina Kino sitting in for Scarlet Fu for this hour. Scarlett's over on the TV set getting ready for the maiden voyage of her midday TV show with Tom King, which will be good stuff, we know. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As John was just reporting, stocks are down today. Let's take a look at some of the stocks on the move. We can do that with Matthew Griffin from Bloomberg News. Matt, what are you looking at here?
Well, Paul, like you said, stocks down today, and I've got a few decliners on my screen. The first one, and the one attracting a lot of investor attention, is Lululemon. It's just the latest dismal day for the yoga wear retailer. They cut their annual forecast as their performance in North America is still under pressure. They now see revenue in the range of $11 billion to $11.15 billion for the fiscal year. That's below estimates. Gave outlooks for the current quarter that were well below expectations. There were some points of strength. Sales are up in China. At the same time, they said traffic has declined in the Americas. Fewer shoppers are making purchases, and they're under pressure from tariffs. So again, those points of strength, not enough to turn things around. This stock, ticker Lulu, down about 7%, trading at levels not seen since 2018, and creating potentially even more of a challenge for incoming CEO Heidi O'Neill, who's going to join the company later this year.
Yeah, I don't really know how they were going to redeem themselves after trying to sell people see-through leggings. I think that was just, the beginning of the end. But tell us more about other stocks today, Matt. How about DocuSign?
Well, DocuSign, again, this has been a story. These software companies getting hit after they report. This stock, ticker DOCU, down almost 5% after they gave a revenue forecast for the second quarter. Now, you compare that to Wall Street estimates, and it doesn't really look bad. That estimate is $865 to $869 million. The midpoint actually slightly above what analysts were looking for, but it just wasn't enough to kind of snap investors out of wait-and-see mode here. That's what analysts are saying. The company is deploying an AI-powered contract tool. We really haven't yet seen what that's going to do for their results. And what Morgan Stanley says here is investors want double-digit growth out of this company. They're not getting it right now, and the outlook they gave is not enough to get them back to double-digit growth. This company now, as a result, has lost about a third of its value this year after this sell-off.
All right, give us one more here.
I've been looking at Coinbase. It's one I keep an eye on. Another stock that's really had a dismal year, lost also about a third of its value, and extending declines today. That's ticker COIN, down about 6.5%. You've got a sell-off in Bitcoin today, which isn't helping. That's been a recurring story. And you also have Baird naming the crypto exchange a new bearish pick. They say crypto volumes are weak. They're likely to stay weak. Actually, they point to a bit of an uptick in crypto trading in June. They say, though, that trading is selling. So Coinbase gets a cut of that in the short term, not healthy in the long term there.
All right, Matt, good stuff. Appreciate it. Matt Griffin, Bloomberg News, giving us the latest there. For more conversations like this, subscribe to our Stock Movers podcast. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Certainly on the eco front, the big story today was stronger than expected jobs data. The unemployment rate stays steady, but really came in and added some more jobs than expected. Let's break it down with someone who does this stuff for a living, Yelena Chuliateva. She's the senior economist at the Conference Board. Yelena, what did you take away from this jobs report today?
Yeah, hi. Yeah, I think the job market, job gains remain concentrated in very familiar sectors, such as leisure and hospitality, healthcare, and local governments. In fact, those three industries made exactly the gain that is equal to the total payrolls gain in the May report, 172,000 jobs. So I would say that, yes, of course, the third consecutive gain of this magnitude is a positive signal that the labor market remains stable, remains the backbone of the economy, but at the same time, the lack of diversification in the labor market and the economy overall creates negative risks going forward in case of an exogenous shock. And we are going through an exogenous shock right as we speak with the conflict in the Middle East. So I would just caution and take those results with a little bit of a grain of salt. It's not some kind of a breakthrough result. It's kind of more of the same, despite the headline gains that exceeded expectations.
Now, Elena, I know that you're kind of seeing this jobs report as a reason to maybe remove the easing bias for the Fed, but not necessarily build that case for a tightening bias, right? So what in the data are you seeing that kind of forms that view? And how do you think the Fed is going to take a look at this data in a couple of weeks?
Demand destruction. I think that's what we are going to see. Look, we are getting a new CPI report next week. We know inflation exceeds the gains in wages, and that makes disposable personal income that spending depends on in the negative territory. So consumers are constrained, particularly at the lower end of the income spectrum. Savings rate low, and also there's less of an ability to borrow, right? So look at the delinquency rates that keep rising. So I think that we are set for some sort of a demand destruction and a slowdown in consumer activity as the year progresses. At the same time, investment remains strong, and that by itself is driving some job gains that we saw for example, in the May report. So it's an uneven expansion, and it's a concentrated one. It's not bad. It's a good thing. We'll take growth from wherever, but at the same time, the lack of diversification is always a negative risk.
Is stagflation still in the cards for this U.S. economy, Elena, do you think?
I don't think so. It hasn't been really, stagflation is not a danger unless, inflation expectations get unanchored, and we haven't seen that, quite frankly. So it doesn't mean that, it could not be a case, and it's still a risk, given that we still don't have a resolution on the Middle Eastern conflict, and we don't quite see that in the near term. So I'd say the longer the conflict lasts, the more of a risk that becomes, and especially if consumers see it that way with gasoline.
All right, Elena, thank you so much. Appreciate that. Elena Shulgatieva, she's a senior economist at the Conference Board, joining us via Zoom here. Let's get to the big take story here. We like to focus on the big take stories on the Bloomberg terminal. These are the stories that are just really important stories. A lot of resources get invested in these stories. Deep reporting, deep sourcing, oftentimes some really cool graphics, which makes it good for me. That helps me understand a lot of stuff. Today's no different. Talks about Ebola. The Ebola exposes how aid cuts hollowed out global disease defenses. A strain with no known treatment or vaccine is spreading fast, and the international system built to contain outbreaks is in crisis. Let's learn more about this with one of the writers and one of the reporters on the story, Jessica Nix, Bloomberg health reporter. What you find here, Jessica, because this is Ebola case over in Africa. It seems far away. It seems a little bit back burner for a lot of us here in the U.S. because we have the war with Iran. We have lots of other issues. What did your reporting find out?
Well, there's a lot going on with this particular Ebola outbreak. This is the first time we've seen this strain really explode like it has because there's no vaccine, there's no treatment. And then compounded on top of that, the US has largely left a lot of our global health partners. And some other G7 countries, including the UK and Germany, have also pulled back on some of their global health funding as well. So because of a lot of these countries pulling back, this virus has been able to spread. A lot of the people on the ground and the NGO partners, mutual aid partners, a lot of those formal and even informal networks that would be doing contract tracing or surveillance, a lot of that has been dismantled as well. So that's why it's been exploding in this area.
Now, the story paints Eastern Congo as one of the hardest places in the world to contain an outbreak. What about that region makes the response to this outbreak uniquely challenging?
There's a lot of unique challenges to this one. The geography is very interesting, but also it is an area that's riddled with conflict right now. So that makes it even harder for some of these aid workers to be able to go into the area and talk to people about the dangers of this virus, about safe burial practices as well. Ebola is at its highest infection peak after a person has already died. And so in this area, people are, in their burial practices, really interact with dead bodies. And so that's why we're seeing it spread a lot too, because they just don't know how to handle these bodies, which is really sad.
Well, we've seen President Trump and Elon Musk with Doge cut back on U.S. aid. How much has that impacted this situation, or is this an area where maybe we didn't have a presence?
Well, former health officials from the U.S. say that this has had a huge impact in terms of how we are responding to this outbreak. Because, again, those formal and informal networks are no longer there. U.S. aid was cut back by 83% last year under Doge. A lot of that's been moved under the State Department. State Department officials, though, say, this has had no impact in terms of our response, and that within 24 hours of being notified of this outbreak that they were able to deploy resources. The State Department has mobilized about $162 million to the outbreak area, specifically to Eastern Congo and to Uganda as well.
Now that we've seen kind of more of an outbreak catching focus once again, is there a sense that some of the countries that have pulled back funding, including the U.S., would reverse those positions?
There isn't a sense of that yet. They are pulling a lot of resources into the Ebola response now, but there's no indication that the U.S., for example, would rejoin the World Health Organization. That's really leading the global coordination on this response.
So the U.S. did withdraw from the World Health Organization in early 2025. I would think that would be pretty impactful because I'm sure we were funding most of it, or a lot of it.
Oh, very impactful. The U.S. was the biggest donor to the World Health Organization. So by pulling out of the World Health Organization, their budgets are completely decimated.
So it raises a question, like a lot of other things as the U.S. pulls back, defense, for example, it's time for you guys to step up. Have we seen Europe, have we seen other parts of the world step up to maybe fund what the U.S. was funding?
Actually, no. We've actually seen the opposite. Some of these countries have pulled back on their funding.
Wow. And then, yeah, that doesn't seem very promising at all. I mean, prior to kind of the big outbreak, were there any kind of early signs that response capabilities and surveillance were already deteriorating?
There were some early signs just because this virus was spreading for a while. There were rumors about this type of fever going around, but because this type of strain is a little bit rarer, no testing was able to pick it up. And then it also makes it more difficult because, like I said, this is a conflict area. So when we're transporting these specimens to go towards laboratory testing, a lot of that was destroyed in transit because they weren't cooled properly. So we weren't able to pick up, oh, this is actually a different type of strain that's more dangerous and has no vaccine.
All right, about 30 seconds left. What are the experts saying? How does this play out, do you think? I mean, there's no known cure, vaccine, that kind of thing?
Experts are very concerned. There is a rush right now to be able to work on treatments and work on vaccines. There's no expectation that this is going to become the next COVID or the next pandemic. That's just not how Ebola works. But it's very worrying to be able to look at an area like this and see a virus this deadly spreading this quickly.
All right, Jessica, thank you so much. Appreciate it. That's the Big Take Story. It gets a green B. And what does a green B mean, folks? It means these guys did a really good job. It's an exclusive reporting here, so we appreciate getting Jessica in our studio. Jessica Nix, health reporter for Bloomberg News, joining us here in studio. You can read more of this story and all the other cool Big Take stories by going on to the Bloomberg terminal or Bloomberg.com. bloomberg.com/big take. They get their own slash, so that's how good that stuff is. Looking at the markets here, continued sell-off in the markets. The S&P off 87 points. It's about 1%, and the Dow's off 180, third of 1%. All the actions in the tech-heavy NASDAQ. Chip stocks selling off about 5%, so we got the NASDAQ off about 2.1% here. WTI crude oil off $1.70, sitting right around $91 per barrel. Tom from the Upper East calling in for a quote on Bitcoin, down 4.5%, 60,700. I think 60,000 is a support level.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. And to get a free gold and silver information guide and to learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. So the tech stocks leading the declines today, in particular the semis. The Philadelphia Stock Exchange Semiconductor Index down close to 6% right now. And among the most actively traded stocks, NVIDIA right at the top of the list. It's down over 4%. The defensive sectors, consumer staples, healthcare, utilities, those are some of the standouts today. And in terms of the single stock moves, Lululemon Athletica, those shares right now down 7.5%. The company lowering the annual forecast. They're seeing deteriorating performance in its most important area, North America. DocuSign falling 5%. They provided an inline forecast for second quarter revenue that left investors wanting more. And after the much better than expected payrolls report this morning, the bets have increased that the Fed's going to raise rates before the end of the year. The 2-year yield 11 basis points higher right now at 4.15. S&P 500 is down 94 points. That's down 1.25%, 74.89 in the index. The Dow Jones Industrial Average down 195 points. And the Nasdaq Composite Index down 607 points. That is a decline of 2.25%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, today's Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. So there you go, our good friends at BAM. Let's talk munis because it's Friday. We can do that with Nisha Patel, SMA Fixed Income Portfolio Manager at Parametric. Nisha, thanks so much for joining us here. One of the themes I hear from your market, the municipal market, is you got a lot of supply out there. I mean, 24 was a record year for issuance, 25 another record year. What's 26 look like?
Yes, great to be here, Paul. So you're right. I think the biggest theme here in the muni market right now is technicals, and supply continues to dominate. So we're looking at, roughly 250 billion so far year to date. To put that into perspective, that is higher than where we were last year in 2025. So, a lot of this is just due to pent-up demand, right? Infrastructure needs, financing needs that municipalities have. The reality is that the economy has been pretty resilient. So you're seeing that flow through strong tax collection, strong balance sheets to municipalities, and that further reinforces, right, the kind of confidence and the ability to then finance these projects. The biggest takeaway I would say that has been a positive this year is that we're also seeing the demand side also keeping up pace and actually very strong relative to where we were last year. And that has really helped absorb a lot of the supply so far this year.
Nisha, any concerns at all about supply indigestion, or as you say, is the demand strong enough to offset any of that?
No, I think that's a great question. So, so far we've seen inflows into the municipal bond market being very supportive. And, if you think about it, it's for really a key reason of, as yields were elevated in the municipal bond market, especially as the war broke out, Treasury volatility, right? There was a incredible and compelling opportunity, especially for high tax bracket individuals. So we have seen strong inflows. I think the expectation is as we head into these summer months, typically June and July, do come with fairly heavy reinvestment flows into the market. So what that means is a lot of the maturities, coupon payments are structured. And given where we have yields, especially in the longer end of the curve, again, compelling opportunity remains. We're expecting these inflows to continue. But, I think that's a great question. Key question here, Christine, is do we continue to see inflows? Obviously, today's uptick in Treasury yields provides, kind of creates another element of volatility in terms of rates. But I think if we see rates, absolute yields staying fairly attractive, the reality is that tax rates are not going down, right, for the high tax earners. In fact, we could be seeing the trend in the opposite direction. I think absolute yields here continue to be compelling. So hopefully we see that momentum from the demand side continue and at least be supportive in light of the supply.
Well, in my municipal portfolio of New Jersey stuff, it's laddered on the maturity side. Where in the curve do you feel most comfortable with your clients?
Yes, that's a great question. So I think a lot of the pressure that we've seen over the past year has been particularly in the longer end of the curve, which makes sense, right? Many of the municipal bond investors are retail individuals.
And I would say a year ago, there was definitely a little bit of resistance of extending out the curve. So if you look at the muni curve today, out in the long end particularly, we're looking at, a fairly steep municipal bond curve, especially relative to treasuries. So Paul, I would say there is an opportunity to extend. I think you want to selectively extend out into the longer end of the curve because you are able to pick up tax equivalent yields here north of 7%. And in a state like New Jersey, Paul, it could be north of 8%, which is fairly compelling on a risk reward basis.
That's right. That's when I call up the governor. Picks up on the first ring. I'm the largest private creditor.
There you go. Yes.
That's because New Jersey has the highest property tax rates in the nation.
Yes.
Thank you.
Nisha, thank you so much.
Yes.
Appreciate that. Nisha
Thank
Patel,
you.
SMA Fixed Income Portfolio Manager for Parametric here. Let's get back to the world of technology. Technology taking it on the chin here today. The Philly Semi Index down about 5%, bringing down the overall NASDAQ down about 2.2% here. But let's be honest, these things have been just ripping forever here. But let's check in with somebody who does this stuff for a living, Matthew Bloxham. He covers all the TMT stuff for Bloomberg Intelligence. He's based in London here. So rough day for the semis here, Matt. What's going on out there in the world of technology when you talk to tech investors? Because this AI trade just seems like it's got so much legs left in it.
Yeah, and obviously it's had a great run for the last few weeks and months. We've been talking about that a little bit here today, actually, at the desk, and I think at least to some degree you have to think that people are making a little bit of room for the SpaceX IPO and what they hope will be an allocation, because you kind of feel, who knows where people are going to get the money from, but you would think that it's going to come from some of the other big tech holdings, which are arguably probably bigger holdings and more liquid. So that's our sense that, at least to some degree, it's a little bit of liquidity for that.
Yeah, well, Matt, of course, Broadcom in the news this week because even though it was a solid set of results, it was still disappointing because such high expectations for all of these chip companies here. But, one of the details that we got is that the CEO saying AI growth is so strong, they're not even looking at acquisitions. They're thinking that it's a distraction. Where does that tell you where we are in terms of the AI infrastructure spending cycle? Are we still in the early innings here, given that view?
Yeah, I think so. And I think it also talks to the fact that that they feel like they're executing well against their plan. And actually, when you look at the numbers will tell you they are, because obviously the big part of the plan is to pivot towards AI. In the quarter, they reported that AI sales were up 143%. And if I've remembered it correctly, for the forward quarter guide, they're talking about a more than 200% increase in AI revenue. So yeah, that forward guide was a little bit shy of where the market was. $16 billion of revenue versus 17. But that's a huge growth rate. And so I think it tells you that they're comfortable that they've got all the assets and capabilities they need to deliver on the plan.
Matt, you mentioned SpaceX, and of course that's they started their roadshow yesterday, and I think they're in New York today, and maybe a couple more dates here in the U.S. Do you know if SpaceX is coming to London?
I don't know, actually, for sure. I guess it's certainly a possibility, but I've not seen any specific plans.
What's when you talk to folks, what's the feeling about SpaceX? Because obviously if you're looking for a pure play kind of on Elon Musk, which has got a space component to it, a kind of a telecoms component to it, and as well as an AI component, what are the discussions you're having with your clients?
It's incredibly polarized. Maybe not that surprisingly. I think the opportunity and ambition they set out in the S1 filing is almost overwhelming. There's so many parts to it, and it's so big. This $28.5 trillion market opportunity they talk about, and when you see some of the components that go into that, particularly things like the orbital data center strategy, the ambition they have for the Starship rocket launch platform, I think some people kind of find it a little bit hard to grasp. But at the other end, some of these things could be really quite profound in how they shake up existing markets, the data infrastructure, the data center infrastructure market, the big AI players like Anthropic and OpenAI. So this has really quite significant implications for all the big parts of the market, and yet it's really splitting people right down the middle. Some people are just kind of very much bought into the Elon Musk drinking that Kool-Aid, and at the other end, you just got people thinking, this isn't going to play out the way the market thinks. And I think certainly, obviously, we've seen some numbers today in terms of what the lead banks are pitching as terms of the revenue growth opportunity. We're talking about adding $400 billion of revenue in 5 years and continuing to grow beyond that. A $450 to $500 billion revenue number would put them in the top 10 listed companies by sales in the world. There's only really Amazon and Walmart that would be substantially bigger than that. So it's an enormous task to kind of scale your business quite that quickly. And to do that, you need a huge amount of infrastructure. And I guess one of the questions would be, can they really deploy enough infrastructure, even if the market is there? Can they deploy the infrastructure quickly enough to kind of get the revenue flywheel going so quickly?
All right, interesting. I mean, there's a lot for this market to digest here with this. And at the end of the day, it just comes down, presumably, a call on Elon Musk. You're either there or you're not.
Absolutely.
So, Matthew, thank you so much. Appreciate it. Matthew Bloxham, he's the senior media and tech analyst at Bloomberg Intelligence. He's based in London. Again, the SpaceX is on the road. I've got a look at a roadshow schedule. Does not have them going to London or anywhere other than New York, LA, Boston.
Yeah, I mean, London, the UK, isn't necessarily seen as a big tech hub these days. They're trying to change that, but
no, but it's after New York, it's the biggest financial market in the world. You have to tap into that, but maybe they've got a different strategy there. So we'll see how it plays out. So again, it's a bet on Elon Musk, and not a good tape today for the tech companies. Again. The SOX, the Philly Semi-Stock Exchange Index, down about 5%, leading the NASDAQ to a decline of about 2.3%. So we'll keep an eye on that. I don't think anybody really wants to take much risk going into a weekend. I'm either going to sell what I got or I'm going to hedge what I have, because I never know what's going to happen over 2 days from the social media perspective. Could just kind of throw a wrench into everything. Coming up, Don Craven, CEO of National Minority Supply Development Council, get his thoughts on what's going on the global supply chain. Onshoring, it's a thing. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. So what's in the driver's seat? Let me start with the rates. The passenger seat, semiconductor stocks, and it's all kind of related. The rates are higher right now after the jobs report. The semiconductor stocks, they are lower. So good news is bad news. The job growth topping all forecasts, boosting bets. The Federal Reserve will consider an interest rate increase this year in order to contain inflation. That's the bad part. The major stock averages all lower right now. As we look at some of those semis, ARM Holdings, that's down right now 9%. Marvell Technology, 8% lower. Qualcomm down 7%. Shares of NVIDIA, which are actually the most active, they're down just about 5%. You get the picture. Gil Luria at D.A. Davidson says tech investors really at this point need to be more selective.
The developments in AI are so rapid that it's very hard to predict when we get to peak functionality, when we get to quicker adoption. So we have to play the cycle carefully by going to the less demanding valuations.
And let me start with the two-year yield right now, 11 basis points higher, 415. The S&P 500 down 106 points. That's a decline to 1.4%, 74.77 on the index. The Dow Jones Industrial Average down 260 points. That's down just about 0.5%. And the Nasdaq Composite Index down 2.5%. This is a 666-point decline right now. On the verge of setting the record for the biggest ever listing, the IPO for SpaceX oversubscribed, according to our sources. And this deal is expected to price June 11th. So next week, June 11th, with trading the next day, of course. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Christine and Paul, have a great weekend.
Absolutely. You too, John. Enjoy the beach. Jersey, we have a good beach weekend here at the Jersey Shore, that's for sure. Christina Aquino sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. June is Pride Month, so over the next couple of weeks, we're going to highlight segments on topics related to equality. And today we're speaking with Don Cravens, CEO at the National Minority Supplier Development Council. Don, thanks so much for joining us here. You guys have been around a while, since 1972. Tell us what your purpose is, what you guys are focusing on.
Well, good morning. Thanks so much for having me. You're right. 53 years has been around for a while, as I've turned 53 myself. NMSDC has been around helping corporate America by connecting companies with qualified, certified, smaller businesses and helping them both grow, innovate, and compete. So we represent about 16,000 certified, verified, minority-owned businesses, and about 1,700 or so corporate members, larger companies across the country. And at the core, we connect people to see them work together, to help them grow together, to help them build stronger supply networks together. Because we know that when a big business does business with a smaller American business, everybody wins. The big business gets innovation, they get a local supplier, small business hires, and unemployment numbers go down, like we've been seeing in our jobs report today, and America wins. And so that's what we've been doing since 1972.
Don, how has your world changed, if at all, under this second Trump administration?
Well, there's been a lot of headwinds and political headwinds as people think about equity and diversity and all of those issues. Our world hasn't changed a whole bunch, though, and our mission has not changed. Our mission has always been about business and access and level playing fields. And we've tried to, we've spoke to folks on both sides of the aisle about that. And so what I've said to our team, to our staff, to our corporate members is that we are keeping focused on our first principles, which are simply about helping connect big business to small business, helping connect big business to suppliers that are local so that they can have supply chains that are right here in America. And so we've just stayed on mission. We've stayed on task and continue to explain, as I was saying earlier, that when our suppliers win, when they have an opportunity to provide goods or services to governments or to larger businesses, it's good for the American economy. What we know is last year, our certified businesses, our 16,000 certified businesses, they generated nearly $600 billion in annual revenue and hired 2.2 million people. Those weren't just jobs in the minority community, those are jobs for all Americans. And so we've just stayed on task, telling the good business case of why it's important to have resilient supply chains here in the country.
Access, Dawn, and one of the things that we're looking at the moment is potentially a more challenging environment to for small businesses when it comes to access to capital, right? So talk to us about how that is going at the moment, especially in the sort of environment where it's a K-shaped economy, higher income segments of the economy doing just fine, but perhaps a more challenging environment for the rest of the group. How's that shaping up for the businesses that you're working with?
Well, access to capital is the number one issue that every small business in this country has to deal with, regardless of race or geography. Minority businesses continue to see tightening and difficulties and barriers when it comes to access to capital. What we do at NMSDC is we continue to educate entrepreneurs about the importance of access to capital. We continue to develop entrepreneurs so that they have the best shot at gaining access to capital. We continue to work with our banks. Remember, our members are the larger corporations. So many of our corporate members are banks, are financial institutions. And so we really do work with them to help identify those minority businesses that may have a great product, a great service, and with some capital can scale, can grow. And so we continue to bring those organizations together. And then one other thing I'll say about that is, and there are a lot of non-traditional lenders that we work with as well, CDFIs and some of those non-traditional lenders that we will bring our smaller businesses to, and they can present their goods, their products, their businesses to those folks as well. And so it continues to be an issue for small businesses, but we're doing everything we can to meet people where they are and to not leave some great, innovative small business or entrepreneur out on the sidelines, and who knows, that might be the next business, the next big business. Most of our great American businesses started small at some point, and somebody took a shot on them, right? And somebody loaned them, made that first loan, and so we're really focused on making sure we don't miss out on that next big thing.
Don, I guess since the pandemic, there's been an onshoring, a friendshoring trend. I would think the onshoring trend would be good for small businesses, all size businesses, particularly small businesses. How has your work changed with that trend?
Our world is that is part of our story. You asked me earlier about the politics. All of our minority suppliers are American-owned and operated businesses. That is what we were created to do, was to certify that our suppliers were owned and operated and controlled by American citizens. And so as we saw during the pandemic, when certain supply chains internationally might have gotten shut down, we tell our larger businesses, our larger partners, get it here at home. And we've got a database of 16,000 businesses that have been certified, American owned and operated. Some of them are small, some of them are not as small. They're all across our great country. They're in different sectors. And so what we tell our corporate partners is, when you're looking for someone nearby to do business with, NMSDC is a great network of businesses to look at. And again, nothing's guaranteed. There's no promise other than access and opportunity to compete. And so, yes, that's part of our story, is let's do business here at home. Let's build these supply chains here at home. And when there's disruption abroad, doesn't disrupt here, because these folks are ready to do business.
Don, thanks so much for your time. Really appreciate it. Don Cravens, CEO, National Minority Supplier Development Council down there in Washington, D.C., working with large companies and small companies to kind of work on that supply chain and the security of that supply chain, which became really a critical issue during the pandemic. We said, oof, we can't be so reliant on foreign suppliers for as many things as we were if there's a breakdown in global supply chains like we saw during the pandemic. So that's been a big move here. S&P off 100, right at kind of the low of the day here. So stocks selling off a little bit here more in the as we approach the noon hour. NASDAQ down 650 points, 2.4%. So we'll get the latest on that Elon Musk, he's on the road with SpaceX. We've got the latest coming up. This is Bloomberg.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Christina Kino sitting in for Scarlett Fu here today. I'm Paul Sweeney. We're live in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube as well. SpaceX is on the road. They started their roadshow yesterday. They're scheduled to price this IPO, the $75 billion IPO, next Thursday after the close to trade on Friday. So that is the schedule. Let's get the latest reporting there. Billy Lipschultz, senior equities reporter for Bloomberg News, joins us here. So Billy, it looks like they kicked it off yesterday. What did we know? What did we hear? Anything new?
Not much new. We did have yesterday evening, Jamie Dimon interviewed Elon Musk for about a half hour. That was streamed on X. That was broadcast to, I believe, about 90 JP Morgan branches. A number of high net worth individuals attended here in New York, attended around the country. Not really anything groundbreaking from Elon from that conversation, but certainly got people pretty jacked up that the man himself was kind of participating in this conversation with Jamie Dimon. But we did break about an hour ago, I believe, that they have officially called the book oversubscribed. So they have officially had more than $75 billion of orders placed, which is a pretty quick turn, though not completely unsurprising, just given how these deals are going to go.
Yeah, well, what's the word in the street? I mean, mega IPO, big size, but any concerns at all that the market is not going to be able to handle this in terms of digesting it, or really everyone's just, let's go buy in?
Well, I think that the debate is, do you believe in Elon Musk? Yes or no is kind of the first start. I think when you talk to investors, yes, there are a number of caveats around the deal in particular, but like Google able to raise about $80 billion, north of $80 billion, kind of assured a lot of people that there's plenty of cash either on the sideline or can be pulled out of things like Bitcoin and other assets. So it doesn't seem like there's any concern about the ability to have investors show up in size for $75 billion. You add on the green shoe north of $80 billion. I think the big question will be, A, how does it trade after that? And B, how are these bankers thinking about allocation? Are we going to see, the PIFs of the world, these big funds showing up in size for $5, $10, $15 billion orders? Or is retail actually going to take down 30% of this deal, like we had reported was kind of the ceiling? Because you do the math, that's north of $20 billion going just to individual investors, which is something we have never seen before.
We were talking to Matthew Bloxham, TMT analyst for Bloomberg Intelligence in London. He was saying that he's talking to some clients and about today's sell-off in the NASDAQ and the Philly stock exchange semi-index is down about 6% today. Maybe that's a little selling to raise some capital to invest in SpaceX coming up and maybe even some of the other AI ones coming around. Is that something you're hearing?
Yes and no. I think when I talk to people who manage a lot of money, this has been the worst kept secret of all time. They've been meeting with SpaceX management since January and taking these trips. This targeted range and targeted size has been discussed for 6 months at this point. I just want to call out, yes, that's a good point. The SOX is down 6%. It's up 81% this year. So I don't think, at least from my conversations, anyone is saying weakness on Thursday and Friday is because people need to clear capacity.
One other interesting news point for SpaceX, and I guess some of the other AI IPOs coming, is the S&P has said they're not going to fast track entrance into the index. What does that mean?
So S&P was reviewing a rule change that would add some of these companies in 6 months instead of 12 months. We saw NASDAQ cut their timeline down to 15 days. Some of the FTSEs kind of exchanges are now like 5 days. So even shorter. I think the bigger news point in that lack of a change from the S&P 500 is not the shorter timeline. 6 months, 12 months. When I talk to people, who cares? They were considering waiving that you needed to be net income positive for 12 months. So you say, what does that mean for SpaceX? Well, they were negative. They wouldn't be eligible anyway if this rule change doesn't happen. And the bigger question from there is Anthropic and OpenAI. They can pull some accounting levers, but these are two companies that people do not expect to be net income positive for quite some time. Does that mean Anthropic IPOs later this year, but it's not in the S&P 500 until 2031? I mean, that's a pure speculation, but when you look at S&P, at least for now, sticking firm to those rules, these are companies that are not going to be in the S&P 500. They will be in the NASDAQ 100 if they choose to list on NASDAQ much more quickly. How does that change how we market watch, and how does that evolve, especially when you think about MicroStrategy being in the NASDAQ 100, but S&P saying, no thanks, Michael Saylor, stay to whatever you're doing.
Yeah. And what do you think is the driver for that decision? Is it kind of the S&P prioritizing market stability over the hype that some of these IPOs bring?
We haven't heard firmly. There is a committee that makes this decision. When I've talked to people around kind of their view, and again, just their speculation, their reading of the tea leaves is S&P has an objective that they want to reach, and that is making sure the S&P 500 has companies that are liquid, companies that have a fair amount of free float, and companies that kind of meet their bar. They didn't want to change that right now. Again, is this something that is reviewed in 6 months? Again, I do not know. I don't think anyone knows. But for this kind of point in time, they are sticking to their hurdles, their thresholds that they want to be met, and we're not kind of at least reconsidering, similar to what we saw with NASDAQ 100. They're an exchange. They benefit from having SpaceX list on their exchange. They make money from that.
All right, Billy, good stuff. We'll stay on top of this. Again, the schedule is, roadshow price next Thursday after the close. Begin trading on Friday, and that'll be an exciting day. I see the Morgan Stanley's a stabilizing agent there, and that's the one that'll be trading the stock. And you make a lot of money doing that, being a stabilization agent. So even if you are not lead left, if you can get the role of stabilization agent, that means you can make a lot of trading commissions on the day of, and then really for the next weeks and months as well, because you're going to know where all the stock is. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. Christine Aquino, thank you for sitting in for Scarlett Fu. Appreciate that for the latest hour. The sell-off continues. We'll highlight NASDAQ down 2.3%. This is Bloomberg. Good morning. 。
ABC News. I'm Mike Dubusky. The job market is showing signs of resilience despite a challenging economic picture. ABC's Sherry Preston has the latest.
Another strong jobs report, this one for the month of May. Analysts have been expecting about 80,000 jobs to have been added to the U.S. economy last month. Instead, they added a solid 172,000, showing resilience despite rising costs from the war. Revised numbers for March and April also show even more hiring than had been reported. The unemployment rate remains unchanged at 4.3%, where it's been for most of the year.
President Trump posting on social media calling the report great and that growth does not mean inflation. The Dallas Fed president and others have recently indicated higher interest rates could be necessary later this year. The Senate has passed a $70 billion immigration enforcement package, not included anything to stop the anti-weaponization fund. More from ABC News senior political correspondent Rachel Scott.
For more than 18 hours, Democrats and some Republicans introducing measures to rein in the fund, aimed at compensating President Trump's allies, possibly even the rioters who attacked police officers on January 6th. All of those efforts failed. For weeks, acting Attorney General Todd Blanche defended the fund. But after a firestorm of criticism, he testified it had been dropped.
Since then, President Trump has indicated he doesn't know what the future of the fund might be and called it a beautiful thing. A blast of summer heat this weekend taking aim at the East Coast.
One thing working for us is even though New York City looking gorgeous this morning at almost 70, going to near 90 today, over 90 tomorrow, the dew points are low, meaning that the humidity isn't that thick. However, Philadelphia warms into the 90s, low 90s, maybe even mid 90s, and they have gone remote for Philadelphia public schools.
ABC News Chief Meteorologist Ginger Z. You're listening to ABC News. Almost a year after she was acquitted for murder, Karen Reed has filed a new lawsuit against two Massachusetts police departments, who she claims led a conflicted and corrupt investigation against her. ABC's Aaron Katersky has more.
Reed accused the Massachusetts State Police and the town of Canton Police Department of hiring virulent bigots, former Sergeant Sean Good and former Trooper Michael Proctor, both of whom testified against her. The lawsuit claims Proctor and Good secretly and proudly wore badges of hate and had long-standing and deeply held biases against women that drove them to target and frame Reed for the murder of her Boston police officer boyfriend, John O'Keefe.
The lawsuit quotes text messages from the policeman making disparaging remarks. There's a new potential breakthrough in lung cancer detection with a blood test that could detect the cancers before they develop. More from ABC News Chief Medical Correspondent Dr. Tara Narula.
What if we could pick up on inflammation before a cancer ever develops? That's what researchers here wanted to look at. And so they essentially used a UK biobank of blood and machine learning, and they identified 14 proteins in the blood that they called a signal or signature that predicted those at risk of lung cancer over 5 years before development of the disease.
Experts stress the screening is still in its early stages. And the CDC is out with a new warning about listeria after an outbreak linked to soft ricotta cheese from Clover Hill Dairy. It's caused one death. I'm Mike Dubusky, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Traders harvest gains as the market predicts rate hikes today. Welcome to the Friday edition with a much stronger than expected jobs report leading the way here and sending rates higher, pulling stocks lower on this Friday. Just a week ahead of the biggest IPO in history. We're going to dig into the jobs data and the bond market in just a moment with Stuart Paul at Bloomberg Economics. Republicans move one step closer to giving tens of billions of dollars more to immigration enforcement in this country. We're going to bring you inside an all-nighter at the Capitol with Mike Dorning from our Capital Influence team. And we'll have analysis from our political panel, a good one today. Bloomberg Politics contributor Jeannie Shanzano, joined by Republican strategist Mark Short. Let's get to those markets right now. Not looking too bright today. Charlie Pellet has the Friday trade from World Headquarters in New York. Hey, Charlie.
Hi, thank you very much, Joe Matthew. All about the economic data. We've got you covered with the Dow, the S&P, NASDAQ very much in the red. Lows of the day on the S&P 500 index. Crude oil moving lower. Wall Street's historic weekly run poised to come to a halt. Stocks and bonds falling after a solid jobs report. Added to speculation that the Fed's next interest rate move will be a hike. So here's where we stand. S&P at 74.68, down 116, drop there of 1.5%. We've got the Dow after yesterday's surge down 335, giving back 0.6%. NASDAQ plunging 690 points for the NASDAQ Composite Index, a drop right now of 2.6%. The NASDAQ 100 Index, full of big tech names, down 2.8%. All of this with the VIX just below 18 now, a 10-year at 4.53%. With a 2-year, 4.15%, and the 30-year, 4.99%. Gold at $43.29 the ounce, down 3.2%. Crude, major move there. WTI, $90.85 a barrel. West Texas Intermediate crude down 2.3%. Barrel of Brent, $93.57, a drop there of 1.5%. Bottom line to all of this, Friday's jobs report has Wall Street boosting bets on a Fed hike this year. Job growth at 172,000 topped all forecasts in May. Jeff Rosenberg is senior portfolio manager of BlackRock, and on Bloomberg Open Interest, he talked about the outlook for the Fed.
The question is, will the Fed get out ahead of where markets are pricing, or are markets going to try to push the Fed? So far, it's the latter. The markets are out ahead of the Fed, and really what we're seeing here, likely to see here, I should say, in the June FOMC is the Fed playing catch-up.
BlackRock's Jeff Rosenberg and our Stuart Paul will have a whole lot more on the jobs report and the Fed coming up in just a moment. I mentioned crude oil lower, so are the oil majors. Case in point, ExxonMobil down 1.1%, Chevron down 0.5%, ConocoPhillips down by 1%. Lots going on. We got you covered. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet live from New York. We're going to need Charlie's help today to get through this one, and he'll be back in about 15 minutes time here. The S&P 500 extending its decline, beyond 1.5%. To see the NASDAQ down over 2.5%, a bit startling. Although we got real used to the sell-offs on Friday ahead of the weekend, right? When there were big questions about the future of the war with Iran. It's not driving markets too much outside of energy prices, and they're lower today. So don't you guys know how this works? You're supposed to buy the dip? Are we not there yet? I guess not. Even Bitcoin's lower. This thing going to fall below $60,000 here while we're on the air? We'll find out together on the Friday edition. We're here for whatever we get, guys, on Bloomberg Radio, on satellite radio, channel 121, and on YouTube. Search Bloomberg Business News Live. You know, the big worry, of course, is that this is the beginning of the liquidation, so everybody can go buying a week from today, right? SpaceX. Where's all the money going to come from? You hear us ask this every day. Well, maybe it's going to come from AI. Maybe all these stocks that are lower here. Micron Technology, anyone? NVIDIA? Bitcoin? All of a sudden, people could be sitting on a pile of cash to put to use with SpaceX next week. It's going to be really interesting to see how the market works, especially outside of a very busy earnings season as we count down to the big IPO. That's right, James. This is the official program of the dip buyers, and we're counting on you on this Friday edition. Where we get jobs data, at least, look, the jobs numbers are blowing the roof off. And ironically, that's part of the problem, because now we've got a market that's betting on interest rate hikes. Remember when President Trump thought he'd get a cut by tapping somebody like Kevin Warsh and harassing them online, and it's going to be really difficult. President on Truth Social, with a great jobs report, like just announced, stocks should go up, not down. That's the way it was for 200 years, he says. Growth does not mean inflation. How else can a country attain greatness? Well, these are great questions that we'll ask Stuart. We did talk to Kevin Hassett earlier today on Bloomberg. You're talking about the way we should be considering the jobs data right now and the overall strength of the economy. Here's the president's chief economic advisor.
We really love going through the Bloomberg data, and we have this thing that I like to look at, which is the probability distribution of all the forecasts for the jobs number before it comes out. And when I looked at it after I got these numbers, I saw that the very, very top person was low by about 40,000 jobs, which shows that the Trump economy is surprising Wall Street analysts over and over again, and they need to maybe think about getting the supply side of their model fixed.
All right, so no one has any idea what the heck's going on. What did we get? 172,000 jobs. They thought we're going to get 80,000. Unemployment rate, though, holds steady at 4.3%. This is interesting. I know there are two different surveys, but how do you keep adding all these jobs and the unemployment rate is stuck there? We're going to look at wages. We'll look at participation rate and all the rest of it and see where the strength and the weaknesses may lie with our good friend Stuart. He is Bloomberg Economics' U.S. economist. At the top of the totem pole. Stuart Paul, great to see you. Happy Jobs Day.
Happy Jobs Day.
How could we be so far off? This thing is more than twice expectations.
Yeah, you know what? I feel like I need to defend myself against Kevin Hassett here, but this is what I want to point to is that the totality of the labor market data that we look at going into Jobs Day needs to be taken into consideration so that we can set our expectation about the upcoming non-farm payrolls number. And yes, the headline non-farm payrolls number was through the roof at 172,000 jobs added during the month of May. But let's also talk about broader labor demand. Well, the April jolts that we saw earlier this week showed labor demand increase basically just in professional and business services, almost certainly just demand for accountants ahead of tax day. So on the labor demand side, relatively weak. If we look at the PMIs, again, firms that were surveyed by ISM reporting declining headcount. When we look at the jobless claims data that we saw for the end of May, released just yesterday, we saw a pretty substantive uptick in jobless claims. So it's no surprise that the consensus was materially lower than what we ended up seeing. So you know that I like to go pretty deep into the data to get a more nuanced view of what was actually going on behind today's jobs report. And hiring is really just concentrated in really two industries right now, just healthcare and leisure and hospitality. And of course, healthcare employment is rising basically just as a consequence of poor demographics. We need a heck of a lot more nurses and home health aides than we do teachers, just given the demographic profile of the United States, the aging of the population. And when I see a lot of hiring in leisure and hospitality, there are two things that it reminds me of. There are just two things that jump to mind. First, it's downstream of immigration policy. More restrictive immigration policy is going to mean that there is going to be additional hiring of leisure and hospitality workers who are native to the U.S. And the second thing is that they're not very high-paying jobs. So when we see really concentrated hiring and we don't see broadening labor demand or broadening wage growth, even when we get an upside surprise in total non-farm payrolls, it's tough to describe this as a dynamic labor market right now.
Wow. Well, Stuart just talked Bitcoin right off the cliff. We just ran the headline. While you were speaking, Bitcoin below 60,000, it just jumped back above it. Maybe the dip buyers are there. I want to hear about wages, Stuart, and your expectation here to see hourly earnings rise 3.4% from a year earlier. If you keep adding numbers like this, now another 170-something thousand workers, at what point do we start worrying about a wage spiral?
Well, I'm not quite there yet. What I saw in the month of May is that if you take into account wage growth, the average duration of the work week, so average weekly earnings, and you factor in the surge in headcount, you get about a 0.4% month-on-month increase in aggregate labor income, and that's pretty solid. That's a little bit higher than what we've been averaging over the last few months. If you look in the personal income report, aggregate labor income growth and employee compensation growth has been running at an annualized pace a touch above 3%. So it's been getting swamped by inflation. Real income growth is getting suppressed by all the supply side shocks that are boosting prices. I'm talking about higher energy prices, higher metals prices, higher prices of chips and core goods. And when that's the case, when real income growth is getting suppressed, it should keep a lid on core inflation. So even as we look ahead to next week's CPI report, I'm expecting to see a pretty tame month-on-month core inflation number, just a touch above 0.2%.
So what's the market talking about here when it comes to interest rates? And we can look at the actual rates moving today. 2 years at 4.16, the 10 years above 4.5 now, the 30 years above 5%. And you've got a market now betting on a rate hike, not a rate cut. But a lot of people don't think that's reality, Stuart. How about you?
I think there are two important things to keep in mind. The first is that markets really are indexing on this headline non-farm payrolls number right now, and they're not seeing a lot of the nuance below the surface that really catches my attention. So when markets see just a blowout headline jobs number like that, you should see bonds trade down. You should see the 2-year up. Maybe a few basis points, 12 basis points sounds like more than enough. Betting on a rate hike, I think, is a little bit premature, again, because negative real income growth, keeping a lid on core inflation, is reason for the Fed to try to maintain some sort of a neutral policy for now. And I want to go to what we just heard from Jeffrey Rosenberg from BlackRock during the audio clip played earlier. And when he mentions that the market is getting a little bit ahead of the Fed, the second thing that comes to mind is that when you see long-term interest rates rise, anything 5 years in the belly of the curve, further out to 10, 30, financial conditions as they are experienced by households that need to finance new homes or vehicles, those financial conditions are tightening. So the markets are doing some of the heavy lifting for the Fed. So as much as we describe markets right now as pricing in a Fed hike, what markets are doing some of the heavy lifting for the Fed. They are providing some of the tightening for the Fed. And so the Fed can afford to be a little bit more patient.
That's really interesting. We've seen this scenario before, and I guess you're right, with a 10-year above, now we're at 4.54. Just think about how that's going to roll through on the 30-year mortgage. Getting back to your point about home buyers. Stuart, thank you for joining us. We get the honest take when we talk to Stuart Paul, and I'm really happy to see you. Bloomberg Economics U.S. economist. It's not what the president is tweeting about. As I mentioned, he says growth does not mean inflation. He's also posting about the reflecting pool, which he says has just opened to rave reviews, but maliciously or not, some say it was a paint job. It was not a paint job. This was highly sophisticated material, industrial strength, could last for 100 years, applied by very talented people, many of whom came from the great state of Oklahoma, where I won 77 out of 77 counties. Hey, Mike Dorning's coming in next, only here on Bloomberg Radio.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Bitcoin fell below $60,000 before bouncing back. Right now we've got Bitcoin at 61,311. It does remain lower by 3.5%, but that fall below 60,000, first time that has happened since October 2024, extending its reversal from market darling after the re-election of President Trump to a casualty of a rapidly changing speculative landscape. Again, Bitcoin now 61,329, but briefly it was below $60,000. Equities lower across the board. In fact, the S&P 500 index right now very close to session lows, down 120 points. We've got the S&P lower by 1.5%. The Dow yesterday at a record, down now by 375, drop there of 0.7%. Tech names hard hit. NASDAQ down 708 points now, down 2.6%. The NASDAQ 100 index down 3%. The Russell 2000 index down 2.5%. All of this with the SOX, the Philadelphia Stock Exchange Semiconductor Index, plunging by 6.8%. The VIX right now just below 18 with the 10-year on this Jobs Friday, 4.54%. The 2-year, 4.17%, and the 30-year, 5.00%. Spot gold down 3.3%, 43.27 the ounce. West Texas Intermediate crude 90.34 a barrel, down 2.9%. Brent crude 93.21, down by 1.9%. Job growth topped all forecasts in May. The unemployment rate held steady at 4.3%. And after swapping out its lead autos analyst, JP Morgan Chase is now decidedly less bearish on Tesla. Tesla shares, however, do remain lower today by 4.4%. Recapping, S&P down 118 points, drop there of 1.6%. 10-year on this Jobs Friday, 4.54%. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
Yeah, Charlie's giving it to us straight today. I appreciate it, Charlie. The news may not be good, but you know you can believe in it here at Bloomberg. And we're going to talk to Norma Linda a little while from now about what she's seeing under the hood here in these markets. It's a real liquidation, almost no matter where you look. Micron Technology, what, a week ago we were talking about this rocket ship to the moon? It's down 8% right now, almost $80. And I could keep telling stories like that. NVIDIA's down almost 5%. So you've got a real bruising session here for the NASDAQ. We'll keep posted on that. This is a Friday with people not terribly fond of the idea of going long into the weekend. A little bounce in Bitcoin, though, James. It's back above 61,000. Maybe we just set a new floor. There were questions about whether Congress could, in fact, set a new bottom in the debate over reconciliation, but they passed this thing. They stayed up all night, and if you've been with us, you know what I'm talking about. It's $70+ billion for ICE and for Customs and Border Protection. This is the skinny reconciliation, Republican only. You just need a simple majority. But it doesn't come easily with this reconciliation because you have to do a vote-a-rama and you have to give a lot of people an opportunity to propose amendments. The big amendment yesterday, the big sticking point that had everybody upset, was the president's so-called anti-weaponization fund. Now, to be clear, that fund doesn't even exist. But lawmakers wanted to have language, since the White House wouldn't provide it, that would keep it from ever existing. They got within one vote. The amendments failed. Bill Cassidy, in fact, did not cross the president after a lot of wrangling and deal-making on the floor. That went down in flames, and I'm just going to fast forward this for you. There were other amendments about the ballroom, a lot of other stuff. Won't matter in the end, unless you're making campaign ads, I guess, because this thing actually passed. And it took till, middle of the night. It was 5 in the morning, I think, right? 52-47, party lines, Lisa Murkowski joining Democrats in opposing it. Mike Dorning hasn't slept yet. Bloomberg's Capital Influence deputy team leader. He's seen a couple of these vote-a-ramas in his time and is with us now in studio in Washington. Great to see you.
Great to see you, Joe.
Did I do okay there in terms of where we stand? That means the House, was supposed to vote on it this morning and they went home.
Well, there's no real rush to get the bill done anyway, because all of this stuff is funded. They have plenty of money for this stuff. It was a kind of an artificial deadline they set to make sure it got done. They'll do it next week. When they come back. They can do it when they come back next week. But your synthesis was right. I mean, the basic question hanging over this is, would Congress really make Trump stop with the weaponization fund? Earlier in the week, they got a pledge from Todd Blanche, interestingly not from the president himself, but from Todd Blanche, that, hey, this isn't going anywhere.
Not moving forward with
Not moving forward with this. And then Trump was kind of like, well, this is really good, but
it's a beautiful thing. He said, I'm not
beautiful
sure.
Thing.
Ask the lawyers.
Yeah. And then they were saying, hey, maybe we should just make it a law that he can't go forward with it. So it's really done. And they kind of played this game where some of them voted for one version and Cassidy voted for a different version, but they didn't like ever team up on one version. So they were allowed to record votes against it while making sure that there was no amendment that precluded him from doing it.
You've got a couple Republicans here, though. Collins, Husted, Sullivan joining Democrats in voting for it. Are they
for the amendment to block it?
Are they on the retribution tour now, or everyone saw this coming?
Well, I don't think they're going to be on the retribution tour because they voted
Trump's
for
tour.
Yeah, I think it was sort of very convenient that they only voted for one that stayed one vote short of being attached.
I got you.
So they were able to kind of register their reservations with voters without actually doing anything that would preclude Trump from doing what he wants.
Something else failed overnight, Mike, and this is pretty amazing here. 47-52 again. They failed to get enough Republicans to pass this procedural vote to renew FISA 702. And we started asking a couple of days ago about this. Bill Pulte, everybody's got a problem. This is the president's interim pick or acting pick for DNI. It has gummed up the works on FISA.
Absolutely.
How do lawmakers get around this?
Well, my guess is they will ultimately do another very short extension, although they might not. So this was already contentious because there were some Republicans and some Democrats who felt like this sort of blank check to the intelligence community to wiretap calls anywhere outside the U.S. Wound up intruding with American citizens too, and was too much of an unchecked surveillance. So they wanted more checks on it. And then you add Bill Pulte to the mix, who's like, using data to go after the president's perceived enemies in his prior job and doesn't really have a lot of intelligence background. And the Democrats are suddenly like, oh, we don't want this guy to have this sort of blank check for surveillance. So that's what the fight is about at the moment, and that's the rub. There are ways around it. You can like keep him on a shorter leash where you're like renewing the authority every 2 weeks and seeing like what happens. Or they could just say, we want to make a stand and we're going to have the government give up this authority until he's out of there. We'll see.
We shall. This is what is going to be a big point of debate when lawmakers come back to town. And so let me just ask you, and I'm not trying to make you laugh here, but they're already talking about reconciliation 3.0. They were before this vote even happened. Look no further than John Kennedy, the senator from Louisiana, Republican, who knows how to drop a line. When people boldly declare we're going to do a third reconciliation package, he said, I generally tell them, I hope you're right. But in the meantime, back off the crank. Is there any chance this happens? They want to use this for fraud when it comes to Medicare?
I'd say there's a low probability that's going to happen because this involves, it allows you to bypass the Senate filibuster rules. And that way you can do things without ever having to make any compromise whatsoever with any Democrats. That's the upside. But the downside is that it's very time consuming and you have to get the Republicans all together, entirely together in both the House and the Senate on something. And that's hard to do even on sort of more tax cuts. So it's possible, but not likely.
You're not holding your breath, it sounds like. If it happens, this is the guy who'll be driving our coverage. Mike Dorning, great to see you. Have a great weekend.
Great to be here.
Sir. Bloomberg's Capital Influence team at it this week in Washington. They'll be back next week. We've got to still wrap up reconciliation, and then we'll move on, of course, to FISA. We've got to move on to this market here. This is starting to feel a little bit desperate with a NASDAQ that's down almost 3% now, more than 700 points. The S&P 500 is 128 points lower. That's more than 1.5%. As we throw everything out, interest rates are rising. 10-year is at 4.54. Nora Melinda is standing by watching all of this live from World Headquarters in New York. Nora, is this being driven by news? Or are we just feeling cranky after the Broadcom and CrowdStrike earnings this week? What's behind this?
Well, of course, we do know that the earnings that we got out of Broadcom really casting some doubt when we think about this run that we've seen in tech stocks more broadly. But of course, it's also that jobs report that we did get today. People parsing this report, we know was a blowout report. A lot of people weren't expecting it to be at the magnitude of jobs added that it was. And so we also did see a revision for April up to 179,000 from 115,000. So a lot for the market to digest. Of course, we also have geopolitics in the background still persistent. But as we think about all these inflationary pressures, you are seeing the market really trying to decipher as to whether or not the Federal Reserve will actually hike this year. The S&P 500 currently, if holding these declines, if it holds through the closing bell, it would be the first weekly decline that we've seen for the index since March, late March. That's 10 weeks straight that we've seen of gains. And so the NASDAQ, of course, seeing a lot of pressure here, some of those tech stocks really getting hit. So as I'm speaking to some of my sources, they're talking about the fact that this isn't necessarily a aggressive sell-off necessarily, but more or less a leadership rotation. So you're seeing a rotation out of some of those larger tech names.
Well, it is worth pointing out that some things are, in fact, going up. The money's not all coming out of the market. It is, in fact, going to some other places, Nora. And to your point, we've got an interest rate problem here, right? If you can make more than 4.5% on the 10-year today, what are you doing playing around with Micron, which incidentally is down now 9%? But we have an appetite for healthcare, right? Look at Eli Lilly. We're in nosebleed territory. Johnson & Johnson, McKesson. What else do you see?
Well, I'm looking at the S&P 500. If you take a look at those 11 major groups in the index, we see consumer staples, the best performing group, healthcare, as you called out, real estate, utilities, every other sector here largely in the red. And as we know, information technology is where we're really seeing the broadest exposure when we see people selling off right now in this market. So investors clearly ditching some of those more speculative, high growth names. You're also seeing Bitcoin earlier falling below that key $60,000 level. So investors are really trying to figure out where to be in this market. And right now, at least in the S&P 500, you're seeing consumer staples and healthcare as being the places that they want to be.
Yeah, might have to call McGlone if Bitcoin keeps heading lower. But yeah, a lot of consumer faces. Starbucks is up. TJX is higher. Costco, Walmart. Kind of interesting here. McDonald's is moving higher. Just not those tech stocks that have been going straight to the moon lately. We've got a little bit of a liquidation, but that money, again, appears to be rotating through the market. Nora, thank you. We'll talk later with Nora Melinda, live from New York, and we'll assemble our political panel next. As I mentioned, we've got a great one for you today. Jeannie Shanzano and Mark Short on exactly what was accomplished overnight in another Votorama on Capitol Hill. In Washington, I'm Joe Matthew. This is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, all very much in the red. Jobs Friday. S&P right now just about the low of the day. The U.S. added 172,000 jobs, far surpassing estimates. Right now, we have got the S&P lower by 131, 74.52 where we stand. You recall this week, we closed above 7,600 for the first time. Right now, the S&P is down 1.7%. The Dow down almost 400 points now, down 0.8%. S&P just about the low of the day. The real damage, though, tech names. We've got NASDAQ down now by 2.9%. The NASDAQ 100 index down 3.2%. All of this with the VIX now above 18, a 10-year at 4.53%, a 2-year at 4.16%, the 30-year 4.99%, and I'll repeat that 10-year 4.53%. Gold down $144 the ounce. Everything selling off down 3.2%, $43.30 the ounce. West Texas Intermediate crude now below $90 a barrel, down 3.3%. Barrel of Brent, the global benchmark, $92.85, a drop now of 2.3%. So again, Jobs Friday with the U.S. adding 172,000 jobs, far surpassing estimates. Kevin Hassett is director of the White House National Economic Council. He was interviewed this morning on Bloomberg Surveillance.
We really love going through the Bloomberg data, and we have this thing that I like to look at, which is the probability distribution of all the forecasts for the jobs number before it comes out. And when I looked at it after I got these numbers, I saw that the very, very top person was low by about 40,000 jobs, which shows that the Trump economy is surprising Wall Street analysts over and over again, and they need to maybe think about getting the supply side of their model fixed.
Kevin Hassett, director of the White House National Economic Council, with a message for Wall Street after earnings. Lululemon Athletica down 9.2%. After earnings, DocuSign down 7.5%. I mentioned tech names being hit hard today. A couple of high-profile chip names. NVIDIA down 5.1%. Micron now down almost 10%. Broadcom down 6%. Advanced Micro Devices down by 9.2%. Bitcoin trading right now 60,853, did get a print below $60,000. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
Okay, Charlie, we do thank you. Charlie, we'll be back with more on the markets coming up at the top of the hour, 1 p.m. Eastern time. Every time I hear Kevin Hassett, he's talking about the terminal. I'm glad that it's working out over there. How many terminals do they have? I wonder. I've just got the one in front of me here, which is all I need to join you every day on Bloomberg Radio. And if you want to watch us, search on YouTube, Bloomberg Business News Live. We'll welcome all the rest of our cameras and our global television audience to the conversation coming up at the top of the hour. For now, though, it's just us, the show before the show, the best that radio has to offer. As the president leaves the bubble, well, he's about to anyway. I think he's running a little bit behind. Maybe we'll catch him in the driveway on his way out. On the way to Chippewa Falls, Wisconsin, which the president will remind you he won in the last election. In fact, when he beat Kamala Harris, only the second time since 1984 that a Republican carried Wisconsin. So he's feeling pretty good about going back, knowing that affordability is the big issue here as the president gets back on the trail to start doing more rallies. $4.22 a gallon is the national average according to AAA. And as I move my cursor over Wisconsin, it is $4.01. So top of mind for people, especially now that we don't have the stock market to point to, hitting new all-time highs, which has been the backdrop for a lot of the president's speeches recently. This has been a pretty tough session, in fact, with interest rates rising, more pressure on consumers, a bond market that's pressuring mortgage rates, and of course, energy prices that are dogging us as well. What will be the conversation there? As he also sits for an interview on Meet the Press while he's in Wisconsin, we assemble our political panel. Bloomberg Politics contributor G.D. Shanzano is with us, our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. And Mr. Mark Short is here too, Republican strategist, chairman of Advancing American Freedom, former chief of staff to former Vice President Mike Pence. He was director of legislative affairs in the first Trump administration. So when we get to reconciliation, Mark will have, I'm sure, some real insights for us. As we begin with the affordability conversation, welcome back, Mark. It's good to see you.
Thanks for having me back.
What does the president say? Is it short-term pain, long-term gain? How do you start to develop or evolve the message when clearly things in Iran are not about to end?
Well, look, I think that the president had opportunities at the beginning of this to explain to the American people what the opportunities were in the Middle East. And I think a weaker Iran, a more isolated Iran, could pay dividends for Americans for many years. I think it also lower the risk premium on energy prices. But it wasn't framed that way. It wasn't framed as if here's the cost for we're asking you to bear for the long-term benefits. And so I think for a lot of Americans, all they know is that from an affordability perspective, prices continue to go up. And I do feel like there's been so much shift in the conversation to the energy policy, and there's no doubt that's driving up gas prices. But inflation was already going up because of the trade agenda. And so it's compounded. I think that the president could alleviate a lot of the energy prices by pulling back on his global war on trade. And I think for a state like Wisconsin that exports to the world, that would be a great message, but I'm not anticipating hearing that today.
Well, that's interesting. He's going to have probably some farmers in that audience as well who are feeling a bit betrayed right now, despite his rhetoric. They're feeling this in any number of ways, not selling enough to China, dealing with diesel prices that are at record highs and so forth.
And particularly for those northern swing states, they're not able to actually trade with Canada anymore because the war in Canada's taken a posture, well, we're going to go elsewhere then for our products. And so yes, I think there's a national security rationale for having a trade policy with China that has repercussions. But again, having an indiscriminate global trade war with even your allies has repercussions. And so there isn't like a backup market where farmers can go right now if they're not able to sell to China. It's not as if they can now sell to Canada instead.
Yeah, sure. Pretty interesting, Jeannie. I don't know what the president's going to say this evening or even in the driveway here when he leaves town. What's your thought, though? The whole narrative around President Trump is that he's at his best when he does rallies, that his chief of staff, Susie Wiles, wants him to get out of the White House. Isn't he doing the right thing?
This is what we were promised, Joe Matthew. We were promised a year in which the focus was going to be on affordability, housing, affordability. And so we see him getting out there. And of course, Wisconsin is critical. We've got that 3rd and that 7th district there. Those are, two of the very few swing districts that we've got up this year. Of course, we just had the Senate primary in Iowa. That's close by. That's something the Democrats are feeling excited about. So he is out there to have a strong message to farmers. And there's nobody who can turn out the MAGA base in Wisconsin, especially the North and the West, like Donald Trump. If they stay home because he's not on the ballot, Derek Van Orden is going to have a big problem, as is, of course, Sean Duffy's son-in-law, Mike Alfonso, who the president endorsed in January. So they need him out there. I think the big question today is, number one, does the president stay on message? We know he doesn't do that all the time, and he's got good news to talk about today, and you've been talking about it for the last hour. Does he stay on message? And of course, who shows up to be in the audience on the stage with him is a big question. Does the Republican gubernatorial candidate out there in a 50-50 state show up? Because he's been trying to find a little sort of sunlight between him and Donald Trump of late. So a lot of questions, but it's an important visit, and it's going to be the first of many, I think, we see for the next few months until the midterm.
It's making me want some U-singers. I'm having Milwaukee nostalgia, producer James. I'm guessing that President Trump will not be going to Maine to stump for Susan Collins. It's just that he's not a fan, even though he needs a Republican in that seat. But he may not need to. And I'm deeply curious to hear, Jeannie, your thoughts on this, Mark, as well. This whole saga surrounding Graham Plattner in Maine, with other revelation now in the New York Times, that it wasn't just sexting, it wasn't just the tattoo that he may or may not have known was a Nazi symbol, that it went beyond this, pointing to a 40-year-old woman from Virginia, worked for Republican campaigns and right-leaning groups, dated Graham Plattner for some time, 2013 to 2015, describes he regularly grabbed her by the shoulders, said he once twisted her arm behind her back and shoved her into a bedroom and held the door closed until she calmed down. He never hit or punched her, she said. The Times also reporting 2 other women dated Mr. Plattner recalled him drinking heavily and womanizing. Now, later today, 6 o'clock this evening, Congressman Ro Khanna is appearing with him on stage. He is, in fact, going to Maine to campaign. He was asked about this, and he said that he found the behavior described in the New York Times story wrong and toxic, but the people of Maine deserve a senator who's going to stand up to the billionaire class. And just like that, new numbers polling from Tony Fabrizio's firm find these two tied at 46%. Plattner was leading by double digits. So what happens when you add $3 million to it? One Nation drops a $3 million ad buy for Susan Collins. Here's a taste of the message.
Maine may be a small state, but we face big challenges, and Senator Susan Collins delivers solutions. When our veterans were left out in the cold, Susan Collins secured $3.6 million to help end veteran homelessness.
Yeah, see, highlighting her work for Maine's veterans. Jeannie, Mr. Plattner was on cable news last night trying to tamp down the concern here. He was in Washington a couple of days ago to meet with Democratic senators. Will he, in fact, be Democrats' choice here going forward in Maine? Is this done?
You know, you mentioned Ro Khanna, and I want to reiterate what Alyssa Slotkin said, because I think she said it beautifully, Joe. I look forward to the day when we are not on TV or radio answering questions about the bad behavior of men. And she added she is sick of it. And I think so many of us would agree with that. You know, there was a point when it was the tattoo, and then there was a point when it was the sexting. And we were sort of told that this was part of a redemption story. And I can understand that on a personal level. He served 4 combat deployments. You know, and the messaging from Democrats was he served in 4 wars that Collins voted for. And we should have somebody in the Senate to stand up for veterans and people who have experienced these kinds of things. But what the New York Times reported yesterday from 3 of the 6 women that they spoke to was, for many people, I think, a bridge too far. You read, and you just read some of it. There's even worse, if you can imagine, allegations in there. He did go on and deny them. This will ultimately be up to the people of Maine. But I do think when we're talking about toxic masculinity that he was supposed to represent and counter on the part of the Republican side, I would look at somebody like James Tallarico, who described his father as a man going next door and mowing the lawn of somebody who needed it. That's masculinity, not this junk that we're hearing about Plattner. It is very, very distressing, these allegations.
Well, I appreciate that, Jeannie. I want to carve out some time for Mark here. He does deny this stuff, Mark, but I'm wondering how you're thinking about it in this political climate we are in. This is the age of Trump. This is the age of never apologizing. And I don't want to get you in trouble here, but is Graham Plattner the Ken Paxton of the Democratic Party?
Look, there's a lot of people making that comparison right now, and I understand why. But you know, there's a lot of focus today on the sexual allegations that are very serious. But this is one more chapter in a lot of serious allegations. You know, beyond the whatever app he was on that apparently child sex traffickers participate frequently. This is a guy that's got a lot of problems. And, you know, there were a lot of Democrats that were lighting their hair on fire a couple weeks ago about the Supreme Court decision on Voting Rights Act and saying that black voters will get disenfranchised. But they're lined up behind a guy that has neo-Nazi tattoos. Yeah. And so I think for a lot of voters, it's like, where's the consistency in any way here? And so
it comes down to a win at any cost sort of scenario.
That's exactly right. And I think what you see is that there's a rationalization for a lot of Democrat voters that say, yeah, but he'll vote against Trump. Yeah. And I think that's the challenge that for Republicans is that he's perceived as the outsider against Susan Collins, who's been there. But it's a question of, you know, at what cost?
Yes.
This is obviously a person with serious character flaws, and I think that ultimately Susan Collins, you know, will survive again and hold the seat, which gives Republicans a much better chance potentially at holding on to the Senate, although I still think there's a lot of other states that are in play now, particularly, as we said, because of the president's trade agenda, more states in the Midwest that are now in play.
Got it. Pretty remarkable to think that while this gentleman Graham Plattner was on cable news addressing these allegations, Susan Collins was delivering her 10,000th consecutive vote. She got a round of applause for this. cast her first Senate vote January 22, 1997, and has since never missed a vote. I'm Joe Matthew in Washington. We've got a great panel for you. Jeannie Shanzano and Mark Short will be back in our second hour as we welcome our global television audience to the conversation. Kaylee's on the way in, too. Stay with us on Bloomberg TV and radio.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
A blowout jobs report is blowing a hole in the market. Welcome to the Friday edition. As the May jobs report sends interest rates higher, pulls stocks lower, just a week ahead of the biggest IPO in history. I'm Joe Matthew alongside Kaylee Lines in Washington. President Trump, Kaylee, wants lower interest rates, but the market is making a very different bet today.
Yeah, the market instead is thinking that the Fed could hike rates by the end of this year because with the jobs data showing that at least that part of their dual mandate seems to be holding up okay, gives them a lot more room to focus on the other side of the mandate, which is inflation. The thing is, President Trump today argues on True Social that growth doesn't necessarily mean inflation, as he suggests stocks should be going up, not down, on the back of 172 162,000 non-farm payrolls.
That's a huge number. The unemployment rate staying the same, but there are concerns here about what that means in terms of handcuffing the Fed or, in fact, prompting rate hikes, to your point, Kaylee. And we're seeing real liquidation in some super high flyers of late that are pulling the indexes lower. It's not all being pulled out of the market, though. This rotation that we were seeing yesterday into some of the big banks, finance and healthcare, continues today. It's not looking good on the index level, however.
Yeah, and not looking good for the AI trade. And of course, the AI trade and stocks associated with it happens to represent the bulk of the weight in these markets, especially in, say, the NASDAQ 100, which is why you were seeing that drastic underperformance today. So let's get a check on the numbers now as they stand. We're down more than 3% on the NASDAQ 100, and Charlie Pellet has a look at that and the other figures for us up in New York. Hey, Charlie.
Hi, thank you very much, Kaylee and Joe, and I'm going to lead things off with the NASDAQ 100. Right now, that index is down 3.2%. We've got NASDAQ down 2.9%. All of this, to keeping it in context, we've got the S&P 500 index down 130 points, down 1.7%. The Dow at a record yesterday, today tumbling 385 points, down by 0.7%. Wall Street's historic weekly run set to come to a halt. Stocks and bonds are falling after that solid jobs report this morning. Our coverage will continue. The Russell 2000 index of small cap shares down 2.6%. The VIX on the rise above 18. The SOX, the Philadelphia Stock Exchange Semiconductor Index, hard hit today, plunging now by 7.5%. Some of the names in that index: NVIDIA down 4.9%, Micron down 9%, Broadcom down 5.8%. The 10-year now at 4.52%, the 2-year 4.14%, the 30-year 4.99%. Gold at $43.41 the ounce, down almost 3%. West Texas Intermediate crude holding above 90 at $90.16 a barrel, down 3.1%. Brent 93.08, down by 2%. Bitcoin, we did trade briefly below $60,000. Bitcoin now back to $61,250, but Bitcoin today down by 3.6%. I mentioned the move lower in crude oil. Oil majors down as well. ExxonMobil down 1.2%. Chevron right now down 0.6%. ConocoPhillips trading lower by 1.4%. So again, recapping, stocks lower, S&P down 136, down 1.8%. The 10-year currently yielding 4.52%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Joe and Kaylee, that's a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. As Charlie was just running through, this market appears to be reading good economic news as bad news, while President Trump would prefer that the good news be read as perhaps great news, because he said on Truth Social that this jobs report today was a great jobs report. And as I mentioned earlier, he said growth does not mean inflation. He poses a question: how else can a country attain greatness? And of course, it's a pitch around economic greatness that the president is likely to be making in Chippewa Falls, Wisconsin later today, where he's scheduled to hold an event this afternoon. He's en route there right now, Joe.
He sure is, on his way to the airport, and we're going to be keeping tabs on that address. Hard to tell exactly what the message will be, Kaylee. The president resorted to the affordability as a hoax line in the Oval Office the other day, and that's not likely what the headline is going to be here. But the fact is, we are looking at a more expensive world with interest rates rising. 10 years above 4.5%. That's going to come through on mortgage rates, and you're paying $4.22 a gallon for gasoline today. In Wisconsin, where the president is heading, it's $4 and a penny. So let's start with the message the president plans to deliver today with Kate Sullivan, our White House correspondent, who joins us now from the North Lawn of the White House, knowing the president has just left the building. Kate, what do we expect to hear from the president today, and why Wisconsin?
That's right. So the president is headed to Wisconsin right now. His motorcade just left a few moments ago from the White House. It's going to be his first time back in the swing state since the 2024 campaign. And this event in particular is focused on Wisconsin farmers. He'll be speaking this afternoon at a corn and soybean farm in Chippewa Falls, Wisconsin. And it's coming at a time when farmers have been hit particularly hard by the president's tariffs and by the rising fuel costs and fertilizer costs because of the war in Iran. The president's approval ratings have been really slipping because of all of the economic anxiety surrounding the war in Iran. So Trump today is really looking to shore up this key constituency. Midwestern farmers were very critical to his success in winning back the White House. He's really trying to tamp down those economic fears and speak to them directly and try to do what we've seen this White House do, attempt to do several times, which is really pivot back to domestic issues amid this war in Iran.
Well, we're seeing now, and if you're with us on Bloomberg TV, you can see as well the presidential motorcade rolling up at Joint Base Andrews to Air Force One, where, of course, the president will board and then fly to Wisconsin. Gives me a sense that maybe this event might be running a little bit later than it was originally scheduled. So. He's a little bit behind on his daily schedule here. Kate, he also apparently had the time to speak to the Wall Street Journal, and in an interview talked about his tapping of Bill Pulte, the FHFA director, as acting director of national intelligence. He said yesterday in the Oval Office, this is just an acting position. It's not a permanent one. And yet he's telling the Wall Street Journal that there are things he wants Bill Pulte to do in that acting capacity, including firing people in the intelligence community. What can you tell us?
That's right. I thought it was really interesting in this interview with the Wall Street Journal. The president said that Pulte, because he's in this acting role, so it's just temporary, he will be naming somebody else in the role. And in this acting position, Pulte does not require Senate confirmation. But I thought it was interesting. He said that Pulte would be less shackled because of this position, because it's just an acting role. He said that Pulte could make a lot of changes. We're expecting from this interview, it seems like a lot of shakeups in the intelligence community, could make a lot of changes before whoever his ultimate pick is to lead the intelligence agency comes in. But the president said that he wants to make the intel community smaller. It looks like there are going to be widespread changes, which will have, of course, large repercussions, especially amid the war in Iran. And Pulte has been a controversial pick from the beginning here. Even Republicans on the Hill have been talking about his lack of national security experience. So it seems that there are lots of changes coming for the intel community here.
All right, Bloomberg's Kate Sullivan reporting live at the White House. Thank you so much. And President Trump has just climbed the stairs of Air Force One, and he is now boarding the plane again en route to Chippewa Falls, Wisconsin. Kate, thank you. And as Kate was just alluding to, we have seen something of bipartisan pushback in the United States Senate as to the tapping of Bill Pulte in this acting position, so much so that on the Senate floor in the early hours this morning, we saw a procedural vote to advance an extension of Section 702 of the Foreign Intelligence Surveillance Act go down. It failed. The concern, of course, among Democrats and even some Republicans is extending these government spy powers, warrantless surveillance, if Bill Pulte could potentially abuse them. At least that is what they are saying. So let's get into this now with our political panel today. Jeannie Shanzano, Bloomberg Politics contributor, Democratic analyst, and democracy visiting fellow at Harvard Kennedy School's Ash Center is with us, alongside Mark Short, chair of Advancing American Freedom and former chief of staff to Vice President Mike Pence, also former director of legislative affairs in the first Trump White House. So Mark, on that note, I will come to you first. Has the White House made, and President Trump specifically, a big miscalculation if it wants FISA extended in saying not just will Bill Pulte serve in this acting role, but telling the Wall Street Journal that he wants Bill Pulte to reduce the size of our intelligence community?
A couple things here, Kaylee. I think that the administration has had mixed messaging on FISA from the start. There's been times when the president, even the first administration, claimed that FISA was used to spy on him. And even though I think there were abuses in as far as the oversight of what was happening in President Trump's campaign, that wasn't FISA. And so it's been mixed messaging. I don't know how enthusiastic they really are, so I don't think it's a priority. I think the Pulte thing, in many cases, I think the president often throws out names to see what the reaction will be. And in some cases, candidly just makes a mockery of the Senate confirmation process. But then he takes the feedback and then pivots. And so the feedback is Pulte clearly is not going to get confirmed. So now I'm going to say, hey, Pulte, how about you go clean it out so then I can come forward with a more credible candidate afterward and have a smaller agency for that person to manage. And I think there's probably, honestly, wisdom, I think, in shrinking some of the size of these agencies. But again, there's probably a better way to approach that, is to make the case as to why you feel like the intelligence community is bloated and what we need to do to make those reforms.
This all took place in what was a very long night, working for reconciliation. But when it came to that FISA vote around midnight, Secretary of State Marco Rubio shows up in the cloakroom. What does that tell you about the way the White House was managing it in the heat of the moment?
I think there's probably some in the administration who are more invested in continuing FISA, and I would imagine Secretary Rubio is one of those who thinks this is important. And I think I agree with that. I think it's incredibly essential that we continue FISA, and it should get reauthorized, and hopefully that transpires. I think at this point there's kind of posturing to say, hey, we're not going to get Pulte confirmed, but I think the administration probably knows that anyhow. So when the Pulte thing gets cleared up, I think you'll then see FISA move forward.
Okay, so does the Pulte thing, in your mind, Jeannie, have to be cleared up before the Senate will advance FISA? The deadline is June 12th. They're not working with that much time here.
No, they're not. And it does have to be cleaned up. And I think, one thing that has been left unaddressed in this conversation is what the outgoing DNI was doing to curry favor with Donald Trump prior to leaving, which was going down to Georgia to address the 2020 campaign and election, which Donald Trump still believes was stolen, and really unprecedented for the DNI to be down there, and then to allow a conversation between the FBI agents on the scene and the President of the United States, as was reported. And so now we have her pushed out and leaving, and we have the replacement, somebody with absolutely no intelligence background whatsoever, but even more intent on currying favor with Donald Trump. And that has a lot of people concerned. I believe it's not just going to be about cleaning out the intelligence agency, which is enough. He's in there for 210 days. That gets us to late December, when he will be overseeing the nation's intelligence agencies through the midterm election. And there's nothing Donald Trump wants more than the GOP to win the election, or he will cry foul and interference. And that is the real concern here. That is what Donald Trump wants him to do as DNI. He has no intent on putting him up for a confirmation in the Senate. He doesn't even care about that. It is going to be about getting retribution, as Pulte has already been doing, and having a better place to do it from against his enemies, and also about crying foul if the Republicans don't do well in the midterm election.
Well, after an 18-hour marathon vote-a-rama, Jeannie, the reconciliation plan passed. This is more than $70 billion for ICE, Customs, Border Protection. 5247 was the final count. This is the same debate that led to the longest government shutdown and the longest partial shutdown in history. What did Democrats have to show for it, knowing that there was no demasking and there was no action on warrants when we're talking about immigration enforcement?
Yeah, and to add to that, they don't have a lot to show for it. But of course, Republicans just put another $70+ billion in the hands of ICE and CBP. I'm sitting here in New York. Look at what is going on in the detention center in Newark, where people are on a hunger strike. And the charge is that this is being run like some kind of concentration camp. And if the administration wants to push back on that, you'd think they would allow transparency and allow the governor of New Jersey, the senators who are funding this thing, the Congress people funding this, to get into these detention centers and to see what is actually going on there. And yet they're doing everything they can to fight it. So I think Democrats were right to hold the line on this. They lost on the slush fund. Republicans want to go forward with it. And yesterday, Donald Trump said, what? I love the slush fund. I think it's important. So you can bet that'll come back as well. And that's all at the hands of Republicans who have allowed all of this to go through.
The slush fund, of course, Jeannie's referring to is the almost $8 billion for the so-called anti-weaponization fund. Acting Attorney General Todd Blanche says it's dead. It seems that Republican senators decided to take him at his word. But President Trump wants acting AG Todd Blanche to become just Attorney General Todd Blanche. Do you expect this issue to rear its head again in the confirmation process? Can he even be confirmed in the Senate?
I'm not sure that he can. I do expect it to come back up, and I think that he'd probably continue to be in an acting role for 18 months. And so I think that's something that you'll see the administration not really care as much about the confirmation process moving forward. I do think, we recite this number as nearly 1.8, and it's important to note it's actually 1.776, as if there's an homage to our nation's founders that somehow compares the people who are rioting and assaulting police, the people who risked their lives and fortunes to found our country. And so it's I think important to keep that number in mind. I do think on the reconciliation package as well, this was a fumble on our side because I think one of the things that led to Donald Trump's remarkable comeback was how poorly the Democrats managed the border. And their continued reluctance to fund CBP and ICE should be a political advantage for us. It should be a stark contrast. But by putting the ballroom funding and this slush fund in the bill, that's been all the messaging for the last several weeks. We've lost the plot on this is actually a border security bill. And so the messaging has been miserable, and it should have been a big advantage for Republicans versus Democrats.
So you're ready to do it again? Reconciliation 3.0 is now what we were hearing about that from the chair of the Appropriations Committee before this ever took place. I love this line from Senator John Kennedy, who's entertaining every time he speaks, Republican from Louisiana. When people boldly declare we're going to do a third reconciliation package, I generally tell them, I hope you're right. But in the meantime, back off the crank. What do you think, Mark Short?
There's not going to be a third reconciliation package.
No chance.
No. I understand that. I do think it's a good messaging vehicle. Say, here's if you were to reelect us, here are the policy priorities. So there's an important reason to move forward with it for messaging to the American people as you head into midterms. But I think that reconciliation is hard as it is. The margins in the House continue to get more narrow. You're headed to a midterm election, which the president's popularity numbers should be in the 30s. You're going to have Republican members looking to distance themselves. And particularly now that the White House has alienated so many senators by their primary efforts, there's no way that you're going to be able to put together a coalition of people that right now is going to be able to support a third reconciliation package. So, again, I think it's good for messaging, but let's not think it's actually going to pass Congress.
Well, and as you allude to, these reconciliation packages are difficult, even though they only take a simple majority. This is supposed to be a partisan process. It eliminates the need for a lot of bipartisanship. But we are seeing this pattern where even Republicans seem to not always vote in line with each other or with the president. We saw more evidence of that in the House this week, not, Jeannie, just with the War Powers resolution that passed, but with yesterday as well, the passing of an advancing of Ukraine aid and sanctions on Russia. It obviously got to the floor via a discharge petition, but you had a number of Republicans, 18 of them, vote with Democrats on this. What does it tell you?
Yeah, that's right. It says that as time has gone on, Republicans are feeling like they can occasionally take a step out from what the president and the administration want them to do. And I think it's not a huge surprise on Ukraine funding. There's been a lot of Republicans who have long supported that. But I do think we are seeing more of that. That's partly why the president didn't get his ballroom and he didn't get his slush fund, was because obviously Republicans who have control said they were going to put their foot down on those kinds of things. And, on this reconciliation 3.0, I agree with Mark. I don't think this thing is going to make any headway. But can you imagine what Donald Trump would throw into the mix if it was going forward? I mean, as of now, we've got ballrooms and slush funds. Yesterday, he's talking about promenades. I mean, I just can't imagine what he would throw into the 3.0, so there we go.
I don't know. He's still got private funds for the ballroom, right? They're not stopping building that thing.
Yeah.
We'll find out together. Mark Short, Jeannie Shanzano, thank you both for weighing in. Great insights and a fascinating conversation every day here on Balance of Power. Alongside Kaylee Lines, I'm Joe Matthews. Stay with us with much more ahead on the Friday edition on Bloomberg TV and radio.
121 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ very much in the red. Hotter than expected jobs numbers have Wall Street selling off right to the numbers here because we got this historic weekly run coming to a halt. S&P down 140 right now at 74.44. You recall earlier this week we were trading and closing above 7,600. Right now the S&P is down 1.8%. We've got the Dow retreating from yesterday's record, down 440 now, a drop there of just about 0.9%. To be sure, S&P very close to session lows. NASDAQ down 823 points. Had to pause to make sure that 800 number was correct. 822 points lower on NASDAQ. That is a decline right now of 3%. NASDAQ 100 index down 1,052 on the NASDAQ 100 index. That is a drop there of 3.4%. Fast-moving markets. Got to keep it locked into Bloomberg Television and Radio for the very latest. The SOX, the Philadelphia Semiconductor Stock Exchange Index, it is plunging by 7.8%. All of this with a VIX below 19 now. A 10-year at 4.53%, the 2-year 4.15%, and a 30-year 4.99%. Gold at $43.40 the ounce. Spot gold down 0.3%, down 3%. West Texas Intermediate crude 90 even a barrel, down 3.3%. Brent crude 92.87 a barrel, down by 2.3%. Bitcoin 60,864 was trading briefly below 60,000. Tech names hit hard. Among some of those names, Nvidia down 5%, Micron down 9.4%. Shares of Broadcom, they are down 5.2%. Advanced Micro Devices down by 9%. So again, recapping the equity numbers, big numbers to the downside. NASDAQ down 780 points now, down 2.9%. NASDAQ 100 index down 1,015 points. That is a decline right now of 3.3%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Well, Charlie just said it all. This is not a good day, and it does feel like we're going from rotation to outright sell-off, depending on where you're looking. There are still some green shoots in this market, but we are seeing new lows for the session. So we quickly want to bring in Nora Melinda for a little more color on this market. Bloomberg Markets correspondent. Nora, we've got a stronger than expected jobs report, got interest rates moving higher. Is there more to it than that as the markets anticipate higher rates? We're also coming off some challenging earnings, or at least the way they were interpreted. They were actually pretty impressive reports from the likes of Palo, CrowdStrike, Broadcom, but the reactions were severe.
Well, expectations are high in the market as you think about all of these tech names. So much money being spent in this sector more broadly. But the question is whether or not all the money that's being spent in the sector, when we think about artificial intelligence, whether or not that's actually going to pay off. So today, as you really factor in that strong surprise jobs report that we got today, and you also think about the earnings that we got out of Broadcom and some of the peers, you're really seeing a crackdown right now on the tech sector. If you dig into the S&P 500, information technology, that sector alone, the worst performing group in the S&P 500, no surprise there, down more than 4%. So what I'm hearing from my sources is, yes, we are seeing an acceleration of this sell-off, but it's really focused on the tech space. It's a rotation that we're seeing playing out right now because, as you mentioned just a bit earlier, we do still have some green shoots in this market, taking a look at consumer staples, healthcare. So you're seeing investors on Wall Street really rotating out of these high growth names that we're seeing in the tech space and really shifting towards some of those more defensive sectors. That's where you're really seeing some positive gains here in the market.
Okay, so if we're seeing a market that is rotating out of tech and high growth areas, what's the appetite going to be for a more than $1 trillion, almost $2 trillion valued company in SpaceX when it debuts next week?
And that's the question. We're just a week away from that. And there is a question as to whether or not what the appetite would look like, especially because SpaceX is not the only IPO that we have upcoming or expected from some of these names in the tech space. What I find to be particularly interesting when we think about the SpaceX IPO is the fact that Musk has reserved about 30% of SpaceX float for retail clients. Now, that's different when we think about the fact that it's usually Wall Street that gets a jump on IPOs like this. But the idea that we're seeing retail really having this a space being reserved for them. It's really showing you about how the retail Main Street is really involved in some of these massive names that we're thinking about, specifically SpaceX, as we're thinking about this IPO coming next Friday.
All right, Bloomberg Markets correspondent Nora Melinda, thank you so much for joining us. And of course, we're all looking forward to the debut of trading next Friday. But that's next Friday. This Friday is a jobs Friday. And obviously, while the market isn't necessarily taking the numbers well, the White House is trying to put a positive spin on it. This was the National Economic Council Director Kevin Hassett on Bloomberg earlier.
We're getting positive jobs numbers because we've got high wage growth, and native-born Americans are rushing into the labor market in droves. And so that negative story is gone. The Trump economy is surprising Wall Street analysts over and over again, and they need to maybe think about getting the supply side of their model fixed. If the Fed, pays close attention to the data and thinks about why it keeps surprising on the upside, them especially, and surprising on the downside on inflation. I mean, absent the Gulf issue, the inflation basically would be completely under control right now.
For more, we turn to Christopher Smart, founder and managing partner of Arbroath Group and former special assistant to the president at the National Economic Council during the Obama administration. Christopher, welcome back to Bloomberg TV and radio. We heard Kevin Hassett there allude to high wage growth, and I'm not sure if you view the wage growth numbers today of 3.4% as being that high on a relative basis, at least relative to recent years, and especially considering where inflation is. Do you take confidence in this labor market from the strong headline number in terms of thinking of the overall economy, knowing that with the inflationary pressures still out there, there may be some headwinds on the ability to actually consume, even if you are employed?
Well, Kaylee, Joe, good to be with you. I think it is one of those moments where markets and analysts were clearly surprised by this number. I think, as Kevin Hassett pointed out, of all of the distribution of forecasts, this beat even the most optimistic forecasts. I'll pause and just say it's a little troubling to hear the administration keep focusing on native-born Americans and jobs for them rather than legal immigrants to this country, but I'll set that aside. I think they're enjoying a tailwind from corporate earnings that have been high, investment that has been good. I think you can sort of try and look through and separate out investment that is going into the AI boom versus things that may or may not be related to the president's tariffs and other immigration policies. But I think what is really remarkable is that all of this is happening in the midst of a continuing crisis in the Middle East, a Strait of Hormuz that looks like it's not opening anytime soon, and oil prices that seem to be high, but mostly taking this all in stride.
So I'm just curious how you're looking under the hood at this market. Christopher, it's great to see you. When we consider wages, for instance, you had 172,000 jobs, and it's probably going to mean something when we get right down to it here. The average hourly earnings in this report rose 3.4% from a year earlier. How much pressure could we see on wages rising to keep up with these trends?
I think that's what everybody's going to be looking for very closely. I mean, on the other side of it, you've got wages that are increasing costs to companies. On the other side of it, you have a consumer where sentiment has never been lower to rock bottom than it is currently, but that continues to spend, continues to keep those retail numbers fairly steady. Household balance sheets, depending on income levels, but overall are fairly solid. So I think this is a moment of, relatively good news. Now, the market is taking the good news as an opportunity to correct. It's certainly putting bond market projections into, a second or third look with these numbers. But I'll just add and say it probably makes Kevin Warsh's first Fed meeting in first few months a lot easier because the pressure is off him right now to make any cuts.
Well, but is the pressure going to potentially be on him to hike rates, or is the data not strong enough for that?
It's hard to know what the president's going to say, right? But the president seems like he's backed off of that, at least since he was sworn in. Most important, though, I think markets have looked through this, and they want to know, is Kevin Warsh, regardless of what he has said in the past, to get this job, to get through his confirmation hearings, it would be implausible and utterly unrealistic to expect him to be able to bring about a Fed rate cut anytime soon, particularly given these numbers. And I think that takes a little pressure off of him to be able to turn around to the White House and say, look, I'm following the data. This is what we're doing. And it reassures markets that they're following the data.
I guess he'd have the markets on his side, but when you read Truth Social this morning, I don't know how comfortable Kevin Warsh should be. With a great jobs report, the president writes, like just announced, stocks should go up, not down. That's the way it was for 200 years. Growth does not mean inflation. How would you respond to the president?
Well, I've been a portfolio manager for a long time, and when you start saying, oh gosh, the markets are just wrong, you really need to look in the mirror again and ask yourself if you've really understood what's going on right now. You know, the president has his own particular lens through all of this, of course, but I think if you are an investor today, you clearly see a price shock coming from the Middle East that may or may not last, but it's a shock that comes on top of inflationary pressures that we were still trying to wring out of the system. I don't think this is a moment for the Fed to hike right now in response to what's going on in the Middle East. It's really a moment to stand pat, to see how those dynamics play out, to see how the global balance of supply and demand really levels out in the next several months, even with the straits not opening again, or not opening much, because even if there's a deal, it's going to take a long time for them to reopen fully. And so if you're the Fed, this is a great time to be able to say, look, there's a lot going on right now. We're going to do nothing and get paid to do nothing.
Well, on the Strait of Hormuz, Christopher, you have a new op-ed in the New York Times, which is entitled, "The Strait of Hormuz is getting less dire by the day." You write that with every passing day, the world is learning to live without the Gulf's seaborne exports. You argue, obviously, that this hasn't been painless, but I guess my question to you is, have we been able to live with it thus far because there were inventories to draw from? Those are being depleted now. Could we not still reach a breaking point when there's no more inventory left?
Well, there will be breaking points in certain companies, in certain countries, and maybe even in certain regions of the world, or with certain parts of the hydrocarbon supply chain. You know, LNG is a much more difficult commodity to reorient different parts of the world. But you're seeing a variety of things, as markets always do, responding to those high oil prices. But you're seeing oil coming out through pipelines from the Gulf. You're seeing a little bit of shipping come through, tiny amount. You're also seeing a big response on the part of other producers in the U.S., in Mexico, in Kazakhstan, and other Brazil. And you're seeing some demand destruction in the sense that there are some rationing measures underway in Asia. So all of those things put together help you. You know, we're not headed for some big cataclysmic crash right now. There will be, as I say, a lot more pain ahead, but a lot of what you're seeing right now is the world adjusting to what is unlikely to be a Gulf a Gulf supply anytime in the future. There's no way the world is going to rely on the Gulf anytime soon for 20% of its oil supply. So we're going to be looking elsewhere.
Christopher may well be reflecting the market attitude on this and why we're not still in triple-digit territory. $90 a barrel today in New York. Christopher Smart, our Growth Group. It's always great to spend some time with you, Christopher. Thank you. I'm Joe Matthew in Washington alongside Kaylee Lyons. This is Balance of Power.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story headline right now off the Bloomberg Professional Service. A group of states is preparing a lawsuit to block Paramount Skydance's acquisition of Warner Brothers. Now, that is according to Reuters, which cites two sources. Shares are moving on that report. Warner Brothers Discovery down now by 2.3%. We got Paramount Skydance on a down day for the rest of the market. Right now, PSKY, it is tumbling by 7%. Wall Street's historic weekly run screeching to a halt. Stocks hitting by a tech sell-off and higher bond yields after this morning's solid jobs report added to bets that the Fed's next rate move will be a hike. S&P right now down 119. We are off the bottom, but still at 74.64. This in a week in which the S&P did close above 7,600 for the first time. Today, the S&P is down 1.6%. The Dow, after yesterday's record, down 360, down 0.7. NASDAQ Composite Index down 740 for NASDAQ, a drop right now of 2.8%. The Russell 2000 Index of small cap shares down 2.6%. The SOX, the Philadelphia Stock Exchange's Semiconductor Stock Index, down now by 7.3%. And the VIX on the rise, now just below 18. 10-year at 4.53%. The 2-year on this jobs Friday, 4.16%. The 30-year, 4.99%. Gold selling off down $130 the ounce, down 2.9%. Right now we've got spot gold, $43.42 the ounce. West Texas Intermediate crude just above $90 a barrel, down 2.9%. Barrel of Brent, $93.12 the barrel, down 2%. And Bitcoin, 60,800 on Bitcoin. It is down 4.2%, but it did break below the key $60,000 level. Again, recapping, S&P 500 index down 126, drop there of 1.7%. Briefly, one sports note, the Chicago Bears planning to leave Illinois and head to Indiana after over 100 years. Team intends to build a new stadium in Hammond, Indiana, with the exact site yet to be selected. Joe and Kaylee, that is a Bloomberg Business Flash.
I wonder if there might be a little negotiating going on there. Charlie, thank you very much.
We've
Charlie
been through
Pellet.
that in D.C.
Yeah, that's true. Boy, Charlie's had a day, huh? This market's having a day. He'll be back at the top of the hour, 2 p.m. Eastern Time, with the latest read on stocks and bonds. Of course, a week from today, we're going to be talking about the biggest IPO ever. That's SpaceX. The appetite for all things space has been remarkable. We stopped down for all the launches around here. Getting a rocket off the ground, though, Kaylee, is not always as easy as someone like Elon Musk might make it seem. As a matter of fact, there's this company, Launch on Demand, that's preparing to break ground later this year. With the massive race underway in Latin America, specifically when it comes to space infrastructure, where do you launch these things?
Yeah, especially as we're seeing a widening in the commerciality of space, frankly. You want satellites up there. If SpaceX is to believe this is going to play a role in AI compute going forward, you need to have the places for all of that activity to originate, to get up to space. And this is something that they looked at in Wall Street Week this week as Bloomberg's David Weston explored this, and how it's not just a race for companies like SpaceX and Blue Origin to vie for space, but it's actually maybe a little bit bigger than that when we think about a geopolitical space race and the competition between the U.S. and China. Listen.
As Launch on Demand prepares to break ground later this year, a larger race is already underway in Latin America. Space infrastructure has become a new front in the U.S.-China rivalry.
China is aggressively making investments in our hemisphere, particularly in Latin and South America. Also, partnerships that they have made with Caribbean nations to have aerospace applications, satellite demonstrations, civilian applications, also with military application components to it.
A recent report from the Select Committee on the Chinese Communist Party warned about China's growing space footprint in the region, including more than 10 satellite tracking stations. Congresswoman Haley Stevens of Michigan is a member of the committee.
This is a call to double down on the way our system works. And so we don't want to be ceding ground to China. We don't want to see them continuing to eat our lunch with our neighbors. And we can win this race.
I guess you could look at it as a marathon or maybe an ultra marathon, but I don't see an end here. There is not a clear finish line.
Carrie Bingen is a director of CSIS's Aerospace Security Project.
Well, I thought what was really interesting in the decades that we were competing against the Soviet Union, so much of what was happening in space, it was fueled by government. I think what you're seeing now, which really sets this current era apart, is so much of what's happening in space is commercial. Over 80% of the satellites on orbit today are commercial systems. A lot from the United States, SpaceX, Starlink, but many other countries are now players in space. China has ambitions to be the world's space power. Their presence and their capabilities in Latin America are part of that strategy. They want access, they want influence. They want to be able to band together with these countries in bodies like the United Nations to start shaping where the standards are.
We started this program well before people realized that China was, very interested in taking over real estate in Latin America. As we have gotten the Trump administration and President Abinader's administration together, they are aligned on what has been called, the pivot to the Western Hemisphere. So I would call the spaceport more of an artifact of the decision to pivot to the Western Hemisphere rather than, anything else. And we emphasize this is run by a U.S. company that is designed to be commercial, that is complementary, not competitive, with the spaceports in the United States. And we work very, very hard to make sure that they understand we're a friend, not a foe.
Really interesting piece coming up on Wall Street Week, which airs right here on Bloomberg TV and radio after the late edition of Balance of Power. It starts 6 p.m. Eastern Time. Kaylee, I have long said, and you've heard it repeatedly on this program, when Americans, if Americans, and it does seem to be a when, not an if, see a Chinese flag on the moon, the urgency under this story will suddenly materialize.
Yeah, of course, the U.S. is trying to make sure our flag is back on the moon.
That's right.
First. We're, 2 years ahead? NASA says 2028 is our goal. China's looking at 2030.
Got a few more stages on the Artemis before we get there, but that is something that we're watching, along with David Weston's great program that will be coming up at 6 p.m. Eastern. Kaylee, we haven't really had a chance to mention, with so much news here and our focus on the markets today, what's happening in and with Iran outside of the market implications of rising energy prices that so many have touched on already. Iran most recently saying that no progress has been made in talks, and we have big questions about what's happening in Lebanon, where, of course, the conflict between Israel and Hezbollah remains a huge sticking point in our negotiations. It's something the president talked about in the Oval Office just yesterday. Listen.
I think Hezbollah, I will tell you, they called us and they said, how about stopping? And I think you're going to see things happen over there. It would be really nice if Lebanon could have some peace. I spoke to Bibi Netanyahu about that. We're going to win one way or the other. It's going to be militarily or on paper.
Earlier in the week, the president confirming in an interview some of the spicy language he used on the phone with Benjamin Netanyahu as that conflict continued to rage. Little has changed, though, this week when it comes to talks between the U.S. and Iran, and that's where we start our conversation with Melissa Tufani, and the former senior advisor to the Secretary of State in the Biden administration, managing director at Navigator Research. Melissa, great to have you with us. Thanks for joining our conversation today on Bloomberg. We're going into another weekend here. There are questions about whether we should even be calling this a war. If it is a ceasefire, however, that's a curious word to use as we continue shooting at each other. What needs to develop in the next couple of days to see this not turn back into a real kinetic action, a real war between our two countries?
Well, first, thank you so much for having me. And as far as what we need to see, it's serious diplomatic negotiations. It's the President Trump taking this seriously and the Iranians taking this seriously. As you said, we haven't seen progress. A lot of that hinges on the negotiations of what's going on with Lebanon between Hezbollah and Israel, because Iran has told us they're not willing to negotiate until there is a solution there. But really what I think is important, and I hope for President Trump to keep in mind, is when we think about President Trump's foreign policy. Last year, at around this time last year, his foreign policy, his approval rating was about 6 points underwater by Americans. And now when we look at how Americans feel about Trump's foreign policy, he's now underwater by 21 points. That's a 15-point drop over the last year alone. And it's really not surprising. Nearly every American is experiencing those increased oil and gas prices, whether it's when they're paying $6 per gallon at the pump or increased grocery prices due to those increased transportation costs. So Americans really want to see this war come to an end. I think they're desperate for a solution that will help alleviate their everyday costs. And so I think they're eager to see progress on these talks.
Well, so when we consider a solution that would specifically alleviate costs, Melissa, it's one thing if we are able to get to a negotiation to have the Strait of Hormuz declared open. It's another for the Strait of Hormuz to actually return in terms of the amount of transit that goes through it in energy supplies to what it was before this conflict. Do you really think we're going to get back there, especially as Iran and even Oman, or Iran contends at least that Oman is involved with this notion that they want to have control over it and potentially charge tolls?
I'm not optimistic. And I think you lay this out really well in the sense that what we are now negotiating over, what President Trump, on behalf of the United States, is now negotiating over, is to get back to where we were before this war started. We are now negotiating to try to reopen the Strait of Hormuz that was completely open. And what Iran has now gained in leverage is an understanding that it can block the Strait of Hormuz, that it has the control, whether, as you said, to impose tolls going forward, but also has the ability to keep a chokehold on the global economy by closing the Strait of Hormuz. It has sent not only prices in the U.S., but prices for people around the world spiraling. And that causes tensions in so many different areas. It raises costs on so many different things. Obviously, fuel prices drive so much of the cost needed for our everyday items when it comes to the transportation costs that have to be baked in there. So I think Iran has gained knowledge of leverage that it can use going forward.
To what extent will the conflict, where we began, between Israel and Hezbollah determine the way forward for the U.S. and Iran?
It seems that it needs to, and that Iran has said, the Iranian negotiators, its foreign ministers, have said that they need to see a solution in Lebanon before there can be serious progress between the United States and Iran. I know President Trump and his team seem very eager to have talks on Iran's nuclear program, but in order for that to happen, there needs to be progress between Hezbollah and Israel. So I think that's why, as you mentioned in the beginning, the stern language that President Trump told us that he used with Bibi Netanyahu is because in order to get to the negotiating table on the issues that he wants to do on reopening the Strait of Hormuz, whatever the future there may hold, on the future of Iran's nuclear talks, the path to get there is through Lebanon, really.
Well, of course, President Trump was very proud of the deal to end the fighting in Gaza, though obviously a longer-term agreement has been hard to come by. He clearly wants there to be a ceasefire in Lebanon as well between Israel and Hezbollah. He also, when he came to office, very much so wanted to see an end to another conflict, and that's the war between Russia and Ukraine. Ukrainian President Vladimir Zelensky yesterday had an open letter to Putin calling for negotiations. Vladimir Putin has rejected that call, saying he sees today no sense in a meeting. Are we getting any closer to a conclusion to that war that we're all paying a lot less attention to these days?
It doesn't seem like it. As we've seen, President Zelensky, as you said, has asked for that face-to-face meeting, and Putin has declined it. And so I think Putin feels as though he has the leverage to do that. But of course, Zelensky wants to find the way forward for his country to exist, for his people to know peace. And in order to do that, I think there does need to be those direct talks between Zelensky and Putin. But what we did see recently, just last night here in the United States, seeing that that Congress in our House passed a bipartisan bill in support of Ukraine, of sending more much-needed aid. So I think that is a good sign, in that even as people aren't paying attention to the conflict as much as they used to, as you stated, that the support still exists.
All right, Melissa Tufanian, thank you so much for joining us, Managing Director at Navigator Research. We appreciate it. Now, as we were discussing the war with Iran with Melissa, President Trump is actually gaggling on Air Force One right now and reiterated in remarks to reporters that Iran will not have a nuclear weapon, but he's also interestingly talking about AI. As we've seen this idea floated in a legislative effort by Senator Bernie Sanders, and even with Sam Altman, we understand, on the Hill this week, of public ownership in AI companies. President Trump says the concept of American public AI partnership is interesting. He says he has spoken to all AI companies, and they'll be coming to the White House, the big ones, maybe next week, to talk about how people can benefit from AI.
As opposed to a 50% tax.
I
Those
guess
may
so.
not end up being the same,
Yeah.
but I can't wait to hear what that is.
Yeah.
AI stocks are not faring terribly well in the markets today. Charlie Pellet will have a look in just a couple of minutes. We'll meet you back here at 5 p.m. Eastern on the late edition of Balance of Power, maybe more on what the president said in the gaggle. It's all ahead here on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. We are in San Francisco, on TV, on radio, on Bloomberg Originals, and of course on YouTube. And Tim, oh, how the sentiment has changed again.
Again, it's an interesting trade to say the least, Carol, and we're going to have much more on the trade in just a few minutes. But just to really bring everybody up to speed, if you're just now tuning in, sentiment changing, hiring surging in May, boosting bets on a Fed rate hike. Tech stocks really dragging on the NASDAQ. The SOX having its worst day in many months at this point.
Yeah.
NVIDIA, Broadcom, S&P 500 is actually on track for its first weekly decline after 9 consecutive weeks of gains.
It's been quite a run, a record run, a run that we haven't seen on the S&P in a long time, but a very different tone as we get ready to wrap up on this Friday. Hey, so ahead this hour, yes, of course, we're going to talk about that monthly jobs report. We're going to talk about U.S. rates. We're going to talk about the Fed policy, what you need to know. We've got a roundtable coming your way in just a moment.
On markets, yeah, John Flood, Goldman Sachs, head of America's Equities Execution Services.
A lot, from what I understand.
No, we're looking forward to that. Natalia Kenijevic is going to be joining us on that as well.
All right. Plus the World Cup, it is kicking off next week. You know that. In the U.S., across Canada, Mexico. Get ready for gridlock. Get ready for more subway runs in New York City. And also get ready for heightened security presence and some concerns. So we're going to tackle that part of the event with Dan Arnold. He's Senior Vice President of National Operations at the security firm Proto Security. Our own Vanessa Perdomo is going to be along too. She, of course, co-host of the Business of Sports podcast. So she's been leaning in all in when it comes to the World Cup.
Yeah, looking forward to all that and more coming up for the next hour right here on Bloomberg Business Week Daily. First up, though, a check on the day's trade and top business stories. Charlie Pellet holding down the fort in New York. Hey, Charlie.
Indeed, looking at a down day, Tim and Carol, with the Dow, the S&P, NASDAQ very much in the red. Going to get right to the numbers here because we've got some fast-moving markets. Keep it locked in to Bloomberg to find out how things shake out ahead of the close, ahead of the weekend here. S&P at 74.59. Got to keep in mind this week we had a record above, and in fact a close above 7,600 on the S&P, but 74.59 where we stand right now. We're looking at a loss of about 1.6%. The Dow, which surged yesterday at a record, it is down by 375 points, down 0.7%. Let's get to where the real damage is, and that is in Techland. NASDAQ 100 index now down by 3.2%. The NASDAQ Composite Index down 2.8%. Among some of those tech names, Micron down now by 9%. NVIDIA down 4.9%. Broadcom down 6%. And Advanced Micro Devices down 8.8%. The SOX, as Tim mentioned, the Philadelphia Semiconductor Stock Index down 7.5%. All of this with a VIX now at 18, a 10-year at 4.54%, a 2-year 4.16%, and the 30-year 5.00%. Gold down 137 the ounce, 43.37. That is a drop now of 3.1%. West Texas Intermediate Crude 90 even a barrel. It is down by 3.3%. Brent 92.95. The global benchmark down by 2.2%. Interesting day for Bitcoin. Was trading below $60,000. Bitcoin now at $60,781 for Bitcoin. That is a drop right now of 4.4%. One bright spot, Dow Transports. They are advancing. Dow Transports up today by 1.3%, being led higher by FedEx Freight, Union Pacific, and Northern Southern. Chicago Bears planning to leave Illinois. They're heading to Indiana after over 100 years. Team intends to build a new stadium in Hammond, Indiana. The exact site, though, yet to be selected. I'm Charlie Pellet. Carol and Tim, that is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Just a quick correction. I was talking about the SOX earlier, Carol. I was saying it's having its worst day. It's actually having its worst day just going back a couple weeks. I was thinking of Broadcom, which is having its worst 2-day stretch ever.
Yeah.
Shares are down about 20% just in the last 2 days.
Well, it's kind of hard to keep track, right?
A component of the SOX,
These names are on the move, and they've definitely been some outperformers. But for Broadcom, it's certainly a very different trend over the last couple of days. All right, as you know, folks, as Charlie just mentioned, we are seeing stocks and bonds. They are falling after that solid jobs report. And it really added to speculation that the Fed's next move would be a hike in interest rates. I got to say, I want to pat us on the back.
Oh, how come?
We have had guests, and we've talked about whether or not the markets are underestimating the possibility of a rate hike later this year.
Yeah.
So just calling that out.
Okay. Kudos. Congratulations to you and to our guests.
To us,
I won't take any credit for this.
I don't know. It's Friday. I'm tired. I'm going to take some credit. Hey, as for the numbers, U.S. job growth topping all forecasts in the month of May. The unemployment rate held steady at 4.3%, offering the clearest sign yet that the labor market here in the United States may be breaking out of a prolonged period of lackluster hiring, Tim.
President Trump's chief economic advisor, Kevin Hassett, director of the U.S. National Economic Council, joined Bloomberg earlier today on the U.S. labor market.
We're getting positive jobs numbers because we've got high wage growth and native-born Americans are rushing into the labor market in droves. So that negative story is gone. And finally, I got to say, we really love going through the Bloomberg data, and we have this thing that I like to look at, which is the probability distribution of all the forecasts for the jobs number before it comes out. And when I looked at it after I got these numbers, I saw that the very, very top person was low by about 40,000 jobs, which shows that the Trump economy is surprising Wall Street analysts over and over again, and they need to maybe think about getting the supply side of their model fixed.
All right, that, of course, was Kevin Hassett, director of the U.S. National Economic Council, earlier on Bloomberg. Let's get more to our roundtable. Thanks to our roundtable, I should say, on jobs rates and the Federal Reserve. With us back home on the East Coast is Michael McKee, Bloomberg TV and Radio International Economics and Policy Correspondent, and, of course, Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist. Mike, of course, on set back in our Bloomberg New York headquarters. Ira out there at our Bloomberg Princeton Bureau. Hey, Mike, gotta set it up for you. This is like, I don't know, prom day for Michael McKee and all of us who watch.
He gets to go to prom every month. That's not fair.
Yeah, and then some. Walk us through the data, what it says more broadly about the U.S. labor market, and then also what it says about the U.S. economy, Mike.
Well, it's definitely a strong report. There's no denying that. And it does suggest that the labor market has at least stabilized and might be starting to show signs of expanding. It may be that a lot of the people who, a lot of the companies who had held off on hiring because they weren't sure what was going to happen with tariffs and with the war have finally decided, well, we need to make some moves and we're going to add some people. It may also be that this was seasonally affected because there was a big gain in the local governments, which may have been related to the idea that school's coming to an end. Big gain in leisure and hospitality, more people working at restaurants and bars, amusement parks, things like that. So we can't say for sure that this means that we're out of the woods, but it does mean that the people like Kevin Hassett can take a bit of a victory lap for the time being.
We're going to get to more of Kevin Hassett's comments that he made to Bloomberg earlier, Mike. I want to ask you something about that in just a few minutes. That's a little bit of a deep tease. And we're going to talk rates, too, with you, Ira. But before we talk rates, because we got a good bit of time with both of you, what stuck out, Ira, for you with today's report?
Yeah, well, one of the things is, firstly, is that there's really only two sectors that really participated. And like Mike said, one of those sectors was leisure and hospitality. And, you know, we don't know, was some of that pre-hiring hoping that the World Cup is going to bring a lot of leisure and hospitality jobs to certain areas of the country? We'll get that when we see some of the detailed data at the state level. So that'll be pretty interesting to see if that's actually what's going on or if it's a broader, rehiring for leisure and hospitality seasonally. The other thing that stood out to me was the fact that wages were still okay, right? One of my fears has been that, okay, we might be hiring more people in the healthcare sector, but maybe we're paying them less, so that just incentivizing companies to be able to hire more people. But you didn't quite see that, so the wage data was still okay.
Hey, Mike, I promised we'd get to some of Director Kevin Hassett's comments earlier. Something stuck out to me from that clip that we played. He said, native-born Americans are rushing into the labor market. Is there data that shows that that's who are getting jobs right now and not immigrants?
No, there's not data like that. There is data on who holds jobs, the overall number of people who are foreign-born and the overall number of people who are native-born here in the U.S. But it's not a count month to month where they add up the number of people who have recently moved into those jobs. It's just a total, and one side balances the other. They have to divide the total number of jobs by that. So by just mechanically, if one goes up, the other goes down. So we don't see any real evidence one way or another that people are, native-born Americans are rushing into jobs that foreigners used to hold. What we do see is that the labor force has fallen by quite a bit. This was the first month in about 6 where the labor force actually grew, but only by 83,000. So we are seeing the impact of the immigration policies, but it's not something that suggests that we're seeing an awful lot of native-born Americans crowding out immigrants.
Is that narrative, though, Mike, the idea of native-born Americans getting jobs, is that, I would imagine, and look, I think everything's political in this day and age, even numbers that we get and the commentary around numbers from officials, but it just seems like that to me is a politically charged statement, and I'm just wondering, as somebody who looks at the economics of this, what you make of that narrative that's emerging.
Well, there are 2 ways to look at it. One is an economic way of looking at it, which is that we need fewer jobs to keep the unemployment rate stable, and that's one reason it remains so low, because we don't have very many people coming into the labor force right now. And to the extent that there are being jobs created, that creates more demand for workers. The other side of it, though, is the political side, and although, as Ira mentioned, we didn't see a collapse in wages, the year-over-year annual rate of average hourly earnings fell to 3.4%. That's a 4-year low. And that suggests that people's incomes are not keeping up with inflation, because the CPI and PCE running over 4%. Which means that there's a political issue coming up for the administration this fall. Even if jobs are being created, if people feel they're falling behind because inflation is winning, then they're not going to be happy about that.
I keep reminding everybody, I'm back from a family wedding in Oregon, and everybody who was under 30 was talking about high gas prices and how expensive everything costs.
Oh, they should come look at the gas prices here in San Francisco.
But I'm just saying, it's on everybody's mind. Ira, you got to come back in, because I want to talk about what traders are expecting in terms of U.S. rates. Kevin Hassett, again, President's chief economic advisor, saying that investors are incorrect in interpreting the strong May U.S. jobs report, suggesting the Fed will have to raise interest rates this year. He says, I think that's terribly wrong. And he says what you need to do is look at the impact of oil price shocks on core inflation, and the history of it is that they are temporary. They don't lead to lasting inflation. Yeah, we thought it was temporary back in February and March, but here we are in June, and we're still talking about higher energy prices. Is Hassett wrong on this?
Well, the market certainly thinks he is, and when you look at what's gone on with the front end of the yield curve, with 2-year notes up, as well as other short-term interest rates, the market is now pricing for an interest rate hike by the end of this year. I don't necessarily think that it will occur, because I think what the market's really pricing here is, let's just call it round numbers, basically a 50% chance that they might hike by 50 basis points, and a 50% chance they leave things unchanged. So the average of that, the weighted average of that, is 25 basis points. And I think that's where the market kind of is right now. And talking to investors after this call, there's a number who say, yeah, things are strong now, but look, it's low-wage sectors, which is going into what Mike was just talking about with wages not growing very quickly. The jobs are in lower wage sector, as opposed to technology or financial services, which over the last year both have seen pretty big job losses. But the people are thinking that, hey, maybe the Fed will have to hike, because if the war is like low intensity and prolonged, and we continue to see gas prices over $4 at the pump, that is going to have an effect on people's expectations for inflation, and that's why the Fed would ultimately hike.
Ira and Mike, you both are super smart and always reminding us this is 1 month's report. We also get reads on inflation next week, CPI and PPI, and then we're coming up against the first Fed meeting that will be overseen by the new chair, Kevin Warsh. Ira, let me come back to you, though. You know, you do remind us, 1 month's report, there's a lot that can still happen over the remaining, 6 or so, or 5.5, 6 months here of 2026. That's important to keep in mind. The narrative can change again.
Yeah, I mean, I think it can change again. And when you look at what the inflation swap market is pricing, they're expecting this next CPI report to be the high. So, the market is pricing around 4.3% for this month, but then under 4% going forward on a year-on-year basis. So that means that the market is still anticipating, somewhat lower inflation on a going forward basis, and that has to be driven by energy. And part of that is kind of very technical because the oil futures curve is still backward sloping, right? So the market is still thinking that, hey, oil and gas prices are going to be lower in 2 or 3 months than they are right now.
Hey, Mike, come on in on it. Same thing for you. I mean, there's a lot that's going to happen still potentially over the next 5 to 6 months. If I look back at the first 5 to 6 months of this year, there's a lot of things that were not on my expectation list. A good reminder, and take us to the first Fed meeting of Kevin Warsh. There's nothing he can do but leave rates alone. Is that fair to say as well?
That's fair to say. And I would just add what I have always said is you can invest in Fed funds futures if you want, and they go up, they go down, you make money off of the movement, but they don't tell you anything about what's going to happen until you get maybe a day or two out of a Fed meeting, because everything keeps happening and we get different economic data and it changes the market's mind about what they think the Fed will do. Now, as to Kevin Warsh, he's coming into a difficult situation because all of the economic data now is pointing away from the direction of rate cuts. Job market that is strong like this is suggesting that there's not a problem with the overall economy that needs to be solved by lower interest rates, and higher inflation, in theory, if it starts broadening out beyond energy, would call for a rate increase. We had Beth Hammack, the Cleveland Fed president today, put out a statement that said, great news about the jobs numbers, but if we don't see inflation come down, we're going to have to act soon. She's one of the more hawkish people, but you do see this idea that we're maybe looking at interest rate increases starting to gain some power, some attention in the markets and among Fed people. So Hassett comes into his first meeting. If he wanted to cut rates, he'd be in the minority. And so I assume that he will not vote for a rate cut and dissent at his first meeting. And so basically what we'll have is the Fed takes the forward guidance about rate cuts out of the statement and not much else. And then it'll all be about Kevin Hassett. It'll be like a movie review. How did he do in his role as Fed chair? Did he defend the institution? Did he stick up for the other people on the Fed? All that sort of thing, rather than the market trying to decipher what it means for interest rates going forward.
I'm already getting my popcorn ready for that first Fed meeting. I can't wait with Kevin Warsh. Having said that, there's this narrative going on in terms of the U.S. economy, and then there's the AI spend, which we spent a lot of time talking about at Bloomberg Technology yesterday, our summit, our annual summit. We've got a headline from the FT, Meta weighs raising tens of billions of dollars in a new share sale, so a new stock offering. One would assume that we are now seeing these big hyperscalers, Tim, these big tech companies, they've been tapping the debt markets to fund the expenditures when it comes to building out the AI networks. Now they're also doing equity plays.
You're actually seeing Meta shares take a hit right now, just falling substantially, down 5.5% as a result. Once again, that headline crossing the Bloomberg terminal that Meta weighs raising tens of billions of dollars in a new share sale reminds me of what Alphabet did earlier this week.
Hey, Mike, just 30 seconds before we go. AI and productivity. Mary Daly of the San Francisco Fed addressed it yesterday. She's, looking at it. 20 seconds here. Is that a big deal yet in terms of the labor force? Real quickly.
No, as she said, it's not yet. You really don't see a lot of evidence of it in the data. It's the main reason that Warsh argues you can cut rates going forward, because productivity will go up, but we don't see it yet.
All right, Michael McKee, Ira Jersey, you guys rock. Hey, coming up next, folks, we move from the economy to the markets and all of this. John Flood of Goldman Sachs joins Tim Mee right here on Bloomberg Business Week Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Meta Platforms said to be weighing an equity raising. That, according to the FT, Meta has not yet hired banks for a possible equity raise. According to the FT, Meta shares, though, moving lower, down now by 6.9%. All of this as the NASDAQ 100 index now sinks by 3.9%. Fed hike wagers lifting yields. The S&P down 154, down 2%. The Dow down 451, drop there of 0.9%. NASDAQ is down 3.5%. The NASDAQ 100 index down more than 1,100 points, a drop there of 3.9%. NASDAQ, by the way, is down more than 930 points. All of this as losses intensify. The SOX, the Philadelphia Stock Exchange Semiconductor Index, down by 8.5%, and the VIX closing in on 19. A 10-year at 4.54%, the 2-year 4.16%, and the 30-year at 5.00%. Spot gold down $147 the ounce to $43.26, drop there of 3.3%. West Texas Intermediate crude holding just above $90 a barrel, down 3.2%. Barrel of Brent, 92.96. Brent crude down now by 2.2%. Bitcoin had been trading below $60,000 a token. Right now it's $60,355 on Bitcoin. It is down by 5.1%. Chicago Bears planning to leave Illinois and head to Indiana. After over 100 years, the team intends to build a new stadium in Hammond, Indiana, with the exact site yet to be selected. But a source tells ESPN it is not a done deal yet, and Illinois can, quote, still get back in the race. Recapping, S&P down 154, drop there of just about 2%. Back we go to San Francisco, and once again, your hosts, Tim Stenovic and Carol Masser.
Wait, did you forget us, Charlie?
He would never forget us.
No, you're loud. It's a Friday, man, and it's been another crazy week.
It was a dramatic pause. That's what it was, to call attention to our two glorious hosts.
Well, you are always glorious. Our lovely, lovely Charlie Pellet back at Bloomberg headquarters in New York City keeps us honest. Hey, as you know, trading news, a lot of things keep us honest, and all bullish things must come to an end. We're certainly seeing that in the trade today, Tim, or at least a little bit of a breather.
Yeah, as we've been reporting, as you just heard from Charlie, Wall Street's historic weekly run poised to come to a halt. Stocks and bonds falling after that solid jobs report added to speculation that the Fed's next interest rate move could actually be a hike.
All right, so let's get into the trade now that we know what the backdrop is right now. Natalia Kenijevich is with us, Bloomberg News equities reporter. She's back at home base at Bloomberg headquarters in New York City, along with John Flood. He's Goldman Sachs partner and head of America's Equities Execution Services. As we said, both back in New York City.
Hey, John, Natalia, good to have you both with us. John, I just want to get your thoughts on where we are in maybe a cycle here. And I'm struck by the news of Meta Platform shares down right now, the company weighing a big equity raise after that blockbuster Google deal that we got earlier this week, $85 billion in a share sale. John, I know I'm not going to get you to comment on an individual company, but comment on what it means to you when you have huge mega cap tech companies doing share sales or possibly doing share sales like this. What signal does it tell you?
Signal tells me that it's a very healthy market right now in terms of the supply and demand that's out there in the marketplace. And I think that we've seen, I speak with institutions at Goldman Sachs, institutional investors, and there's never been more robust demand for these offerings. And my expectation is that trend continues. That's a major piece of why we are very constructive, this equity market, despite S&P 500 already making, 24 all-time highs. We expect more of that to come in the future.
So, John, how do we know, though, that it isn't just a case of FOMO and people just chasing? I mean, it's so much money, so much momentum in terms of the AI spend and build, debt side, equity, tapping markets. We heard from the Bloomberg technology folks yesterday, a big conference, lots of major players in the AI space saying demand is incredible. They've just the momentum. How do we know, though, that it's not just kind of a major, major FOMO trade and that there's going to be some kind of reality or reckoning coming in the near future?
because from the institutional investor perspective, we actually still see a lot of discipline out there. There's still, I think, a wall of worry left to climb higher in this market. What we look at is our prime brokerage data. And one of the most important pieces out there right now, I think, is gross exposure. So essentially, hedge funds are still long a lot of their single stocks, AI, tech exposed names. They're also more short macro products against these longs than they ever have been in the history of our data set. What that tells me is there's still healthy skepticism about what is going to happen next. I want to hold my longs, but I want to make sure I'm hedged. And it's essentially the most hedged we've ever seen hedge fund clients at Goldman Sachs on the equity floor.
John, what is your take actually on today's stock market sell-off? Because we hear lots of conversations about some market participants, taking profits off the table because they're prepping for this huge wave of big tech IPOs. So what is your take? And what does Goldman also think? Is it a buying opportunity? Is it time to buy the dip?
I think that there have been few and far dips to buy so far this year. So yes, when you have a 2% sell-off in the S&P 500, it has paid to buy those dips, and I think I think that will continue. I think today you have some profit taking into the weekend ahead of what is likely going to be continued supply, as evidenced by the news that just broke. But really, we had a strong jobs print this morning, and I would say, what are the fears that people continue to list as top concerns? It's inflation, it's Iran, it's private credit, and this morning's jobs print, has rates moving higher, and people now think that we will get a rate hike and by year end. So I think it's healthy. I do think it's a buying opportunity, and I think that there is still a significant amount of worry, cash on the sidelines, short exposure out there for the market to climb higher.
Got it. I also wanted to ask you about one indicator tracked by Goldman Sachs that basically tracks all positioning across hedge funds, long-only investors, retail funds. It is interesting because the stock market is at all-time high. At the same time, positioning is still at a neutral level, which means that there is more room to run. So first of all, please tell me, why is that? Why positioning is still so low, and what it means for the stock market direction?
It's likely a tailwind, and that's exactly what we said. Despite us being close to all-time highs at the index level, from an institutional investor perspective, there is still concern out there. We see that through gross exposure being at all-time high, expressed through a lot of short hedges in macro product, and from mutual fund cash balances. If you look at notional dollars that remain on the sidelines for mutual funds, we are still at, we're still at a long-term average. It's not like it's not an outlier. So when you look at hedge fund exposure, you look at mutual fund cash, there's still plenty of skepticism left out there. That's why our sentiment indicator is showing healthy positioning, not overextended positioning.
John, that makes me happy that there's some negative sentiment out there. I get very nervous. We're just at this tech event. We talked a lot about AI. Haktan of Broadcom was here. I mean, all of the major players. And there was a lot of enthusiasm, I think it's safe to say, with some cautiousness, but a lot of enthusiasm. Having said that, because of what you are seeing, particularly among institutional investors and hedge funds, do you think the retail investor and markets overall are not really thinking that we could see some kind of pullback or mini correction as a result?
I think that there is a slight disconnect between the retail investor right now and the institutional investor. That being said, I think that retail will continue to buy the equity market as we have some mega cap IPOs likely in the pipeline between now and year end. We'll see how that plays out. But these are high-profile companies that typically grab the attention of retail. And once retail starts buying, they don't really stop unless there is true job loss. Our data shows that retail bid disappears when there is job loss. And the last time that we saw retail as a net seller of the U.S. equity market for more than a consecutive week was back in March of 2020 during the depths of COVID. So it really, you have to watch employment, you have to watch jobs, and until we start to see job destruction, that retail bid will likely remain a healthy constant in the marketplace.
Well, we certainly got a positive print today in that arena. John, I'm wondering though, what would give you pause apart from job losses? What would give you pause with an equity rally such as this?
If we started to get disappointing in earnings, and frankly, we continue to see companies clear these hurdles. Last quarter, earnings were solid. We are optimistic about next quarter. If you start to see earnings holistically across the S&P 500 disappoint, that would be highly concerning to me. We haven't seen any evidence of that. We aren't bracing for any evidence of that in the near term.
I have to ask you, John, about systematic funds, because as we remember in March, this market was really driven by technical factors. What does your data tell us right now about how positioning looks like across CTAs, well-controlled funds, and what does it mean again for the stock market direction?
Systematic funds have had a solid year of performance, and right now they are relatively full in terms of S&P 500 exposure. This is an incredibly momentum-driven community, and right now, as the market moves higher, they will continue to add. That being said, the highest velocity of buying is behind us. If we do take a turn lower, have several more days of what we're going through today, you will see that CTA community start to sell the equity market. That being said, the systematic positioning in the marketplace is very small relative to retail, relative to corporates, relative to hedge funds, asset managers, sovereign wealth funds. So that would be one noteworthy piece of supply. We think all the other sleeves of demand outweigh that in a move lower.
I agree, but at the same time, when they sell, you really feel it because they do it so quickly.
Correct.
So again, regarding today's sell-off, we see that the S&P 500 basically is now trading P/E ratio closer to long-term average. So do you feel that the market right now is fairly priced in ahead of the next earnings season?
We don't think it's overly expensive. We get this question in terms of, are we optimistic on earnings? Yes. We get this question within memory space all the time. And we still think memory, one of the highest momentum sleeves of the market right now, is still relatively fairly priced. And we see that with our institutional clients right now. There's a ton of focus in Korea, in Taiwan, outside of the U.S. And there's still real value to find, even though some of these markets appear to have gone up and to the right. There's still room to run because the fundamentals back it.
Mm-hmm. Hey, John, oh gosh, go ahead, Natalia.
No, please go ahead, Carol.
Hey, well, I just got to ask, John, we just got about 30, 40 seconds. We obviously want like an hour with you because this is all
Come back.
Incredible. The IPOs, Cerebras IPO, that was the biggest. We're getting ready for the SpaceX IPO, Anthropic IPO. Just watching. I know you can't talk specifics, but does any of this smell a little bit like a top of the market, or does it all feel justified and fundamentally justified? And again, just got about 30 seconds.
As of right now, we still think that fundamentals justify what we're seeing go on in the equity market. So yes, we are constructive on our desk. We think S&P 500, we think these dips are buying opportunities, and we think that there's a clear path to 8,000 and beyond this year.
Wow. All right, John Flood, thank you so much. Goldman Sachs partner, head of America's Equities Execution Services. I hope you will grace us with coming back again and joining us. Natalia Kanijevich, of course, too. And really appreciate it. She is Bloomberg News equities reporter back there at Bloomberg headquarters. Coming up next, we talk FIFA and security, what you need to know.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg, and we have got the Dow, the S&P, NASDAQ very much in the red. Do want to begin with spot gold, though. We've got gold slumping now by 3.5%, ounce of the precious metal at $43.20. But the key takeaway here, spot gold has wiped out this year's gains as jobs fuel Fed hike bets. Right now, spot gold, as I mentioned, down 3.5%, $43.20 the ounce. Year to date, as we check the column there, it is up by 0.01%. All of this as Wall Street's historic weekly run comes to a halt. Stocks are being hit hard today by a tech sell-off. Bottom line here, we got NASDAQ down 1,010 points, down 3.8%. The NASDAQ 100 index down more than 1,200 points. On that index, a sell-off now of 4.2%, with the SOX now down by 9.4%. Putting it all in context, the S&P is down 169, drop there of 2.3%. Dow Industrials at a record yesterday, now down by 1%. The VIX above 19 with a 10-year 4.54%, the 2-year 4.16%, the 30-year 5.00%. Gold bears repeating, down 3.5%, wiping out the year-to-date gains. West Texas Intermediate crude 90.57 a barrel, down 2.6%. Barrel of Brent, the global benchmark, 93.13, down by 2%. And Bitcoin just above $60,000. Indeed, did see a brief print below 60,000 earlier today. Bitcoin right now is now down by 5.4%. Lululemon Athletica shares now at their lowest level in 8 years after the upscale yoga wear company cut its annual forecast. Lululemon down now by 8.4%. Saks has won approval to exit bankruptcy after reorganizing. And sports, the Chicago Bears planning to leave Illinois and head to Indiana. After over 100 years, the team intends to build a new stadium in Hammond, Indiana. The exact site yet to be selected. Meanwhile, though, a source tells ESPN it is not a done deal, and Illinois can still get back in the race. Recapping, S&P 500 index down 170, drop there of 2.2%. Spot gold wipes out its gain for the year. Tim and Carol, that is a Bloomberg Business Flash.
It is indeed. All right, Charlie Pellet, thank you so much. Well, the FIFA 2026 World Cup kicking off next week across Canada.
Did you get your tickets?
I did not. I don't know that I can afford them.
I know somebody who's going to 5 games.
Somebody.
I'm not joking. A friend of mine is going to 5 games. He's been saving up.
Did he mortgage his house?
He said, I remember I was 7 years old the last time this was in the U.S., in North America. I am going to go. He's going to 4 games that he paid for, and 1 for work that a client is taking him to.
I get it. If you're really
over
into
Seattle, L.A., New York, all over the country.
Also going to games are, of course, our team here at Bloomberg who covers sports. Bloomberg's Vanessa Perdomo Maglione will be at some of the games as well, and she's been reporting out on what to expect, some of the controversy, because it's not inexpensive to go see some of these games, and there's a lot of issues at play, including security. So Vanessa joins us. Vanessa, of course, she is Bloomberg News sports business reporter and host of the Bloomberg Business of Sports podcast back at Bloomberg headquarters in New York City. Also with us is Dan Arnold. He's Senior Vice President of National Operations at the managed security services provider Proto Security. He joins us from Omaha, Nebraska. Dan, great to have you here with Tim, Vanessa, and myself. Security is a big issue. You've been in the industry for like a quarter of a century. I'm not trying to date you or age you or anything, but you've seen a lot. You understand. You've worked with corporate security. Put the World Cup games here in North America, here in the United States. Give us some context. How do you characterize this event in terms of span, difficulty, and heightened concerns?
Carol, it's a great question. And Carol, Tim, Vanessa, thanks for letting me participate. Carol, you can join me in Kansas City if you want to come watch Messi here in a couple of weeks.
I would love to.
Yeah, let's do it. You'll sit right beside me. I'm going to be in the stands cheering with the others. But sitting in those stands, I think that's really where your question, and how do you get safely to those stands? This is like 11 sites across the country, right? In the United States alone, it's 11 simultaneous Super Bowls. And the challenge of security for those environments at 11 at one time is a major strain on public and private, municipal and federal security partnerships.
Dan, I think the interesting thing here is how differently each city is handling it we've had a lot of cities come out against the funding that wasn't released right away. But how are different cities, in Kansas City, how is it being handled differently than New York? How are each city and the size of those cities go into play here?
Yeah, the funding certainly is controversial and some challenge, but I know what the local folks are doing, and you get private security companies and the public law enforcement, the municipal leadership. I know well over a year, right? There's been very detailed planning, and those groups are very tight and very coordinated. And while they always will want more funds, setting up communication, understanding where forward operating centers will be, understanding how you're going to use technology in and around the venues, different routes, different patrols. How are we going to get people safely in and out of these environments? So the coordination has been very strong, and it's been very exciting to watch these private-public partnerships.
And just so we know, because of how differently everyone's handling it, is it up to each city to decide how much they want to invest into security? Every city, like we said, it's different. Getting to MetLife is completely different, and having to deal with potentially a Knicks NBA Finals overlap there is going to cost a little bit more, have a little bit more people. So how are the budgets decided there, and how do they spread out this money?
Yeah, certainly with FIFA coordination, there are standards and minimum standards for safety and security. But these venues have great and strong security operations teams, right? They support NFL events and other events. So these venues have a lot of expertise and experience and understand the funding it does take to provide safety and security for these events. But it's important that it's not one plan fits all. And I think that's what's been very good about the local jurisdictions and the local venues to say routes, like you mentioned, to get to MetLife or get to Arrowhead, wildly different needs in each community and each market. And so again, I think the funding's been appropriate, could always be more, but they've been able to design good, safe, solid security plans, in all of these local markets that really fit the local market.
Dan, I obviously don't want to give away any secret sauce here, but in an age of where we're seeing drones deployed in ways that were kind of unthinkable in the last few years, it does seem like sort of airborne threats are potentially some of the biggest challenges around the country. How do you think about that and sort of drone technology?
Yeah, I think with drone technology, with the advancements of some of the AI with camera systems and operations in the security space, it has become much cheaper, less expensive to maybe cause some chaos or cause some frustration, right? With drones and other things. People, most of the time, in good nature, want to have cool videos and something for socials, but they don't understand the disruption it causes. And so it is certainly part of the plans, right? There is counterintelligence teams. There are teams with technology trying to monitor. There are flight restrictions around these facilities. And all of those are in place to try to prevent, but it doesn't mean it's 100%. And so the teams have response plans and have been working hard understanding that some of these technologies and the cost of these technologies have made it a little bit easier to cause a little disruption.
Dan, one thing I want to ask you about that I've been hearing about because of the inflated prices on some of the transportation is that some fans are going to try and find ways to walk to the stadiums. How do you plan for something like that?
Well, it certainly depends on the market, right? A little harder to probably walk to MetLife than it is some others, but you have major issues with all the just transport in general, right? The public transportation routes, like you mentioned. But as we're talking about pedestrian traffic, the choke points and guide paths that you need to be able to do that safely and securely, not disrupt traffic, is highly challenging. And so they are working very hard to allow pedestrians and others to get to these facilities. It is not the easiest path. It is not usually the common path of these facilities, but there are, I'd say, centrifugal levels of security, right? There are layers and layers of security that start very, very close to the facility, and so as you go out further around.
Dan, we got to run. So apologize. Dan Arnold and, of course, our own Vanessa Perdomo.